Hello all, welcome to BCCA. This is your IDT faculty, CA and CMA, Manidi. There are n number of marathons already available on YouTube for final level as well. Why specifically this marathon? You can refer, you can rely. I'll answer it, then you can proceed with my marathon. So yes, I agree there are n number of marathons. Let's filter out how many of them are for exclusively CMA panel. Exclusively they discussed from the CMA panel perspective instead of CA panel. Okay, we'll get only 3 4 now. Out of those 3 4 exclusive CMA final marathons, also, this marathon will stand out. This marathon will have that uniqueness definitely because when I'm taking this marathon, this is with an intention to help the CMA student by listening to this marathon to make sure that he'll definitely clear the exams. Considering those points only, this marathon, these classes were recorded. Okay, that is one thing. And I'll tell you another points also. But you could see me before going further itself. You could see the sorry, not this way, this way. Okay, you could see the poster there. What I kept there, sir. It's my guarantee. Watch this marathon. This will have three parts, sir. Part one, part two, part three. By watching these three marathons, it's damn easy to pass. Easily you can get 50, and along with my book marathon, if you prepare now, then it's easy for you to get that 60 plus as well. 60 plus as well. Sir, you could understand how much confidence I have. Otherwise, I'll not put that kind of sticker as well. It's my guarantee you're going to achieve this. Okay. Now, this marathon is in English, sir. And many students from either Andhra Pradesh or from Tamil Nadu or from Karnataka who are used to listen to the classes in their regional language, or even from the other states of India, maybe who are used to listen the classes in Hindi, might think like maybe English now I'll understand or not. Sir, you could watch this. English I used, I explained everything in English only. But the English which I use is simple English only. Even an below average student can understand this kind of English, and this will be very much enough for you. First thing. Second one, many students when choosing a marathon or when choosing a material or faculty will think of like whether problems are covered or not. Only theory has been discussed. Sir, here wherever it is required, wherever it is required, considering composition scheme, time of supply, value of supply, ITC, then assessment chapter, then coming to customs, duty drawback, baggage, valuation, types of duty, wherever the problems part is important and wherever there are chances of asking problems, I have discussed it. So you could rely completely on this. Now, sir, what if I only listen to this marathon three parts and I refer your book? Can I attempt 128 marks now? No, I know I don't want to give you any false promise. You cannot attempt 128 marks, but trust me, you could easily attempt from 90 to 100 marks. 90 to 100 marks. Along with material and two chapters I'll say, sir, which were not covered in this marathon. One is exemptions chapter and other two customs related two theory chapters are there. One is like customs trade facilitation measures and all. The second one is like manufacturing within the warehouse. That part, that chapter is there. If you read those two chapters also along with this marathon, definitely you could attempt 105 to 110 marks in a paper. That's how this marathon has been designed. Okay, designed. So even for our easy reference, I'm using this word marathon, but this is something beyond marathon because in marathon generally we'll explain within 15 to 18 hours. Will not drag concept, even if it is a tricky concept also. We'll try to somehow quick shortly finish it. But here I took time. If it is something usually student feels to understand it tricky now, I have taken my time, I have explained it clearly, I have inserted an example, I have inserted a problem there. So everything has been discussed and designed in a way which would be very much pleasant and convenient for you. Okay, so understand, it's my guarantee. And one thing, sir, in this marathon, if I didn't cover any chapters from GST now, okay, considering my experience and the paper trends, what I thought means those chapters are not, even though asking an exam, they are not asking regularly. So the weightage of those chapters is very less. Okay, the only chapter which I left, which is having a significant weightage, is exemptions chapter. So my personal suggestion, Along with this marathon, I'll give you my previous marathon video link also here. Go there and even watch the exemptions part as well. It would be complete. It's something like a full meals for you. Okay, South Indian, that full meals for you, but not that thali. Everything you'll get, even the at last the dessert also you'll get in this marathon. You will feel that comfortness from this marathon. Okay, trust me, trust BCCA. We are here to make you clear. Thank you all. Bye.
Time of supply. Why we need to learn time of supply? Sir, while explaining supply chapter, I said we need to find out supply. We need to decide why supply has been happened. Na? Only if it is a supply, then GST is applicable. If it is not a supply, then there is no GST. Okay, it is a supply. What is the need to identify the timing of supply? To know when to pay the taxes. Let's say all these events which I tell are related to a single transaction only. Let's say, for example, on 25th March, goods were ordered and paid 1 lakh rupees as advance. And on 29th March, and on 29th March, and on 29th March, okay, on 25th March, goods were ordered and 1 lakh advance has been paid. And on 29th March, the goods have been dispatched. Whereas on 2nd April, the goods are delivered. Whereas ultimately on 6th April, the invoice is raised and the balance payment has been made. Okay, so now understand all these are related to a single transaction with respect to purchase of goods. But there are multiple events with respect to such purchase. The question is, yes, it is a supply. But when the tax related to such supply has to be paid either on 25th March or 29th, 2nd April or 6th April. Sir, and remember one more thing. Will not pay tax on the date of supply itself. Let's say if supply is decided, let's say if you fix the supply is made on 25th March, then the tax has to be paid by succeeding month 20th. If 25th March, if you can find out like the supply is made, then by 20th April you need to pay tax. If at all you, I mean the provision says like supply has to be considered as made on 6th April, then the tax will be paid on 20th May. So to decide the timing when the tax has to be paid, we need to discuss time of supply provisions. So for discussing time of supply provisions, sir, invoice is related to with it. I mean, the provisions of invoice got linked with the time of supply provisions. Unless until you have clarity regarding these provisions related to invoice, you don't understand time of supply. Because time of supply provisions are linked with the invoice related points. So, we are, I mean, initially we'll discuss, that's why we'll discuss section 31. Section 31 is related to invoice. Sir, if you follow material also, the same order it would be there. Okay, let me show you material also. No problem, I can discuss even with material also. So section 31. First we should discuss 31, then only we can come to time of supply again. Sir, what 31 says na? 31 section generally talks about all the issues related to invoice. By when invoice has to be issued. In invoice, what content must be there? What are the different types of invoices? Or what are the alternative things if you cannot raise invoice? All those things are discussed in 31. But now, from invoice chapter, the part which is relevant for us is the last date for raising invoice. For a transaction, either it is good or service related, what will be the last date for raising invoice? By when the invoice has to be raised, we'll be discussing here. First one, time limit for issue of invoice with respect to goods. We're discussing time limit for issue of invoice with respect to goods. Let's say supply does not involve movement. Supply does not involve movement. Na here the the provision intention is like the supplier obligation is only till his place. Okay, let's say a seller in Tamil Nadu selling goods, but his obligation is only till his factory gate. That let's say the customer is coming from Maharashtra, he only has to come to seller premises and has to collect the goods from Tamil Nadu seller premises. So the seller responsibility is only till his factory gate. After factory gate, the delivery, everything has to be taken care by the buyer only. Seller obligation is only till his factory gate. So in this context, supply does not involve movement. It doesn't mean goods will not move. Goods may move, but the supplier has no responsibility or obligation to move the goods. Supplier obligation is only till the factory gate. So from factory gate, who has to take those goods? The customer or the buyer only has to take those goods. In such cases, supplier obligation is only till factory gate. So by the time the goods leaves the supplier premises, by the time the goods receive the supplier premises, invoice has to be raised. So invoice has to be raised on or before the removal of goods from supplier premises, where the obligation of supplier is only till the factory gate. Let's say, sir, you went to DMart. DMart is there now here. You went to DMart. So what is DMart responsibility? Will it deliver goods to your place? No. So their obligation is only till the billing counter. Okay. So they have to raise invoice on or before the removal of goods. Or any grocery store you went, which does not involve any delivery and all. So their responsibility is only till their shop. No. Okay. So they have to raise invoice on or before the goods remove their premises. Next, supply involves delivery. Where supply involves delivery, they'll provide goods and even they bring the goods to your place also. In such case, their obligation is till delivery. So invoice can be raised on or before delivery. The last date is date of delivery. Whereas in the first case, the last date is date of removal. Here last date for raising invoice is date of removal. Here last date for raising invoice is date of delivery. In any other case, such supply involves installation and trail run. Sir, I bought an air conditioner and that air conditioner has to be delivered at my premises and it has to be installed as well. So then the invoice can be raised till the good was made available for use. So till the AC was installed to the wall and if it is ready for use, till that point of time they can raise the invoice. So in any other case where supply involves installation and trail run, then due date is on or before making them available for use. Sir, this last word got covered. It's not covered there. Write down here. It's on or before making them available for use. Add that word, use. Due date on or before making them available for use. Correction, it's a correction there. Okay, so with respect to goods, if supply involves no movement, invoice has to be raised on or before removal. The last date is date of removal itself. If it involves delivery, invoice has to be raised on or before delivery. Last date is nothing but the date of delivery. In case of other cases, like where installation, trial run has to be all involved, then in such case, invoice has to be raised on or before the date of making it available for use. So the last date is making them available for use. This is with respect to goods. Then it is with respect to service. What is the time limit with respect to service? So with respect to service, sir, in general situations, not in specific cases, in general cases, then invoice has to be raised within 30 days from completion of service. Within 30 days from completion of service. Sir, with respect to goods, on or before removal, on or before delivery. But when it comes to service, even after completion of service also, you have how many days? 30 days. Within completion of 30 days from date of service, you can raise invoice. However, if the service provider is FPI na financial institutions, banking institutions, insurance. If the service provider is financial institution, banking institution, insurance company, then the invoice has to be raised within 45 days. Normal cases, the time limit for raising invoice is 30 days. Whereas if it is FBI, then the time limit for raising invoice is 45 days. Then the third case, sir, here FBI na here financial institutions, banking institutions, insurance companies, and telecom operators. So these are providing services among their distinct persons. Let's say, for example, SBI Bangalore providing services to SBI Hyderabad. SBI Bangalore providing services to whom? SBI Hyderabad. So SBI Bangalore and SBI Hyderabad are distinct persons only. So when they are providing services among their distinct persons, then the time limit for raising invoice is end of the quarter. Let's say it was given, it was provided on 20th June. End of the quarter. End of the quarter na April, May, June quarter. When it ends? 30th June. So end of the quarter, 30th June, or date of recording it in the books of accounts of supplier. End of the quarter or date of recording it in the books of accounts of supplier, whichever is earlier. Issue invoice before or at the time supplier records in books of accounts, or end of the quarter in which supply was made, whichever is earlier. Whichever is earlier. So look at here, sir. With respect to services, in general cases, invoice has to be raised within 30 days. FBI na 45 days. FBI and telecom operators and the services are being provided among their distinct persons, not to outsiders, among their distinct persons. Then invoice has to be raised before the end of the quarter or before the date on which the supplier records it in the books of accounts, whichever is earlier. Okay. Next, due date for issue of invoice in case of continuous supply. In case of continuous supply. So we need to understand what is called continuous supply. Supply of goods either continuously or recurrently. So to call it as continuous supply, the goods will be supplied continuously. Continuously, let's say if there is a water connection, the water will be coming continuously now whenever you whenever you turns on the tap, water will be coming. Or else the same way, the pipeline through pipeline gas connection will be there. Whenever you turn on the regulator, you will be getting the gas. For that, a meter will be fixed and you will be getting the gas bill instead of cylinder kind of. So those are called as continuous supplies. Sir, with respect to goods, will not see so many continuous supply goods, but when it comes to services, internet connection is a continuous supply. It will be coming only. Next, electricity is a continuous supply. But when it comes to goods, they are not much familiar. But water, currently it's not taxable, but we can take it as a continuous supply. Let's say some municipal authorities or corporations, they are sending water. So the water will be coming continuously. Whenever you unturns the tap, you will be getting the water. The same way gas connection also. Whenever you turn it on, you will be getting gas. Continuously the gas will be supplied. So those are called as continuous supply. Supply of goods either continuously or recurrently. They may be through wire, cable, pipeline or any other mode. Sir, continuous pipeline kind of. They used to come on. Recurrently today one truck will come, tomorrow another truck. So like that, the consignments will be keep on coming. Then it is called as recurrently. And those delivery can be through wire, cable, pipeline, or it can be through any other mode also. It need not to be through wire, cable, pipeline. It can be even in other mode as well. And it should involve periodical payments and statements. You'll understand, sir, what is periodical payments and what is periodical statements by this example. So first, once again, continuous supply it involves supply of goods continuously or recurrently. And the mode of transport may be either through wire, cable, or it can be through any other mode also. But it should involve periodical payments and statements. So now we'll understand what is payment and what is statement. So let's say Singareni. Okay, if you don't know Singareni also fine. Take it as Coal India. Or you take it as NLC. NLC, you know. Neyveli Lignite Corporation. Okay, so now Neyveli is extracting coal, sir. Okay, and they have entered into contract with NTPC. NTPC, you know, National Thermal Power Corporation. They used to generate, they'll be generating power through coal. I mean, they'll burn coal with the steam they'll generate with the steam generator they'll turn the turbines, and through that they'll be generating electricity. So now NLC has a contract with NTPC, okay, that they'll be supplying lignite or coal, okay, through whom, through NTPC. Throughout the year they'll be supplying, and that means like today they'll be sending 3 trucks, tomorrow they'll be sending another trucks. So like that throughout the year the coal or lignite will be keep on sending them. It is an example of recurring transaction, not continuous. Recurring. So here continuous means it can be either continuously or even it can be recurrently. Today one truck they'll send, tomorrow they'll send another truck, like that. Okay. So now what they agreed means every month on 8th, by 8th, not on 8th, every month by 8th, NTPC has to pay 5 crores because coal is being supplied continuously. No, for the coal supplied, the payment has to be made every month by 8th, 5 crores, and every quarter they'll reconcile. Quarter end they'll reconcile like how much coal has been sent, how much payment has been made, whether there is any advance payment or short payment, that they'll be reconciling at quarter end. Now there is a date for payment na, that is called periodical payment, and there is a payment for and there is a date for reconciling na, that is called as date of statement. So periodical payment na, in the contract itself they'll put some due dates for making the payment, that is called periodical payment. In the contract itself they'll put either quarterly or monthly for reconciliation, how much payment is made and how much goods has been supplied, to verify all those. That date is called as date of reconciliation. So understand, continuous supply involves periodical payments and periodical statements. Now we'll find out here. Look at the example, sir. For a quarter, on April, in April month, 8th April they paid 5 crores. NTPC paid 5 crores. For May month, they didn't even wait till 8th, they paid on 6th May itself. For June, they paid on 7th June, 5 crores, 5 crores, 5 crores. Whereas the date of statement, when the reconciliation statement will be made, last day of the quarter only, na, you could see here. Every quarter they will prepare a statement and reconcile on last day of the quarter. So the date of statement is 30th June, 30th June, 30th June. So now, sir, why all this story we are discussing? To find out the last date for issue of invoice. For continuous supply, the last date for issue of invoice is what? Date of periodical payment or date of statement, whichever is earlier. Okay. Now look at the example once again. Every month 5 crores has to be paid. In April by 8th only 5 crores paid. In May by 6th 5 crores paid. In June by 7th June 5 crores has been paid. Now the date of statement is constantly, it is 30th June, 30th June, 30th June. Now the last date for issue of invoice is out of these two, whichever is earlier. So in April, 8th April we have 5 crores payment, whereas statement is raised only on 30th June. Out of these two, which is earlier? 8th April. So on 8th April you will raise invoice for only 5 crores because the payment is made only for 5 crores. Now come to May. 6th May 5 crores payment and 30th June there is a reconciliation. Out of these two, which is earlier? 6th May. So now on 6th May also they will raise invoice for 5 crores. Then on June, 7th June again 5 crores payment, whereas reconciliation is only on 30th June. Again 7th June only earlier invoice will be raised for 5 crores. So now if you look at till this point, till 30th June, already they have raised invoice for how much? 15 crores. April 5 crores, May 5 crores, June 5 crores. Now on 30th June they reconciled and they found out like the total coal supplied is for 16 crores. Whereas for 16 crores, for how much value invoice is raised? 15 crores only. For the balance 1 crore invoice not yet raised. For the balance 1 crore, when invoice has to be raised? Date of payment or date of statement. Payment not yet made because still now 15 crores only paid. For the 1 crore, since statement is raised on 30th June, the 1 crore, for 1 crore invoice has to be raised on 30th June. So understand, very simple point only. Invoice has to be raised on date of payment or date of statement, whichever is earlier. In this question, on reconciliation, they found out like the supply is made for 16 crores. But every month, since there is a payment of 5 crores, month on month they raised 5 crores invoice, 5 crores invoice, 5 crores invoice. By that time they reconcile, already they raised invoice for 15 crores. Only for 1 crore payment is not made. That's why invoice also not raised. But on the 30th June, even though payment is not made, statement raised na. So that's why you need to raise invoice for the other 1 crore also on 30th June. So continuous supply means what? Supply of goods either continuously or recurrently, either by way of wire, cable, pipeline or any other mode. It should involve periodical payment or periodical statement. What is the last date for issue of invoice, sir? Periodical payment or periodical statement, whichever is earlier. Sir, for example, I took here payment monthly, statement quarterly. It's not a standard rule like payment should be monthly and statement should be quarterly. Payment can be weekly as well. Statement can be monthly as well. Okay, it's completely their terms. But the provision says like payment or statement, whichever is earlier is the last date for issue of invoice. Next, continuous supply of service. What is continuous supply of service? Supply of service either continuously or recurrently, either by pipeline, wire, cable or any other means. First 2 points same only. There also continuous supply of goods, na supply of goods continuously or recurrently. Here also same thing. Wire, pipeline, cable or any other mode, same thing. Look at the fourth point, sir. Where the third point, where the contract is for a minimum period of 3 months. So to call it as continuous supply of good, first 2 points in good and service same, sir. Whereas for goods, it should involve periodical payment and service. Periodical payment and statement. Whereas for service, the third point is like it should be minimum for a period of 3 months. Then only it is called as what? Continuous supply of service. So what are the examples? Are cable connection, DTH, broadband, electricity. These are the examples of continuous supply of service. Now the question is, what is the time limit for issue of invoice? Sir, with respect to service, there may be 3 types: due date ascertainable, event linked, other case. Due date ascertainable na, in electricity bill or internet bill, generally they'll give you a due date by when you need to make the payment and all, or else there'll be a due date when the bill will be generated month on month. Let's say, sir, if you have internet connection at your home, you know when the bill will get generated. At every month last day or 15th or 16th or 1st or 2nd, one day they'll fix. That is the cycle day. So every month on 2nd or 3rd, whatever the date they fix, on that day they'll be generating the bill. That is called as what? Due date. Due date ascertainable. If they have such kind of due date, then invoice has to be issued before or on the due date. Next one, event linked. Any problem you have? Okay. Next one is event linked. Event linked na, there is no due date ascertainable there, sir. So first understand due date ascertainable na, in contract for every month or generally monthly contracts only, electricity, internet bill, postpaid connections, landline connection, this kind of continuous supplies, they'll have a due date. That means every month 30th or every month 1st or 2nd, they'll set a date. On that date the bill will get generated. So that date is called as nothing but due date. So when there is such kind of due dates fixed, then invoice has to be raised on the due date or before the due date. If there is no such kind of due dates, let's say for example construction contracts. In construction contracts they may have event linked. Event linked na, let's say, sir, I have agreed with a contractor that the contractor will construct 5 floors building to me for an amount of 3 crores. If I pay total 3 crores upfront, initially itself if I pay 3 crores, then he will not construct the building. He'll take 3 crores and he will not construct the building. So I will not pay like that. Now the contractor also has a problem. If I say like, you first construct the 5 floors, then I'll give 3 crores. Then he has a problem like I will not give him money. So how the arrangement will be there? He'll say like, I'll do first basement, release some amount, then after completion of first floor another amount. Like that we'll put some events. So whenever such event completes, then the invoice has to be raised. Second one. Third one, there is no due date linked or event linked. It is a random case, sir. Random case na, when the supplier will be keep on asking money, recipient will pay whenever he has money. Okay, there is no fixed time limits. He'll ask whenever he wants, recipient will pay whenever he has. So three types: due date ascertainable, event linked, others. Due date ascertainable na invoice has to be raised on or before the due date. Event linked na on or before the completion of event. Other case, date of payment invoice has to be raised. Next, cessation of supply. Cessation of supply na cancellation. Whenever there is a service is cancelled, okay, Yogesh appointed as an auditor of a company, but suddenly extraordinary general meeting was called for, and then he has been removed as an auditor of the company. Now what he has to do? Okay, he'll cry, moye moye, all this secondary. Okay, but initially what he has, I mean, what he can do now, for the work he already did, he can raise a invoice on the date of cessation itself. Whenever there is a cancellation of contract, you have to raise invoice on the date of cancellation only, not for the full value, to the extent of service you provided till that point of time. The last ones are related to invoice. Sale on approval basis. Sale on approval basis. You know Gadi detergent. Will get any ad regarding Gadi detergent in Colors TV. Yeah. Okay. I mean, there is some quotation regarding this ad which is linked to here. They'll say like use first, then only believe. Okay, so sale on approval basis, na the concept is same thing only, na. First, okay, if it is sale on approval basis, so see here, sir, when the goods were sold on sale on approval basis, then the invoice should be issued before or at the time of supply. So the goods are removed on 5th June 2024. Let's say the goods removed on 5th June 2024. They were sent on sale on approval basis. Sir, with respect to sale on approval basis, the sale will be considered as happened only after approval. Okay. Sir, generally sale on approval basis when they'll allow, if the supplier is a new person and if he has come up with a new product, then generally he'll give this kind of options. First you take the stock. Once you satisfied with the quality, then you can give the approval. In with respect to sale on approval basis, sale is not completed on the day when you hand over the goods to customer. It is completed only when the day the goods were approved by the customer. So goods were removed on 5th June 2024. On this day, no supply has been happened. From here, we'll count 6 months. 6 months now. 5th June means July, August, September, July, August. Okay, 5th December 2024. By then, 6 months was completed. So either by 5th December, you need to check whether approval has been given by customer or not. Let's say I'm taking two scenarios, sir. Scenario 1, approval is given on 10th November 2024. Approval, date of approval. Scenario 2, approval is given on 15th March 2025. 15th March 2025. Here the approval is given within 6 months. Here the approval is given after 6 months. Now take the date of 6 months also. When the date 6 months is getting completed. 5th December 24. Here also 5th December 2024. So the date for raising invoice is out of these two, whichever is earlier. Here earlier na 10th November. Here earlier na 5th December. So to put it in other words, where approval is given within 6 months, date of approval is the invoice date. Where approval is not given within 6 months, the day when 6 months expires has to be treated as the day for raising the invoice. So see here, before or at the time of supply. Supply means nothing but, sir, supply is sale. Okay, when the sale will be considered as made on the day when the approval has been made. So even though they mention it as time of supply, here supply is nothing but approval only, before or at the time of approval, or 6 months from the date of removal, whichever is earlier. So with this we completed the invoice related provisions. So come back. Invoice related with respect to goods. Supply involves no movement, involves delivery, other cases installation trial run. When there is no movement, invoice has to be raised on or before the removal of goods. Involves delivery on the date of delivery or before the date of delivery. Involves installation trial run, etc. on or before making them available for use. Next, services. In general cases, invoice has to be raised within 30 days from completion. With respect to FBI, within 45 days from completion. Third ones are there. FBI, financial, banking, insurance companies, telecom companies, providing services among their distinct persons, not to outsiders, among their distinct persons. Then, by the end of the quarter or the date of recording it in the books of accounts of supplier, whichever is earlier. Then continuous supply with respect to goods, periodical payment or periodical statement, whichever is earlier. With respect to service, there are continuous supply of service. There are three different kind of arrangements: due date linked, event linked, others. If due date is ascertainable on or before the due date, event linked on or before completion of event, in any other case date of payment. Then cessation of supply, cessation na cancellation. Whenever there is cancellation, on the date of cancellation only invoice has to be raised. Last ones are sale on approval basis, date of approval or 6 months from date of removal, whichever is earlier. Okay, so if you have clarity regarding this, then we can decide time of supply very easy, sir. Time of supply of goods under FCM. The time of supply of goods under FCM, we need to find out 3 points. I mean, they'll tell about 3 points. Out of these 3, whichever is earlier is the time of supply. First one, actual date of invoice. On invoice, you'll put some date na, on bill, that actual date of invoice, which will be given in the question directly only. You need to pick the actual date of invoice. Second one, based on the situation in the question, you need to find out due date for issue of invoice. So due date for issue of invoice is the key thing which you need to identify here. First one is what? Actual date of invoice. Second one, due date of invoice. Due date of invoice you need to find out. How? By reading the question, you should understand whether there involves delivery or not, whether the supply completes at supplier premises or whether there involves sale on approval basis. So understanding the situation, you should find out the due date for issue of invoice. Third one, date of payment. Date of payment. So out of these 3, whichever is earlier is the time of supply. What are the 3 points, sir? Actual date of invoice, due date for issue of invoice, date of payment. Out of these 3, whichever is earlier. But however, with respect to goods, notification 66/2017 has been introduced, which says like, while deciding time of supply for goods, except for composition scheme person, you can ignore date of payment. You can ignore date of payment except for composition scheme person. All taxpayers except composition scheme persons and making specified actionable claims are exempted from paying GST at the time of receipt of advance. The meaning is simple. Except for composition scheme person and who are supplying specified actionable claims, date of payment need not to be considered. Date of payment can be ignored. So, if it is a composition scheme person, if you need to find out time of supply, you should take earlier of the 3: date of invoice, due date of invoice, date of payment. If it is other than composition scheme person, it's enough if you check date of invoice and due date for issue of invoice. But while you are writing answer, we'll write first all the 3 points. As per 12 subsection 2, time of supply of goods under FCM is earlier of. We'll write all the 3 points. First one is actual date of invoice, due date for issue of invoice under 31. Third one is date of payment. Then again you will put notification 66/2017 says like, while deciding time of supply for goods, date of payment can be excluded or date of payment can be ignored except for composition scheme persons. Okay, so now what is time of supply na for goods under FCM? Very simple. Date of invoice, straight away it will be given in the question. What you need to find out na? Due date for issue of invoice considering the situation. This is under forward charge mechanism. Now come under the reverse charge mechanism. Sir, under forward charge mechanism, the obligation to pay tax is on. Under forward charge mechanism, the obligation to pay tax is on supplier. Whereas under reverse charge mechanism, the obligation to pay tax is on recipient. So the time of supply shall be the earliest of the following dates. Earliest of what? Date of receipt of goods, the day when recipient receives the good, first one. Date of payment, and 31st day from date of issue of invoice. While counting 31st day, 31 days, exclude the day mentioned in invoice and count 31. Let's say on invoice it was mentioned as 2nd November 2024. What you need to do? Ignore 2nd November also and count 31 days. Then you will get this one. Then take date of payment and date of receipt of goods out of these three, whichever is earlier. So what is called date of payment? Sir, bank entry and book entry may not be same. So we need to take earlier of bank entry and book entry. So let's say I have issued check. If I have issued check in recipient books, if he issued check, then in books, in book entry will get debited already. Whereas in bank, only when the check gets cleared, it will get reflected in the bank account. So the date of payment is either book entry or bank entry, whichever is earlier is the date of payment. But since RCM, we are taking it from whose point of view? Recipient point of view. Sir, clear? Are you able to understand? FCM, not two things only, sir. Due date of invoice, actual date of invoice. But while writing answer, remember, you should write all the 3 points. Date of invoice, actual date of invoice, due date of invoice, date of payment. However, notification 66/2017 says like you can ignore date of payment. Then coming to RCM, 3 points. Date of receipt of goods and services by the recipient, date of payment, 31st day from invoice, whichever is earlier. Then for service, sir, for service, you need to check whether invoice has been raised within the 31 time limits or not. For deciding time of supply, first you should check whether invoice has been raised within time limits of 31 or not. What are the time limits of 31 for service? In general, 30 days. In case of FBI, 45 days. FBI telecom operator and distinct among their distinct persons, end of the quarter or date of recording it in the books of accounts. Cessation of supply on the date of cessation itself. So depending on the situation, we need to check whether invoice is issued within the time limit under 31 or not. If it is issued within the time limit, then two things: date of invoice or date of payment earlier. Invoice issued within the time limits, date of invoice or date of payment, whichever is earlier. Invoice not issued within time limits, then date of completion or payment, whichever is earlier. So only two things, sir. Invoice issued within time limit, not issued. If it is issued within time limit, date of invoice or date of payment. If it is not issued, date of completion or date of payment, whichever is earlier. So see, invoice, section 31 time limit is met. Within section 31 time limit. Then date of invoice or date of payment, whichever is earlier. Not issued within time limit. Then date of completion or date of payment, whichever is earlier. So by looking at this, if you see in both the places, payment is common. Here also payment is there. Here also payment is there. So with respect to service, if the payment is in advance, nothing but payment is only earlier of all the others. So if payment is there in advance, then time of supply will be automatically date of payment only. So to put it in other words, whenever there is advance payment with respect to supply of service, time of supply is nothing but date of payment. So again repeating, whenever there is advance payment with respect to supply of service, since whether invoice issued within time limit or not within time limit also, payment is the common point. That's why advance payment, if it is there, then time of supply will be date of advance payment only. So for this line, again there is a proviso or exception here. Let's say, sir, I had an internet connection. Okay, I have an internet connection. On 30th April, they raised a invoice. Okay, I have an internet connection. On 30th April, they raised an invoice for how much? 9,400. Sir, on 30th April, invoice raised na for time of supply for 9,400 is 30th April. And the bill has to be paid by 10th May. Bill has to be paid by 10th May. So on 10th May, while I am paying the bill, I paid 10,000 instead of 9,400. Why I paid 10,000 na? Since a round figure no, so I paid 10,000 rupees. I thought the other 600 will get adjusted in the next bill. I paid 10,000 rupees. So now see, for the 10,000 I paid, for 9,400 time of supply already happened because it is for the last month. But the extra 600 which I paid is advance because for May month the bill is not yet generated. So by applying the previous logic, whenever there is advance payment, time of supply is when? Date of payment only. The problem comes here only, sir. Now on May 31st when they generated the bill got 9,500. But out of this 9,500 already 600 paid. For this 600 the time of supply is different. For the balance 8,900 the time of supply is different. Sir, this is 600 comparatively a bigger number. What happens if the bill amount is 899 and I paid 900? For 1 rupee also you need to do this thing. And even like let's say the bill amount is 9,930. I paid 10,000. Extra amount I paid is 70 rupees. For all these 1 rupee, 2 rupee, 10 rupees, 50 rupees also, you need to separate the time of supply for the advance money paid and for the rest amount also. So which is little complicated for the telecom industry or the internet service providers for them to divide and calculate the time of supply. So they have introduced a provision here stating like, where the supplier receives an amount. Look at this second point, sir. Where the supplier receives an amount up to rupees 1,000 in excess of amount indicated in invoice. Let's say on invoice 800 is involved. I paid 1,000. Excess paid is 200 only, which is within 1,000. The extra amount which we collect over and above the invoice is within 1,000. Then the time of supply in relation to such excess amount need not to be the date of payment. It could be either date of payment or date of invoice at the option of supplier. In relation to such excess amount, at the option of supplier be date of issue of invoice also. But so two things are, I am talking about a contradictory point here. Whenever there is advance payment, time of supply is date of payment only. But here in these particular cases, 1 rupee, 2 rupees kind of adjustment related, round figure related amounts will also might get paid. For that small amounts also, you need not to decide time of supply separately. For them, you have the option to take time of supply as date of invoice only. So if that is the case, then even though I paid 10,000 here, for 9,400 time of supply 30th April only. Even though I paid extra 600, I will not decide time of supply for this 600 on date of payment. What I will do, whenever the bill raised, then only I will decide the time of supply, which will reduce my double work. Otherwise, I need to do double work. Since I here 600 has been paid excess, for that 600 time of supply has to be decided separately. For the balance also, it has to be calculated separately. So that can be avoided. Then decide separately. Let's say here you paid instead of 9,400, 10,000, you paid 12,000. So the advance amount paid is more than 1,000. So then no other option. But the advance paid, time of supply is date of payment. For the balance amount, date of invoice. Next, sir, this third point also look at this. Very important for problem solving this one. If there is any advance payment in relation to supply of service, then time of supply has to be calculated separately for advance payment and balance payment. Let's say the contract is for 5 lakhs. Out of them 2 lakhs is paid in advance. Then you need to solve the problem for, you need to find out time of supply separately for this 2 lakhs and separately for the balance 3 lakhs. You cannot do cumulatively at a time for 5 lakhs. Whenever the amount is paid in terms or installments, you need to pay separately for each term of amount paid. Okay. Next, services reverse charge. Whenever there is reverse charge services, then the time of supply will be date of payment or 61st day from date of issue of invoice. Sir, for goods there are 3 points. For goods under RCM there are 3 points. What are those 3? Date of receipt of goods, 31st day, date of payment. Sir, good na tangible item. Again it has to transport and should come. So we have that point of date of receipt of goods. Service intangible. Instantly it can be delivered. So that's why there is no point regarding receipt of goods. Only 2 points we'll check here. 61st day from date of invoice and date of payment. Payment not 2 things. Book entry or bank entry, whichever is earlier. Next, as per proviso section 13 subsection 3, in case of associated enterprises na nothing but related persons. They are related persons and supplier is outside India, recipient is in India. Let's say, sir, holding company from outside India provided services to recipient in India. Recipient being subsidiary company in India. My holding company is in Singapore. Holding company provided services to subsidiary company in India. Is it import of service or export of service? From outside India, holding company provided services to their subsidiary company in India. Import only, na? Yogesh, are you listening? From Dubai, your holding company or parent company provided services to your company which is in Chennai, where the supplier is there, outside India. Whereas the recipient and the place of supply is in India. So it is what? Import of service. Import of service, FCM or RCM? RCM. Import of services are covered under RCM. So the point is like, under RCM, what are the 2 conditions we said? Date of payment or 61st day from date of invoice. 61st day from invoice, na? Invoice has to be raised by holding company which is there in foreign country. What if there are no conditions regarding invoice in foreign country? So foreign country, they not even raised an invoice. So how could you calculate 61 days? So for that reason, they said like, time of supply is earlier of entry in books of accounts of recipient and date of payment. They ignored 61st day as well. Because the supplier is in foreign countries, sir, there the law might be different. So that's why they are not considering the invoice date. They are considering entry in books of accounts of recipient and date of payment, whichever is earlier. Okay. So 90% of the chapter got completed, sir. Be patient. Okay, to sum up once again. Time of supply with respect to goods. Time of supply with respect to goods. Earlier of. Actual date of invoice. Due date for issue of invoice. Date of payment, whichever is earlier. However, notification 66/2017 will come and says like, payment you ignore. Okay. Then we went to RCM. RCM also 3 RCM for goods. 3 points we need to check. What are those 3? Date of receipt of goods and services, date of payment, 31st day from invoice. Then we came to service. Whether the invoice is raised within 31 time limits or not. If it is issued within 31 time limits, date of invoice or date of payment. No, it's not issued. Date of completion or date of payment. Fine. Then there comes this provision related to 1000 rupees, where in excess of the bill value, if any amount is received and the amount is within 1000 rupees only, then for the excess amount collected, time of supply can be date of invoice at the option of supplier. Otherwise, if any advance amount is collected, time of supply is date of payment only. But for the small amounts up to 1000 rupees which is collected or which is paid in excess of bill value, the time of supply can be date of invoice. Next, while solving problems with respect to service, definitely they'll give advance payments. We need to solve time of supply separately for the advance payment, or whenever there are payment given in multiple terms, for each term we need to find out time of supply separately. Okay. Next we discussed about RCM for services. Time of supply for service under RCM. 61st day from invoice or date of payment, whichever is earlier. If supplier and recipient are associated enterprises, connected, related persons, holding and subsidiary kind of, then since the supplier is outside India, he may not be raising invoice. So we cannot check 61st day. So in the place of 61st day, they gave an alternative provision saying like date of recording it in the books of accounts of recipient or date of payment, whichever is earlier. So next it is about vouchers, sir. The next one, it is about vouchers. Sir, even in online also, you can buy lifestyle vouchers or a brand related vouchers, Domino's vouchers. You will get this voucher at a concessional price than cut off. Let's say I want to buy Adidas shoes. Okay. I went and searched in some online websites and all. I have a Adidas coupon for shoes, which is being, the coupon value is of 5000, but it is getting sold for 4500 only. So I bought that coupon for 4500, but I can redeem that coupon in the Adidas store for 5000 rupees. Okay, now I bought Adidas coupon today. Sir, coupon is a good or the underlying good which we can redeem with that coupon is the good? The underlying good is the actual coupon. Okay. So now I bought coupon today for 4500. That means for 4500, Adidas is going to sell their goods for 4500. The point is, the vouchers have been categorized into two types: identifiable, unidentifiable. Identifiable na, which one I said? Like the Adidas voucher. Unidentifiable voucher na, Amazon voucher you purchased in the same way. Sir, if you purchase Amazon voucher, you could buy any good from Amazon. So you cannot identify which good you are going to buy ultimately. Whereas Adidas voucher, if I buy na, ultimately Adidas also, it should be clearly mentioned like it should be redeemed only on shoes or only on trousers or sportswear, like that they should mention clearly. Then only it can be called as identifiable voucher. Sir, if it is an identifiable voucher, if I buy a voucher today and it is an identifiable voucher, even though I redeem the voucher after 20 days, but the good which I am going to buy is clear today itself. Sir, if I bought a specifically Adidas shoes related voucher, after 1 month or 2 months also, with that voucher, what can I redeem? Shoes only. So what the provision says, like if it is an identifiable voucher, consider as like the shoes has been supplied today, because anyhow you are going to buy shoes only by using that voucher. If it is non-identifiable voucher, there is no certainty for what I am going to use that voucher. So only on the date of redemption you need to consider as supply has been made. Identifiable voucher na, the day you purchase the voucher, consider it as the underlying good has been supplied. Whereas if it is unidentifiable voucher, the supply will be considered as made only on the date of redemption. Got my point, sir? Identifiable voucher, sir. Even though no good has been given to me today, only coupon I got, but still by using that coupon only I can buy good. That also a specific good only. So let's say you got Domino's voucher, sir. Domino's pizza related one voucher you have. With that, what you could redeem? Domino's pizza only. So even though you didn't order pizza today, it will be considered as the supply has been made today itself. If it is unidentifiable voucher, The supply will be considered as made only on the date of redemption, because it is not clear which good you are going to buy. On that good, what would be the tax rate and all, it is not clear. Next, where it is not possible to decide time of supply. If it is not possible to decide time of supply, then you cannot identify. Sir, this will come generally in the case of scrutiny only, sir. When they come for scrutiny and they found out like in the past years you have not accounted some sales, or you have not shown certain data, or there is some tax short payment and all, they identified. Let's say in July 2023, actually you reported 20 lakhs as your sales and paid tax, but the actual to be reported is 23 lakhs. That means you have under reported how much? 3 lakhs. For this 3 lakhs, what would be the time of supply? Na? In case periodical return has to be filed, sir, you could identify this is related to July. So July month return filing date. July return filing date na August 20, 2023. So by that time you need to pay tax. So that time is called, treated as time of supply. In case return has to be filed. Return has to be filed na, nothing but the context here is it was related to some past months. That time you cannot identify that as a supply. But now either because of the scrutiny or because of audit, they found out like, I mean you found out like there's a difference in the supplies which you reported and which actually made. So for the difference amount you need to pay tax now. What is the time of supply means? The month to which it is related, such month due date for tax payment will be treated as the time of supply. So in case periodical return has to be filed, this is related to July month na. So July month related due date na August 20, that would be treated as time of supply. Sir, you can't even find out the month, sir. The proper officer came, verified. He don't know to which month there is under, I mean there is under reporting and all. But he somehow conclude that you have not shown 5 lakh rupees sales with respect to a transaction. He cannot even identify whether it is Jan month, Feb month, March month, or which month also. But there is definitely an under reporting of sales to an extent of 5 lakhs. Now he is asking you to pay the tax on that 5 lakh rupees as well. What is the time of supply na? The date on which tax is paid itself is the time of supply. Next, time of supply in relation to interest, late fee and penalty. Shankar supplied goods to Yogesh. Okay. And Shankar has offered a credit of 3 months. Offered credit of 3 months. And the goods value is 10 lakhs plus GST. 10 lakhs plus GST. Yogesh has to pay this within 3 months now. He has paid after 9 months. After 9 months. So there is a delay of how much? 6 months. For which Shankar, I mean, if Shankar got this 10 lakhs within 3 months itself, na, he got interest and all. But since he delayed 6 months, either you call it as interest, late fee, or penalty, Shankar asked Yogesh to pay an additional 50,000 rupees as well. Additionally, 50,000 as well. Either this 50,000 which he is asking extra can be called as interest, can be called as late fee, can be called as penalty. Whatever the name you put, you can call it as any way. What this provision is saying na, first I'm talking about value of supply provision. What value of supply provision says means this 50,000 which you collect is incidental to the supply you made. Okay, because delays, I mean in general usual businesses, delays is a most common thing. So the 50,000 which you are getting in addition is an incidental activity to the main supply, and this 50,000 also has to be added to the value of supply. So the value of supply is not 10 lakhs, it is 10 lakh 50,000. The question is, what is the time of supply for this 50,000? Because for this 10 lakhs and GST they might have issued invoice and all. Based on invoice date, time of supply is already decided. But then this 50,000 is not included. Only today you realize that you are getting additional 50,000. For this 50,000, the time of supply is nothing but date of, sir, material, this point got missed here, write down. Shall be the date on which supplier receives payment. Shall be the date on which supplier receives payment. For the delayed payment, interest, late fee, penalty, time of supply is nothing but it shall be the date on which supplier receives payment. Sir, section 12 is for time of supply of goods. Section 13 is for time of supply of service. Okay, if you remember, 1 to 6 sections are Muke sections. All these sections we have in introduction chapter. We discuss first one is title, section 2 definition, 3, 4, 5, 6 are related to officers. Then section 7 is supply, 8 is composite and mixed supply, 9 is charge, 10 is composition scheme, 11 is in exemptions chapter, which we don't discuss. Okay, 12 and 13 are related to time of supply of goods. There is one more section in time of supply, section 14, time of supply. Okay. Okay. Section 14. Section 14, time of supply when there is a change in tax rate. Sir, if you don't listen, you will not understand this. Okay, it's a simple logic, sir. If you don't listen clearly, you will not understand. If you don't understand now, you will not understand even afterwards also. Time of supply when there is a change in tax rate. Let's say on 1st October 2024, the tax rate changed from 12% to 18%. Now, by applying section 14, we need to decide whether 12% is applicable or 18% is applicable for a transaction. Because for a transaction, certain events may be before the rate change, certain events may be after rate change. So for deciding, here we'll take 3 events, sir. One is date of completion date. The other one is date of payment. And the third one is date of invoice. These 3 things will decide whether we should take new rate or old rate. Whether it is new rate or old rate will be decided based on the 3 things. What are those 3? Date of completion, date of payment, date of invoice. Okay, now out of these 3, majority, which side na? That rate. Majority, which rate? Majority, if they are before rate change, then old rate is only applicable. Majority after rate change, then new rate only applicable. So see here, sir. Date of completion is on 30th June. Date of payment is on 30th September. Whereas date of invoice is on 15th October. So majority, which side? Before rate change or after rate change? Before rate change. Majority before rate change only. So which rate is applicable here? Old rate only, which is 12%. If majority are after rate change, then new rate only applicable. Okay. Sir, we decided old rate, new rate. But the question will not end there itself. Sir, actually we are going in a reverse way. The correct order is like, first they need to decide time of supply. Based on time of supply, actually it has to be decided old rate or new rate. But it is easy to decide old rate or new rate only than deciding time of supply. So we'll first decide whether it is old rate or new rate. Based on that, we'll understand what is the time of supply. Okay. So look at this example only. Once again, I'm writing date of completion, date of payment, date of invoice. Completion is on 25th September. Date of payment is on 21st August. Date of invoice is on 16th October. So tell me, old rate or new rate? Old rate. Okay, why? Because majority are before rate change. Majority are before rate change, so old rate only applicable. Sir, out of these 2, date of completion is there na. Date of completion is something like Kattappa. You know Kattappa? Kattappa will not, Kattappa has all the qualities to become a king, but he can never become a king. The same way, date of completion will never be time of supply. Even though it is a deciding factor here, date of completion can never be time of supply. Okay, so here, which two decided old rate? Which two has, out of those three, here we are saying like old rate. Out of these three, which two decided old rate? Date of completion and date of payment. Out of that completion, it cannot. It's okay, Kattapana, so it cannot become time of supply. The only other thing which is there to become time of supply is date of payment. So in this case, time of supply is nothing but date of payment. So simple, sir. If it is date of completion and date of payment together decided old rate or new rate, completion cannot become time of supply. Then obviously payment. If it is completion and invoice together decided time of old rate or new rate, then also completion cannot become. Then invoice date will be the time of supply. Now comes the third, final conflict between Rana and Prabhas. What if payment and invoice together decided old rate and new rate? Out of these two, whichever is earlier. When payment and invoice, okay, we'll take examples on that, no problem. If the two which are deciding old rate and new rate are payment and invoice, then take whichever is earlier, because both are wants to be king. So that's why they will take whichever is earlier. If it is completion and payment, completion, date of completion can never be time of supply, so we'll take payment. If it is completion and invoice, date of invoice. If it is payment and invoice, whichever is earlier. Okay, so now look at the material. This table is there na. Supply is completed before the change in rate of tax. Supply completed. So let us take like 31st October. There is a tax rate change from 12% to 18%. So look at now. Supply completed before the change in rate of tax. They said it as yes. That means before rate change or after rate change. This is supply completed before change in rate of tax. And they said it as yes. That means it is before rate change or after rate change. Before. Invoice issued before the date of change. They said it as no. That means before or after. After. Third one, payment. Payment received before the date of change in tax rate. They said no. After. So only one is before, the other two are after. Old rate or new rate? New rate. We got new rate. So which two decided here? It is new rate. Invoice and payment decided it as new rate. So if it is invoice and payment, now we'll take time of supply as earliest of invoice or payment. Come to second one. Supply completed before the change in tax rate. Yes, before. Invoice also yes, that means before. Payment no, that means after. So here which rate? Old rate and new rate? Old rate, because two items are before the rate change, so it is old rate. So if it is old rate, which two decided it as old rate? Completion and invoice. So you cannot take completion as time of supply, then time of supply is date of issue of invoice. Then before, after, before. Okay, which two decided it as old rate? Completion, payment. Completion you cannot take, so it is nothing but payment, old rate. Then after, because if you see supply completed before the change in tax rate, they said no, that means it is after. Invoice before, payment also before, old rate only, because there are two before, so it is old rate only. But which two decided it as old rate? Invoice and payment. If it is invoice and payment, we need to take whichever is earlier. Then again, supply completed before rate change, they said it as no, after, before, after. So which two decided it as new rate? Payment, completion. So we should take payment as the time of supply. The last one, sir, after, before. Two after the rate change, new rate only applicable. Which two decided it as new rate? Completion and invoice. So invoice is the time of supply. So this is the provision here. But The point is tax rate changed on 31st October, sir. Customer came to me on 1st November and said like, sir, do something and please apply to me also old rate only, otherwise I have to pay extra money na. Date of completion is in my hands only. I could simply say like it was completed 5 days back also. But invoice will have a serial number, sir. We cannot give a old dated invoice because invoice will be having serial number. Maybe on morning 2 transactions already I might have did with the 1st November date. So I cannot change invoice number. Okay. Completion date I could simply say like my internal records only I could change that. Second one, sir, invoice I cannot change by because invoice has a serial number, I cannot alter that. Third one, I could change payment in my books. Simply what I can do in my books now, I could say like a check. How I'll ask the customer to give a post-dated, predated check. He'll give me a check stating like it was issued on 28th October only, and I'll take that check and I'll enter into my books of accounts as the amount has been received on 28th October only. So I can alter. Actually, it is a new rate one only, but still I can make it as old rate. To control this, they have inserted one more provision stating like, if at all the book entry is before rate change, if the book entry for payment is before rate change, then the bank entry should reflect within 4 working days from date of rate change. In the example which I have given, bank entry is 28th October na. So the book entry is 28th October na. The bank entry also shall be within 4 days from rate change. 4 days from rate change. When the rate got changed, 31st. From 31st, you count 4 working days. 4 working days. Let's say there is no public holiday. 4 working days na. It is 4th November only. Within 4 working days, if the payment gets reflected in bank account, then they'll trust me. Like whatever the book entry I made is genuine one only. If it doesn't get replied within 4 working days, then they'll think as whatever the book entry I made is not a genuine one. So they'll rely only on the bank entry. They'll not follow whichever is earlier. They'll take date of payment is only bank entry. If the bank entry reflects in books of accounts, reflects in bank account within 4 working days from date of rate change, then we can take book entry or bank entry, whichever is earlier. If it didn't get reflected within 4 working days, ignore book entry. Only you could trust bank entry. Sir, because book entry I can change. Bank entries we cannot change, no. We cannot change the credited date or debited date in bank records. That's why they trust only bank date. But in genuine cases will also be there. That's why they are giving 4 working days time from date of rate change. If it gets reflected within that time in the bank account, then fine, we can take whichever is earlier, book entry or bank entry. Otherwise, you could only take bank entry as the date of payment. This is the provision here, sir. Section 14 with respect to change in tax rates. Question number 14, sir. Time of supply. Come to question number 14. Read the question once. Sir, if you look at this question number 14, they're asking to determine the time of supply from the following particulars. 8th September, community has been booked for a marriage. Some agreed 11,20,000 and received advance of 1,20,000. So 8th September, advance paid 1,20,000, which is a book entry. Fine. Then on 10th September, advance amount credited into bank account. Next, 2nd November, marriage was actually held. I mean, date of completion of service is on 2nd November. Then on 8th December, 18th December. Sir, marriage completed on when? 2nd November. 2nd November, marriage got completed na, service also got completed. Functional service na, till marriage only. Now invoice is raised on when? 18th December. 2nd November, service completed. Invoice raised on 18th December. Within 30 days or after 30 days? After 30 days. 2nd November, service got completed. 18th December means after 30 days. Okay, after 30 days, invoice raised, indicating balance 10 lakhs payable. Then on 22nd December, they got 10 lakh rupees in books of accounts, whereas 24th December, it was got actually reflected into the bank account. So if you see again the summary, 8th September advance paid, 10th September bank entry. Okay, whenever there is date of payment, we need to take book entry or bank entry, whichever is earlier. Here in both the cases, book entry is only earlier than that of bank account, bank entry. So we'll take date of payment as book entry only. Next, 2nd November is the actual date of completion, but invoice is raised on 18th December. That is after 30 days. So with respect to service time of supply, where invoice is raised after 30 days, then the time of supply is date of completion or date of payment, whichever is earlier. Date of completion or date of payment, whichever is earlier. Sir, I said even one more point there. Whenever there is advance payment, you decide time of supply separately for advance payment and for the balance payment. So that means here in this question, there is advance payment of 1,20,000 and balance payment of 10 lakh. So you calculate separately for 1.2, separately for 10 lakhs. So for 1.2 lakhs, time of supply for advance payment 1,20,000, it is date of payment, because we repeated it several times. Whenever there is advance payment for service, the time of supply is nothing but date of payment only. So which is 8th September. When it comes for balance 10 lakh rupees, invoice not issued within section 31 time limit. So it is date of payment or date of completion. Payment is on 22nd December, whereas completion is on 2nd November only. So earlier na 2nd November only earlier. So time of supply is 2nd November. 14 done. Then we need to go to question number 15. Padmaja, a registered supplier, rendered taxable service for rupees 2 lakhs on 1st December. The invoice was raised on 9th December. Payment was received on 22nd November. Determine the time of supply. So look at here. Registered supplier rendered taxable service for how much? 2 lakhs. On when? 1st December the service is provided. Date of completion. The invoice was raised on 9th December. So 1st December completion, invoice raised on 9th December. Within 30 days or after 30 days? Within 30 days. And payment is on 22nd November only. Since invoice is raised within 30 days, we need to take date of invoice or date of payment. Invoice is on 9th December, whereas payment is on 22nd November. Out of these two, whichever is earlier, na? 22nd November only. So see, time of supply in case of service is the earliest of following. Date of issue of invoice, if invoice issued within prescribed time limits of 31, that is nothing but 30 days. Or the date of provision of service if invoice is not issued within the period prescribed under 31. Okay. Here date of receipt of payment. In the instant case, even though invoice has been issued within time limit, it is irrelevant to determine the time of supply since the date of payment is earliest. Hence the time of supply shall be 22nd November 2020, 22nd November only. So 15, 14, 15 also done. Question number 16. So question number 16. Okay, take 5 minutes time and try to understand this question, sir. First, the question understanding itself is tricky. Just try to understand the question. Okay, on plain reading you will not understand, I'm sure. While reading itself, write something to remember in the rough book or something, then only you could somehow grasp the points. Otherwise, it will be very tough for you to understand. Is able to understand, sir, anything? So are you able to understand anything? Okay, doing. Okay, do. So first we need to identify the events which are related to A and which are related to B. Okay, so first event if you see, sir, here and the point is A is FCM, B is under RCM. So we need to find out time of supply for both of them in different ways. So first transaction they are saying like 5th December they got payment of 1,50,000 for supply of A. This is related to A. And on 11th December receipt of 1,50,000. So this payment is from recipient perspective, whereas supplier got this on 11th December only. So related to A. Then the next transaction is related to B. So first filtration is like we are dividing the transactions into whether they are related to A or related to B. Okay. So now we have this categorization. Now tell me, for deciding time of supply of good under FCM, what are needed for us? Time of supply of good under FCM. Here there is no delivery kind of thing has been mentioned, only receipt has been mentioned, na? So that's why we only two things are necessary. Date of removal is nothing but the due date for issue of invoice, and the second thing which we needed is actual date of invoice. So out of A marked items we'll just find for those two. One is date of removal of goods and the other one is actual date for issue of invoice. So date of removal nothing but it is the due date for issue of invoice. So if you find out here, payment related details are given, sir. First two. Payment related items are not relevant related to good under FCM because 66/2017 says like payment need not to be considered. So we ignore this one. Then we come to A here. Product A manufactured and removed. When it has been removed, 3rd January. So it is relevant. That's why I kept it as a tick mark I kept here. Then come to A for once again. 2nd January invoice has been raised. This is also relevant. So that's why I put tick mark here. And then for another A, payment has been given. Payment is not relevant. So only these two. I mean, one is 3rd January relevant and the other one is here 2nd January is relevant. The 3rd January is nothing but the day when the goods have been removed. Nothing but this is the due date. Whereas 2nd January is the actual date. Out of these two, whichever is earlier, 2nd January is 3rd January. 2nd January. So time of supply is nothing but 2nd January. So the problem is from this question, solving or else writing the provision is very easy. But from this data, filtering out what we required alone is tough. Filtering out is the toughest task because he'll give us like a sequence of events, but out of them some are related to A and some are related to B. Okay, so for A, first we have identified the transactions which were related to A and which were related to B. I marked in this way. Then out of A also, since it is time of supply for goods under FCM, we need only 2 points. One is actual date of invoice. What is the actual date of invoice? 2nd January. That is one thing. Second one, due date for issue of invoice. In this case, due date not date of removal only. So removal is nothing but 3rd January. Out of these two, whichever is earlier is the time of supply. So that only I wrote here. Good A. Date of payment not required. We are not required to write also. Why not required? Because payment is not considered at all. But when it comes to date of removal, it is 3rd Jan. Date of delivery 4th Jan given, not required also. Date of invoice given 2nd Jan. The other date of payment is also not required. So for us only required two things. One is date of receipt and the other one is date of invoice. Out of these two, whichever is earlier is the time of supply. Okay. Now come to RCM. Sir, RCM with respect to goods, what we need? 31st day from invoice. Second one is like date of receipt of goods and services, not date of removal. They want date of receipt. So, okay, first we'll go for date of receipt. with respect to B? Sir, with respect to B, this receipt is receipt of payment, not goods. Then you see here, B, product B manufactured and removed, whereas product B got received on which day? 20th January only. So 20th January is important because on 20th January only the product B has been received by the recipient. Okay, one thing we need to consider here. Second one. So three things we need to check. First one is date of receipt of goods, that we got. Second one is what? Date of payment. Date of payment. And the third one is 31st day from invoice. So okay, first we'll go for invoice. Sir, invoice for B is raised on when? 9th January. So 9th January plus 31 days we should add. To 9th January, ignore 9 and add 31 days. So that means within January 22 days are there. 22. Yes. To get 31, another 9 days are needed in February. So Feb 9th is the 31st day. Feb 9th. So second point also we got. Then the third point we need. Third point is what? Date of payment. But the problem is here the payment is made in two parts. So while deciding time of supply, we wrote whenever there is payment made in installments, we need to decide time of supply separately for those installments. So if you see, payment initially paid here 3 lakhs and at last also there is balance payment. So for the initial payment we need to do separately and for the balance payment also we need to do separately. So look at here, payment also they gave 2 points. One is payment of 3 lakhs made by buyer of B and the second one is receipt of 3 lakhs. Which one we need to take? RCM na we are taking from recipient perspective or supplier perspective? Recipient perspective. Recipient will receive money or pay money? Pay money. So on the date of payment we should take, not the date of receipt. So date of payment it is nothing but 15th December. So in one case we should take 15th December and here it is 20th January and the third one is we calculated already Feb 9th. Out of these three, whichever is earlier na 15th December. In second case also 20th Jan common, Feb 9th also common. But the payment date will change for the balance payment. What is the balance payment made on 5th February? So you'll take here 5th February. Out of these three, whichever is earlier na 20th Jan. So date of payment 15th December, 22nd December. Whichever is earlier na 15th December we took. Sorry, why 22nd December we not even required to take. 15th December only we shall take. Okay, then date of receipt. Date of receipt is on 20th Jan. Date of invoice is on 9th Jan plus 31 days it is February 9th. Then you consider date of payment for the second term it is 5th February. So for time of supply of 3 lakhs it is 15th February. For the balance 3 lakhs it is 20th January. So like that we need to do, sir. Even today after going home also once again solve this question, then only you'll have some clarity. The last one, sir, 17th question. X Limited being a manufacturer sold goods to Y Limited wholesaler and issued invoice for the same. Find the time of supply in each of the following independent cases. What is the time of supply? So see, invoice has been raised on 1st August. What is the time of supply when they were removed the goods for delivery on 16th August only? Then the due date is how much? Due date is what? 16th August only. So 16th August or 1st August, whichever is earlier na, 1st August is the time of supply. Second case, Y collect the good from premises of X Limited on 10th August. Then the date of removal is nothing but 10th August. Out of these two, whichever is earlier na, again 1st August itself is the time of supply. Third case, Y Limited made full payment on 26th July. But since it is related to goods, payment is irrelevant. Then Y Limited credited the payment in bank account on 28th July. That is also irrelevant. For 3/4 of goods, recorded the same as receipt in books of accounts on 3rd August. The goods were dispatched on 1st August. So the dispatch is also on 1st August. Invoice is also on 1st August. Then for both of them, whichever is earlier, 1st August itself is the time of supply. Okay. So in all the three cases, 1st August itself is the time of supply. But the problem is when you are doing this question in exam, when are when there are three options like this, first option you will do, you got time of supply as 1st August only. Second option you did, again you decided time of supply as 1st August. Then you will get extra questions in the mind when you are solving third option, and you will say like, okay, maybe payment also has to be considered here, and then you will do other extra activities, and they will say like payment date as time of supply, but even there also 1st August only the time of supply. Okay, so we're into the topic value of supply. So initially when we start GST, like we'll identify first whether it is a good or service. Once we decide that, then we'll identify whether it is a supply or not. If it is a supply, then we'll identify chargeability. I mean, who is responsible to pay tax. Once we decided it is a supply, on them, whether supplier is liable to pay or recipient is liable to pay, that also will identify. Then we'll check, is it exempted or taxable. Okay, if it is exempted, then the chain will get end there. If it is taxable, then we'll decide timing of such supply. If timing also decided, then we'll have to find out the value of such supply, because only on value will apply the percentage of tax rate. Okay, the tax we calculated to compute the tax, we need to arrive the value of supply. So value of supply, sir, there is only one single section on this chapter, section 15. Section 15 has 4 subsections, sir. Section 15, subsection 1, subsection 2, subsection 3, and subsection 4. But there are rules here, sir. After after 15 subsection 4, we'll have rules from 27, 28, 29, 30, 31. Then it will go till 32, 33, 35. Till 35, the rules will go. We need to discuss rules as well. Okay. So 15 subsection 1. What 15 subsection 1 says? Na simple. So yesterday we discussed customs valuation also. There also I said the same thing. Transaction value can be taken as accessible value. Here also same logic. They are saying like what? Transaction value can be taken as what? Value of supply. What is called transaction value? Transaction value, na, the value which is transacted between two parties which are unrelated, and where price is the sole consideration. Except the price, there is no other consideration between them, and those two are unrelated. Then we can take what? Transaction value itself is the value of supply. Let's say there is a seller, sir. There is a seller. He sold the same kind of goods to one customer for 500, to another customer for 200. Okay, and both the customers are unrelated only, and except price there is no other consideration. Then in this case 500 is the transaction value, in this case 200 is the transaction value. Even such significant difference also, okay, we cannot question that unless they are related persons, or other than price if anything is affecting them. Okay, so the conditions we should take here are, sir, in customs I said 4 conditions to take transaction value as accessible value. I said 4 conditions, but here there are only 2 conditions, sir. What are the 2 conditions? Supplier and recipient should be unrelated to take transaction value as value of supply. The second condition is like price must be the sole consideration. I mean, except price, I mean in money, nothing else should be there. Even if any non-monetary consideration paid also, we cannot take transaction value, we need to go. So the difference between customs and here is, customs, this point will be in such a way like, in customs they'll say like even non-monetary consideration is also fine, till the point we can find out monetary consideration for it. But whereas in GST they are saying like, you cannot accept transaction value where anything is paid in other than money form. Okay, here price must be the sole consideration. It should be paid in what? Money form only. If any non-monetary consideration is being paid, then you cannot take transaction value as value of supply. Okay, so supplier and recipient should be unrelated, and price must be the sole consideration. Next, 15 subsection 2. 15 subsection 2 talks about inclusions and exclusions of value of supply. 15 subsection 2 talks about inclusions and exclusions of value of supply. So first one, sir. Sir, this also we can will get connected to customs. Taxes, duties, cess, fees, and other charges levied under indirect taxes, except GST and TCS as per income tax, has to be included. I mean the value, yeah, taxes, duties, cess, fees, and other charges levied under indirect taxes, except GST related and TCS as per Income Tax Act 1961 has to be included. Sir, what they meant here is, let's say you have 10 lakh rupees as assessable value. On that, if there is excise duty of 1 lakh rupees, add that excise duty. You'll get 11 lakh rupees. Sir, assuming this is tobacco, because on tobacco there is still excise duty and GST as well. So tobacco 10 lakhs value, on that let's say excise duty 1 lakh levied. Now GST has to be levied on this 11 lakhs. To arrive the value of supply under GST, any other indirect taxes are there, all of them has to be added. Okay, if you take the example of customs, what we are doing in customs, sir, first we'll take assessable value, let's say 10 lakhs. On this we'll add BCD, social welfare surcharge, agricultural infrastructure development cess, or else there may be safeguard duty, anti-dumping duty. All these things you need to add. On the subtotal you will get, on that only you will be levying the GST. So why we are doing that now? You read once again this point. Taxes, duties, cess, fees, and other charges levied under indirect taxes has to be included. After including all these expenses, whatever the total you will arrive, that is only called as value of supply. But you shall not add GST. Sir, this value of supply itself is for computation of GST. So you shall not include GST. So let's say in question, if they gave it as like 1 lakh as the price, which is inclusive of tax, they're asking like 1 lakh is the total of value of supply plus tax. Now if you need to calculate the only value of supply, what you will do, this 1 lakh you will multiply it with 100 divided by 100 plus tax rate, then you will get the value of supply. On that you will again levy tax and show it separately if you need to show the breakup. Okay, see here, sir, there are so many examples. Car price 12 lakhs, sir. On this TCS at a rate of 2%. Here they are saying like TCS shall not be added. GST and TCS as per income tax. Other indirect taxes can be added. So let's say car price is 12 lakhs. As per income tax, sir, where a motor vehicle is sold for a price more than 10 lakh rupees, on the TCS at a rate of 2% is applicable. So not 2%, actually 1% only applicable. Car price here 12 lakh rupees. Okay, on the TCS at a rate of 2%, not 24,000. Now the seller has to collect the car price, TCS, and even the GST at a rate of 12%, assume. Then GST is at a rate of 1,44,000. So now the point is car price 12 lakhs, TCS 24,000. Now GST has to be levied on the total of car price and TCS only on car price. That is the question. Only on car price, because here they said like GST and TCS has to be, except GST and TCS other items has to be included. So that means we need not to include TCS in the total to arrive value of supply. So this is only the value of supply. TCS we shall not add it to the value of supply. So invoice price is 13,68,000. Now look at this tobacco example. Tobacco 1 lakh. On that excise duty at a rate of 20,000. Total 1,20,000. Now IGST has to be levied on this total. Okay, except GST and TCS, other indirect taxes has to be added only. Next, this is the first point, sir. All the taxes, duties, cess and fees as levied under indirect taxes has to be added or included into the value of supply, except GST and TCS as per Income Tax Act. Next point under 15 subsection 2, sir. Any amount that is liability or obligation of supplier is met by recipient. Okay, actually this amount has to be paid by the supplier only, but supplier amount or supplier obligation was directly paid by recipient, then that also has to be added to the value of supply. Let's say, sir, Anil from Hyderabad agreed to supply goods to Raju, who is in Bangalore, for rupees 50 lakhs at Raju's place. Okay, that means whose obligation is to deliver? Anil, I mean seller obligation only. He promised to deliver the goods at the place of buyer for a price of 50 lakh rupees. Now see, okay, the goods are also sent. Further, the truck charges are 75,000. But the problem is like when the goods reached Raju, the truck driver said like no freight has been paid to him. He is asking to pay the freight by Raju. So Raju paid initially 50 lakhs he paid to Anil. And even this additional 75,000 truck charges also paid by Raju being the recipient only. So now he paid 50 lakhs, which is the original amount. For that, actually the goods should be delivered at his place. But in addition to this, this 75,000 actually has to be incurred by the supplier. But it is supplier obligation, but which is met by recipient. So this 75,000 also has to be added to the value of supply, because total he paid 50 lakh 75,000. So this 75,000 also has to be added to the value of supply, where any liability or obligation of supplier is met by recipient. Sir, in customs, if you remember, the while arriving FOB to FOB customs, I said free of cost if any material supplied by importer has to be added. Sir, if free of cost material supplied, let's say, sir, in the same question, for 50 lakhs, the contract value actually. But Raju has some spare parts which would be used in production of that machinery. So Raju gave those spare parts to Anil, which will be used in production of that machine. The spare parts value is 5 lakh rupees. Now what will you do this 5 lakh rupees also? This 5 lakh rupees, if Raju didn't provide, then Anil might have purchased from the open market. Okay, so for to the extent of this 5 lakhs also, obligation of supplier is met by recipient. So we'll add this 5 lakhs also to the value of supply, where any obligation or liability of supplier is met by recipient, then to the extent of liability met has to be added into the value of supply, because it also become an additional consideration to the supplier. That's why. Next, all these incidental expenses also has to be added into the value of supply. Incidental expenses not designing cost, packing cost, except if it is a returnable packing. Okay, if the packing needs to be, sorry, if you see returnable packing na, fruits and vegetables, you'll see them in the crates, blue color, green color crates will be the 25 kgs capacity one. So let's say if the vendor gave you that crate, or water cans, best example now, water cans you'll see. Okay, sir, let's say you went to a shop and you want a water can. So what you'll do, maybe actually the water will be selling it for only 30 rupees, but you want along with can, he may charge 150 rupees for the can, and for the water again 30 rupees, so he'll give you for 180 rupees, but he'll return you the other 150 rupees once you return the can. So you cannot take 180 rupees as value of supply, because out of 180 rupees, 150 rupees the water can value is nothing but the packing cost, which would be returned once you return the water can. So water can is nothing but the packing material only there. Okay, so if the packing cost or the packing material, if it is going to be returnable, such cost need not to be added into the value of supply. Next, commission and brokerage you should add. Weighment charges you can add. Inspection charges, if they are agreed as per contract, you can add. Loading charges, transportation charges, transit insurance, unloading charges, installation and trial run charges. Sir, see here, designing, packing, commission and brokerage, weighment charges, inspection, loading. So first of all, if you need to find out a buyer, or if you need to find out a seller, the first expense that will be incurred is commission and brokerage. Once the customer, the supplier found out a customer, then the customer may ask for customizations, change in designs. So designing cost. Once design is also ready, then it has to be packed, packing cost. Then before, after packing, once it has to be loaded, weighment charges, inspection if any, then loading, transportation, transit insurance, again unloading, and installation and trial run charges. You can, sir, you should remember it as like a flow. Customer wants to find a supplier, for that he found a broker. So for broker, commission and brokerage has to be paid. Then finally the supplier and the recipient found the supplier. Now supplier might ask, the recipient might ask for customizations. If there are any changes in the original design, then there will be designing cost. Once it was finalized, then it would be weighment will be there, inspection will be there, then packing will be there. Once packing is also done, then it will be loaded, then there will be transportation, transit insurance, then there will be unloading, and again installation and trial. Till then all these expenses has to be added. But remember, sir, in institute material, or else like if in question these points are given, we'll be adding. But when we are writing note, okay, we'll be giving explanation of why we added this point. The logic behind adding this is like composite supply and mixed supply. Okay, we are supplying along with the machine installation and trail run charges, designing charges, and the other transportation charges. So all together they formed as a bundle. Okay, and it became a naturally bundled. So maybe designing, installation, trail run services as a different GST rate also. But why we are adding into them? Because they are naturally bundled. That's why these incidental expenses also will be taxed at the rate of principal supply. Principal supply is that machine or goods. So that's why the transportation cost, installation cost also will be added to the value of supply and will be leaving the GST rate which is applicable on the principal supply only. Principal supply na the machine or goods whichever we buy there. Okay, whichever we supply there. Okay. Sir, understanding na? Here while we write, we need to add that we can remember easily. But once we write a note point regarding this, explaining why we have included in this value of supply, there we should write the note point regarding the composite supply. Since these are incidental expenses also has to be taxed at the rate at which principal supply is getting taxable. That's why all these has to be included in the value of supply. Next, this is from time of supply, sir. Yesterday I explained. If any interest, late fee or penalty is there for delayed payment by recipient. Okay, actually the customer has to pay within 3 months, but he took 9 months. So that means there is a delay of 6 months. Since there is a delay of 6 months, instead of the invoice value, we are asking him to pay another 50,000 as late fee, penalty or interest. Now the question is whether that 50,000 which we collected additionally is also supply. Yes, it is also supply. So time of supply equals to day on which supplier receives interest, late fee or payment. Okay, for the extra 50,000, time of supply is nothing but the day when that extra 50,000 is received. Fine. Value of supply, interest, late fee, penalty is includable. Okay, fine. But the point is, sir, understand here. Sir, initially, did the supplier will expect there will be a delay from recipient? We'll take example here. The good initial value is 10 lakhs. On this GST rate is at 18%. How much it would be? 1.8 lakhs. So invoice value is how much? 11.8 lakhs. So initially supplier will raise invoice for what value? 11.8 lakhs he'll raise invoice. And he asked the recipient to pay within 3 months. But recipient didn't pay within 3 months. He took 9 months. So the supplier asked him to pay additionally 50,000 as interest. Now the question is, will include 50,000 as value of supply. The point is how invoice has to be changed. Invoice originally we gave for 11.8 lakhs only, na? How the invoice will get changed? For that, sir, will not change invoice. We are increasing the value, na? Decreasing the value, na? Increasing. So understand, sir, I'm talking about credit note and debit note. Very simple thing. Okay, basic accounting questions only. Once again, in supplier books, in seller books, his customer will the customer will be, does the customer will be having debit balance or credit balance? I'm a seller, sir. In my books, my customer will be my debit balance or credit balance? Debit only is my asset. Customer na debtor. Debtor will be always having debit balance. So okay, so my customer will be having debit balance. Now I need to increase my debtor value much more. What I need to do? Further I need to debit. So already my debtor will be having debit balance. I need to increase it furthermore. So that's why I'll raise a debit note. Here I need to increase or decrease in this example. So 11.8 lakhs is the original debtor balance I'm having. I need to further increase it for further increase by another 50,000. So this debit balance need to be increased furthermore. So we'll be debiting once again. So that's why we'll raise a debit note. If it needs to be decreased because maybe we sent a faulty good, or else the quality is not good, or else there might be sales returns, or maybe mistakenly we have mentioned wrong value. Because of any reason we need to decrease the value. Debtor balance, debit balance, if we need to reduce it, what we'll do? Credit. So that's why we'll raise a credit note. So why debit note and credit note? Na both are from seller perspective only. In seller books, seller will have the customer balance as debit balance. So if you need to further increase it, you will debit it. That's why debit note. If you need to decrease it, you will credit it. That's why you will be raising a credit note. So clear, debit note and credit note. So when the 50,000 has to be added into the, when the 50,000 has to be added, then the supplier will be raising a new debit note. Now while raising debit note, sir, one more point. Now the question is, will he be collecting only 50,000 or 50,000 plus GST na? The interest late fee penalty which we are collecting is only just 50,000 or else it is 50,000 plus GST na. Generally it would be a round figure of 50,000, will not collect additionally GST. That's why whenever we are doing problems, will not add directly the interest which we collected into the value of supply, because it is inclusive of GST. So we need to do net off of GST. This 50,000 is including GST. So we need to find out the net value of supply, that only we need to add. So how we will do? See here the example, sir. Teja sold goods to Seshi for 15 lakhs, amount to be paid in 30 days. Whereas Seshi paid after 6 months. It has to be paid in 3 months, 1 month, but he paid after 6 months. So along with, so the levied a penalty of how much? 50,000, GST rate is 18%. So see, value of supply of goods initially 15 lakhs. IGST 18%, 2 lakh 70. Invoice price is 17 lakh 70,000. But now there is a late fee 50,000 received is including GST. So debit note will be raised as follows. Supply value is how much? 50,000 into 100 by 118, which is 42,373, and IGST at a rate of 18% on this 7,627. This is the total 50,000 for which we will be raising the debit note. So in simple, we need to add 42,373 only to the value of supply, not the total 50,000, because the 50,000 is inclusive of GST. The last point in 15 subsection 2, sir, subsidies. Subsidy, sir, is there LPG subsidy here? I mean on gas cylinder, central government only, I think the scheme is related to central government only. So we'll get okay subsidy. So subsidies are, if we are getting LPG subsidy, how it works? We'll buy a cylinder generally from the gas agency. Let's say the cylinder price is 1200 rupees. We'll pay 1200 rupees and we'll get a cylinder. Then whatever is the subsidy on it will be directly credited into the consumer's account. Whether it is 100 rupees, 50 rupees or 60 rupees, whatever the subsidy you're getting, it will be directly credited into the consumer's account. There, subsidy is not given to the seller. Subsidy is directly given to the recipient. Sir, it's not working like there are, I mean, the usual mode of subsidy, how it works na, like let's say 1200 is the cylinder price, I'll pay only 1000. Okay, the gas agency will be giving me the cylinder and the other 200 to the gas agency will be paid by the government. There is one model of subsidy, but the LPG subsidy will not work in such a way. How it works? We'll give 1200 to the gas agency, they'll give us the cylinder. The subsidy amount, whether 100 or 150 or 200, will be subsequently credited into our bank account. So in this model, the LPG model, the subsidy is not given to supplier, it is given directly to the consumer. So we will not talk about those kind of subsidies, we'll ignore them. Okay, those kind of subsidies will not have any GST impact if the subsidy is directly created into the consumer account. So that's why subsidy should be given to whom? Supplier. We'll discuss about only the subsidies which were given directly to the supplier. Second one, subsidy should be linked to price. Linked to price na. So let's say government, let's say Tamil Nadu government wants to give this tabs to all the school children who are studying in government schools. They want to give the tabs. So for that thing, they have entered into a contract with Lenovo. So there are two ways, sir. One thing is like Tamil Nadu government has given them a lump sum amount, like they have transferred some 300 crores or 500 crores as a lump sum amount. Now, out of that money, the company will produce tabs and those tabs will be given to the public freely. Here, the subsidy which they given is not linked directly to the individual piece or individual unit which they have given to the public or given to the school children. So that is something like government grant. Those subsidies also will not consider. The subsidy which they are giving should be linked to price of individual unit. I mean, how it should work now? Let's say the government said like they'll give tabs to government child at a government. I mean the students studying in government schools at a subsidized cost. Subsidized cost now how? Let's say the tab cost is 10,000. Out of 10,000, these children has to pay only 1,000 rupees. The other 9,000 will be paid by government as, or 9,000 will be given as subsidy. So Lenovo company will collect from these children only 1,000 rupees. The other 9,000 will be given by the government. So those kind of subsidy models only we are discussing now. So subsidy shall be given to the supplier directly. And the second point is that should be linked to the price. So even with respect to farmers also, in farmer in their fields there will be tube wells. Tube wells now, bore points in that there will be. So there are movies also, no. So you know generally in farmland there will be bore points like underground water to bring that out. They'll be inserting motors and all. So there's one movie also, Naintara movie. There one child will fall into that. You seen that? Okay. Okay. Generally there'll be those bore wells. In the bore well, in Telugu it's Kartavyam, I think. So in that generally the bore well will be fixed. I mean the motor will be fixed. So those motors government will give at subsidized cost. So farmer has to apply for it by I mean how in Andhra it works now, like they'll buy, I mean to get that motor the farmer initially, like let's say the motor cost is 80,000, he'll pay only 50%, but 40,000 rupees he'll send a DD to the company, okay, along with the documents relating to his farmland and all, okay, xeroxes of them. Then the company will send him a motor for the subsidized cost. The other 40,000 will be paid by the government. Like that it works. So the subsidy, if it is given directly to the supplier, and it should be linked to price, that subsidy only we are discussing. Okay, here the subsidy might be given by government, or in some cases it may be given even by other than government as well. If subsidy is given by government and in the question whatever the price they given, that price is net of subsidy. Sir, to confuse us, in question they may give the gross value or the net value after adjusting subsidy. If subsidy is given by government, what we are saying now, first understand the provision. If subsidy is given by government, we should reduce it from the gross value. If it is given by others now, we shall not reduce it, we will ignore that. Okay, but how the question may twist us is like the subsidy might got already adjusted in the question. If it is already adjusted and it is subsidy is given by government, we also saying like it has to be reduced. And the question, I mean in the question itself it is already reduced, nothing to be done. So we need not to further reduce it again. If it was not reduced, then we need to reduce. Okay, then the next point, subsidy given by other than government. What we have to do actually, it should be ignored. If subsidy is given by other than government, so the same kind of tabs and is given to students studying in government schools, but this time it's not by government, it's by an NGO. Some charitable institution is distributing tabs to students for subsidized cost. So it is given by other than government. So given by other than government, now we should not consider those subsidies. We shall not reduce it. But in the question, the price which is given is already reduced. We said like it should not be reduced, but the question, the value given is already reduced. So we need to reverse it. So we'll be adding back the subsidy amount. It was not adjusted, then we'll not do anything. No action, simply will do. Okay. So understand, sir. Subsidy, if it was already adjusted, if it is already adjusted, I mean the value which we are looking in the, which we are seeing in the question is the net value. If it is given by government, then nothing to be done. We are also asking to reduce only. It was already reduced, no problem. Whereas it is given by other than government, it need not to be reduced. But the value in the question is already reduced, so we need to reverse it. That's why we'll be adding back. Okay. Now it's about discount, sir. Discount, can we reduce discount value from the gross value to arrive the value of supply? Discount, if it is known at the time of supply, when it can be known, two cases it can be known, sir. One thing, first itself the shop person kept a board 30% discount, 40% discount. We went and selected the goods. We know that there is discount before the time of supply only. Second thing, sir, there is no board kept, no such thing like discount and all. You have selected the goods which you want. When they are billing, you asked for some discount. Okay, you bargained and you asked for some discount. Then they gave you 10% or 20% as discount. So before billing only they gave the discount. No. And so the discount is known at the time of supply. Before billing, if they gave also, that is known at the time of supply. And such discount, if it is mentioned in invoice, you can reduce such discount. You can say reduce such discount. Net of discount value only will be treated as value of supply. Okay. Sorry, whenever you see this Reliance Mart or D-Mart, if you went to the supermarkets, there will be gross price. Then next column will be discount. After that, there will be net value. Okay. After that, they will be leaving the GST, either CGST and SGST, or maximum it will be CGST and SGST only in these retail stores. Okay. So discount known at the time of supply, and if it is recorded in the invoice, then reduce it from value of supply. Next, post supply discount. Post supply discounts, now these discounts were not given initially at the time of supply, but these we are given subsequently. Okay, not at the time of supply, subsequently. Let's say, sir, Ola bikes. Okay, let's say Ola bikes is giving dealership, sir. Okay, for Chennai, dealership is given. So now once dealership is given, okay, so this dealer, he went to Ola and purchased 500 bikes at a time, and each bike is sold to him for 60,000 rupees. He purchased the 500 bikes for each at 60,000 rupees. Now Ola didn't give any discount to him, sir. He purchased all the 500 bikes for each bike at rupees 60,000. But what Ola said to them is like, if you sell all these bikes within 1 month, and if you place a second order within 1 month, if you sell all these bikes, okay, forget about the second order also, they gave a sales target. If you sell all these 500 bikes within a 1 month, then they will provide them 10% discount on the first sale which is already made. Sir, initially they are not giving any discount. When they will give discount? Once he sells the 500 bikes within 1 month, or it can be even slab wise also. Let's say if he sell 250 bikes, then they'll give 5% discount. If he sell 400 bikes, then they'll give 8% discount. If he sell all the 500 bikes, then they'll give 10% discount. So like this also, the sales target wise discount might be given. So if like this discount is given, initially we don't know whether he'll achieve the target or not. So for what price the invoice will be raised? For the actual value only. That means 500 into 60,000 only, for the gross value only invoice will be raised initially. Because initially Ola didn't know whether it would be for discount or for the gross price only. So you understand? Okay, initially it would be given for gross price only. But afterwards, if you see, let's say they have sold all the 500 bikes, then what has to be done? Discount has to be given. First question, whether this discount can be reduced or not. Sir, discount can be reduced even if it is given after supply. Sir, here discount is not given at the time of supply. Discount will be given after the supply only, once you reach the target. So this is called post supply discount. Can we reduce it or not? There are conditions, sir. First one, is there any precondition in the contract to give discount at the time of supply itself? Yes, at the time of purchasing this 500 bikes only, in the contract itself they'll mention these conditions. Once you reach or once you satisfy these conditions, subsequently also you'll get discount like this. So there is a precondition in the contract regarding this discount. First one. Second one, sir, the supplier needs to raise a, understand, sir. Sir, initially Ola raised invoice for the full value. Okay, I mean it will be for a high value. Now it needs to be reduced. The customer balance has to be reduced from Ola perspective. Sir, Ola is supplier, dealers are the customers. So from Ola perspective, the seller, I mean the customer value will be 500 into 60,000. If discount is given, the value will come down. So what they need to write? Credit note or debit note? Credit note. Why? Customer balance. Okay, customer balance will be there at 500 into 60,000, which is at a higher value. Now they are giving discount, the value will come down, will increase, will come down. So if the debit balance has to be reduced, will be crediting. So we'll be raising a credit note. So for the discount value, Ola needs to raise a credit note as well. Third point is also there. Recipient might have availed excess ITC initially. So see here, calculate and tell me. 500 into 60,000, how much? 30 crores, 3 crores, okay, 3 crores. On this, let us take 5% as the GST. 3 crores into 5% na 15 lakhs. Okay. So initially the invoice is for how much? 3 crore 15 lakhs. So the recipient might have availed how much ITC? 15 lakhs ITC recipient might have availed. If this value 3 crores is getting reduced, even this GST will also value will also come down. But recipient already availed excess ITC. So recipient has to reverse the excess ITC which he has already availed. So if these three conditions are satisfying, then you can reduce the discount even it is given after post supply. What are the three conditions, sir? Even though it is a post supply discount, but the condition to give discount is existing at the time of supply only in the contract. Second one, the supplier has to raise a credit note or revised invoice. Third one, the recipient has to reverse the excess ITC. Then we can reduce the discount. Okay, this is the point here. Whereas in case of any other post supply discount, we will be ignoring such kind of discount. Okay, with this we completed the first part, sir. Then we are going into 15 subsection 4, where value of supply cannot be determined under section 15 subsection 1, then it shall be determined as per the below rules. There are rules here, sir. Now rule 27, 28, 29, 30, 31, not only 31, afterwards also there will be 32, 33, 34, 35. We need to discuss these rules. When these rules will come into picture, where we cannot take transaction value is not value of supply. Transaction value is not value of supply. We cannot take transaction value as value of supply only in two cases. What are those two cases? When supplier and recipient are related, where price is not the sole consideration. So in these two cases, rules will come into the picture. So what the rule says? Where transaction value cannot be taken as value of supply. First one. So two situations, see. One is because of price is not the sole consideration. The other one is because they are related persons or distinct persons. So where you cannot take transaction value because of the reason that price is not the sole consideration, then we'll apply what? Rule 27. So what rule 27, or when rule 27 is applicable? Price is not the sole consideration. In which cases price is not the sole consideration? In barter transaction, there is no price at all. For good is exchanged, and for good a service got exchanged. And even in exchange, let's say I purchased a new mobile. For that I even exchanged old mobile. So the point is, I'm giving a part of consideration in money and a part of consideration in non-monetary form. So their price is not the sole consideration. That's why in exchange, permanent transfer or disposal of business assets on which ITC availed, in these cases price is not the sole consideration. But the question is, if price is not the sole consideration, you cannot take transaction value. Then what is the value of supply? For that only here, they are given three options. First one, take open market value. Take open market value. Let's say, for example, there is a mobile shop. to customer A and to customer B he sold. Sir, customer A took a new mobile. For this new mobile, customer gave 20,000 in cash and his old mobile. Now the problem is here we don't know what is the transaction value. Sorry, here we cannot take this as value of supply because here price is not the sole consideration. So for this value we need to find out. Okay, in this situation price is not the sole consideration. So then what they are asking us to take the open market value. Open market value na nothing but the price at which such good will be transacted between two unrelated persons. So now the same mobile shop selling the goods to selling the same kind of mobile to B as well. But B is not exchanging mobile. If B is not exchanging mobile, na, mobile shop gave mobile and B paid 30,000 rupees for that mobile. So then what is the open market value? 30,000 is the open market value. You can take 30,000 as the value of supply. Nothing but, sir, the seller sold to me as well as to other person. The price which was transacted between me and the seller is not the transaction, I mean is the transaction value, but here not only money, additional non-monetary consideration is also there. So our price ignore. So what price you can take now? Between the other persons who are unrelated, whatever the price is transacted, that price itself we can take it as open market value. First one. Second one. This first one, sir. Second one, what they are saying, let's say, sir, MSD providing services to CSK. MSD providing services to CSK. CSK paying him 10 crores plus a car plus a house. Okay, house or villa. So this is the consideration which is paid to MSD by CSK. Now the point is here price is the sole consideration. No, price is not the sole consideration. Then if price is not the sole consideration, we came to rule 27. Rule 27, what is the first option given to us? Take open market value. To find out open market value, MSD will not give such kind of service to any other franchise. So we cannot find out open market value. Okay. Sir, other players related we can compare. So we cannot compare, sir, in service. The service which is given by MSD cannot be compared with the service of Rohit Sharma or the service of Virat Kohli. Okay. So that's why they are not comparable. We cannot take their value also as open, I mean their remuneration also as open market value. That is also not acceptable. So now what is the other option they are saying? Take the monetary amount paid. What is the monetary amount paid? 10 crores. Now they are asking to find out money equivalent value of non-monetary consideration. Money equivalent value of non-monetary consideration. Nothing but they are asking us to find out the value of this car and value of this house. Let's say the car value is 75 lakhs. The house value is again 3 crores. Now what is the total consideration paid? 13.75 crores. Take that as value of supply. Simple. They are asking us to find out monetary amount paid plus money equivalent value of non-monetary consideration. Monetary amount paid plus money equivalent value of non-monetary consideration. Okay. If this also fails, then you can go for the goods and services of like kind and quality. Let's say this car value we cannot find out. This house value also we cannot find out. Then what is the other option we have? The third option. Okay, sir, here why we cannot find out? They said like they'll give 10% profit which they earn from CSK franchise. Let's say they said like that. Okay, if they get if he is getting something like this is also non-monetary consideration. For this money, finding out the monetary value is also tough. Okay, okay, or else they are giving some share in brand value or something they are giving. Okay, for which we cannot find out even the monetary value. So then the second option also got failed. Then we can come to third option. Third option, value of goods and services of like kind and quality. I mean identical goods or similar goods or identical services or similar services. Then you can go and take Rohit Sharma remuneration or Virat Kohli remuneration as the like kind and quality, which we could take it as value of supply. Okay, understood, sir. When you cannot accept transaction value of supply, and the reason is because price is not the sole consideration, then we'll go to rule 27. Rule 27 gives us three options. First option, take open market value. Open market value, the price at which it is transacted with the unrelated customer. that is also not available. Find out the value of the monetary value of non-monetary consideration paid. Okay, the second option is like, here the problem is paying consideration in monetary form only na. So find out the money equivalent value of such non-monetary consideration and take that as value of supply. That is also not available. Go for identical goods and similar goods. Identical goods na, they look like same, just like as in Brothers movie Surya. Brothers, there is Surya movie is there na, not Brothers. Conjoined twins they will be. Okay, oh, Telugu the name is Brothers. Okay, they look identical na. Okay, when it comes to goods, what we call as identical na. So let's say, so two ACs from different brands, two air conditioners from different brands, two laptops from different brands. These are identical goods. Let's say we cannot find the price of thumbs up, we can go and take the price of Coca-Cola or Coke, or even from other brand you can go and compare it with the Pepsi. So they look like same and they perform same kind of functions almost, then they are called as identical goods. Similar goods na, they may not look like same, but at last they will also function, I mean they will also do the same kind of functions. The example for identical goods na, two different company bikes. Similar goods na, a bike and an Activa, or it's like a bike and scooter. If you compare na, then they are similar goods. Understand na? So they are asking us to take the transaction value of identical good or similar good as the value of supply. Sir, what if there is no identical good and similar good also? If there is no identical good and similar good also, then what to do? Then they are asking us to go to rule 30. There is something called as rule 30. What rule 30 says na, find out the cost. Find out the cost. Cost as per CAS 4. Cost as per cost accounting standard 4. Again we are linking it with the cost audit. So you need to find out cost as per CAS 4. Nothing but the basic cost sheet only. Okay, except the office expenses and the selling and distribution expenses, everything you'll add. Scrap, if anything is there, you'll subtract. That's the basic cost sheet only you'll do. As per CAS 4, you'll calculate and you'll multiply it with 110%. That itself you'll take it as the value of supply. Okay, you'll calculate the cost. Okay, the problem, okay, if cost also we cannot find out, sir. Understand, the next point is like cost also we cannot find out, because it maybe it is a service sector. The overhead allocation is not possible, because at a time they will be handling, the workforce might be handling multiple services. Okay, so we cannot even find out cost. Then they are leaving to us only. Okay, we have suggested 4-5 methods. You are saying like now none of the methods is applicable to you, so come up with your the method whichever you like. Best judgment method. Okay, in even in assessment, income tax, everywhere there will be this option to go with the best judgment method, or the best method whichever is possible for them, so they can go with that method also. Okay, so there are total 5 options here. When we cannot take transaction value, first option you will go with what? Open market value. That is not available. Monetary value plus money equivalent value of non-monetary consideration, that also not available. Third one, what? Like kind and quality goods value, that also not available. You will go to rule 30. Rule 30, cost as per CAS 4 into 110%. Last, fifth one, any residual method you can follow. These are the 5 options available. Actually these methods has to be followed sequentially. If only first is not possible, then you'll go to second. Even both first and second also not possible, then only you will come to third. Okay, there is one exception, sir. Understand here, when you are valuing for service, then these 3 you need to follow sequentially. I mean, first, even when you are valuing for service also, first you should find out open market value. If it's not available, then monetary amount or money equivalent value, that one. If that is also not available, then like kind and quality. Afterwards, you need not to go to fourth one. If you are valuing for services, directly you can jump to residual method also. When you are valuing for services, you need not to go for cost into 110%. Okay, when you are valuing for goods, after these 3, the fourth option is cost into 110%. If cost into 110% also not available, then only you will go for residual method. Whereas for service, after this 3, straight away you can go to residual method also by skipping cost into 110%. Yeah, from rules they are asking questions. We'll discuss that one only. Maximum cases they are asking from rules only. Last attempt also they came from rules. Before last attempt also it came from rules only. So rules only they are focusing, because the before discount and all that part they are asking in inter level only. 7 marks question. So they don't want to test it again. So they are asking from rules only. This is rule 27. Next, rule 28. Rule 28, now it is between rule 27 tensor, rule 30, rule 31 also closed. Now we are into rule 28. Rule 28 when where supplier and recipient are related persons. Sir, we cannot take transaction value because of two reasons. One reason is price is not the sole consideration. For that already discussion done. The second reason is what? Both are related. Since they are related, when they are related, then we will be discussing that one. For them, rule 28 will give us the answer what to take as value of supply. So rule 28, sir, again there are, okay, sir, here you will get little confused. When you take rule 28, now there are three options for us, sir. Okay, instead of provision wise, I am telling it as like options wise. We will be having three options, sir. First thing, if the question is regarding rule 28, we'll look after both are related persons only or distinct persons only. But we should check whether the recipient is eligible to take ITC. That means whether question is talking about whether recipient is registered. If recipient is registered, then recipient can avail ITC, no? So then, even though there is a price compromise, since they are related, we need not to bother about that. Whatever is the price they raised in invoice, that itself can accept as open market value. We need not to question it. If recipient is eligible to take ITC, let's say, sir, actually will sell that good for 20 lakhs. But since it is a related person, we transacted it for or we sold it for only 10 lakhs. Only 10 lakhs is mentioned in invoice. We know there is a pricing compromise. But if recipient is a registered person, then you need not to bother about anything. That 10 lakhs itself take it as open market value, and that itself will be taken as the value of supply. If recipient is registered, invoice value itself is the open market value, which will be taken as the value of supply. Okay, open market. Okay, first one, sir, recipient registered, na, take invoice value itself as open market value. Fine. Second one, recipient registered or unregistered are not mentioned in question. We'll assume like recipient is unregistered, so he cannot avail ITC. Then the second option is like we need to check, sir, head office sent some goods to branch office. Head office and branch office are distinct persons only. Now branch office, will it sell the goods as such or will it sell after processing? That we need to identify. Let's say head office manufactures automobiles or some cars, and those cars are sent to branch office. Branch office will not do anything extra. Okay, he'll say branch office will sell the cars as such. This is one type of situation. Whereas in other cases, head office may send just raw material. Branch office may process it and will come up with a finished good as well. In that case, this option is not applicable. This option 2 is available only when the branch office or the recipient is going to sell the goods as such like they received. Okay, however the way they received, like that only they are going to sell. So see here, head office sent to branch office is selling to customer. Now in between here we don't know what is the value of supply, or question mark is between head office and branch office. But this branch office is selling the goods as such to the customers now. It's not doing any processing. Branch office will sell that to customer for 10,000. Now that's simply saying like take this 10,000 and multiply it with 90%. That itself take as value of supply. This is the option 2. The resale price of the recipient into 90%. Resale price of the recipient into 90%. So option 1, if branch office, sir, here the point is between head office and branch office, the value which is mentioned is only 5,000. Let's say for example in invoice. But we are not ready to take this 5,000 because head office and branch office are related persons. But what option 1 I am saying, if branch office is registered and if it can avail ITC, then take this 5,000 itself as value of supply, no problem. That's what I said in option 1. Option 1 not applicable because branch office is not registered. Then option 2. What option 2 I am saying? Find out the branch office reselling price to the customer. Let's say it is selling for 10,000. Then take 10,000 into 90% is only the 9,000 as the value of supply between head office and branch office. But this option can be exercised only when the goods are going to be sold as such by the recipient to the unrelated customer. Second option also done. Then what is the option 3? Option 3, the common one only, sir. Find out open market value. Okay. If open market value also not available, go with like, kind and quality. Go with what? Like, kind and quality. There is no monetary plus non-monetary such thing. That option is not there. Open market value, like, kind and quality. If this also not available, then go to rule 30. What rule 30 says? Cost into 110%. Then if rule 30 also not available, then go to rule 31. What rule 31 says? Residual value method. So simple thing, sir. There is option 1, option 2, option 3. When you come to rule 28, what is the first option? We'll check whether they are related or not. First we'll see. Whether recipient is registered or not, we'll see. If recipient is registered and can avail ITC, whatever the invoice price it is mentioned, that itself is the open market value, and that itself will take it as what? Value of supply. If recipient is registered person and ITC is available. Option 2. When can we go to option 2, sir? If he is not a registered person, and then they are selling as such without any further processing, the goods which were received by the recipient will be sold to the unrelated customers as such. Then, okay, head office, branch office, goods received, and branch office will sell the goods to customer as such. Now the price which is transacted between this recipient and unrelated customer is there, let's say 10,000. Out of this 10,000 into 90% itself will take it as value of supply. Clear this one also? Then the third option, the normal option only. Third option, first we'll go for open market value. Not available, then we'll go to like, kind and quality. I mean identical goods and similar goods. If it is also not available, then we'll go to rule 30. Rule 30 what? Cost into 110%. Then rule 31, residual value. This. See, if recipient is eligible to take ITC, then the value declared on invoice can be taken as open market value itself. Okay, this is what rule 28, sir. Sir, there is another sub rule given, sir, here under value of rule 28 only, sub rule. See here, valuation of guarantee services provided by holding to subsidiary. Holding company holding company acted as a guarantor to the subsidiary company. So for the guarantor service, what should be taken as the value of supply? Sir, for subsidiary company, sir, nobody is giving loan because it doesn't have a good balance sheet and all, so nobody is giving loan. So for that reason, holding company has acted as a guarantor. Since holding company acting as a guarantor, subsidiary company has to pay guarantor commission. But holding and subsidiary are related persons, so we cannot take the transaction value between them as the value of supply. That's why we came to rule 28. Rule 28 as a sub rule which saying like consideration received from holding from subsidiary for providing guarantor service is nothing but higher of actual guarantee commission paid or 1% of the guarantee offered, whichever is. I mean higher of these two. 1% of the guarantee they given. Let's say guarantee is given for 50 crores, sir. 50 crores into 1% na 50 lakhs. Or the actual guarantee amount, the guarantee commission paid. Actual guarantee commission paid is only 40 lakhs. But whereas 1% is 50 lakhs. You should take higher of them. 1% of the guaranteed amount or the actual guarantee commission paid, whichever is higher. Here rule 29, sir. Rule 29, when supplier and recipient are related only, but if they are principal and agent, then we need to find out the value as per rule 29. If they are other than principal and agent, then we'll find out under rule 28. So see, this is applicable only for goods. So here also there is option 1. Option 1, first they are asking us to go with the open market value route. Take open market value. If open market value is not available, go to, okay, first we'll discuss option 2, sir. Option 2 is the simple one, which I already said. If the agent is going to sell the goods as such to the unrelated customer, take 90% of the price which is transacted between the agent and the unrelated customer as the value of supply between principal and agent. Clear? If this is not working, I mean agent is not going to sell the goods as such, or agent is also not selling goods to unrelated customers, then we cannot take the price between them. Sorry, agent also may be selling to related persons only. So then also their price we cannot take. Then the other option is go and find open market value. Open market value not available. Go to rule 30. What rule 30 says? No like, kind and quality also here. Go to rule 30. Rule 30 is what? Cost into 110%. Rule 30 also not available. Go to Rule 31, residual value method. So simple thing, sir, to write it, to summarize all this in one single paper. Rule 27, Rule 28, Rule 28, 29. So Rule 27, first of all, what we will go? So first what will take? Open market value. If open market value is not available, na, we'll take monetary consideration plus monetary value of non-monetary consideration. Then we'll go to value of like, kind and quality. We'll follow this sequentially. If these three are not available, then we'll go to Rule 30 or Rule 31. Goods, na, first you should go to Rule 30, then only you should come to Rule 31. Service, na, you could go straight away to Rule 31 also, no problem. Rule 30 is nothing but what? Cost into 110%. Rule 31 is what? Residual value. This is what we'll do when we go for Rule 27. When we'll go to Rule 27? When price is not the sole consideration. Then Rule 28. What is Rule 28? When supplier and recipient are related person, supplier and recipient are related persons, and they are not principal and agent. If they are principal and agent, na, then it will go to Rule 29. Sir, under Rule 28, we have took three options. Option 1. Option 1, what we are saying? Invoice value itself we can take as open market value, and such open market value itself will become the value of supply when where recipient is registered person and he can avail ITC. Then option 2. Option 2, when will avail? When the goods are going to be sold by the recipient, I mean related recipient, as such to an unrelated customer, then 90% of resale price by recipient to unrelated customer. Option 2. Then we'll go for option 3. Option 3, na, the whole process again. What is one? First we'll take open market value. If it is not available, na, then we'll go to like, kind and quality. If like, kind and quality also not available, na, then we'll go to Rule 30. Rule 30 is what? Cost into 110%. And even we have Rule 31, which is nothing but residual value method. Clear, sir? In this Rule 28, we have a sub rule as well. What that sub rule talks about? Guaranteed commission. Guaranteed commission paid by subsidiary company to the holding company. For that, what is the amount? Higher of 1% of guarantee amount or actual, whichever is higher. Then we came to Rule 29. Rule 29 also we have one option. The first option is like, we'll check whether the goods are going to be sold as such. Sir, we can compare and take which one is better also. We can compare and take, since there are multiple options, we can compare and we can take whichever is lower also as value of supply. If option 2 and option 3, you could compare. If from option 2 the value is less, na, then you can take option 2 value as value of supply. If option 3 value is much more better, then you can take option 3. But Rule 30 and Rule 31 you cannot go. Okay, sir, my point is, if 90% of resale price is, let's say, 5,000 only, whereas open market value is 4,500 only. So better 4,500 only they can take as open market value. Okay, this Rule 30, before leaving Rule 30 and Rule 30, I mean before going into Rule 30, Rule 31, within these options, if they can find which, I mean whichever would be the lower, can be taken as the value of supply. Next, option 2. Here 90% of resale price. Here option 2, na, again they can go to open market value. If open market value fails, Rule 30, Rule 31. Okay. Okay. Next, Rule 31A. Value of supply in case of lottery, betting, gambling and horse racing. Lottery run by state government, sir. Here the lottery is run by whom? state government or authorized by state government. Then they are asking us to take higher of face value into 100 by 128. Let's say lottery ticket is getting sold for 100 rupees. That 100 is inclusive of GST, no? So that's why they're asking to do 100 into 100 by 128. Why 128? On lottery tickets tax rate is 28%. That's why 100 into, sorry, face value into 100 by 128. But the point is, lottery tickets will be sold for premium as well as discount, considering the demand. If if there is demand for such lottery tickets, they'll sell the 100 rupees ticket for 110, 120 also. If there is no much if there is no such demand, then they'll sell for discount 80 rupees, 90 rupees also. So the price will be notified in the gazette by the government at what price it has to be sold. If the price, okay, so we need to do face value into 100 by 128 and even the price notified into 100 by 128. Out of them, whichever is higher itself will become the value of supply. Let's say face value is 100, but in gadget they said like sell it for 120. Then 120 is higher, na, that itself will take as value of supply. If face value is 100, but in gadget they said like sell it for 85. Face value is only higher, that will take it as value of supply. Next, any other actionable claim. Okay, in any actionable claim, in the chance of with a betting, gambling, horse race, 100% of the face value of the amount will be taken as the value of supply. So let's say you went to a casino. And casino theater, not, casino one theater is there. Oh, Telugu movies only will come here. Okay, so generally casinos, movies and all will see now. Gambling and all will be happening. So let's say you deposited 5 lakhs there, and for 5 lakhs you collected some tokens or coins there. They'll be giving some like carom board strikers kind of, they'll be there. Okay, so you got them. So that means even though you took them with you, you didn't play anything, but just you converted 5,000 into strikers, na, they'll assume like the 5,000 rupees has been the 5,000 rupees has been supplied for betting, gambling and horse race, and on 5,000 there will be GST. The supply, the gambling guy has to pay GST on the total 5 lakh rupees as well. Okay, now coming to value of supply in case of online gaming. Sir, these days these online gaming apps are so much. In Tamil Nadu, are they banned or Dream 11? Betting prohibited. This cricket related to fantasy games are there, na? You could select a team on your own, Dream 11 kind of, Pari match. There's so many apps actually. Okay, online rummy. In YouTube also they'll be getting so many. These YouTubers also will be promoting, majorly YouTubers only promoting these betting apps and all. Those betting apps are there, no? So in recent, from 6 months, CBIC focused on those betting apps and they introduced so many provisions on them. So one thing is like, let's say you deposited into that wallet of that betting app. Let's say 10,000 you deposited. You didn't played with them. You didn't use it them. But once you deposited 10,000 into their wallet, that would be considered as supply. The gross amount you add or you put into a match will be considered as the gross amount of bet itself will be considered as the supply made. So 100, that is equal to total amount paid or payable or deposited including digital assets. Let's say if they have, sir, actually I made a bet of 10,000 rupees in a match, sir. Out of 10,000, 9,500 only the actual cash. The other 500, that app gave me some cash reward points or something like that. Okay, the other 500 I didn't pay. So the app itself added it reward points and the consolidated bet has become 10,000. Now the value of supply will be considered as 10,000, not just the 9,500 actual money which I added. The other 500 related reward points related amount also will be considered as the gross value of bet. Okay, but my winning from that match is only 1,000. Let's say 10,000 I kept as bet, but after the match I got back only 11,000. That means my winning is only how much? 1,000 rupees only. But the GST will be levied on total value, not only on just the winning money. In case of casino also, it's not just how much you won, it's the gross value invested there will be treated as the value of supply. So let's say I initially given 5 lakh rupees and took So in Goa, there will be so many casinos, sir. So let's say you given them 5 lakh rupees and you collected those tokens or coins. With those tokens and coins, you got till 25 lakhs. And again you lost, and ultimately you got only 1 lakh rupees, and you at last when you're going out of the casino, you given back that 1 lakh worth token and they'll give you 1 lakh rupees cash. But how much is the bet amount na? 5 lakhs. The initial conversion which you made, no, that amount will be treated as the value of bet. That will be treated as the value of supply. The total amount paid or payable for purchase of tokens, chips, coins, whatever the name called. Amount refunded by any reason shall not be deductible. Okay. So till now, the points which we discussed are like, in those situations, it's not possible for to decide value of supply. That's why the rules are given. Now there is a new rule. I mean, there is another rule called Rule 32. Rule 32, na, this is, I mean, the situations which we are going to talk now, for them, there might be transaction values. Their supplier and recipient are not related. Price is the sole consideration. But still, their finding out value of supply is little tricky. That's where Rule 32 gives us an alternative option to find out value of supply. So 32 is not, this Rule 32 was not introduced because supplier and recipient are related or price may not be the sole consideration. Not for that reason. The reason to introduce Rule 32 is like, there are certain cases where normally finding out transaction value is little tricky. It's not just price got compromised. It would be tricky. That's why they suggested an alternate valuation method to find out the value of supply. So Rule 32 subsection 1 talks about, says like, on specified supplies, values of supply can be determined in the manner given at the option of supplier. So Rule 32, whether we use it or not, is completely our option. Okay, so that means in a question they'll ask us to compute value of supply in both the ways. You find out transaction value and you find out as per the 32 subsection, I mean 32 option as well. Whichever is lower, you'll take it as value of supply. So out of them, Rule 32 sub Rule 2, sir. This was already asked in the last attempt. This only asked in last attempt for 7 marks. 32 high chances, sir. If not this, there are other options, other questions also can be asked, or else Rule 27, 28. Okay, in this chapter, majorly the question will come from rules only. This is related to foreign currency conversion, sir. When foreign currency got converted, what should be taken as the transaction value? Because the exchange, the currency dealers will get only commission. Okay, with respect to such commission, either you could find out the actual transaction value, or else they are giving a alternative method as well. So see here, case 1, there are 2 methods, sir. Method 1, method 2. Method 1, sir, how the question in the last attempt is asked, na, they directly mentioned this rule number. They didn't say it as like method 1, method 2 and all. They gave currency exchange transaction and simply asked like, determine the value of supply as per Rule 32 sub Rule 2 clause B. Rule 32 sub Rule 2 clause B. Okay, if at all the question has little bit elaborate on, then everybody will understand that point. But the question simply is stated like, it gave exchange currencies related point. But if you have common sense now, how you can understand, na? By looking at the foreign currencies, you can identify like, this is something related to this one. If you have confusion, na, what I'll do generally, I'll do method 1 and method 2 as well. Okay, so he directly asked to find out the value of supply as per Rule 32 sub Rule 2 clause B. Okay, we'll discuss both one. Clause A is called as method 1, clause B is called as method 2. In method 1 also there are 2 options again, case 1, case 2. What is the case 1? One of the currency being exchanged is Indian currency. Let's say you are converting dollar into rupees. One of the currency exchanged is what? Indian currency. Okay, I mean, I'm just looking, anything happened. One of the currency exchanged is Indian currency. That means you converted dollar into rupee, or pound into rupee, or yen into rupee. So like that, you are converting them into rupee, or rupee to dollar, or rupee to pound. But one of the currency exchanged should be what? Indian currency. Whereas case 2, na, none of the currencies exchanged are Indian currency. That means you are converting dollar to yen or dollar to pound. So no Indian currency is involved. Whereas in case 1, Indian currency is involved. So how to solve this? So see here, sir. Example. Raju has $1 lakh. HDFC $1 bank rate is 81, whereas RBI has given a reference rate of $1 equals to rupees 82. So don't ask and confuse me which is bid rate, offer rate and all. That's not my job. Okay, they'll not even generally confuse by saying like bid rate, offer rate, sell rate, buying rate, selling rate and all. They'll not ask. They'll give you generally one rate only. They'll make our life little easy only. They'll not mix it with SFM. Okay, if they mix it with SFM, then okay. So see here, sir. Case 1 is what? One of the currency exchange is Indian currency. So first, again in that also there are again two situations. First one, RBI reference rate is available. I mean in the question they have mentioned about RBI reference rate. If RBI reference rate available, then they are asking us to find out difference between RBI reference rate and the actual bank rate. Difference between RBI rate and bank rate, and multiply it with the number of units of foreign currency exchanged. Multiply it with the number of units of foreign currency exchange. Once again repeating, sir. Difference between RBI reference rate and bank rate, and multiply it with the number of units of foreign currency exchange. So see here. What is the number of units of foreign currency, sir? $1 lakh. What is the difference between RBI rate and bank rate? 1 rupee. Multiply it with that. 1 lakh. So 1 lakh is the value of supply. So solution, 82 minus 81 into 1 lakh. So that is nothing but 1 lakh. Okay. What if RBI reference rate is not available? If RBI reference rate is not available, then they are asking us to convert into Indian rupees first. The dollar value convert into Indian rupees. How to convert? Using the bank rate only. Because RBI rate is not available, using the bank rate only convert into Indian rupees. Now Indian rupee value into 1% you calculate. Okay, we'll look at this example also. Okay, if RBI reference rate is not available, same example, if RBI reference rate is not available, what we'll do? We'll just convert this dollar into Indian rupees. $1 lakh into 81, 81 lakh. 81 lakh into 1%. 81,000 is the value of supply. If RBI reference rate is available, difference between RBI rate and bank rate into number of units of foreign currency, not Indian currency. Next, if RBI reference rate is not available, the total value of Indian currency exchanged into 1%. Simple. So it's simple only. Once again repeating. We are under rule 32, sub rule 2, clause A. I mean method 1. In that there are two possibilities. One of the currency exchange is Indian currency. None of them is Indian currency. We are discussing now with one of them is Indian currency. In that also there are two possibilities. First one, RBI reference rate given. Second one, RBI reference rate not given. If RBI reference rate is given, difference between RBI rate and bank rate into number of units of foreign currency. If RBI reference rate is not available, then find out the Indian currency value first. That into 1%. Clear? Now we are moving into none of the currency exchanged are Indian currency. This is much more easier, sir. Take both the currencies. Both the currencies has to be converted into Indian currency. Let's say we have dollar converted into pound. Now take dollar value and pound value, convert them into Indian currencies using RBI reference rate. Sir, in case 2, there is no option of without RBI reference rate. Case 2 will function only when there is RBI reference rate. So, okay. So take the dollar rate and pound rate, dollar and pound units and convert them into Indian currency by using RBI reference rate and multiply them with 1%. Multiply them with 1%. Whichever is lower will be taken as value of supply. Lower, sir, not higher, lower. Convert both the currencies into Indian currency. Multiply them with 1% and take whichever is lower as the value of supply. This is case 2. Case 2 very simple, sir. None of the currencies is Indian currency. Fine. Convert both the foreign currencies into Indian currency using RBI reference rate. Now multiply them with once again with 1%. Whichever is lower, take it as value of supply. Now we'll go to method 2. What method 2 says, it's like slab rate method, sir. You know, basic slab rates, income tax slab rates, like that only in Indian currency. So I mean, when you are going to method 2, first convert the foreign currency value into Indian currency. Okay, we converted. after conversion, if the Indian currency being exchanged is less than 1 lakh, then it should be 1% of gross amount or 250, whichever is higher. 1% of gross amount or 250, whichever is higher. Let's say the currency exchange is only just 20,000 rupees. 20,000 into 1% na 200 only. But 250 is higher, no? So we should take value of supply as 250. Let's say it has 60,000. 60,000 into 1% na 600. 600 only higher than 250. So value of supply is 600. Now tell me exactly 1 lakh. What we should take as value of supply? 1 lakh into 1%. It would be 1000. So we should remember this one, sir. So whenever we are doing slab rates, na, we'll remember the tax value at when the slab changes. Let's say for 2,50,000, we'll remember tax as 0. For 5 lakhs, we'll remember as 12,500. I'm talking about the general slab rates, not 15 BAC. 115 BAC I'm not talking. I'm talking about the normal regular slab rates. When we are doing those sums, we'll remember like up to 2.50. At 5 lakhs, it is 12,500. At 10 lakhs, it is 1,12,500. The same way here, whenever there is a slab change, if you remember that would be easy. Even if you remember also, if you don't remember also, you can do. For first 1 lakh, it is 1% or 250, whichever is higher. In excess of 1 lakh and between 10 lakhs, the percentage is only 0.5%. In excess of 1 lakh and in between 10 lakhs, the percentage is only 0.5%. Let's say 5 lakhs we need to do. 5 lakhs now, first 1 lakh we need to do separately. The subsequent 4 lakhs we need to do separately. And first 1 lakh, 1% means how much? 1000. On the additional 4 lakhs, 0.5%, 2000. 4 lakhs into 0.5%, you'll get how much? 2000. So the total value of supply will be 3000. So simple things are you able to understand? Okay, let me here there are examples also, I guess. Okay, let's say 5 lakhs, sir. How we did? First 1 lakh, they're multiplying it with 1%, 1000. And subsequent 4 lakhs, 0.5%, it is how much? 2000. So the total value of supply is how much? 3000. Okay, let us take example of 10 lakhs. First 1 lakh into 1%, 1000. Then 9 lakh into 0.5%, it is 4500. The total value of supply is 5500. Okay, now let us take the next example. It is 50 crores. 50 crores now, first 10 lakhs we need to do separately and the balance we need to do separately. So see, in excess of 10 lakhs, how much it is, sir? In excess of 10 lakhs, it is 0.1% or 60,000, whichever is lower. So in this method, there is a minimum cap and there is a maximum cap. Minimum cap value of supply will be 250. Whereas the maximum cap of value of supply will be 60,000 only, how much ever you convert. The maximum cap is only 60,000 because here in last option they said like whichever is lower. So you'll understand here. If you're doing for 50 crores, first 10 lakhs how much, sir? Already for 10 lakhs we did here, na? How much? 5,500. For first 10 lakhs 5,500. For the balance 49 crore 90 lakhs, you should multiply it with 0.1%, which is 4,99,000. So the total is 5,04,500. But in last option they said like 0.1% or total 60,000, whichever is lower. So we can take 60,000 as only the value of supply. So when you go to method 2, the maximum value of supply can be only 60,000, whereas the minimum value of supply will be 250. There is no such kind of upper limit and lower limit in the method 1. Only in method 2 we are having this upper limit and lower limit. The next, value of supply in case of 8 travel tickets. 8 tickets. Domestic travel now will multiply 5% of base fare. Sir, this is nothing but the commission which they will get to the 8 travel agent. Let's say Paytm is an 8 travel agent because through Paytm we can book flights. So what commission Paytm will get, for that what should be taken as the value of supply? That's the point here. What if it is a domestic flight, then the basic fare into, sir, base fare not the price at which we booked. Base fare maybe let's say 10,000 also, it might be sold on a discounted value or at a premium value based on the demand. Okay, so we need to multiply here with on what? Not the actual fare, it's on the base fare. 5% of base fare. If it is international, then 10% of base fare will be taken as the value of supply. Sir, we can even calculate the actual commission. Let's say if the actual commission they got is less than these values, then we can take actual transaction value itself as the value of supply, because these rules are 32 is optional. Either foreign currency or aid travel agent or the other ones which we discuss are also optional only. Next, in relation to insurance companies, in related to life insurance companies. So this attempt we can predict much more, like since foreign currency already asked. Okay, either the mock test paper question which was on rule 27 or rule 28, there will be a question 27 and 28, or else there could be a question from this aid travel agent or insurance. Policy with dual benefits, there is risk plus investment. Policy with dual benefits, so let's say how much what should be the value of supply in an insurance premium. Sir, in insurance premium these days they are covering risk plus investment. If only if they cover the risk, now nobody will take insurance policy. Okay, if you became an insurance agent, if you go to client and simply you'll say, you talk about like, sir, take this 1 crore policy, once you die you'll get 1 crore rupees. Okay, so even though we think after our family, internally we think, I mean, we have one kind of, I mean, even though we couldn't express it out, uh, how we'll generally think, na, we are not much bothered about the money which we get after our death. Okay, we'll always think of the money which would come once we are in, I mean, when we are alive only. So that's why we'll take the policy which has two options. The benefit will come either on death or after attaining a certain period of age. That means this policy is not only covering risk, this is also acting as an investment as well. Okay, so the policies which are having demand, na, nobody buys a policy except it is a medical insurance. Other normal life insurance or term insurance, there is no much demand for the policies which cover only risk. If it covers risk as well as it will act as an investment tool, na, then only they'll buy. Okay, so let's say only risk if it covers, na, the policy will be, let's say if I'm taking a policy for 2 crores, if it only covers risk, na, I need to pay only 40,000 to 50,000. But still nobody will take such kind of policy. Why? Because the 2 crores will come only after his death. Okay, the other option will say like, you need to pay 2 lakh rupees, then you will get 2 crores either on death or after attaining a certain period of age. So then maximum people will take this 2 lakhs policy only, even the premium amount is high, because in this option he has the chance of, sir, we always think of going concern only, na. Do we think like maybe in 3 years I'll die, 4 years I'll die? Do you think of such liquidation and dissolution? Just like as business, we'll also always think of going concern only. So when you're thinking of going concern, what you'll think? After 30 years or after 40 years, you'll expect like the money should come to you, not after your death. So that's why the policies generally will be with the risk plus investment. Since they cover dual benefits, risk plus investment part we cannot tax. Only risk part insurance premium only can be taxed, because investment night is nothing but money form only. So investment form we cannot tax. Only the value of supply is only the risk related part. So the risk related part, how to identify? They will mention in the policy document itself, out of the premium collected, how much would be separated for risk and how much would be going to be invested. Okay, so taxable value equals to gross premium. Let's say that 2 lakh rupees they collected for a year. Okay, this is the gross premium. Then out of this we need to separate the amount allocated for investment if it is intimated to the policy holder. So the amount allocated for investment, 1,70,000. So if you subtract that, what is the value of supply, sir? 30,000. Out of 2 lakh premium collected, 30,000 is only for the risk. The other 1,70,000 is for what? Investment only. So we can take value of supply and we can levy tax only on the risk related premium only. So that's why risk related part we are identifying it. Okay, that will be clearly mentioned in the policy document. We need to subtract that. Okay. Single premium annuity. Single premium annuity, na, you will not pay year by year. You will pay at a time some 30 lakhs or 40 lakhs. Okay, single premium annuity na, you will not pay year by year policy premium. You will pay at a time 20 lakhs or 30 lakhs, you will pay at a time. Okay, that itself will be considered till the maturity. Okay, so in such cases, how much we need to take as the value of supply? In such case, value of supply will be 10% of the single premium charged, where allocation for investment is not intimated. Even though if it is a single premium annuity, if they separately mention, sir, let's say I paid 30 lakhs at a time, single time premium. Out of the 30 lakhs, they clearly said like this much is for risk and this much is for investment. Then only on the risk part, treat it as value of supply. I mean, first option only. Either it is single premium annuity or whatever the type of policy, if risk and investment involved, and investment amount if they are saying separately, follow the first rule only. From the gross amount, separate the investment amount, then the risk related amount will identify, that itself will be taken as value of supply. Okay, this option is not available. I mean, they are not clearly differentiating risk amount and investment amount. And if it is a single premium, they are not differentiating, and it is a single premium annuity, then out of the total premium collected single time, 10% will be taken as the value of supply. Then the third policy, sir, it is only for risk cover. Accident insurance policies, medical insurance policies, they cover only risk. Normal general okay, general insurance and all, then the value of supply is will the entire premium, because it covers totally for the risk only. Next, in any other case, I mean, it covers both risk and investment, but they are not mentioning how much is for risk and how much is for investment. In such case, the value of supply in the first year will be 25% of premium, whereas for subsequent year premiums it would be 12.5% of premium. First year na 25%, subsequent years na 12.5% of the premium. Okay, so you can take break, sir. After break, some 5 to 10 minutes, the discussion will take for theory. Then we need to solve problems. Okay, 32 subsection 5, sir. This is with respect to value of supply in case of second, I mean, used goods. It's not second hand goods, but for us to generally we call in the normal sense as second hand goods. Now that's why I wrote it as, but actually the provision will be as like used goods. Used goods now, these like car traders and all, they'll be selling the used cars, used bikes. Then how to take the value of supply? So the problem with their industry, I mean, why they need to talk specifically about used cars only now? So used cars, let's say there's a dealer, car trader or car deco, who will buy used cars. When they buy used cars, they'll be buying from unregistered persons. There they will not get ITC. And when they are selling, since this car trader is registered person, they need to pay tax. So one, they'll not have any ITC, but they need to pay tax. So they feel it as so much like they are paying taxes because they'll not have any ITC. So that's why they have come up with an alternative valuation model for them also. So if he's a dealer of second hand goods or used car, I mean used goods, there are two options, sir. If he is availing ITC, then you have to follow the normal transaction value only. If he don't, I mean, if he is following this method, then he cannot avail ITC. Next, if ITC is not available, then this option of margin scheme is available. What is this margin scheme? Now simple. Just take the selling price and take the purchase price. The difference itself will be taken as the value of supply. Let's say the dealer has purchased a car, used car for 5 lakhs and is selling it for 7 lakhs. Then the 2 lakhs itself is the value of supply. But in question, they'll give us like he purchased for 5 lakhs, then repairs he incurred for 1 lakh and is selling for 7 lakhs. You should not calculate profit here. You just calculate margin. Selling price and purchase price difference. 2 lakhs only value of supply, not 1 lakh. After reducing repairs, you'll get 1 lakh. Not that 1 lakh is value of supply, 2 lakhs is the value of supply. So what happens if it is negative? That means you purchased for 5 lakhs and sold for only 4 lakhs. If it is negative, no value of supply, ignore. Only if it is positive, take it as value of supply. So selling price minus purchase price is the value of supply. Ignore if the value is negative. So the next concept is like related concept only, much more deeper into that point. That is like, so you know this Sundaram Finance, Manappuram Finance, Bajaj Finance, they'll be financing the auto loans. For automobile industry, for trucks purchase or for vehicles purchase, they'll be financing. When the borrower defaults, then they'll take back the possession of that vehicle. Okay, and then they'll sell these vehicles. So now they are selling used vehicles only. Let's say Sundaram finance the trucks. When the borrower, if he didn't repay the loan or if he fails to pay the EMIs, then they'll take back the possession of the truck. That truck is now a used truck. When they are selling that used truck, what we should take as value of supply? Okay, how to find out this margin scheme is the problem. Sir, to find out margin scheme here, the problem is in general cases there is a purchase price and sales price, but when the repossessed asset is being sold, there will be a selling price. But what would be their purchase price, sir? Assume I am a bank. Okay, Yogesh didn't repay the loan, so I have taken back the possession of the car which he purchased. Now what is my purchase price? I don't know, because I just taken back the possession of the car by cancelling the loan which I have granted. So what to take as the purchase price? Selling price I will be knowing because I'll sell it afterwards, so the selling price is there. To find out the margin scheme or to find out the margin difference, we don't know purchase price because I'm not actually purchasing, I'm taking back it from the, or I'm taking the possession from the defaulting borrower. In such cases, what to take as purchase price is the question. So borrower, registered person. Borrower, I mean from whom I'm taking the possession, that borrower is registered person. Then the price is nothing but the actual price at the time of repossession. Sir, let's say from a registered person I'm taking back the vehicle or good, then from the borrower perspective it is permanent transfer or disposal. So for him also it is supply only. Since for him it is a supply, he'll raise an invoice. Whatever is the invoice value he'll mention, that will be taken as my purchase value. Assume the borrower is a registered person. If I am taking back the vehicle from him, since he defaulted the payment of EMIs, then it will be a permanent transfer or disposal to the borrower. Okay, since it is a permanent transfer or disposal, he'll recognize it as a supply. So since it is a supply, he is mandatory, he need to raise an invoice. So in invoice he'll mention some value, that value itself I'll take it as my purchase price. So no problem when the defaulting borrower is a registered person. The problem will come when the defaulting borrower is a unregistered person. Let's say a salaried guy purchased a car. Now his job was in layoffs, his job was taken away. So now he cannot pay EMIs. Now the borrower, the lending company has taken back that car. Since he is a salaried guy, he is not registered. So now what to take the purchase price is the question. Further, they are saying like, if he is an unregistered person, take the initial purchase price of the borrower. Let's say he purchased the car for 20 lakhs. Take that initial purchase price. From there, reduce 5% for every quarter from date of purchase to date of disposal. Sir, by reading this sentence, we'll assume like this is from date of purchase of the borrower to the date of disposal of borrower. It's not like that. From the day the lending company taken away the possession of the asset till the day it sells back the asset, for that period reduce 5%. Okay, there is an example also, you'll understand. Okay, first look at the provision only. First take the initial purchase price of the borrower. From there we need to subtract 5% for every quarter used. The 5% from which date to which date? Date of purchase to date of disposal of not borrowers. Date of purchase to date of disposal of lender. You'll understand here. So see here, Hari is into business of buying and selling of used cars. Okay, sir, this is the normal one, sir, not this one. Okay. Shivani purchased a car for 20 lakhs for which she took a loan from Sundaram Finance for rupees 15 lakhs. On 1st May 2023, she purchased a car after taking loan. Since Shivani fails to make loan repayment due to loss in cricket betting, okay, this Sundaram Finance repossessed the car and sold it for rupees 16 lakhs. Sir, we know for what value Sundaram Finance has sold the car subsequently. Selling price is available. We need to find out the Sundaram Finance purchase value. It didn't purchase actually. It just taken away the car from Shivani. So we need to find out purchase value. So for what they are saying, take the actual purchase price of Shivani initially. For what price she purchased it, sir, initially? 20 lakhs. Take the 20 lakhs minus. You should subtract 5% for every quarter. That also clear. The only thing which is not clear is from which date to which date we need to calculate this quarters. Date of purchase to date of disposal. If you look at the provision here, it is clear what? Date of purchase to date of disposal. Date of purchase, not here, date of purchase is nothing but not the date of purchase by Shivani. We should take when the Sundaram Finance has taken away the possession of it. When Sundaram Finance has taken away the possession of it, since Shivani fails to make loan repayment, in cricket betting, Sundaram Finance repossessed the car and sold it for 16 lakhs on 31st December. Okay, 16 lakhs for when, sir? 31st December. So this is the cut-off date. I mean, till that point of time, we need to find out number of quarters. From when it needs to be started. Shivani purchased the car on 1st June. Whereas on 1st May 2023, since Shivani fails to make loan repayment due to loss, it was taken away. It was repossessed on when? 1st May 2023. Car purchased on 1st June 2022. That point, from then she is paying EMIs properly only. Only from 1st May 2023, the car was taken away by Sundaram Finance. So, what regular mistake we do now, date of purchase means we'll calculate number of quarters from 1st June 2022. That's not the point here. We should calculate number of quarters from the day when the car has been repossessed. From the date of repossession till the date of sale by Sundaram Finance. So, that means we need to take from 1st May 2023 to 31st December 2023. How many quarters are there? We need to calculate. Part quarter also has to be treated as full quarter only. Sir, quarters na, we cannot take any random 3 months as quarter. Quarter means always Jan, Feb, March, April, May, June, July, August, September, October, November, December. From 1st May na, there is May and June, one quarter. July, August, September, another quarter. October, November, December, another quarter. So there are totally 3 quarters. So you need to do 5% into 3 into 20 lakhs. You will get 3 lakhs. So purchase price to Sundaram Finance, how much? 70 lakhs. Whereas it is sold for how much? 16 lakhs only. So selling price minus purchase price, na, there is negative value. Selling price 16 lakhs, purchase price 70 lakhs. There is negative of 1 lakh. When there is negative value in margin scheme, we will simply ignore. There is no value of supply. So negative na, so there is no value of supply. Okay, sir, simple thing only, sir. Margin scheme, simply will subtract selling price, will find out, will do selling price minus purchase price. The difference itself will take as value of supply. If difference is negative, we'll ignore. The problem will come here. You are selling used cars, but you didn't purchase the used car. You just taken away the possession of that used car since the borrower defaulted the EMI payment. In such case, we need to find out the purchase price also. How can we find out purchase price? From the initial purchase price of the borrower, you will subtract 5% for every quarter from the date of repossession till the date of actual sale. From the date of repossession till the date of actual sale. Okay, that is the provision here. Then, sir, value of supply in case of vouchers, stamps. Sir, yesterday we discussed about vouchers. Vouchers are of 2 types: identifiable vouchers, non-identifiable vouchers. If it is identifiable voucher, na, time of supply is date of issue itself. If it is unidentifiable voucher, na, time of supply is date of redemption. So let's say I got a lifestyle voucher worth 5,000 rupees for 4,500 only. Now value of supply 4,500 or 5,000 means value of supply is equal to the money value of goods and services, or both will get by using that voucher. For 5,000 voucher, we'll get 5,000 worth goods. So the value of supply is 5,000 only, not the discounted value of coupon which we got. We should take it as what? 5,000 only. Next, value of supply in case of pure agent. So this pure agent also till now not tested, sir, but there in mock test paper also we can, in past mock test papers also it is there, so we can mark it as important as well. Pure agent na, sir, this pure agent means actually there is a principal to principal relationship. Let's say for example, we and client, you being a cost accountant providing this tax filing or return filing services to your client. Between you and client, there is principal to principal services. Other than this, you have, the client have given extra additional obligations also, or additional powers also to you to incur or to pay some expenses on behalf of him, which will be reimbursed to you on actual basis only. So there are actually 2 services you are providing. One is under the principal to principal basis, whereas the other part you are providing it as agent to the, you are acting as an agent to the principal. Let's say, sir, I am doing GST filings. So I said to my client, like, for every return filing, I'll charge 5,000 rupees. Let's say I'll charge 5,000 rupees. So for return filing, whatever the 5,000 I said like I'll be charging, that is on principal to principal basis. Now client even authorized me to pay GST also. Okay, and he even said like whatever the GST I pay, he'll be reimbursing me as well. So first I did filing for that 5,000 rupees. At the time of filing, there is 20,000 rupees tax. So I didn't ask the client. Since I already have an authorization to pay tax on behalf of client by me, so I paid 20,000 also. Now I raised invoice asking for my 5,000 rupees filing fee and even asking for the 20,000 which I paid as GST on behalf of him. Now what will be the value of supply? 5,000 or 25,000? Only 5,000 is the value of supply, because the other 20,000, for the other 20,000 I acted as a pure agent, because in that 20,000 I am not adding any my margin. Okay, whatever I spent, I'm getting reimbursed from the client. In that I don't have any margin. Okay, so then I'll be called as, to the extent of 20,000, I'll be called as GST amount, I'll be called as pure agent. So the amount which will be reimbursed in the capacity of pure agent will not be added into the value of supply. Okay, the expenditure and costs incurred by the supplier as a pure agent has to be reduced from value of supply. So see, who is called pure agent? Pure agent means a person who enters into a contractual agreement with recipient to act as pure agent to incur costs or expenditure in the supply of goods and services, or both. Sir, I already has a contract with the client. What I'll be filing his GST returns. That is one contract. But while doing such, if any cost has to be incurred or expenditure has to be made, that I'll be made on behalf of the client. For that I have an authorization. So I mean, in our example, I have an authorization to pay GST on behalf of him. So for that reason, for the payment of GST, I'll be treated as pure agent. Neither intends to hold any title of goods, services, or both which were procured as a pure agent. If anything he purchased also, acting as a pure agent, on that he will not be having any control or anything. It will be purchased only because on behalf of the client or principal. Next, not uses them for his personal interest and even receives only the actual amount incurred to procure such goods, services, or both. Only reimbursement of such will be made. He will not be getting anything. So for that amount, he will be treated as what? Pure agent. And then, sir, let's say me being a chartered accountant, I went for an audit. I said audit fee as 60,000, and even I said like, for the, let's say the client is in Delhi. I asked him audit fee is 60,000 and he only has to book the flight tickets also. Now I cannot say like the flight tickets which he is paying as reimbursement, because the flight I'm using for my personal purpose, because I only traveling on that. So that's for my personal purpose. For that we cannot call it as pure agent. So pure agent from that service or for the expenditure which they incur, the benefit also will go to the other person only, to the client only. But in this flight ticket booking and all, benefit will come to me. That's why we cannot call it as pure agent. Let's say if the client is paying me 60,000 audit fee and me providing me flight tickets worth 12,000, then value of supply is 72,000. In that case, you need to add 12,000. Here, I'm not doing this. I'm doing this. I mean, the additional cost or expenditure incurred is for the purely for the benefit of client, not for my interest or not for my benefit. Out of that expenses also, I'll not take anything for me, and I'll not put any extra commission or margin onto it. I'll get only actual reimbursement. So then I'll be called as pure agent. So you look at the problem, then you'll get much more clarity on this also. Okay, so the chapter is almost completed. So next one, rate. If at all the question has given in foreign currency, then we'll convert that using the CBIC exchange rate. Next, where the value is inclusive of tax, we need to multiply it with value into GST rate divided by 100 plus GST rate to find out the tax amount. Next, no claim bonus. No claim bonus and all we already discussed in the supply chapter itself, sir. Whenever there is no claim bonus, let's say you took a medical insurance policy, but during the year you didn't made any claim. In the second year, they have given you no claim bonus. Whether that no claim bonus can be treated as supply for not, sir, when you take a medical insurance, you have the right to exercise the policy. But what you did in the current year, you didn't exercise the policy. So for not exercising your rights, can it also be treated as a supply is the question. In supply chapter itself, we discussed like it need not to be treated as supply because there is no chance of exercising the policy. That's why we didn't exercise. Okay, so we are not surrendering our rights there. there is no chance of exercising, that's why we didn't exercise, so there it is not a supply. Then they raised a second question asking like, okay, first year 25,000 medical insurance premium you paid, second year they are giving 5,000 rupees as no claim bonus. What they'll do, that 5,000 they'll not give it to you as cash, they'll adjust it with the second year medical insurance policy, and second year will pay as only 20,000 only. So the question they are asking is like, whether that 5,000 which is getting adjusted can be taken as discount, can be considered as discount, and can we take it as the, can we take the net 20,000 itself as the value of supply. Further the explanation is like, simple sir, insurance company discloses about the no claim bonus initially itself in the policy documents. They'll not surprise us, they'll not be surprising us by giving no claim bonus. Initially itself they'll mention about no claim bonus. Second one, even show no claim bonus in invoices. How much no claim bonus also they'll show it in the invoices. And since there is a pre-disclosure of no claim bonus, and since it is mentioned in invoice, it is in line with 15 subsection 3. So it will be considered as a post supply discount which has a precondition. So such discount can be reduced from the value of supply. So second year will not take 25,000 as value of supply, will take as only 20,000 after adjusting no claim bonus as value of supply. So no claim bonus is a permissible deduction. Next, clarification on guarantee service by a director. So previously we discussed about guarantee service given by holding company to subsidiary. Now we are discussing about guarantee service given by director to company. So director given guarantee to company. Okay, so what is the value of supply? Okay, he act as a guarantor for the company with banks. Now clarification is like, director and company are related persons, so we should take value of supply as open market value. But RBI guidelines suggest that no consideration can be taken by director for giving guarantee to the company. Okay, RBI clearly said like, director cannot take guarantee commission for acting as a guarantor for the company's loan. So in such case, so there is no question of open market value, will take open value of supply as 0. Next, head office providing any services to branch officer, then those services also they can raise it in invoice. How they could raise it in invoice na? Cost plus 110% and all they can do. Okay, this is about the value of supply, sir. Now come to workbook, sir. We'll solve problems in it. There are so many sums to do here. We need to be little fast. 13 sums are there. 3, 4, 6. This, yeah, na? Okay. Okay. Go on, answer. So see here, sir. Asha Limited supplies raw material to a job worker, Karina Limited. Sir, this is new type of question. That's why I included here. It is related to job work. Job work, na? Already said yesterday's class or day before class. Job work means something like outsourcing. Okay, we'll provide raw material, we'll give machinery, everything. Then that worker will do the actual processing and manufacturing, and he'll return back the output to us. We'll put our brand and we'll be selling that. Okay, the one who is doing that activity of processing on our goods is called as job worker. Okay, Asha Limited supplies raw material to job worker Karina. So Asha Limited is principal, Karina Limited is job worker. After completing the job worker, the finished goods of 5,000 packets are returned to Asha Limited. I mean, after completion, they are returned back to the principal by putting the retail price as 20. The product in the packet is covered under MRP provisions. Okay, determine the transaction value in the hands of Karina Limited. Sir, they are asking to find out the value of supply of job worker. Okay, cost of raw material supplied 30,000. Job worker charges 10,000. Transportation charges for sending the raw material to job worker 3,000. Transportation charges for returning the goods from job worker premises to the principal premises 4,500. Asha Limited paid certain technology transfer fees to Karina Limited, to Reena Limited, so that Karina Limited can use the said technology in the given job work operation. This technology owned by Asha Limited for subsequent use as well. Next, Karina Limited offered discount of 2000, provide full payment. Okay, so job worker, he is charging how much? 10,000 rupees only. And even on the 10,000 rupees also, he said like he'll give 2,000 rupees as discount, where the payment is made at the time of raising the invoice, and the same will be mentioned in the invoice as well. So simple things are here. They're asking to find out the value of supply. What would be the value of supply? So I'm explaining even the job worker concept for you to have better clarity. Principal, job worker. Principal sent goods, capital goods, or any service to the job worker without any cost. Free of cost, he sent them to job worker. Now, when principal send these goods, capital goods and services to job worker, this is not a supply. This is not a supply. Now, job worker will process on them and he'll be returning them. Finished good, he'll return them. This is also not a supply. Then what is supply? Only for the process job worker carried out. Whatever the amount job worker charged for the process he carried out, that amount will only be treated as what? Supply. Okay. So now this 10,000 value will only be treated as supply. But then they added the transportation charges for returning the finished packets to Asha Limited 4,500. Why this is added now? These transportation charges are treated as incidental expenses. So okay, once they finish the job work, they need to return the goods. So the transportation charges which they incurred for returning are incidental expenses to that of job work. So that's why these incidental expenses alone 4,500 has been added, nothing else added. And from that they offer 2,000 rupees as discount, and such 2,000 rupees discount has to be reduced, which is reduced. So the total value of supply is only 12,500. Okay, this is question number 3. Now go to question number 4. Question number 4, sir. This is rule 30 related. You need to find out cost into 110 percentage. Fastly, sir. Read the question. Direct material consumed 2,36,000. Sir, CA rule 30 na, we need to add all the costs as per cost sheet. What we cannot add na, selling and distribution costs we shall not add, and any office and administration related expenses we shall not add. If any proceeds realized from sale of scrap na, that we need to reduce. Okay, that's what is the point here. So direct material consumed now how much, sir? Here IGST at a rate of 18%. So this is inclusive of GST. We need to find out what net of GST. So that is how much? 2,36,000 into 100 by 118. 2 lakh. Then direct labor we should add. Works overhead we shall add. Research and development we shall add. Then out of administration only 75 is related to production. That means we should consider here how much? 75 percentage only. The other 25% we should ignore. 80,000 into 75%, it is 60,000. Then input received free of cost from sister units you should add. Abnormal losses, sir, abnormal losses and all we shall not add. Why? Because only normal loss will consider, abnormal loss we shall not consider. So this will ignore. Advertisement and selling cost will not consider. Then even VRS compensation to employee. VRS compensation, sir. The problem with VRS compensation is Okay, the problem with VRS compensation is this is also what administration related only. This also will not include. Then we'll reduce the realizable value of scrap and wastage 20,000. So then we'll arrive what 4 lakh. Okay, 5 lakhs is the cost of production. See, material cost we found out 2 lakhs. Labor cost 1 lakh 60. Overhead 40. Research and development 25. Administrative out of 80,000 75% 60. Input received from system unit 35,000. Then we ignored abnormal loss, advertisement and selling cost because we are only calculating cost of production. Advertisement and selling is after production. So that's why we'll not include that. And even VRS compensation is an administrative related expense, so we'll not add. So once you reduce them, once you ignore them, then you'll find out the cost of production as how much? 5 lakhs. But if you read the question, out of 1000 units manufactured, only 800 units have been cleared to sister concern. So you need to find out the value of 800 units. So 5 lakhs into 800 by 1000, you got 4 lakh 40,000. So 4 lakh 40,000, sorry, 4 lakhs. 4 lakhs again you multiply it with 110 percentage. Then the value of supply is 4 lakh 40,000. 5 lakh into 800 by 1000, 4 lakh. 4 lakh again you need to multiply it with 110 percentage. So you got 4 lakh 40,000. Sorry, here actually there should be a separate step. Everything they did in a single line. The second step should be value of 800 units, 5 lakh into 8 by 100, you'll get 4 lakhs. Then the next step should be 4 lakh into 110 percentage, it would be 4 lakh 40,000. But they did everything in a single step. That's the problem. 4. Then come to question number 6, sir. Best Limited sells a car worth 5 lakh to Sundar Automobiles. Best Car Limited incur packing charges of 6,000. It provided discount of 1%. Best Car agreed to provide a further discount of 0.5% if Sundar Automobiles make the payment by 31st via net banking. Sundar Automobiles make the payment by 31st of the month using net banking. Find the net GST liability. So first initial value is how much? 5 lakhs. For that packing charges we need to add incidental expense. Then it has given discount at the time of sale itself 1%, which is mentioned in the invoice. So this we need to reduce because it is a discount given before supply only. Then they discussed about another discount of 0.5 percentage also, where the makes the payment within a specified date. It was that condition is mentioned at the time of supply only. Sir, this was not like suddenly they are giving discount after sale. That they initially itself, in the initial contract time itself, they said like when you make the payment within 30 days, they'll give additional 0.5% discount, which was clear at the time of supply only as per the contract. So this 0.5% will be considered as what? Post supply discount. This also can be allowed. So first 5 lakh, they added packing charges 5 lakh 6,000. Then they gave discount of 5 lakhs, transaction value. This they did. But understand, the discount which they are giving subsequently now, that they will be raising through a credit note because the value has to be reduced. Since for another discount, Best Car Limited will issue a credit note to Sundar Automobiles for 2,500. GST, that means 0.5% of 5 lakhs plus GST on 18% on 2,500. And the same must be linked to relevant tax invoices. Okay. Sir, post supply discount will be given afterwards. But before that only original invoice is raised. Original invoice we cannot alter whenever you want. So what you will do? Instead of changing the original invoice, you will raise a credit note subsequently to reduce the value. If you want to increase, you will raise debit note. Clear? Able to understand? Come to question number 12. Kamal and Co. manufacturers customize the product at its unit situated in Rajasthan. Okay. Cost of production of our Kamal and Co. is 20 lakhs. Cost 20 lakhs. The products require further processing. So they are not going to be sold as such. They require further processing before sale. For this purpose, products are transferred from Rajasthan unit to their another unit in Punjab. So there is a transfer of units from one distinct person to another distinct person, and the receiving person cannot sell them as such because they require further processing. Next, the Punjab unit, apart from processing these products, they will even process the similar products of other persons as well, okay, of same kind and quality. There are no other factories in the neighboring area which are engaged in the same business as that of its Punjab unit. So products of same kind and quality supplied in lots by another manufacturer located in the product. Okay, sir, see here. Products of the same kind and quality are supplied in lots. The price of such same kind quality goods is 19 lakhs. So they are asking us the value of supply between these distinct persons. Sir, that means here we need to follow rule 28 or rule 27. Rule 28 because they are related persons. Sir, rule 27 when price is not the sole consideration. Rule 28 when they are related persons and they are not principal and agent. Here they are not principal and agent. Rule 28. Rule 28 now first what we need to check, whether the recipient is registered or not. I mean here the recipient is what? Punjab branch. So there is no clarity regarding whether Punjab branch is registered or not, or it can avail ITC or not. So but still, since there is no clarity, we'll write down in such a way also. If Punjab branch is registered and it can avail ITC, then that actual value, okay, so there is no invoice value also. We need to go for another assumption that we cannot go. So that's why option 1 is not avail. So to go option 1, there should be some invoice value mentioned and recipient should be registered. Okay. Even if we assume here Punjab branch is registered, we need to further assume invoice value also. That is not correct. So we'll think like option 1 is not available. Then we'll go to option 2. When option 2 will come, where the recipient will sell the goods as such without further processing. But here there is further processing is required. They cannot sell as such. So that's why option 2 is also not available. So we'll come to the option 3. What option 3 they are saying, like first to take open market value. There is no open market value, sir. Then the second option is like kind and quality. Here like kind and quality goods value is available, which is 19 lakhs. That will take. But for that he'll explain the whole provision here. The total provision, all the options, everything he'll explain, and then he'll give the conclusion like they'll take the value of supply as 19,000. The whole story, the whole rule 28 he'll explain. What is option 1, what is option 2, what is option 3. Then he'll give the conclusion. Here option 1 you cannot take because there is no clarity about whether it is registered or not. Option 2 we cannot take because there is further processing. Option 3 will come. Here open market value is not available. The only available thing is like kind and quality, 19 lakhs, that only taken as value of supply. Also done. Come to question number 15. Second hand goods, sir. X Limited, a registered person, GST being a dealer of second hand goods. Second hand goods na which scheme? Margin scheme. Second hand goods na margin scheme. What will calculate? Selling price minus purchase price. Sir, margin scheme na always don't think about the repossession one. Repossession one will go only when there is a finance company which initially finance the purchase and then it will repossess and sells. Here X Limited, just a registered person, dealer of second hand goods, it supplies used cameras for a selling price of 15,000. The used camera was purchased for how much? 10,000. So what is the margin? 5,000. So 5,000 will be the value of supply. Okay. Whereas actually they sold it for how much? From a registered seller on which CGST and SGST of rupees 14,000 each was charged. X Limited charged IGST. So they are asking us to calculate in both the ways. Like assume in the normal way, assuming there is input tax credit availed, and calculate even if input tax credit is not availed. Sir, it's the normal value. In the normal case, if you see, ITC is availed. First they purchased, for what value they purchased? Was purchased from 10,000 from a registered dealer on which CGST and SGST of 1400 is there. So outward supply, they are sold it for 15,000. On 15,000 GST at a rate of 28 percentage, they sold. What is the 15,000 into 28%, sir? 4,200 only, na? 4,200. Then less ITC. What is the ITC they are having? 1,400 and 1,400. So 1,400 and 1,400 if they supply, the net GST liability they are having is 1,400. 100 when they avail ITC. If they don't avail ITC, na, they'll go to what? Margin scheme. Margin scheme, na, what is margin? 15,000 minus 10,000, 5,000. On 5,000, levy 28%. 1,400. So, in sorry, sir, margin scheme, na, the purchase price will not be 10,000. Why? Because since they will not get ITC, no. So, when once they will not get ITC, this GST value also will be added to the cost. Sir, you need to get again the basic GST entry, purchase entry. Purchase account debit, ITC account to cash. This is what the general sale entry we are writing. Let's say if is ITC available now, what you are doing? Purchase account debit 10,000, ITC you are taking 2,800 and cash you are writing 12,800. If there is no ITC availability na, then this 2,800 also will add into where? Purchase only. So then in such case in margin scheme you cannot take cost as 10,000. You should take cost as how much? 12,800. So sale price 15,000 minus 12,800. If you subtract, then the margin is only 2,200. On this 28%, if you will apply, it is how much? 616. So margin scheme only better na. Normal scheme you are paying 1,400. In margin scheme you are paying only 616. So here you are paying 1,400. Here you are paying 616 only. So which is better? Margin scheme only better. 15 done. Then 16. This is related to margin scheme but with repossession. C has taken a loan from bank on 15th July for 2 crores. Purchased a machine. Further, he defaulted in paying the loan. Subsequently, bank repossessed. When it repossessed, sir? 1st Jan 2018 it repossessed. Why this date is important? From this date only we will be calculating how many quarters they have been used. The banker sell the said goods on 26th April. Okay, this is the end date. So from 1st Jan to 26th April, how many quarters are there? 2 quarters. So we need to calculate 5% for 2 quarters. Okay. What is the initial purchase price, sir? 2 crores. So from 2 crores, if you subtract 5% for 2 crores, then you will get the purchase price of the banker. Purchase value of the banker, na, it's only 2%. Na? Why they did 40 lakhs? Sir, you need to calculate only 2 quarters here. So the amount will get changed. Sir, Jan, Feb, March, April. So how much it is for 2 quarters? Na? 20 lakhs. So you subtract only 20 lakhs. Then the purchase price will be how much here? 1 crore 80 lakhs. Okay. Now they have given two cases. In one case, assume it is as sold for 1 crore 90. In one case, assume it as sold for 1 crore 70. Sir, if it is sold for 1 crore 90, whereas the purchase price is 1 crore 80, selling price minus purchase price, 10 lakhs will be treated as the value of supply. If it is sold for 1 lakh 70, sale price is less than that of purchase. Sir, see here. If it is purchased for 1 crore 80 and if it is sold for 1 crore 70, which is higher? Purchase price only higher. Where purchase price is higher, na, then you will get negative value. If it is negative value, you will ignore. See, in case 1, sale price 1 crore 90. From there, if you subtract 1 crore 80, you will get margin of 10 lakhs. Where the sale price is 1 crore 70, then the purchase price is 1 crore 80, you will get 10 lakh negative. If you get, sir, your answer needs to be corrected here. You need to change the answers here. Make it as how much? 1 crore 80, 1 crore 80. Okay. Then here it would be 10 lakhs positive here. Here it would be 10 lakhs negative figure. If it is 10 lakh positive figure, na, that itself taken as value of supply, levy IGST. IGST it would be 1 lakh 80,000. If it is negative figure, na, then ignore, there is no value of supply. Okay, go solve question number 17 as well. 17. This is regarding the pure agent. Read the question once, sir. This is regarding the pure agent. Sir, see here. Papli manufactures is Mumbai, registered in Mumbai, is a manufacturer of footwear. It imports footwear making machine from USA. Papli avails the services of Dada Logistics, a licensed customs broker. Okay, with its office in Ahmedabad, in meeting all the legal formalities for getting the said machine cleared from the custom station. So Papli manufacturers also authorized Dada Logistics to incur on its behalf the expenses in relation to clearance of imported machine. So then, by reading till here, you can identify who is principal and who is pure agent. Principal is whom? Papli manufacturers is principal, whereas Dada Logistics is there, na, it is the pure agent. So Dada Logistics actually it provide the customs related import and export services, but in relation to that, it will even, sir, Dada Logistics na it service is what? Connecting all them, managing the import smoothly. That's what their service. I mean, they'll talk to customs office, they'll talk with other logistics persons, everything they'll deal. Okay, further they'll be getting the consideration. But in addition to this, what the public manufacturer also authorized, if any customs duty or duty has to be paid in between, that also will be paid by Tata Logistics. Any transportation charges, all those things will be paid by Tata Logistics only. For that they got authorization as well. Now these expenses would be reimbursed by Papli to Dada on actual basis only. There is no margin also. In addition, Papli will also pay the agency charges. For their services, they'll get agency services. In addition, they'll get reimbursement for the expenses which they incurred on behalf of Papli. Now they give the total invoice, sir. In this agency charges, 5 lakhs is there. Why this 5 lakhs? This 5 lakhs is for the service. Okay, this no question. This we can take it as what? Value of supply. Next, unloading charges. Unloading charges. This unloading is for the benefit of whom? For agent of Papli. So it was incurred for Papli by Dada Logistics. So this 50,000 is nothing but a reimbursement. For this 50,000 is acting as a pure agent. So it need not to be added into the value of supply. Then charges for transportation of machine from port to Gujarat. So transportation, whose benefit? Public benefit only. So no benefit to the agent. So this also for the pure agent only will not add. Then charges for again transportation only from warehouse to another place. This is also for the benefit of public only will not add. Customs duty, benefit of the public will not add. Dock dues, same for his benefit only. Port dues, port charges for his benefit only. Now see, hotel expenses. Sir, hotel who is using? Dada Logistics is using for his benefit. Traveling expenses for his benefit. Telephone expenses for his benefit. So these three we need to add 45, 50 and 2000. Whereas this, with respect to these items, he is acting as pure agent. Whereas with respect to these three, he is not pure agent because they are for his personal benefit, Dada Logistics benefit. So this needs to be added to the value of supply. So only these three will be added. The value of supply is 5 lakh 97,000. For this, they'll write the whole pure agent story and then they'll explain why they were not added. Okay, very high chances of asking this kind of questions, sir. Not a task, but still, once in mock test paper it came. Then come to question number 20. See, JE Engineers is a partnership firm registered under GST for supplying works contract services. JE engineers agreed to supply works contract services. Accordingly, company quoted an amount of 1000 lakhs for construction work. It agreed that if B Limited supplied that steel and cement, the contract amount will be reduced on the agreed basis. So B Limited supplied steel and cement for rupees 10 lakhs for use in the construction activities. As a result, the contract amount reduced to 90 lakhs. So see here, sir. It is agreed that B Limited supplies steel and cement. That means free of cost material supplied. The value of them is how much? 10 lakhs. Okay. Now the actual agreed value came down to 90. Further, JE Engineers has built and supplied goods to B Limited worth 2 lakhs under a separate agreement which was also used while providing the above works contract. Another 2 lakhs worth material supplied. B Limited provided certain facilities. Sir, here, who is supplier, who is recipient? JE Engineers is the supplier. B Limited is the recipient. In addition to this, B Limited provides certain canteen facilities, electricity, water to JE Engineers free without charge. Cost of such services, if they are provided to outsiders, it is what? 1,50,000. Sir, this is also something like actually supplier has to incur this 1,50,000. But whereas this is met by whom? Recipient. This is something like obligation of supplier met by recipient. So first to take 90. Why 90? Because the contract price initially 100, but then it got reduced to 90. So you take 90. But free of cost material if any supplied, that value you need to add. So add 10. Then they provided consumables under a separate contract. That also add 2 lakhs. Then this 1.5 lakhs. Why this is being added? Obligation of supplier. Actually, this 1.5 lakhs has to be incurred by supplier, but it was met by whom? Recipient. So that also we need to add 1.5. Then we'll be getting value of supply 103.5. Then we'll levy GST at 18%. You'll get 18.63. Then come to question number 24. Do this, sir. Airfare only. Small sum only. Read the sum once. So completed. So see here, sir. Very simple sum. There is basic fare on domestic air tickets. So domestic air tickets now we need to apply how much? 5%. There is even international booking. International booking now we need to levy 10%. So 50 lakhs into 5%, na, it is 2.5 lakhs. 80 lakhs into 10%, na, it is 8 lakhs. So total value of supply came to 10.5 lakhs. Whereas the actual commission, I mean, when you come to transaction value, the actual commission they charged is 4.5 plus the bonus they got also has to be added 5 lakhs. Sir, if you do as per rule 32, it is 10.5 lakhs. If you do transaction value, it is only 5 lakhs. Which is better? Transaction value is only better. So they'll go with the transaction value one only. Therefore, thus GST liability would not be reduced in the aforesaid option. Therefore, provision under 32(3) is not economical. Then 25, 26, 27. 25. 25 is related to foreign currency, sir. Srinidhi exported some goods. Okay, fine. It received US dollar 9,000 and sold it at how much, sir? 61 rupees per US dollar. Compute the value of supply of money changing service under the rules. RBI reference rate is 62. $9,000 is the currency exchanged. RBI reference rate is how much? 62. Bank rate is how much? 61. What we need to do? Difference between those two, 1 rupee into 9,000. So in first case, what is the value of supply? 9,000. Second case, RBI reference rate not available. If RBI reference rate not available, convert foreign currency into Indian currency. 9,000 into 61. How much? Into 1%. 5,490. So in first case it is 9,000. Second case it is 5,490. Now see here. What would be the value of supply if US dollar 9,000 is directly converted into pounds? If it is directly converted into pounds, now what we need to do? We need to convert dollar value into rupee, pound value also into rupee. Dollar value na 9,000 into 63. 5,67,000. Pound value na 4,500 into 101. 54,500. We can take straight away here itself, whichever is lower. Lower na this one into 1%. 4,545. Sir, why to do this again 1% and need to find out which is lower? Straight away here also we can find out whichever is lower. So 4,545 is the value of supply here. 25 done. Now come to 26. Insurance company related. Read the question firstly. Sir, insurance related. Started its operations in the 22-23. During the year, sir, 22-23 only it started. Okay. Arihant Limited Life Insurance has charged a gross premium of 180 lakhs. Total how much it collected? 180. With respect to life insurance policies, out of which 100 has been allocated for investment. If 100 is allocated for investment, 80 only for risk. Okay. Compute GST liability under Rule 3244. First one, sir. What if the amount allocated for investment has been intimated to policyholders at the time of providing service? So it is intimated. So if it is intimated, na 100 lakhs investment not taxable. Only 80 lakhs is the value of supply. So 80 lakhs into 18%. How much? Okay. 14.4. Next, if the amount allocated for investment has not been intimated to policyholders at the time of providing service. Sir, if the amount is not allocated, na, then it is something like the last option. What we'll do, first year premium now will take 25%, subsequent years now will take 12.5%. How we will know whether it is first year premium or second year premium? It was started operations in the 12-13 only. Okay, sir, here also it should be 22-23 only. So since it started operations in the current year only, Okay, since it started operations in the current year only, whatever the premium they'll get is first year premium only. So that's why you need to do what? 180 into 25 percentage. How much? 40, 45 into 18 percentage. 8.1 lakh. Okay. Then next, if the gross premium is only towards risk, total 180 is for risk. Now 180 is the value of supply. You need to do 180 into 18 percentage. How much, sir? 32.4%. Okay. 25 done. No? Then 26 also done. No? We have 27, sir. What is 27? Sir, 27 same sum only, sir. Need not to do also again. The same kind of policies related only. Then we'll go to 29, the last sum here. Past exam question. Read question number 29. Shankar Texmaco Private Limited have its registered office in Salem. Is a manufacturer of machine. It manufacture and install the machine at the places opted by the buyers. Okay. For each machine manufactured and installed, it gets subsidy of 3 lakhs. Okay. It gets subsidy of 3 lakhs. From whom they didn't mention here. Next. Purni Dyes Limited have their registered office at Coimbatore, Tamil Nadu, have ordered a machine to be erected at their place of manufacture at Palghat, Kerala. The price of the machine is 25 lakhs. Okay, sir, the first line and all is just introduction only. Nowhere related to the question. Then they are started about Purni Dyes ordered a machine. What is the price? 25 lakhs. Then it has a handling charge of 50,000. Incidental expense we need to add. Then PDL have opted to take an additional warranty of 20,000. Warranty 20,000. This is also an incidental expense. We'll be adding. Then the installation cost 18,000, which also has to be added. Will be met by, okay, the installation cost of 80,000 charged by STPL will be met by PDL. Sir, if it is met by PDL only, then add only, but the point is explanation will be different. Okay, any amount charged for anything done by supplier in respect of supplier goods before delivery of goods includable in the value. Okay, this also will be adding installation charges. Then they offered a cash discount of 2% where the payment is made within a month. But discount we don't know now. After 1 month only we can reduce by way of credit note. Now we'll recognize it in the normal value only. If at all this discount will has, sir, there is a condition at the time of supply only. If they pay within 1 month, 2% has to be reduced, but that would be reduced by way of raising a credit note subsequently, not now, because now they don't know whether he'll pay in 1 month or not. Next, it not only recovers the discount earlier offered but also charges interest. If not paid within 1 month, then additionally they'll recover interest as well. A machinery was supplied on 21st November. Invoice also issued on the same day. Asset in the transaction value. So first to see, sir, how much is the base value? 25. For that, handling charges 50,000 added, warranty 20,000 added, incidental expenses 80,000 added. But the thing is, look at this 3 lakhs, sir. In the beginning of the question introduction, they said like for each machine manufactured and installed by it, STPL gets a subsidy of 3 lakhs. Since they didn't mention from whom this subsidy, there is no clarity about from where this subsidy is being given. For that, what they are saying, as per 15(2)(e), if subsidy is directly linked to the price, excluding subsidy given by central government and state government is to be added to the price of the machine. So there is no clarity actually regarding this point, but by looking at the answer, we could say like he has came to an assumption that subsidy is given by other than government, and the base price 25 lakhs which they given, this base price was already adjusted with 3 lakhs. This is purely assumption only, because the question has no clarity about whether the 25 lakhs is net of subsidy or after subsidy or before subsidy. So he has assumed two things are here. One is the base price 25 lakhs is considered as after subsidy. First point. The second one, they assumed it like the subsidy is given by other than government. Since it is given by other than government and it was already adjusted, they are again adding it back. Two assumptions they took, sir, in a question without any hint as well. Provided by agent. Subsidies directly linked to the price, excluding subsidies provided by the central government and state government, is to be added to the price of the machinery. So that's why they added 3 lakhs. So total 29 lakh 50,000. Sir, actually will not mention this 50,000 now itself. First we'll raise 29 lakh 50,000 and levy IGST and give invoice. Subsequently, when the cash discount is offered, at that time we need to raise a separate credit note. But in this exam purposes, they'll show cash discount also. Okay. Cash discount 2% 50,000. See, cash discount offered at the time of original supply to be deducted. It is immaterial. Sorry, they are giving that time only. Huh? Let me read the point. If the payment offers a cash discount where the payment is made within a month. Sir, here they simply said like cash discount. They didn't mention when it is going to be given. Let's say it's given where STPL offers a cash discount 2% where the payment is made within a month. If the payment is not made, it will recover but also charges interest. Okay. Further information. You have further information that made the actual payment only on 10th January. But when the actual supply is made, 21st November. Okay, this is clear. I understood that. But here, he's subtracting 50,000. Nah. So the point here is like, at the time of giving machine itself, they are reducing discount 2% also by putting a condition like pay within 30 days. Okay, assuming he'll pay within 30 days, they are giving 2% discount. If he doesn't pay within 30 days, then that 50,000 will be recovered back along with the interest on it. Okay, so that's why first they are reducing 50,000. But he didn't pay it within 30 days. So now what they'll do, they'll recover this 50,000 along with interest at a rate of 18%. So first they are reducing 50,000. Afterwards, if they want to reverse this, again they'll raise debit note. Again they'll raise a debit note because they need to add it again. That's why. 29. Okay, this is only 29. Fine. Sir, if you do these sums in value of supply, you'll have clarity about the other sums as well, sir. You need not to do the other sums because we have covered around 13 sums from value of supply. Definitely you could expect 7-mark question. So the problem is, come to one clarity, like it's not just our material questions only will come in the exam. Only the model related questions will come. In SCM and all, subject like SCM or as SPMBV, cost audit, there are high chances of picking the question directly from our material. Even in CFR also, to an extent, the question will come exactly with same names and same numbers. Okay, but tax subject, SFM, generally they'll ask the same concepts related questions, but they'll not ask the direct question. For us, the chance of picking a direct question as it is high chances from customs. Customs generally they'll not create a new kind of questions. They'll come from the already regular questions which they are having only. So customs we could expect from material only there will be questions. In coming to GST, especially in this value of supply, ITC, these areas, they wanted to twist us little more. So the concept is this only. There is no other additional concept in value of supply. From this only they can ask question. The only thing is like you should be little patient. Time of supply, value of supply, they want to twist us a little bit because Everybody will prepare time of supply and value of supply. Nobody will go to exam leaving time of supply and value of supply. Okay, if he is leaving those chapters, now he is leaving exam also. That is second. Okay, so that's why institute generally focus much on them, and they'll ask, okay, so till the point of time the question, I mean the chapters which we discuss, majority students will prepare till the syllabus which we discussed. From now only they'll go with choice and all. Okay, so these questions till now which we discussed, we covered every line, every topic we covered till the point whatever the chapter we discussed. So here, even if problem may be something new also, since you know concept, you could write, you could attempt, stick to concept. Maybe question might be little tricky. If you read the question for 2-3 times, there will not be much complicated. Like they try to complicate, just like as the sum in time of supply. If you actually arrange the question properly, there is nothing great in this sum, but arranging the question only point. Okay, so there will be, first prepare your mind, like it's not a internal exam, like every question will be something which we know. There will be some surprises in the paper. First be ready for that, ready for the surprise in the paper, in every paper. Okay, except in 3 cost audit SPM maybe, generally they'll not surprise, not now. From past 10 years they will never surprise those papers. Okay, you can fix it blindly, you can believe them. Okay, coming to IDT, there might be surprises, like an unusual question will come. Simply you have 2 questions of choice, you could leave those 2 questions from choice, the other part you can attempt. Getting 50 is very easy, sir. I'm saying once again, getting 50 is very easy. The only problem is like getting 60. For 60 only we need to put so much effort. For getting 50 na, average effort also you'll get 50. Understood na? So there is a 2 questions choice. So there might be some surprises. Okay, don't get disappointed there. Okay, examiner is not your boyfriend or girlfriend. Okay, you need not to feel so much bad like that he is not up to your expectations. Okay, so he is someone stranger, he is there to uh, what disturb you only. So you go with a peaceful mind, and even if there are some surprises also, be calm, leave them and write the other questions. There will be questions 70 marks in any case you could attempt, sir. In leaving MCQs also you could attempt that, only from descriptive also. Leaving choice 70 marks you could attempt. Even in worst case, much more worst case also, you could attempt at least 60 to 55 marks you could attempt. Okay, because the paper is for 98 marks descriptive. From there 50 to, I mean 55 to 60 marks we'll know. But what we do now, generally the other 2 questions which we don't know, there only will be rounding there, like I prepared so much from supply chapter, but the question is not what I expected. That's the problem. Okay, otherwise it would be easy only. Getting 50 na, you don't need to worry at all. Okay, both groups you are writing na. When you are writing both groups, the only things are cost audit 75, SPMBV 75. That's the only thing. 150. Those 2 papers only will give group for 50 marks surplus. Okay, cost audit na, you have no luxury of doing some wrong also. There are 28 sums in the institute material. Of those 28 sums only, they'll repeat. Out of them only 5 or 6. How many marks are cost audit? Cost audit na, problematic somewhere around 40 to 45 marks, I guess. Only the problematic part, 40 to 45 marks. Those 40-45 marks will come from those 28 sums only. So you should act like a Xerox machine there. So that 40-45 you should get completely there itself. Then MCQs you are having. From MCQs you'll get some marks. Okay, theory you'll, even if you get 50-50 also, you'll get easily that 75 and all. Okay, to learn SPMBV, if you are writing both groups now, that SFM preparation will help you in SPMBV. Some CFR preparation and some SFM preparation will also will help you in SPMBV. Even if you don't expect also, it will get 65-70 is easy only. Okay, there you will get the point. Okay, you will get that comfortable marks and all. Okay, okay, so we're starting with ITC, input tax credit. Beginning itself, the first thing when I'm starting GST, I said it about double taxation. Why ITC will be given? The only reason to give ITC is to eliminate double taxation. Fine. Capital goods. What are called capital goods? The goods which we capitalize in books of accounts are called as capital goods. Let's say I purchased a computer. It's okay. Let's say BCA purchased a computer. Will it be a capital good or revenue item? Capital good only. So they'll since they capitalize in it is called as what? Capital good. They bought benches. Capital good. They'll capitalize it. They bought books. Books capital good. These books which they are going to give you, they're not capital goods. They'll not capitalize it revenue item. So if they don't capitalize it now, the goods, sir, inwards will be only of two types. Good, service. Service will leave for some time. We'll talk about only goods. Goods are again further categorized into capital goods and other goods. The goods which gets capitalized are called as capital goods. Benches, ACs, TVs, all these will become the capital goods. Next, coming to the what we call the other goods. One category we called as capital goods. Now the other category we call it as input. Okay, goods can be classified into two types. The one which will get capitalized in capital goods. The other goods which are not capitalized in we call them as inputs. I mean the raw material, the packing materials, those we call them as inputs. Next, input service. What is called input service? The service which we are taking, the inward service which we are getting is called as input service. So there are three different names are now. Capital good, input service. The inward service is called input service. The inward good which is not capitalized is called input. The inward good which got capitalized is called as capital good. Then exempt supply. Exempt supply consists of three items, sir. One is supplies which are exempted by way of notification, non-taxable supplies, and even nil rated supplies. So understand? Okay, the problem with IDT is like every chapter will get connected. That's the problem. Exempted supply, this is the third time I am saying exempted supply. What is called exempted supply? Supplies which were exempted by way of notification, which were specifically covered in exemptions chapter. First one. Second one, nil rated supplies. What are called nil rated supplies? Nil rated and zero rated are same. Yes or no? No, na? Why? Zero rated. Okay, then nil rated na? When we call something as zero rated or when we call them as zero rated? When we are supplying to SEZ or when it is an export, then we call it as what? Zero rated. When it is an export or when we are supplying to SEZ, then they are called as zero rated. Those goods will have an actual tax rate. Just because we are exporting, we call them as zero rated supplies. I mean, will not be levying any tax on them. Whereas nil rated, the rate itself is nil for them. We cannot find rate for them itself. Why their rate has been kept as nil? Sir, those are essential goods, sir, such as like salt or some vegetables, so fruits. So they are also called as goods only. For them, the rate itself is kept as nil. So those nil rated are exempted. Non-taxable supplies. What are called non-taxable supplies? Petroleum products. What are petroleum products? High-speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas, and alcoholic liquor for human consumption. Those are non-taxable supplies. So those three are called as exempted supply. Okay. Now input tax. The tax on inwards is nothing but called as the tax which was suffered on capital good, input and input services is nothing but called as input tax. Even though it was paid under RCM, it can be called as what? Input tax only. Now we are going into section 16. Section 16 subsection 1. Section 16 subsection 1 says like only a registered person is eligible to take ITC. That we know from childhood. Only registered person will get ITC. Otherwise we got so much ITC by now. Every day we are purchasing some or the others. On that also we'll get ITC, but we are not getting. Why? Because we are not registered person. Sir, the credit which we get will be as per the manner in section 49. I mean it is nothing but the rules how we apportionate the credit. IGST can be apportioned first with, can be adjusted with first with IGST, then with CGST or SGST in any ratio, in any proportion. Next, CGST can be first adjusted with CGST, then with SGST can be first adjusted with, then with IGST. CGST can never be adjusted with SGST, vice versa. Okay, unless until the IGST credit is completely used, we cannot start using CGST credit or SGST credit. So those rules we need to follow. Next, can take the credit of input tax on inward supply, that only called as ITC. Okay, on inward supply, whatever is the input is there, that will take it as ITC. Okay, and those inward supplies, I mean the good and service should be used or intended to be used for the business. Next, they should be, the credit which we are referring will reflect in electronic credit ledger. Okay, sir, there is no difference between capital good and revenue item here. Sir, capital good na generally the life of it extends for more than 1 year, but the credit can be taken in the first year itself. Previously, before GST, when there used to be excise, I mean when there is excise duty, there is no option to take the total credit at a time in excise duty, the Senvat credit. Okay, we can take only 50% in the first year. The balance 50% can be taken in the subsequent years. But for the first year, there is only 50% for capital goods. So previously there used to be such kind of differentiation between capital goods and inputs. Now there is no such differentiation, that is capital good or input. The moment you purchase and it gets reflected into a, you can avail ITC. No problem with it. Next, 16 subsection 2, sir, very important. A registered person is not eligible to take ITC unless he satisfies the conditions mentioned under 16 subsection 2. Okay, so this section is something like Shivagami. Okay, whatever the 16 subsection 1 said and other section said, it doesn't matter to it. Whatever it says, that is final. Okay, her word itself is an act. Mate sasanam. Okay, a registered person is not eligible to take the ITC unless they satisfy the conditions mentioned below. Okay, before going there, so look at this condition, sir. IGST credit has to be first used with what? IGST, then with CGST, then with SGST. Okay, whereas IGST can never be adjusted with compensation cess payable, unless only when IGST credit is used fully, we can use CGST and SGST credit. CGST credit has to be first used with CGST, then with IGST, never with SGST and never with cess. SGST credit has to be first used with SGST tax, then with IGST tax, never with CGST and never with compensation cess. Cess credit has to be used only with cess liability. Okay, now come back to the conditions. Goods and services has to be received. Only when you receive goods and services, then you can avail ITC. If the goods and services, sir, you made purchase on 29th March. 29th March, you made the payment, bill got generated, invoice raised. So for supplier, time of supply is 29th March only. He reported the invoice in March month GST or 1 only. But you received the goods in April. So that means you cannot immediately avail ITC. You can avail ITC only in May month, because you didn't receive the goods in March. If you received the goods in March, then you can avail that in April. But you received the goods in April, so you need to wait actually till May. But practically nobody is following this. Once they get, once it gets reflected into a, they avail ITC irrespective of the goods were actually received or not. However, if in future the system might get much more streamlined, then the officer can ask, can come and verify even the inward registers and all. Then if he finds out like the credit has been availed earlier than, or has availed before the goods have been received, then for that 1 month or what the 2 months period, he can ask you to pay the interest as well. Okay, so in general, you can avail ITC only when the goods and services has been received. She was somewhere in dreams. Romantic song or normal song? Okay. Okay, we can avail ITC only when goods and services has been received. So through this point, we should understand other thing also. Let's say we purchased goods, sir, but during the transit, there was an accident and the goods got damaged severely and they were not usable at all. Can we avail ITC? No, we cannot avail ITC for 2 reasons. One reason, again, we are not going to sell them. So you are not going to sell them, there is no double taxation, so you cannot avail ITC. Sir, only when you sell again, there will be double taxation. Understand why we are not getting ITC? Because for us, there is no double taxation. We only buy. will not again sell. Since there is no double taxation, we don't have ITC. Okay, registration that is another requirement. But logically, if you see we don't have double taxation. That's why they are not giving ITC. They are giving only to the one who is having double taxations. Okay, so you can avail ITC only when the goods and services are received. So now the point is, come back to bill to ship to model. Okay, bill to ship to model, sir. Okay, there is A here, there is B, there is C. A is from Ahmedabad, B is from Bombay, C is from Chennai. Okay, this person wants some goods, so he ordered with the supplier in Bombay. But he doesn't have stock, so he ordered again goods with the supplier in Chennai. Now this C of Chennai, who is actual supplier, raised invoice to B of Bombay. Now this B of Bombay again raised invoice to whom? A of Ahmedabad. Now actually the goods should be sent like how? This C of Chennai should send goods to B, and then the goods should actually reach to A Ahmedabad. But why they need to incur double shipment cost? To save shipment cost, B asked C to send goods directly to Ahmedabad. So shipment is only one. Okay, so from C's perspective, if you see, he has raised bill to one person, whereas shipment he has made to another person. This is called as what? Bill to ship to model. You understood? Clear? In bill to ship to model, I already said, like previously in e-way bill also. Now again, once again, I'm clarifying it. There are two supplies involved here. What are those two supplies? One is between B and A, and the other one is between C and B. There are two supplies. That means there are two invoices. That means on the invoice given by C, B has to avail ITC. But to avail ITC, B has to receive those goods. That's the condition which was kept in 16 subsection 2. But does D receive goods? Those goods were directly went to A. A doesn't have such problem because A actually received goods. He can avail ITC. No problem to A. The problem is only to B. So now they have given a relaxation here under 16 subsection 2, saying like in bill to ship to model, even though this third party didn't receive goods, it is considered as he received the goods. That means it will be considered as deemed to be received. It will be considered as deemed to be received. Okay. So even though on face it looks like C sent directly goods to A, but we should imagine as like the C sent goods to B, from B only those goods have been came to A. So these goods will be considered as deemed to be received by B. So B can avail ITC. That is the point. Bill to ship to model included. Sorry, correct this sentence, sir. Here there will be a mistake here. The goods are delivered to the recipient under the directions of third party. Correct this sentence there. The goods are delivered to the recipient, not third party. The goods are delivered to the recipient under the directions of third party. The goods are delivered to recipient under the directions of third party. Such third party can avail ITC even though goods and services are not received actually. Such third party can avail ITC even though goods and services not received actually. Yes. Such third party can avail ITC even though goods and services not received actually. Okay, you understood the point, sir? So under 16 subsection 2, we spoke about only one point, sir. That is goods and services must be received. For that there is an exception. The exception is nothing but bill to ship to model. The second one. If you want to avail ITC, you should be having a document, nothing but a proof of tax payment. You cannot simply say like you had a purchase, and even though it's reflecting in 2A, 2B also, again you should have a proof of document. Okay, so when you don't have proof of document, you cannot avail, proof of tax payment, you cannot avail ITC. Proof of tax payment, any of these documents can be called as proof of tax payment. Invoice issued by supplier, the normal general invoice. Second one, bill of entry. What is called bill of entry, sir? Bill of entry, where it came? Bill of entry. Imports. In customs, in import. Why bill of entry got here? Sir, in bill of entry also, in customs also, there is IGST calculation. That IGST I said there. IGST and says we can avail it as ITC. For that, there will not be invoice. So, bill of entry itself is the proof of tax payment. So, based on that also, you can avail ITC. Sir, import is also our purchase only. Remember that. Import is our inward supply only. You are buying goods from some other country. Bill of entry. Then invoice issued by recipient. Why recipient? Sir, who is availing ITC? Recipient. They are saying like invoice also issued by whom? Recipient. So in some RCM cases where supplier is unregistered, then recipient can raise on himself only self invoice to avail ITC. Next third one, debit note. When will raise debit note? To increase tax or to increase the supply value. So when we are increasing supply value, I mean the supplier increases the supply value, then recipient will get extra credit. Na? That's why based on debit note you can avail ITC. Fourth one, revised invoice. Okay, revised invoice. So I need to tell even revised invoice concept. To understand revised invoice, I need to tell one part from registration chapter. Sir, let's say on 1st February 2025, aggregate turnover exceeded 40 lakhs. When the aggregate, this person is in Chennai only, his aggregate turnover exceeded how much? 40 lakhs. Once aggregate turnover exceeds 40 lakhs, now he has the liability to register. I mean, he needs to apply for registration since his aggregate turnover exceeded 40 lakhs, assuming he is a supplier of goods. Now, the question is, within how many days he has to get it? He has to get registered. First, he need to apply within 30 days. Within 30 days. 30 days from when? 1st December. So that 1st February is the day his turnover exceeded 40 lakhs now. So this day we call it as date of liability. The day on which turnover exceeded threshold or the day on which he got the requirement to register is called as date of liability. From there within 30 days he needs to apply. So we'll take two scenarios. Let's say he applied on 28th February only. The other case is like he applied on 5th March 2025. In this case, he applied within 30 days. Here it is after 30 days. This is what date of application. Date of application. Then the actual certificate date. After application, again they'll process it. They'll come for physical verification. All those things will happen. Finally, he got the certificate. The date of grant here is on 18th March 2025. Whereas here it is on 6th April 2025. Now the question is, there is a liability date, there is an application date, there is a grant date. Out of these three, which day we need to count as the day he got registered? Okay, whether it is the certificate date, whether it is the liability date, whether it is the application date. So now understand, where the application has been made within 30 days, then the date of liability itself is the effective date of registration. Understand, sir? Where the application is made within 30 days, then the effective date is what? Date of liability itself. Then what is, in first case, what is the date of effective date? Okay, so in this case, then the effective date is nothing but 1st February 2025. In this case, the second case, the application is not made within 30 days. Since the application is not made within 30 days, the effective date is the date of grant of certificate. When the certificate is granted, that day only it will be considered as registered. Which day? 6th April 2025. So in first case, he will be assumed to be registered from 1st February. In this case, he will be assumed to be registered from 6th April. You may think like, sir, this is only better now. He'll get registration from a later date. He'll be paying tax only from April. That's what you think. But understand, go back to supply basic again. To call it as a supply, supply includes sale, transfer, barter, exchange, license, lease, rental, disposal, carried out by a taxable person, not registered person. Carried out by a taxable person. Who is called taxable person? A person who is registered or who has the liability to register. That means from even in second case also, from 1st February, whatever the supplies he made, they are taxable only. Because he is a taxable person even though he is not registered. So tax wise there is no difference. Both will be paying tax from 1st February only. But whereas he got registration from 1st February. So now then what is the benefit for early or for compliance with the rules, na, the benefit is he can avail, I mean the first case person can avail ITC from 1st February onwards, whereas this fellow can avail ITC only from 6th April onwards. So that in between those 3 months he need to pay tax, but he cannot avail ITC, whereas he can even avail ITC. Okay, so coming to the practical issue now. Sir, this person, when he'll get GSTN number, in first case, when he'll get GSTN number, 18th only he'll get GSTN number. But from when he is considered as registered, 1st February. Okay, so 1st February he'll not know his GSTN number, na. So now how is not Mark Antony, na, to have time machine and he'll be going back and will be knowing his GSTN number and all. So you don't have this time machine. So how can from 1st February to 18th March he could give a tax invoice with his GSTN number? Will it be possible? No. So he might have given some invoice there without having a GSTN number. Now they are saying like all the invoices which you raised from 1st February to 18th March has to be reissued. Nothing but you will be revising them, which is called as revised invoice. So understand, from the effective date of registration till the date of grant of certificate, there is a time gap. In that place you are considered as registered, but technically you don't have GST number. So the supplies which were made in that interim period, you need to revise the invoices. Those invoices which you revise are called as revised invoices. There is another additional concept also regarding revised invoice, which states like, do I need to revise each and every invoice? Do I need to revise each and every invoice? Na, you need to divide the transactions into B2B, B2C. Bill to business to business, I mean registered to registered, registered to unregistered. B2C na not required revised invoice. Why not required? Anyhow recipient is not eligible to get ITC. B2C na leave, you need not to revise, I mean separately revise, consolidated. Let's say sir, in the interim period between 1st February to 18th March, I have did 500 transactions. Out of these 500 transactions, 300 are B2C only. So now for this 300, we need not to revise separately each one. For all the 300, we can do a consolidated revised invoice. It would be fine. Now there are B2B 200. Now this B2B 200, we need to revise them separately each one. Okay. One more point. Let's say there are 300, sir. Out of this 300, this 300 we cannot revise actually at a time, sir. This 300 may be again intrastate and interstate. Out of this 300, 250 are within the same state. So this 250 you can do consolidated revision. Whereas the other 50 invoices are related to sales to other states. So interstate you cannot do consolidation. Interstate you can do consolidation state-wise. Sir, the supplier is in Chennai. He might have sold to Andhra, Telangana, Karnataka, Maharashtra. So out of this 50, 10 are to Andhra, 10 are to Karnataka, 10 are to Maharashtra, like that. So you can do consolidation of those 10 only separately. You cannot do all the 50 consolidation at a time, because interstate na, they are not related to one single state. They are related to different states. So you can do consolidation, but such consolidation can be did state-wise. And even in state-wise also, if there is a invoice which is having value of more than 2.5 lakhs, that cannot be consolidated. If the individual invoice value is more than 2.5 lakhs, for that you cannot do consolidation. The other invoices you can consolidate state-wise if they are B2C. B2B na, there is no consolidation and issuing revised invoice. Each and every revised invoice has to be given separately only, because the recipient has to avail ITC. You understood about revised invoice? Revised invoice will be raised for the interim period from the effective date of registration to the date of grant of certificate. There will be interim period. In that interim period, the supplies you made are taxable. You are actually you are technically a registered person, but you don't have a GST number. So for that reason, the supplies which were made in that interim period has to be for the supplies you need to reissue a invoice which is called as revised invoice. Do we need to give revised invoice for each and every transaction? For that we need to categorize them into B2B, B2C. B2B na, separately you should give revised invoice for each and every transaction. B2C na, categorize them into intra consolidated revised invoice. Interstate, again segregate them state-wise. You can do state-wise consolidation except for an invoice which value is more than 2.5 lakhs. you need not to consider. Next, document which is issued by input service distributor. Document which has to be issued by input service distributor. Now the question is, who is this input service distributor? So this input service distributor is nothing but a corporate office which is located in some city, assume Mumbai. Okay, whereas this corporate office is having actual factories are located in different places, factory 1, factory 2, factory 3, factory 4. Okay, they may be located in Chennai, Andhra, Gujarat, some different places they are having factory. The problem is corporate office will not have any outwards. Corporate office will not sell anything. It will not have any outwards. But corporate office might have inwards, which might be related to all these branches as well. Such as like they might have taken an advertisement contract. For which the billing will be made to corporate office. So corporate office will get ITC. Or there may be some design related contracts which are entered by corporate office. So the ITC will be coming to corporate office, which it cannot use because corporate office doesn't have outwards, whereas factories are having outwards. So now this head office or corporate office can transfer the credits to branches or factories by registering itself as an ISD, input service distributor. Sir, it's addition to the actual registration which it has. It might have, the corporate office have a regular registration. With regular registration, you cannot distribute credit to your branches. If you want to distribute the credit to your branches, additionally you should go for a new registration called as ISD registration. When you are having ISD registration, then you can distribute the credit to your branches. If you are an ISD distributor, then again you need to issue a ISD invoice. So now corporate office will distribute credit to factories and will issue an ISD invoice for them. ISD invoice. So out of these documents, you should have one with you to avail ITC. So what are those documents, sir? Invoice issued by supplier, bill of entry, invoice issued by recipient, debit note, revised invoice, or document issued by input service distributor. And this document can be called as valid document only when it has tax amount on it, description, value of supply, GSTN number, place of supply. If these details are mentioned on it, then only you can call it as a valid invoice or valid document. Okay. So coming back to 16 subsection 2, we discussed only 2 points. To avail ITC, goods and services must be received. Second one, invoice or tax paying document must be there. Only 2. Third one, the details of invoice which we are referring now to avail ITC should be reported by supplier in his GSTR1 or supplier. Okay, I sold goods to you, sir. You are having invoices now. You want ITC. Just because you are having invoice, just because you received goods, you cannot avail ITC. I should first report such supply in my GSTR1. If I show it in GSTR1, then it will reflect to you in GSTR2 or 2B, then only you can avail ITC. If it doesn't reflect to you in 2A or 2B, you cannot avail ITC. So supplier being me should file such invoice or should show such invoice in GSTR1, my GSTR1, then it will get auto populated to you in 2A, 2B, only then you will get ITC. Now the fourth condition, even though it reflects in 2A, 2B, it shouldn't get restricted. Okay, so there are new conditions introduced, sir. Practically not yet made effective, but law wise they introduced. Okay, so practically they are searching how these conditions can be implemented. Okay, come to registration chapter, I'll tell those conditions as well. Come to registration, sorry, not registration, returns chapter. Returns chapter na, I think chapter number 12, chapter number 12. Come to page number 12.1 chapter. I'm searching for these points. Okay, come to 12.3. Okay, in 12.3 you are seeing these 5 points, na? These 5 points, 12.3, these 5 points. Sir, for these conditions actually rules are yet to be issued. Okay, so they just thought of it and made it as a law, but not at effective on ground. Okay, to make them effective, they should give some detailed rules how it could be implemented on that. Okay, but the condition is like the fourth conditions are in 16 subsection 2. It says like If it reflects in 2A to B also, the credit which gets reflected in 2A to B will be again categorized into two parts: available, restricted. If it gets restricted, again we cannot use. Now the question is, when it's get restricted, you understood na? I filed GSTR1, you got credit, even though it's reflecting in 2A to B. In some cases, the credit reflecting in your account might be classified as restricted. If it is classified as restricted, you cannot use. The question is, when it gets classified as restricted. First point, you purchased from a supplier who is newly registered. The problem or the reason why it's getting restricted na, you purchased goods from a newly registered person. So what's the problem? If we purchase from a newly registered person, he newly kept a shop, so I want to encourage him, that's why I purchased goods from him. That's what we'll tell, genuine reason only. But the problem of government is like, if it is newly registered person, they have doubt whether he is actually doing business or else some fake or dummy registration has been made. Okay, for that reason they are not saying like forever it will be under restricted. They'll put some cooling period. Like if you purchase goods from newly registered person, some 3 months, 4 months, like that, they'll put cooling period. Only after expiry of cooling period, you will get your credit. Okay, then the restriction will get relieved. Okay, so first one is that one. Second one, sir, from here onwards, the actual thing starts. First one looks like reasonable only, but from now on, they doesn't look like reasonable to us. Understand? You have paid the goods, you got your credit in GST at 2A to B. But the reason for restricting your credit is your supplier not filed GSTR1. Okay, your supplier not filed, sorry, supplier filed GSTR1, but he didn't pay tax. Okay, your supplier filed GSTR1, that's why it's getting to you in GSTR 2A to B, but he is not paying the taxes. There are so many High Court and Supreme Court, there are so many pending cases, litigations regarding this, sir. Me being a customer, I paid my tax, I got my goods, and it was reflected to me in 2A to B. How could I know whether he is paying taxes or not? Okay, if I go and tell also, will he pay tax or not? That is his wish. Okay, how can I make him pay taxes? That's the problem. There is an alternative answer from government also. If it is your supplier, you only went and chose him as supplier. If you cannot make him pay taxes, how could I do? That's what government contention. Okay, so it is your supplier, you only choose. Now I didn't force you to go and buy from goods from him. So that's why that's the government contention. Okay, but still there are so many practical impossibilities on us. We cannot make our supplier to pay the taxes. Okay, this one also fine. Okay, tax na, he don't pay, we'll ask him. Third one, the tax payable of supplier. Okay, he has a mismatch in, not for us mismatch to our supplier 1 and 3B. He has some mismatch between 1 and 3B. 1 he is showing so many outwards, 3B is showing less outwards, so he is having a mismatch. How we know that he is having mismatch also? For that also our credit may get restricted. Fourth one, much more advanced. Our supplier has availed excess ITC, not even tax. Our supplier availed excess ITC, so that our ITC will get restricted. Fourth one, last fifth one. Supplier has a default in following rule 49 subsection 12. Sir, what is 49 subsection 12? Na? ITC. Out of your out of your tax liability, when you are discharging tax liability, maximum 99% of your liability can only be discharged using ITC. Maximum 99%. Let's say I need to pay 10 lakhs as tax. I have 12 lakhs credit. Then what we'll do generally, if you have 10 lakhs liability and you have 12 lakhs credit, now you can set off. But what that rule says means, out of your liability, only 99% only you can pay it through credit. 9,90,000 only you can adjust with credit. The balance 10,000 you need to pay it through cash. That rule, not we violated. Who violated? Supplier violated. Who knows that? If supplier violates that rule, then recipient's credit will get restricted. You can look at these conditions, how practically impossible these conditions are. So now they are finding out ways to implement this. Okay, for them rules are not yet framed. Only when rules are framed, then this will become practically effective. But for theory wise, it was there. Okay, so fourth point na, in 16 subsection 2, when our credits get restricted in GSTR 2A to B, the question is when it gets restricted. Because of these 5 points, our credit might get restricted. What are these 5 points? You purchased goods from a newly registered person. First one. Second one, you purchased goods from a person, that person didn't pay taxes. Third one, you purchased goods from a person, that person has mismatch between GSTR 1 and 3B. Your supplier has your supplier has availed excess ITC. Your supplier has violated 49 subsection 12. Then your credits get restricted. Then you cannot avail ITC. Hmm. Yeah, corresponding to that invoice only you cannot avail ITC. Balance will get, only that part will get restricted. So already recipient might be angry. If you say like everything will get restricted, then he'll. Okay. So we completed third point, fourth point. So now fifth point, sir, very easy. Fifth and sixth are, it doesn't take much time. Supplier has to pay the tax. Already covered under third and fourth rules only. Specifically, there is a condition. Our supplier has to pay the tax. Then only we can avail ITC. Sixth one, sir. Sorry, I said sixth one first. Now I'm talking about fifth one. Recipient has to file 2A, 2B, recipient has to file 3B to avail ITC. Sir, understand. Just because it reflecting in 2A, 2B, it doesn't mean we avail ITC. We will generally avail ITC only on filing 3B. So understand, sir, the process of return filing here. GSTR 1, by when it has to be filed? 11th of succeeding month. Okay. GSTR 2A, 2B, do we need to file it? Auto populated. So now tell me the question, what is 2A, what is 2B? They can call it as one name, but they introduce here 2A and 2B. So 2A is a dynamic one. It gets changed every day. 2B will not get changed. 2B will change only month on month. Sir, why this will change month on every day? Why it will be static now? Whenever there is an e-invoice generated, e-invoice, when I said like previously the e-invoice concept, when e-invoice is generated now, automatically GSTR 1 gets updated, GSTR 2A gets updated. So whenever there is a change in GST from supplier perspective, even though return is not filed, it will get updated. 2B will get updated only when supplier files the return. Okay, so it's month on month, only on 13th it gets updated. 13th, not 13th also, 14th. Every month 14th it gets updated. Again, the coming month 14th only, again it gets changed 2B. But whereas 2A, every time it gets changed. Okay, so generally we'll take credit based on 2B. Okay, so GSTR 2A, 2B, we did not do file. It gets automatically reflected, auto populated. Then come to GSTR 3B. GSTR 3B we need to file, it gets automatically filed. We need to file. GSTR 3B only called as monthly return. It has to be filed by 20th of succeeding month. 20th of succeeding month. Okay. In this only we'll do tax payment and all. So in 2A, 2B we can see our ITC. But we can avail that ITC only on filing GSTR 3B. In 3B, you are actually availing what is your credit. Because, sir, whatever the purchase you make, regarding that purchase, it will reflect in GSTR 2A, 2B. But out of those purchases, some might be blocked credits. Or some credits you cannot take. So, those credits you will filter out. Which were only eligible, you will take in 3B. Actually, if you are following law, that you should do. But when you are filing as a consultant, now what you'll do, whatever you could see in GSTR 2A, 2B, that you will take and you'll adjust. But actually, how it has to be done, even though it reflects in 2A, 2B, we should again check whether it is used for business or not, whether it is there or not. So let's say the owner of a company buys an iPhone. What you'll do? Actually, it's for personal purpose only. What he'll do, he'll put company GST number and he'll take. But on that we can do, that everybody will do. But actually, if you follow law now, what it has to be done? Even though it reflects in 2A, 2B, it's not for business purpose now. So in 3B, you cannot claim it. That you have to reject it. That okay, as per law. Okay, so 6 conditions are: goods and services must be received. You should have an invoice or tax paying document. Third one, supplier shall file GSTR 1. In GSTR 1, this invoice has to be reported and it should reflect in 2A, 2B. Even though reflecting in 2A, 2B, it shouldn't be restricted. Fifth one, supplier has to pay the tax. Sixth one, recipient has to file the GSTR 3B. When the 6 conditions are satisfied, then you can avail ITC. Okay, these are Shivagami conditions. Next, coming to 16 subsection 2 has again two provisos. I mean exceptions kind of, or something like 16 subsection 2. So these are also important only. The whole 16 subsection 16 is very, very important, sir. Every sentence, every word of 16 is important. 16 subsection 2 proviso. What it says: when goods are received in lots and installments. Let's say you ordered 50 tons at a time. Single bill, 50 tons at a time, you made the payment also. But the supplier cannot send 50 tons at a time. Okay, there is no such conveyance to send 50 tons at a time. So he's sending 5 tons, 5 tons, 5 tons in 10 installments. He send all the goods. So the question is, in 16 subsection 2 we said like ITC can be availed only on receipt of goods. Now the question is, sir, I received by now 10 tons. Actually the bill value is for 50 tons. So can I avail ITC in proportionate to the 10 tons? No. You can avail ITC only on receipt of last lot or last installment. Next one, proviso to 16 subsection 2. What? Second proviso, sir. Previously we discussed first proviso. This is second proviso. This second proviso. Okay, come to this example. Second proviso. Supplier supplied 10 lakhs worth goods. So listen, look at the example. Supplier supplied 10 lakhs worth goods on this IGST payable 1,80,000, and the supply is made on when? 10th October 2023. Now on this recipient availed ITC of 1,80,000. When he availed ITC, if on October the supply is made, subsequent month recipient will avail ITC. That means subsequent month 20th November they have filed GSTR 3B. So they have availed ITC on 20th November 2023. So till now it is clear now. Supplier supplied 10 lakhs worth goods on 10th October. Recipient is eligible to get 1,80,000 ITC. It was availed on 20th November 2023 because on 20th November he filed 3B. Till now it is clear now. The point which the proviso to say is saying like this recipient has to make the payment to supplier within 180 days from date of invoice. Has to make the payment to supplier. I mean, if you have a credit purchase also, you can avail ITC. There is no distinction between whether it is cash purchase or credit purchase. Irrespective of the type of purchase, you can avail ITC. But the proviso says here like the recipient has to make the payment to supplier within how many days? 180 days. From when? Date of invoice. Here the invoice is when? 10th October 2023. From here the invoice and the payment has to be made by recipient to the supplier. But actually the recipient has made payment on 5th December 2024. When? 5th December 2024. Definitely it would be more than 180 days. See, from 10th October, sir. 10th October 23. Here I am talking about 5th December 2024. More than 12 months. So definitely it is more than 180 days. So recipient has taken more than 180 days. Whereas proviso is saying like what? Recipient has to make the payment to supplier within 180 days from date of invoice. So he is satisfying the provision or violating provision? Violating the provision. So what happens? What happens now? When he didn't make the payment within 180 days, then the recipient has to reverse the ITC which he availed in the month in which 180 days get expired. Okay, so now we need to find when the 180 days will get expired. 180 days expired when? 8th April 2024, 180 days got expired. So 180 days got expired in April while filing April month return. When you file April month return? May. Okay, April month return you will file in May. So when you are filing May month, the ITC which you availed initially has to be reversed. Being a recipient, it's your obligation to make the payment to supplier within 180 days. What happens if you don't do? The credit which you availed initially has to be reversed. When to reverse? While filing the return of the month in which 180 days got expired. Here when 180 days got expired? 8th April. So while filing the return of 8th April, that means on 20th May, you need to reverse the ITC. Okay, this first part. Second part, it's not just enough you reverse ITC, you need to pay interest as well at a rate of 18% per annum. So from when to when the interest has to be calculated? Interest has to be calculated from date of availment to the date of reversal. When he availed ITC? On the date of invoice on 20th November. Sir, answer my question. Whether the recipient availed ITC on 10th October invoice data or on 20th November. 20th November, because on the invoice date will not get ITC. Subsequent month on filing written only will get ITC. Next, when it got reversed, 8th April it got reversed or 20th May it got reversed? 20th May, because 8th April 180 days expired. But on that day you are not reversing. You are reversing on when? When filing the return of April month. So on 20th May it got reversed. So now interest has to be calculated from 20th November to 20th May. How many days here? 180 days. So now for this 180 days you need to calculate interest at a rate of 18% per annum. Clear? If the payment is not made within 180 days from date of invoice, the ITC availed has to be reversed in the month while filing the return of the month in which 180 days got expired, along with interest at a rate of 18% per annum from date of availment of credit to the date of reversal of credit. Clear? Okay. Sir, what happens if proportionately not paid? I mean part amount paid, part amount not paid. Then reversal also proportionate to the payment only. 50% paid, 50% reverse. That's what it happens. Okay. Sir, what happens here in this question? If you see, he didn't paid by 8th April, but subsequently he paid at least by 5th December. Now on subsequent payment, what has to be done? Okay, on subsequent payment, since he paid in December, again in January he can re-avail ITC. Since he paid in December, again in January he can re-avail the ITC, but interest part and all gone. Only ITC part he can re-avail. Got it? Sir, second proviso. Very simple one, sir. When the payment is not made within 180 days, ITC has to be reversed along with interest. When subsequently the payment is made, he can re-avail the ITC. This is what proviso 2. However, this rule is not applicable under these three situations. One is where tax is payable under RCM. When they are deemed supplies na schedule 1. For them there is no consideration itself. If there is no consideration, why recipient will pay? So if they are deemed supplies, if they are RCM, or if it is an addition, okay, where obligation of supplier is met by recipient. In value of supply, I said a point like liability of supplier met by recipient. So that means what happening? Instead of supplier, I paid to some other person on behalf of supplier. Sir, actually 12 lakhs is the contract value. But what actually 10 lakhs is only the contract value. I paid 10 lakhs to the supplier. On behalf of supplier, I paid 2 lakhs to some other person. On behalf of whom? Supplier only. Now we'll take value of supplier as how much? 12 lakhs. But I didn't pay 12 lakhs to supplier. Only 10 lakhs I paid to supplier. 2 lakhs I paid to some other person on behalf of supplier. So we cannot impose this rule stating like the other 2 lakhs we didn't pay to supplier, and again this reversal and all cannot happen. We already paid the 2 lakhs, but not to supplier, on behalf of him to some other person. Okay, next 16 subsection 3. If depreciation claimed on tax component, ITC cannot be availed. So simple thing, sir. Let's say you purchased a capital good for 10 lakh. You all attended income tax marathon. I mean, direct tax EVO also. Direct tax EVO also you attended. 1, 2, you didn't attend. 1, 2, 3, 4. Okay. You only writing group 4. You also only group 4. Okay. Okay. So even if you listen or not. Now tell me section 32 depreciation related 1 point. Sir, I purchased a plant and machinery for 10 lakhs. On that GST 1,80,000. How much total? 11,80,000. Now under income tax, plant and machinery 15% depreciation only, WDV method. I am not asking all that. Tell me simply, do we calculate depreciation on 10 lakhs or 11,80,000? Do we calculate depreciation only on 10 lakhs or 11,80,000? Okay. Generally, GST component will not add to the cost because GST we can avail as ITC. If it is a blocked credit, or ITC cannot be availed, then we can avail the depreciation. Clear? Okay. So the question simply 16 subsection 3 says like, if you capitalize even the tax component, I mean instead of 10 lakhs, if you capitalize 11 lakh 80,000 and availing depreciation on 11 lakh 80,000, then you cannot avail ITC here. If you want to avail ITC, then capitalize there only 10 lakhs and depreciate only 10 lakhs. I mean tax component if you are capitalizing, and even on tax component also if you are getting depreciation benefit na, then you cannot get ITC. That's what. A person taking ITC on capital goods has claimed depreciation on tax component, then ITC on tax component shall not be allowed. Nothing but ITC will not be allowed. Next, time limit for availing ITC. So what is time limit? I can avail any time now. Okay, there are again pending litigations to that also. Many people said like, it's my choice, I can avail whenever I want ITC. Who are you to tell me time limit? Like that, there are so many litigations to strike off this section itself. 16 subsection 4. Imposing time limit on availing ITC is not acceptable. Like that, there are litigations, but that and all. Okay, by that time the case laws will come, you will be also a faculty. Okay, so now listen. There is an invoice, but that time you forgot to avail ITC. Then audit team came after the completion of year. Then some article student verifying the vouchers, invoices and everything. Then he found out like one invoice on that the accountant or the people missed to avail ITC. Now, okay, obviously they'll raise issue. Being audit team will raise issue because we want to prove something we have done. So we'll tell that. Now, okay, the management will listen to everything and all. At last, what they'll ask, sir, what we can do now? Can we avail it now? That answer we should tell now. We cannot always go with problem. Generally, what we do always, we'll always go with problem. What problem they will also know already might be. What we should do, if you're going with problem, even when you're in job, you cannot go always complaining on someone. When you're complaining with someone, tell a solution to them also. Okay, so when you're going with a problem, you should have what? The possible 2-3 solutions. It would be better because the solution which you like may not be liked by others. So possibly you should have 2-3 solutions for that. Okay, not just the questions. So being audit team, if the management asked us like, okay, happened is happened. Okay, they'll scold the accounting team and all, but happened is happened. Now what they can do? Can they avail ITC now or not? For that, this time limit helps. If this time limit expired, then nothing to be done. If this time limit didn't expire, then they can avail ITC. So you should check that also first. Okay, if you found an invoice on that ITC didn't avail, but this time limit also expired, then even you finding out also, it's not a big thing because they cannot get any benefit out of it. If at all the time limit didn't got expired, then it is a benefit to the company. So then they'll appreciate your effort as well. So now, what is the time limit for availing ITC? 30th November of succeeding financial year or actual date of filing of annual return. 30th November of succeeding financial year or actual date of filing of annual return. Okay, we'll take an example here also. Invoice date 5th April 2024. Supplier filed GSTR1 on 10th May and included such invoice. Okay. Supplier filed GSTR1 on 10th May and included such invoice. Fine. Filed 3B on 20th May, but we didn't consider such invoice. Okay, so invoice filed everything. Now the question is, invoice is which day? 5th April. So this April related invoice we didn't avail ITC that time and we forgot about that. Now can on 30th September we recognize that or we realize that there is that ITC related to such invoice is not available. 30th September of which year, sir? Look here, 2025. Whereas invoice is related to which year? 5th April of 2024. Now come back to the provision. What is the provision? 30th November of succeeding financial year. So 5th April 2024 na which financial year this is? Succeeding financial year na 25-26. Now with date year clearly tell me, in succeeding financial year 30th November na which 30th November? 30th November 2025. Okay. Annual return. Annual return, let's say if annual return is not filed, okay, let's say by annual return is not filed by 30th November, Then we found out when 30th September only na. So even till there is time till 30th November, so he can avail ITC. If at all annual return filed by 30th September itself, then he doesn't have any chance. Okay, so simple things are okay. In this place, the general mistake which they do is like taking financial years mistakenly. Okay, first find out, clearly write down. Okay, don't over exaggerate yourself and think like you know everything. Okay, write down clearly there. Invoice related financial year 24-25, succeeding financial year 25-26. In succeeding financial year 25-26 na 30th November 2025, not 26. Okay, 30th November 2025. And annual return date they'll give in question. We cannot assume that. So you'll take that annual return date. Out of that, whichever is earlier is the last date. If there is still time, you can avail ITC. Otherwise, you cannot avail ITC. Simple thing. Okay. Simple things also will make complicated without putting it on paper. We assume ourselves we know everything and we do all the calculation on mind itself. Okay. That is the point here. Sir, this time limit very important, sir, because this is the same time limit applicable for raising credit note. The time limit for raising credit note also same time limit. Okay. If at all there are any mistakes in GSTR1, we could amend GSTR1. The time limit for amending GSTR1 also same time limit. The time limit for amending GSTR1 also same. Next, if there are amendments in GSTR8, GSTR8 na TCS return. TTS and TCS returns, if there are any mistakes na, TDS is 7, TCS is 8. GSTR 7 and GSTR 8. In that there are any amendments to be made also, this is the time limit. Okay. If in return, if there are any mistakes, like income tax, there is no concept of revised return here. In the subsequent month returns, you could amend the previous month details, previous month mistakes. So the time limit for amendments, the time limit for credit note is this one only. Okay. Got it? Sir, here there is a procedure given, sir. 2 minutes, sir. I'll give break this para alone. Where a registered person avail ITC in 3B for a tax period in respect of invoice. Okay. Sir, whatever the conditions which we said in 16 subsection 2, na, those are law. But practically, we also know nobody is following like that. Whatever the credit they see reflects in 2A to B, they are taking it. For that, they are slowly, in a phased way, they are introducing rules. This one kind of rule. See, reversal of input tax rate in the case of non-payment of tax by supplier. So, practically, what happening now? In 16 subsection 2, there is a condition like if supplier didn't pay tax, we cannot avail ITC. But practically, being a customer, being a recipient, we don't know whether supplier paid tax or not. We are using that. Now, what department started? They to implement that condition, they inserted rules. This rule saying like now, when there is non-payment of tax from supplier side, then they'll send notice to us. Then we'll understand supplier didn't pay tax. But will it happen immediately? Yeah, no. So there is there is adequate time for that, sir. See, where a registered person avails ITC in 3B for a tax period based on invoice and debit note, which was uploaded in GSTR1. But such supplier didn't file 3B. That supplier filed 1, but he didn't file 3B. So we got ITC, but actually government didn't got any tax. So those related items they'll send us as a notice by when 30th September of the financial year till the 30th September of the succeeding financial year. So by then they'll send us a notice by 30th September of the succeeding financial year. Once we get that notice, the said amount of ITC shall be reversed by 30th November. Once the government sends a notice by 30th September, then again 2 months for us, October, November. By 30th November, we should reverse the ITC which we availed, but supplier didn't pay the taxes to the government. So you got the point. Okay, this is the actual practical situation which is happening. So if supplier didn't pay tax also, nobody is stopping you now. You could avail ITC, but definitely they'll send a notice afterwards. Afterwards, now when by 30th September of the succeeding financial year, they'll identify all these kind of transactions regarding to you and they'll send a notice to you. With respect to those invoices which were mentioned in the notice, you need to reverse the credit by 30th November, 2 months time you are having. Okay, this is this para. Okay, clear. So 16 is completed. After break, we'll start with section 17. Okay, so I'm starting with section 17 now. Sir, in 17, we are first starting with 17 subsection 5 blocked credits. Seventeen subsection 5, it's about what? Blocked credits. So blocked credits now on these inputs will not get any ITC. So even though it comes as a list, we could. Okay. So first we are talking about immovable property related. Let's say there is an immovable property. Okay. We'll take example of BCCA. BCCA wants to construct a building, a college building only. Okay, this college building has to be constructed for BCCA. For this, a contract has been given to Yogesh. Okay, the contract has given to Yogesh. So for 3 crores, he'll be constructing this building. So understand. Now the service is given, the construction service is given with respect to immovable property. On these 3 crores, whatever the GST included, that BCCA cannot avail it as ITC. On immovable property construction, whatever is the tax component involved, that you cannot avail as ITC. Sir, Yogesh took here works contract, sir. Works contract na, he will only bring, he will only provide the cement, iron, everything, and even the service as well. Okay, so this way if ITC is not available, then what we thought means, let's say we'll purchase cement, iron, all these things separately. So separately there is a bill, and there's a contractor who will do only construction work, because cement, iron we are only purchasing, he'll only provide labor and provide the construction work. In those GST bills also, whatever is the ITC, whatever is the GST, that we cannot avail as ITC. So with respect to immovable property, either it is constructed separately by taking goods and services also, or even if it is taken as works contract also, we cannot avail ITC. Okay, again sir, this is also a highly disputed area, stating like, sir, if we take this building on rent, the GST on rent can be availed as ITC. If we construct a property on our own for our business, the GST involved in it cannot be availed as ITC. So the question raised is the same thing. So that means government want us to do business only in rented properties. If rented property, on the rent we can avail ITC. If we construct ourselves a office building, then on that if any GST is suffered, that we cannot avail ITC. Two reasons. One is like, the government is wanting us to, asking us to do business only from rented properties, or else you don't, or else it is thinking like building is not needed for business. If building is not needed, then where they can do business? So that's why it is also a highly disputed area. It's blocked only currently, but many people or many claims are there regarding why you are making this as a blocked grade like that. Okay, for exams it is blocked grade only, first one. Next, second one, sir, here one more point is there, sir. So Yogesh took the contract na, for construction of building. Yogesh subcontracted it to some other person. Okay, let's take it as Shankar. Okay, Yogesh subcontracted to Shankar this painting contract and all, or else the flooring contract, those contracts subcontracted. Okay, now Shankar has raised a bill to Yogesh for 50 lakhs. On this 50 lakhs, whatever is the GST that Yogesh can avail, Sir, this is also immovable property related only na. But still, Shankar and Yogesh are in the same line of business, so Yogesh can avail ITC. But the bill given by Yogesh to BCCA on that ITC cannot be availed because BCCA is not into the business of construction and works contract. It is into some other business, education. So they cannot avail ITC. But on Shankar invoice, Yogesh can avail ITC. Clear? First one. Next. Sir, here immovable property excludes plant and machinery. That means if it is a plant and machinery, you can avail ITC. If it is just a building, then you cannot avail ITC. Okay. Plant and machinery also requires certain, plant and machinery also will be made as immobile certain times because of, if it is a heavy machinery like cement factory and all, so the machines will get fixed, okay, with concrete bars, concrete beams, and walls will get constructed, fixing that for fixing that machine and all. So all those will form part of plant and machinery only, then they can avail ITC. And again, plant and machinery has an exclusion here. Sir, immovable property we cannot avail ITC. Plant and machinery now we can avail ITC. And again, plant and machinery has an exclusion now, that will fall into immovable property only. Plant and machinery exclusions now, mobile towers, cell phone towers are there na. So those cell phone towers will not be treated as immovable property, will not be treated as plant and machinery. So on mobile towers installation and all, if any GST is there, that cannot be availed as ITC, mobile towers. Second one, pipelines laid outside factory premises. Pipelines laid outside factory premises to discharge the waste from the factory, or for water supply to discharge the waste to drains, or to dump it somewhere far away from the uh, population and far away from the cities and all, they'll be laying pipelines. So if those pipelines are laid outside factory premises, within the factory premises na part of plant and machinery, outside factory premises if they lay pipelines, then they are not to be treated as plant and machinery. So on these two also we cannot avail ITC, mobile towers and pipelines. So this is regarding works contract and construction. With respect to immovable property, we cannot avail ITC unless both of them are in the same line of business. If the works contractor got a subcontract, if works contractor given it as a subcontract, then on his inwards he can avail ITC. But the ultimate recipient cannot avail ITC. Okay, you understood this point? Then we'll talk about motor vehicles. Motor vehicles. Motor vehicles are classified here into two types. Designed for transportation of passengers, designed for transportation of goods. If they are designed for transportation of goods, on them you can avail ITC irrespective of capacity. You purchased a truck, you purchased a lorry, okay, on that you can avail ITC. Whereas if it is a passenger transport vehicle na, bike, car, bus, this will come. Okay, so passenger transport vehicle na, we need to find out seating capacity. Seating capacity greater than or equal to 13 including driver. Sorry, not greater than 13 including driver. Including the driver seat, the seating capacity if it is more than 13. Sir, any type of car if you take, the seating capacity is less than 13 only. So seating capacity greater than 13, it is almost like a school bus, staff bus, buses only will come, or tempo vans, they will only be there. So if the capacity is greater than 13, then ITC can be availed. If it is within 13, less than or equal to 13, then generally ITC is not allowed, blocked credit. But here there are three exceptions. There are exceptions. Sorry, once again explaining. Motor vehicles, goods transportation, ITC blocked. Passenger transportation, seating capacity greater than 13, ITC available. Within 13, generally it is blocked. But exceptions are when it is purchased for further supply. Further supply na, sir, the car is purchased by a car showroom. From Tata Motors, car is purchased by car showroom guy. Why is purchased that car? To sell it again. So for further supply he purchased, na, he can avail ITC. Second one, they are running a driving school. So driving school guy purchased a car, he can avail ITC. Third one, further supply driving school. And third one, their business itself is renting or transportation. Okay, they use that car or cab for only renting and transportation only, they can also avail ITC. So just because you use your car for your business, you cannot avail ITC because it is not covered under these three. I purchased a car, I use it my profession or my business only, but still I cannot avail ITC because I didn't purchase it for further supply, nor for a driving school, nor for renting and transportation, passenger transportation business, sir. Okay, so it is not my business, so I cannot avail ITC even though it is used for the purpose of business. This is about motor car. If on motor car purchase you can avail ITC, if on motor vehicle purchase you can avail ITC, then subsequently if any repair cost is involved, the GST on repair cost also can be availed as ITC. If on car you cannot avail ITC, if on vehicle you cannot avail ITC, even on the repair cost related GST also you cannot avail it as ITC. Clear? Motor vehicles done. Then aircrafts and vessels. Aircrafts and vessels. Aircrafts and vessels. Again the same thing. Aircrafts and vessels. Transportation of goods, so transportation of passengers. Transportation of goods, aircrafts and vessels purchased for transportation of goods, ITC available. For transportation of passengers, if you watch this Surya movie, he'll buy flight, no? Telugu Akash mein Hadra. That one only. Okay, he'll buy two aircrafts from some other country. On that he can avail ITC because he purchased them for passenger transportation. Generally ITC available. Here no seating capacity and all. Okay, so passenger transportation vehicle generally ITC is not available, but there are exceptions. Exceptions when it is used for, when his business itself is transportation of passengers. Okay, in that movie Surya buys those two aircrafts for passenger transportation business only, so he can buy avail ITC. Sir, if Indigo airline company purchases two aircrafts, on that Indigo company can avail ITC. Clear? Then transportation of passengers. Second one, here driving school will not come, sir. Here imparting flying skills. We'll not call it as driving, we call it as flying skills. Or for ship we call it as navigation skills. For imparting flying and navigation skills, for that reason, if any aircrafts or vessels purchased, then ITC can be availed. Sir, if there is a pilot training institute, and that if that institute purchases aircraft and all, they can avail ITC. Third one, for further supply, they're buying it for resale, they'll again going to sell it, then they can avail ITC. When we cannot avail ITC, it's like, let's say, sir, some people might own personal private aircrafts, like actor Ram Charan has a private jet. Okay, so on that he cannot avail ITC, even though he use it for even though he may use it for his profession only. Whenever he wants to go to shoot, maybe if he goes on aircraft also, still he cannot avail ITC. Okay, only if it is going to be used for transportation, flying skills, navigation skills, and for further supply, then they can avail ITC. Okay, then works contract we covered, sir. Then here construction we covered, sir. Then motor vehicles, aircrafts we covered, sir. Coming to the others are small only, sir. These are only big. Now, goods destroyed, lost, stolen, disposed by way of gift or free samples. If the goods are destroyed, lost, stolen, or given as gift or as free samples, you cannot avail ITC. If already ITC availed, after availing ITC, they were given as gift or given as free samples, then Schedule 1. Schedule 1 what? Permanent transfer or disposal of business assets on which ITC has been availed will be treated as what? Supply. Initially itself, if there is destroyed, lost, stolen, disposed, gift or free samples, that you know initially itself. So you don't even avail ITC. If you availed ITC, afterwards if such thing might have happened, then it needs to be treated as permanent transfer or disposal of business assets on which ITC is availed, which is a deemed supply as per Schedule 1. That means you will subsequently pay tax. The ITC will get reversed. Once you pay tax, again ITC will get reversed. This one. Next, goods and services received by a NRTP. NRTP na non-resident taxable person who supplies goods and services either occasionally who supplies goods and services occasionally either as principal or as an agent and who has no fixed place of business or residence in India. He doesn't have fixed place of business or residence in India at all. He comes to India to provide service or supply goods occasionally only. Then he is called as what? NRTP. Okay, generally NRTP has to register when he provides services here, and his registration is a temporary one. The validity of his registration is 90 days, which can be further extended for another 90 days. Okay, same kind of CTP as well. This NRTP, he cannot avail ITC on the goods which he purchased locally. If he is bringing any goods along with him from outside India, on that if any customs duty is suffered, in customs duty also there will be IGST. That alone he can avail as ITC. On the locally purchased goods, he cannot avail anything as ITC. So these two also we covered. Goods and services and goods destroyed. Okay, then okay, here. Composition scheme person. A composition scheme person cannot avail ITC. Even if you buy goods from composition scheme person also, your ITC will get blocked. Then goods and services are both used for personal consumption. You bought goods but you are using for personal use, then you cannot avail ITC on them, it is blocked. Okay. Then in the case of tax paid in fraud case, detention, confiscation. Sir, there is a supplier who sold goods to recipient. Okay, supplier said like, actually the goods are sold for 10 lakhs, but recipient asked supplier to bill it only for 1 lakh. Because to reduce the GST liability and all, he asked him to bill for only 1 lakh. So they billed for only 1 lakh, and for 10 lakhs goods there is an invoice raised only for 1 lakh, and the goods are being sent. Now the truck was halted at, the proper officer came and verified this truck in the transit. During the transit, the truck got verified. Once they verified, they found out like the invoice is raised for only 1 lakh. They detained the truck, okay, and asked them to pay the tax on the balance 9 lakhs as well. Now the recipient, because supplier said like it's not my responsibility, recipient paid the tax on balance 9 lakhs as well. Now the question is, recipient wants to claim this tax also as ITC. Anyhow, okay, even after detention also I paid tax. No, give it as ITC. That will not be given as ITC. If tax paid in fraud, detention, confiscation, it cannot be availed as ITC. Okay. Sir, coming once again repeating the points which I said related to immobile property, works contract or construction, we cannot avail ITC unless they are in the same line of business. If a subcontractor provides service to main contractor can avail ITC because they are in the same line of business. But if contractor provides service to some other person by way of construction of immobile property who is into other line of business, they cannot avail ITC. Next, motor vehicles, goods are passengers. Goods are ITC available. Passengers na capacity greater than 13 within 13 greater than 13 ITC available. Within 13 generally not available. Blocked. Exceptions are there. What are the exceptions? Renting business itself, then renting a transportation business, driving school for further supply ITC can be availed. If on motor vehicle ITC can be availed, subsequently on repair cost if any GST is there, that also can be availed. Aircrafts and vessels, goods transportation ITC available. Passenger transportation generally blocked. Exceptions, renting transportation business or else flying skills or navigation skills. Third one is about further supply. Okay, then we came about composition scheme person cannot avail ITC, nor if we buy goods from composition scheme also we cannot avail ITC. Goods destroyed, lost, stolen or damaged or given as gift free samples, on them ITC is blocked. NRTP, on domestically purchased goods you cannot avail ITC, blocked. Then we discussed about when tax paid in case of fraud, confiscation, detention, that also cannot be availed as ITC. Now sir, we'll group all the others. All the others can come under the one single group, sir. Now what and all we left now? See, healthcare and plastic surgery. Even though they are at different lines, all these can be grouped. Healthcare and plastic surgery, cosmetic and beauty treatment, catering, food and beverages, membership of a club, health and fitness center, rent a cab service, travel benefit extended to employees on vacation such as LTC. Sir, all these are, if you say health service, plastic and surgery, it is generally personal expenditure only. Then why we are referring to this? Rent a cab service, cosmetic beauty treatment, catering, travel benefits, all these are generally personal nature only. Okay, ITC not available. But understand here, These are given as perquisites to employee by company. You understood, na? Me providing to my employees healthcare facility. I mean, whatever the medical expenditure cost incurred to my employee will be paid by me. So in such case, it is my business expense only. If it is met by employee, then it is his personal expense. But for me, it is not personal expense, because for my business only, I am paying all the things. So this is a business expense only for me. Looking after employee welfare is only for the purpose of business. Even though people will talk about like uh, the other emotional grounds also, but generally, why employer has to look after employee? Only for the purpose of business only. If employee has been taken care well, then he'll do the work properly, then the business will go forward. So all these expenses, the 7 items, the 6 items which I listed, were incurred by employer, paid by employer for his business only, but the benefit will go to employee. You understood, right? So now on this we can avail ITC. Na? Generally we cannot avail it as ITC. These are blocked. However, if statute has made any obligation to provide such kind of services, let's say for example here catering is there. As per Factories Act, if a factory has more than 250 employees, then it is mandatory for the employer to run a canteen there. So to run a canteen, I had took catering service. To run a canteen, I have took catering service. So now I am taking the such inward, not on my option. It was taken on because of an obligation of statute. So we can avail ITC there. Okay, if there is an obligation of statute to take such kind of service or to provide such kind of service, then you can avail ITC. Let's say to increase women safety or women safety, let's say government has passed a rule like all the companies which are having female employees shall run a cab service. I mean, they should hire cabs. Employees has to be picked and dropped, like that, ensuring women's safety. If there is such kind of law has been brought, then this company is availing rent a cab service for the benefit of employees. They are taking rent a cab service. Since it is made by statutory obligation, no, they can avail ITC. Otherwise, they cannot avail ITC. So see, sir, travel benefit extended to employee. Leave travel concession, something you'll discuss in income tax. Salaries chapter it will come. Leave travel concession. You'll be having exemptions also there. Okay. That leave travel concession, employee night is vacation. For employer, it is an expense only, business related only. On that, the GST component, he cannot avail it as ITC. This is one part, sir. There is other part also. Okay. Catering contract and all these contracts also, if they were given to general outsiders, ITC is not available. Let's say Lavanya started a restaurant. Okay. What is your full name? Nidhi? Nidish. Nidishna also started a restaurant. Okay, Nidhi restaurant. Both started restaurant. Okay, in this restaurant, there is no chef. But customers are coming, but there is no proper chef. Okay, the problem to Nidhi restaurant is, na, here there is chef. Customers only not there. In this restaurant, there is no chef, but customers are coming. But in this restaurant, it's chef, but customers are not coming. So then they both came into one agreement like from her restaurant, Nidhi, she'll cook food and send to this restaurant. Anyhow, now she don't want chef. That restaurant will only be served to customers. When Lavanya providing services to, I mean, food supply services to customer, this customer cannot avail ITC because mentioned in the blocked grade. But Nidhi will raise a bill here, na. On this bill, whatever is the GST component, that can be availed as ITC by Lavanya. Why? Same line of business. If they are into the same line of business, then they can avail ITC. If it is provided to an outsider, na, to a normal person, na, then they cannot avail ITC. Clear? Fine. This is one. There is another thing as well. Okay. Then Nidhi, I didn't observe that it is not good for her to open a restaurant. It is good for her to run a catering service. Okay. Now Nidhi caterer, homely food. She is supplying to Lavanya restaurants. And now Nidhi got popular. Even Indian Railways also appointed her as official caterer. Huh? Indian Railways. She is some caterer like that Aparachitru movie is there. Vijay movie, I mean, sorry, Vikram movie. Those Kumbi Pakam. Okay, but she sends quality food only, not like that. Okay, but the same food she is sending to Lavanya restaurant also. Now their customers coming means because of her food only, no. So here she is sending food. Here they are in the same line of business. This restaurant, I mean Lavanya Canavel, ITC. Now she is sending even food to Indian Railways. Sir, here food na not for staff of Indian Railways. This for what? To the passengers who are transporting through train. They might have booked meal also along with the travel ticket. So here Indian Railways promised to passenger to provide a composite supply or mixed supply. Composite supply na it depends. In some trains it will become composite supply. In some trains it will become mixed supply. For example, Vande Bharat na it will become mixed supply because there is an option for us to select or deselect. Whereas when it comes to Rajdhani Express or Shatabdi Express, there is no option to deselect. So it will become composite supply. So either it is composite supply or mixed supply to provide the promised service to the passenger. Indian Railways need food supply. Okay, for that they are taking catering contract. So to provide their outward supply either as a composite or mixed, this food is a element of that bundle. Okay, so to provide the bundle of services they promise, this food is an essential element in that. So that's why on this food Indian Railways also can avail ITC. Not only this, sir, I took this example, all the 6 items which I said. When we are providing a bundle of services, out of to provide such bundle, if rent a cab service is needed, let's say I'm changing the example, let's say Yogesh acting as a tour operator, he's taking all of us on a tour to North India, I mean northeastern states. One person travel package 1 lakh rupees. Okay, we are paying 25 lakh rupees. Now since we paid 1 lakh rupees, will walk, will not walk. Even for 100 meters also we'll ask for cab. So now to provide us such service, he promised tour operator service, but for that he want catering service. He want he want inward catering service, rent a cab service, all these services. On those services, Yogesh can avail ITC, even though they are not in the same line of business. But to provide the outward supply which is promised by Yogesh, it requires he promised to deliver a bundle of services. Whereas rent a cab and food became a essential element in that bundle. So that's why he can avail ITC on them as well. Okay, this is regarding the other 7 points. That is the blocked credit concept. Okay, what? Indian Railways. Tell me, will they get? Yes, they get ITC. Why they are getting ITC? You are asking. So let's say you booked a train ticket and you picked the meal also there. You booked the meal also there. So now after booking ticket, you're going in the train. If food is not provided to you, will you accept? To provide you food, railways want to take a food contract. Na? So they promised you to provide a bundle of service. To provide you a bundle of service, food is an essential element for them. So that's why, since it is an essential element, even though they are not in the same line of business, the catering person and railways, they can avail ITC. Generally, same line of business only ITC available. But since it is necessary for them, it's becoming an essential element for them to provide the promised bundle of outward services, they can avail ITC. Got it? Okay. So then now we are moving into apportionment of credit, sir. Okay, the concept which we are now going to discuss is like these are advanced concepts, sir. From now on, what we are discussing are like a person has both exempted supplies and taxable supplies. I'm having both exempted supplies and taxable supplies. But the inputs which I'm using are common inputs. With the same inputs I produce, with that I'll get one joint and byproducts I am manufacturing. So 2 byproducts I am getting with the main product. The main product is taxable, whereas byproducts are exempted. But the raw material which I am using is a common one. So, sir, understand here, when we'll give ITC? Only when there is double taxation. If you are using input and you are producing exempted supply, then ITC will not be given because there is no double taxation. Since there is no double taxation, they will not give you ITC. But the problem is like the inputs I am using are common inputs. So with using those inputs, I am getting taxable supply as well as exempted supply. So I cannot take the total credit, only proportionate credit only I can take. So now the question or the discussion which we are going to have is regarding that proportionate credit calculation and how we could reverse the proportionate credits and all. That's the point here. Okay. So first, for the purpose of reversal here, sir, they have given a new definition for exempted supply. Sir, in the chapter starting, I said an exempted supply definition. It includes non-taxable supplies, nil-rated supplies, supplies which are exempted by way of a notification. Now here we are discussing about exempted supplies definition. This is only for the purpose of these two rules, 42 and 43. For credit reversal point of view only, this exempted supply definition is applicable, which is much more broader than that of the regular definition which we discussed. So here exempted supply even includes reverse charge supplies. Transactions in securities. Securities is not even a supply, but for here will even include transaction in securities, but not the full value. 1% of the sale value of security will be included in the transaction value. Then sale of land and building, where the entire consideration is received after completion. This is there in negative list, sir. In schedule 3, when I'm explaining building, where the consideration is received before completion, then it is a supply of service. Where the entire consideration is received after completion, it is not a supply, we'll say in schedule 3, supply chapter. Okay, that and all gone long back only. Okay, then these two not required, sir, anyhow. This itself is heavy. So see, other than the 3 which were actually there in the exempted supply definition, non-taxable supplies, nil-rated supplies, supplies which are exempted by notification, additionally these are also treated as exempted supplies only. First one, RCM. If you are having any transactions in shares, sir, he is a businessman, let's say he is a cost accountant only, he has a practice, he'll do services to clients, that anyhow is included in his turnover. But other than this, if he is even doing trading of shares, he'll even do trading of shares. So then out of the traded value of shares, 1% you add into exempted turnover also. Why you have to add, sir? His office space, his staff, his computers, even a part of them is used for trading of shares also, no? So that's why 1% they are asking us to add into the exempted supply. Next, third one, sale of land and building, where the entire consideration is received after completion. Okay, sir, I can explain everything for everything logic, but we don't have that much time to explain logic here. That's why I'm taking fast. Fourth one, transactions which are covered in negative list need not to be excluded, sir. Sir, only these 3 have to be included. The others need not to be included. Okay, the fourth one, sir, interest and discount. When calculating aggregate turnover, I said like interest and discount shall not be included. Interest and discount shall not be included in the aggregate turnover. Here we are saying like interest and discount, if anything they generate also has to be included. If it is a bank and NBFC, sir, interest and discount is exempted only. But understand, sir, I'm running practice. I gave loan 10 lakh rupees to some person, some of my friend, and at the year end I got 2 lakh rupees interest. For earning this 2 lakh, did I use any my office space, my computers? Nothing I used. Na? I got 2 lakhs interest. So my 2 lakhs interest need not to be added into exempted turnover. I'm not a bank. My interest need not to be added. But for bank generating that such kind of 2 lakh interest, they'll use office space, they'll use their computers. So for them, the 2 lakhs interest which they generate should be added into the exempted turnover. Sir, for banks, NBFCs, not to generate interest, they'll use their assets. That's why for them, interest also has to be added in the exempted turnover. For others, let's say I have money in FD. Do I need to do anything for generating money from FD? Nothing to do. I'll get FD income. So that's why I need not to add my FD interest into exempted turnover here. If he is bank, add the interest and discount into the exempted turnover or exempted supplies list. If it is other than bank, don't add. So what's the problem? What happens if you add to the bank also? Understand? Bank, when they purchase computers and all, they level ITC na. But the computer which they purchase is not only used for making taxable supplies, is also used for making exempted supplies. So for exempted supply interest and discount, they cannot avail ITC. So that's why the interest and discount for them, it has to be added into exempted turnover. Sir, me also having interest. Understand? I'm running a office, the normal chartered accountant, cost accountant, the normal tax consultancy office only I'm running. I'm having 10 systems. I purchased them. On that, I'm availing ITC. I have some 3 lakh rupees interest also, but never I used my computer for earning interest. Okay, if you proportionately reverse the credit for interest part, I never used my systems or plant and machinery for the providing exempted supply. But if you reverse the credit now, it will be a loss for me. So for me, there will not be any reversal because I'm not using any of my assets for generating interest income. So for others, other than banks and all, you shall not add interest into the exempted turnover definition. For banks, you should add the interest into the exempted turnover. Okay. So now I'll give a BCCA example, sir. Don't ask me for everything logic. Just follow the example. Okay, na? Why this? Why only you should assume this? Okay, don't tell like that. I have framing. I'm framing this example with so many assumptions. BCCA is into CA coaching. Factor assumption. Yogesh, you only I'm asking. BCCA into CA coaching. Factor assumption. Fact only. Okay. It is having MEC or CEC. Okay. If you don't understand, 11th and 12th standard. Okay. This is also, even if you don't know, it is not an assumption. It is also fact only. Okay. Now coming to the third one. Taking classes freely. I mean, as charity in some rural areas or NGOs, orphanages like that. This is assumption only. This we are not doing. This is assumption. Okay. Providing the kind of coaching in rural areas to underprivileged students and all. That is one thing. MEC, CEC, I mean 11th and 12th. And this one is CACMA coaching. CACMA coaching is a taxable supply. On this, whatever the fees we collect, GST is applicable. Whereas if it is 11th and 12th, exempted. Up to 12th standard, whatever the education you provide, that is exempted. Whereas this is not even business, because this is charity, non-business related. Clear till now? Okay. Now going to second set. For these people also there will be books. For this people also there will be books. Even for these people also there will be books. Sir, will all of these people will have common books or different books? Classes for charity, sir. This is charity. Okay, don't get confused. Okay, you cannot decode it. Ask me. If you don't understand my writing, ask me. You cannot decode it. Okay, classes for charity in rural areas, in orphanages and all. Okay, books, books. Will it be same or different? Different for all of them. Let's say here the books value is 10 lakhs. Here the books value is 5 lakhs. Here the books value is 2 lakhs. Okay. Now, this is assumption. Assume the faculty is hired by BCCA on P2P basis, not as like employer and employee. Assume the faculty is hired on P2P basis. And not only that, they charge hourly basis, sir. Okay, you can ask them. Assumption only, this is like, there are, let's say, 10 different faculties. BCCA has to pay them hourly some 2000 or 1000, some amount that has to be paid. If you allocate ME 11th class, 11th standard class, they'll go to 11th standard class. If you allocate CACMA coaching class, they'll go to that class. Or else if you go allocate this non-business related thing also, they'll go to that one also. Okay. So we are assuming here like the faculty is working on principal to principal basis and commonly they are using, and the faculty service is common for all the three, assume. Okay. For that they incurred 20 lakh rupees. For that they incurred 20 lakh rupees. Okay. This is the assumption. So now the point is BCCA providing non-business supply, exempted supply, taxable supply. For that it is having inputs of separate inputs also, it is having books which are separate, and it has a common input as well. Okay, common input as well also to provide the outward. And let us assume there is a building also, sir. The building construction has taken 1 crore. Okay, this only used for taking CSMA coaching as well as for the 11th and 12th also. Okay, let us take this as the example. Now we have to solve how much credit BCCA can avail among all this. Okay, the GST rate will assume commonly 18% on all these items, either on 1 crore, 20 lakhs, 10 lakhs, 5 lakhs, this 3 lakhs, on everything will assume the GST rate is 18%. Okay, I'm giving one more thing also. The turnover from CACMA coaching is, let us assume like 150 lakhs. From CACMA coaching, the turnover is 150 lakhs. Whereas from 11th and 12th, the turnover is, we'll assume it as 60 lakhs. Since this is non-business now, will not get any turnover. So this is the example. Sir, are you able to understand example? Simple one only. Three different types. One is taxable, one is exempted, one is non-business. For all the three, we have given 150 lakhs turnover also we given. And we took inputs. Books are different inputs for everything. And whereas the faculty service is a common one. Faculty service now don't assume as salary here. I'm not telling it as salary. It is taken as what? P2P basis. The last one is like there is a building also on which 1 crore is the amount. Okay, on that GST is 18%. Now we are going to rule 42. Based on this example, we are going to understand now rule 42. Rule 42 helps us in reversing the common credit which is relevant to exempted supplies or non-business supplies. So related to this also, this exempted and non-business related, if any common credit is there, that we need to reverse. So the simply, sir, follow the rule only. What the rule 42 says, like first it asks us to take the total credit. Total credit available, we call it as T. Total credit available. Sir, here what is the total credit? 18% means on books 10 lakhs into 18%. How much? 1.8 lakh. Here on books 5 lakhs and take out your calculator, sir. 90,000. Here it is 2 lakhs now, 18,000. Here on 20 lakhs into 18% na 3.6 lakhs. Here on this 1 crore na 18 lakhs. So okay, it asks us to first calculate the total credit. I mean total all these credits and tell me. 1.8, 90,000, 90,000, 3.6, 18 lakhs total and tell. 1.8, 0.9, 2.7. Okay, 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 okay. Yes, yes, yes. 36K. This is 3.6 lakhs. Tell me. So this is 18. 18, 21.6, 20, 24.66 lakh. So cross check once again and tell. Correct only, 24.66 lakhs is the total credit available. From there, we'll subtract first credit related to, okay, credit exclusively related to non-business. Out of this credit, if any credit is exclusively related to non-business, that we need to subtract. Which is exclusively non related to non-business? this 36,000 books one, that we call it as T1. We'll subtract here 36,000. Okay. Then credit exclusively related to exempted. Credit exclusively related to exempted, T2, which is exclusively related to exempted, this 90,000. This also will subtract. Then we'll subtract credit which is exclusively related to credit which is exclusively blocked. If any blocked credit is there, na, that we need to subtract. Which is blocked credit here? 18 lakhs. So we subtract even 18 lakhs. Then we'll got, how much we got? 5.4 lakhs. This is the credit. We'll take it into electronic credit ledger. We call it as C1. This credit will take it into electronic credit ledger. Sir, one common question. Are we saying this 5.4 is completely eligible? No, we are not saying that. In this 5.4 also, there is still some extent of ineligible, because the faculty related only there is common one. Out of that only there is something ineligible, but we didn't reverse that ineligible. But we are simply taking that 5.4 lakhs as to the credit ledger. I mean, we know in this 5.4 lakhs there is ineligible thing, but still we are taking it to the electronic credit ledger. Now, continuing forward, we'll now reduce the credit exclusively related to taxables. Exclusively related to taxable. Which is exclusively related to taxables are here? Exclusively related to taxable, na, this is only, na, 1.8 lakhs. We call it as T4. Subtract 1.8 lakhs as well. Now, you will get the common credit called as what? C2. You'll get common credit called as C2. How much, sir, it is? 3.6 lakhs. You'll get how much? 3.6 lakhs. So, that is nothing but the faculty related 3.6 lakhs. Now, we arrive at the common credit. Sir, first of all, question itself I explained detailedly, na, so you'll feel like directly you can take that, na. But in general, you cannot find out that so much easily. So to explain format, I am telling. So what is the format, sir? First we are taking total credit, T. We are assuming it as what? T. Then from total credit we are subtracting what? Non-business related, referring it as T1. Then we are supplying exempted related, exclusively exempted related, T2. Then we are subtracting blocked one, referring it as T3. Then we are getting what? Not the common credit, the credit which we can credit to electronic credit ledger. From there we subtract even exclusively related to taxable. We call it as T4. Afterwards we are getting the common credit. Okay. Now in this common credit also, this common credit, we need not to again take it into ledger. Already in 5.5 if you take now, it is already taken. The point is like out of this 3.6, some part is ineligible. That we need to calculate. What is the ineligible? Related to exempted. D1 we call it as like ineligible, nothing but which is related to exempted. How we calculate it now? C2 into exempted turnover divided by total turnover. C2 into exempted turnover divided by total turnover. Sir, here I given the turnover also. What is the taxable turnover? 150. What is the 60 lakhs? Sorry, 150 taxable, 60 exempted. You will have a question like, sir, do we need to take here monthly or yearly? This is monthly turnover only. Monthly turnover only we should take. So C2 into exempted how much? 60 lakhs divided by total turnover how much? 210 lakhs. C2 na 3.6 lakhs. Find out that. 1.02. Okay, nothing but 1,02,850. Okay, this is what? Ineligible credit which is related to exempted. Then we'll find out D2. D2 na ineligible which is related to non-business. How much? C2 into 5%. Standard, sir, 5%. 3.6 lakhs into 5%. How much? 18,000. So understand here, this 1,02,850 and this 18,000 you can is the ineligible part. This ineligible part already you availed as ITC, because in 5.4 lakhs if you credited to electronic credit ledger, na, this 5.4 lakhs even includes this 1,02,000 and 18,000 as well. So that means this also you already availed as ITC. Now what you need to do? You need to reverse it. Reverse now you will add it to your liability. You will be adding it to your liability. So this D1 and D2 will be added to our liability so that the credit will get reversed. So to calculating D1, D2 only this this format. This is only rule 42. Okay, now it will be very easy. What we need to take first? T1 na, T na, total credit. Whatever the inwards are there, whether it is eligible or ineligible, don't bother about it. You will take first what? ITC. Total of ITC T. From there, first we need to subtract non-business related T1, then exempted related T2, then blocked grades T3. Then the whatever is the resulting, you can take it to the electronic credit ledger. From there, subtract exclusively related to taxable T4 also subtracted. Then you'll arrive common credit, which we call it as C2. C2 is a total of common credit, which consists of taxable, exempted, non-business. From there, you need to separate the non-business related and exempted related. How to separate exempted one? D1 we call it as D1 equals to C2 into exempted turnover divided by total turnover. C2 is nothing but 5%. Sir, in some questions there will not be non-business related at all. Only these two they'll ask. There will not be non-business itself. It's not mandatory, no, that I should have non-business also. If there is no non-business na, then simply you will not calculate D2. You will only calculate D1. If there is non-business is also involved, then you will calculate D2. Otherwise, you will ignore. Okay, let us solve a sum on this. Okay, question number 17, page number 8.9. Question number 17, page number 8.9. The goods manufactured by Royal Limited have been exempted from GST with effect from 15th November. Earlier, these goods were liable to tax at 18%. Sir, see here. Goods manufactured by Royal has been exempted from 15th November. Earlier, there is a tax rate at a rate of 18%. One second, sir. Let me check. Is it the question or else there is a different question? No, 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 not this question. Read question number 22, sir. Question number 22. Read the question. Just read the question and try to understand, sir. Try to understand which were common and which are exclusively available for the taxable and exempted supplies. That part you do. The balance I'll explain. Sir, okay, if you completed the question, no. Y Limited manufactures what? Both taxable and exempted goods. Y Limited also simultaneously provides taxable as well as exempted output services. Raw material 10,000 units was purchased at rupees 100 per unit and used commonly during the month of January 2018 to produce all final products. GST on input is 12%. Sir, at 10,000 units each purchased at how much? 100. So what would be the total cost here? 10,000 into 100 na? 10 lakhs. Not only na? 10 lakhs, huh? Yes, 10 lakhs. Okay. Now coming back to the here. Commonly used service is commonly used for goods. The total ITC on input and input service taken into books of account for the period is 1,74,000. So the total ITC is 1,74,000. Sir, this 1,74,000 is nothing but inclusive of goods related as well. Inclusive of goods related as well. So out of this 1,74,000, what is the total input value of goods sir we purchased? 10 lakhs. 10 lakh. This is the 10 lakhs na? 10,000 goods we purchased. Each at what price? 100. So how much we purchase? Total, what is the total purchase value? 10 lakhs. Out of this 12% tax raise now, how much it is? 1.2 lakhs. I mean out of the total 1.74 lakhs, 1,20,000 is nothing but what? Goods. Then there is 54,000 is which is related to service. Now come back here. There is taxable supply of goods. How many? Outwards. There is exempted supply of goods. How many, sir? Rupees 80 per unit. Rupees 8. Exempted supply of goods. Rupees 80 per unit. Sir, 1 lakh. How many units? They sold each unit as rupees 80. So how many units they sold? 1 lakh by 80. 1,250 units they sold. Okay. What is the taxable supply of service they did? 1 lakh. What is the exempted supply of service they did? 50. Okay. You are required to compute the amount of reversal of ITC as per 42. Sir, by looking at the question, okay, ignore the calculation which I did. You feel like goods are also common, services are also common here. Goods was not given separately, but they gave clues, sir, stating how to separate the goods related one. Here, goods credit is not common one. Goods one is which is separately identifiable only. How to find out? See, each unit of exempted final product needs 2 units of raw material. That means to produce exempted items, how many produced? 1,250. To produce 1,250 units, how much raw material we need? 2,500 units. 2,500 units. Total units how many? That means out of 10,000, 2,500 exempted na 25% is for exempted, 75% is for taxable. We have the credit how much? 1,20,000. So 1,20,000 la 25% is for what? Exempted. 70%, 75% is for what? Taxable. That means 80,000, 80,000, no, 90,000, 30,000. You got this? So we have separated the taxable related goods credit separately, exempted one also separately. Service we cannot do like that. So service is the common credit in this question. Now we will be applying this T1, T2, T3 format. Okay. You can look at here. How will rate? Number of units sold 1 lakh by 80. How many? 1,250 units. Number of units of raw material 1,250 into 2, 2,500 units. Then cost of raw material 2,500 into 100, 2,50,000. On this 12% if you apply now how much? 30,000 is the credit related to exempted supply. Exclusively for taxable 7,50,000. The total raw material cost on the 12% if you do na 90,000. So 90,000 is for taxable, 30,000 is for exempted. Now come here. T. What is the total T? Total credit 1,74,000. From there we should subtract which is related to non-business. There is no non-business here. T1 nil. Next one related to exempted 30,000 subtracted. T3 blocked. Nothing is given related to blocked also. So we got how much? 1,44,000. So 1,44,000 is the credit which we level electronic credit ledger. From there we'll subtract what? T4. T4 is related to what? Exclusively for taxable 90,000 subtracted. Then we got the C2 common credit as how much? 54,000, which is nothing but the service related one. 54,000. Now this 54,000 we need to reverse which is related to exempted. So how to do? D1. 54,000 into. Find out the taxable turnover and exempted turnover here. The total turnover given here, sir, 4,50,000. What is the exempted turnover? 1 lakh, 1 lakh 50. So not only goods, we should take the total of good and service. So this and this will get 1 lakh 50. If you do this now, you'll get 18,000 is the credit to be reversed. Okay, so this is the point here. Clear? So this one clear na? Okay. Rule 42 completed, sir. Now we are moving into rule 43. Rule 43. Sir, again, rule 43 also requires your keen attention, sir. Otherwise, you'll miss somewhere. Rule 42, the same concept, sir. Now we discussed only about inputs and input service. Now 43, na, the discussion is related to capital good. Any problem? Ask. In the answer, they mentioned zero rated supplier. Where? Which sum it is? Where they mention? Uh, no, it is not format. Okay, used for taxable. It's format only. Taxable even includes zero rated. That's what they are mentioning. You should reduce. This is T4. T4 now you should reduce exclusively for taxable. Taxable even includes what? Zero rated. This is T. This is T1. This is T2. This is T3. You'll get C1. You'll get C2. Clear? Huh? It's okay now. Okay, sir. Now we are talking about capital goods related. For capital goods also, we have one capital good. With that we are producing taxable good, exempted good. Capital good we availed credit, but that capital good is not used exclusively for taxable. Then even related to capital good also we should reverse that. So how do we reverse that? That is the concept here. The previous rule 42 is about when inward input and input service are common, how to reverse. This is about when capital good is common, how to reverse that. Okay. So once you purchase the capital good, it could be three situations. Let's say in this month, November month, we purchased a capital good which is used exclusively for taxable purpose. Can we avail ITC or not? Understand my question and answer only if you reply, I'll go further. Okay. We purchased a capital good which is exclusively used for taxable supply. ITC eligible or not? Avail ITC. We purchased another capital good which is used exclusively for exempted supply. No, we cannot avail ITC. Third one, we purchased a capital good which is used common purpose for both taxable and exempted. What to do? On this also we can avail ITC. Okay, but the first one and third one are not the same. Na? First one is purchased for specifically taxable, whereas the third one is for both. So to differentiate that, this third one we can avail ITC and we'll mark it as A. A is nothing but an identification mark here. Okay, so don't ask why A. Why can't we put B? Na? Lawmaker kept it as A only, so we are taking it as A only. So the one which is used for both the purposes will mark it as A and will again avail it as ITC. Clear? In the month of purchase, if it is used for completely taxable purpose, avail the total ITC, no problem. No markings and all. Used for completely or exclusively exempted purpose, then you cannot avail exclusively for exempted or non-business purpose. You cannot avail ITC. Third one, both the purposes. You can avail ITC, full ITC, and just mark it as what? A. This done, sir. This first. This chart is done now. Coming to next one. You already purchased asset 2 years back. Okay, so before going further, while making this rule or from here, what are the provision we discuss in ITC, the lawmaker has a fixed assumption like capital good useful life will always be 5 years. It will not be less than 5 years or more than 5 years. He has made an assumption like the capital good useful life will always be 5 years. Okay, now coming to the point. We purchased a capital good 2 years back. Okay, that time it is used exclusively for non-business purpose or exempted purpose 2 years back. So 2 years back when we purchased, did we avail ITC or not availed ITC? Once again I am repeating, sir. 2 years back you purchased the capital good. From then it is being used for exempted purpose. So at the time of purchase, do you avail ITC or not availed? Not availed because exempted purpose. But now you are changing it into both purposes. Now you are changing into both the purposes. What to do? They're simply asking us to do. Take the total ITC again. Sir, what is the useful life of the asset? 2 years expired na? That means only 3 years life is there. But still they are asking us to take the total credit. Total credit into credit ledger. And both purposes, it is for single purpose. Both the purposes. So whenever there is both purposes, we need to denote it as A. So even though 2 years back purchased asset now converted into taxable and exempted purpose also, you can avail full ITC and mark it as A. But we have this question, sir, then we are getting excess ITC na? Actually it is being used for 3 years only, but the past 2 years it is even exclusively into exempted. That we should leave now. Yes, that will leave, but we'll calculate that separately. What we'll do separately now? For the expired life, the proportionate credit will calculate now. How will calculate? 2 years now, how many quarters? 8 into 5% into ITC. 8 into 5% into the machine related ITC. You will get some amount now that you will add to liability. Okay, let me tell you. So the asset value is 10 lakhs. The tax rate is 18%. How much ITC it is? 1.8 lakh. 2 years back you purchased this. But 2 years back you didn't avail ITC. Why? That time it is used exclusively for non-business purpose. Now what they are asking? Now in the current year you can take 1 lakh, 1.8 lakhs as ITC and you just denote it as what? A. But for the expired 2 years, what you need to do? For the expired 2 years, they are asking us to do calculate 1.8 lakhs into 5% into how many quarters? 8 quarters. How much? 40% of 1.8 lakhs. 72,000. So this 72,000, 1.8 lakhs, one side will take as ITC. This 72,000 will add to liability. That means net how much we are getting? 60% only na? For the 3 years only we are getting. But while doing some, we'll take the full ITC and separately we'll calculate for the expired period and we'll add it to the liability. Nothing but net only we are getting. But will not net off here. While taking ITC, we'll take 1.8 lakhs and separately this 72,000 will get reversed. You understood not till here? Sir, if it is the new purchase, na, no problem. Simple thing. If it is exempted, na, ignore. Taxable, na, avail ITC. Common purpose, na, take ITC and denote it as what? A. Previously exempted purpose. Now converted for both the purposes. What to do? Take total ITC. Denote it as what? A. For the expired period, you need to calculate number of quarters into 5%. For the expired period, you need to calculate number of quarters into 5% into ITC. That again you will separately add to the liability. Okay, this also done. Now the last one, sir, we almost completed now. This also done. Now last one. This last one is nothing but previously for taxable purpose only. Now converted for both. Before that we said like previously exempted. Now converted for common. This I am saying like previously taxable. Now converted for common purpose. So again the same asset. Assume we purchased 2 years back 10 lakhs worth asset. How much is the GST on it? 18%, 1.8 lakhs. From that time it is used exclusively for taxable purpose only. We already availed ITC, we need to avail again. We already availed because that time it is for exclusively taxable purpose, means that time itself we already availed ITC. We need not to again, we need not to avail once again. 1.8 lakhs already availed. Now it is shifted to common purpose. Even though it is shifted to common purpose also, we need not to take ITC once again because already claimed. What we need to do now, just mark it as A. Just mark it as A. Why? Previously only taxable, now converted to both. Just mark it as A. Clear? Now ITC and all done. Now take the total of A's which you are marking as A. Na? Take the total of A's. What is the reference of A, sir? Whichever is used for common purpose, we are taking it as what? A. If you take the total of A, that is nothing but the common credit with respect to capital goods which are being used. Okay. Come back here, sir. In the next page, you have a summary as well. In the next page, you have a summary as well. This page. First, what we are taking? Take credit to electronic credit ledger, capital goods used for solely taxable purpose. If they are only for taxable purpose, na, will take credit. Then, if they are common, if it is exempted, na, you will not even take. Sir, step 1 only. If it is exempted, na, you will ignore itself. Taxable, na, you will take credit. Whereas, the step 2, if you see, if it is take credit to electronic credit ledger, if it is used commonly, na, you will take credit and again you will denote it as what? A. Next, third one. Capital goods used for exempted, change it to what? Common. Previously exempted, now change it to common purpose. What to do? Take credit to electronic credit ledger with respect to capital goods initially, now for common. Add the amount to A. I mean, you'll add this to credit as well as you'll add this to A. But simultaneously, you'll add even the liability. You'll calculate even the liability, that 72,000 for the expired period. Number of quarters expired into 5% into ITC. That will add to the liability. Then, capital goods initially for taxable, now shifted to common. Initially taxable, that time itself they availed ITC. Now, there is no need to again once again avail the ITC. So, need not to take the credit electronic, need not to take once again credit, but you will be adding it to the A. Okay. So, we got aggregate of A as well. Okay. Out of A, from this A, now what we need to do now? We need to divide it by 60. Why we should divide it by 60 now? What is the useful life of a capital good? 5 years now, how many months? 60 months. That's why we are dividing it by 60. Capital good related common credit, we are bringing it to month wise. Which is the total, now we are bringing it to month wise by dividing. Sir, I mean what happening now? Capital good ITC you will take at a time. Reversal you will do monthly. It's not one time. That's why you're doing divided by 60. So then after doing divided by 60, you will get TM. This is the monthly capital good related common credit. From here simple. Take this TM into exempted turnover divided by total turnover. You will get the credit to be reversed related to exempted. Divided by the TM into, I mean, once you find out the aggregate of A, you need to do what? Divided by 60, you will get TM. TM is nothing but the common credit. Common credit, what you need to do? Common credit into exempted turnover divided by total turnover. Okay, we'll solve a sum. Come to page number 23. Praja Industries is a manufacturing company. Page number 8.17. Okay. Praja Industries is a manufacturing company registered where? GST. It manufactures two taxable products X and Y and one exempted product Z. How many are its manufacturing? X, Y is Z. The turnover of X, Y, Z also given 2 lakhs, 10 lakhs, 12 lakhs. Praja Industries is in possession of certain machines. Useful life of all the machine is considered as 5 years. Even if they don't tell us 5 years also, we'll assume as what? 5 years only. Next. From the following particulars, compute the amount to be credited into electronic credit ledger and the common credit attributable towards exempted supplies, if any, for the month of April. So, they are asking us to find out the total ITC, and from that, how much is the common credit related to exempted, which needs to be reversed. Machine A. So look at the first point. Machine A purchased when? 1st April. I mean this month only. For being exclusively used for non-business purpose. This is the current month purchase, sir. Used for what exclusively? Can we avail ITC? No ITC, no A denotions, nothing. Next one. Machine B purchased on 1st April for being exclusively used in manufacturing. Zero rated supplies. Zero rated supplies na what? Taxable supplies only. Zero rated are part of what? We said 20 times by now. Today itself 4-5 times we said. Okay, machine B purchased. Previous your doubt also the same thing only, no? She asked one doubt. Machine B 1st April for being exclusively used in manufacturing. Zero rated supplies. Zero rated now what? Taxable supplies. Zero rated now exports only. Even though rate zero, we'll consider them as what? Taxable supplies. Taxable supplies means can we avail ITC or not? Yes. Do we need to denote it as A? Yes, sir. Shankar only I am asking. Do we need to denote it as A? When we are marking it as A, when it is used for both the purposes, we'll mark it as A. Here both purposes are single purpose. So we will not mark it as A. So just ITC will be available. Do we mark it as A or not? No. Next one. Machine C purchased on 1st April for being used in manufacturing all the three products. Common purpose. So common purpose na ITC available, and additionally we should mark it as what? A. Okay, fine. Machine D purchased on April 1st 2 years before. I mean not current year. 2 years back it was purchased. Exclusively used in manufacturing product Z. What is product Z? Exempted. So from 2 years it is being used for exempted. But now on it will be used even for manufacturing X and Y. That means now it became common. Previously it is exempted. So when it is exempted to common, what to do? We should take ITC. We should denote it as A, and simultaneously there is another step also. For expired period we need to calculate liability as well. Okay, this liability calculation we'll put as working note. Next, machine E purchased 1st April 3 years before for being exclusively used in manufacturing product X and Y. That means initially for what? Taxable. Now it was used even for Z also. Now again from taxable to common purpose. Already it is the taxable one only. That means ITC availed previously itself. Now we need not to again A once again. So just we will be denoting it as what? A. That's what we'll do. Okay. So now they are asking us to calculate the ITC eligible and ineligible. Okay. Look at how I did. I took particulars ITC A. First sir, machine A, non-business. No, I didn't took ITC and even I denoted it as A. Next, machine B. I took ITC but no A because machine B is exclusively for zero rated supplies. Machine C, common purpose. So common purpose now what I did there, sir? I took 96,000 ITC and even I'm taken in the total of A. Then machine D, 1,92,000, which were shifted from exempted to taxable. I took ITC 1,92,000 and even taken in the total of A. Then machine E, ITC I didn't took because initially itself ITC taken. Now just we'll add it to the A. Okay, so now the ITC available is how much for us? 3,26,400. Whereas the aggregate of A we got is how much? 5,76,000. Sir, this machine D you should remember we need to do a working note as well. Working note for what? For the expired 2 years period, we need to do reversal and all. For that, working note is pending. Now, aggregate of A, we got how much? 5,76,000. For this 5,76,000, this is the total. We need to divide it. We need to bring it to monthly. So, divided by 60, you got how much? 9,600. So, this 9,000 is the ineligible common credit. From there, you need to find out exempted related. 9,600 into where you got 12 lakhs. Exempted turnover, Z turnover, if you look at the question, Z turnover is how much? 12 lakhs. Whereas the total turnover is how much? 24 lakhs. If you do this, you will be getting how much, sir? 4,800 is the common credit attributable to exempted supplies, whereas the total ITC is 3,26,400. We need to do another working note also, liability towards for machine D, liability towards machine D. How much? 2 years now it is previously 8 quarters into 5% into 1,92. So 76,800 is the liability. So there is other outward liability also. In question they gave X, how many goods are here? Sorry, how many products? 3 products na, X, Y, Z. Z is exempted. XY taxable only na. So on that we are calculating tax as well. The normal good sales tax. X for 2 lakhs 24,000, Y for 12%, 1,20,000. So we are having how much? 1,44,000 plus this 76,800 as the liability we are having. Whereas the credit we are having 3,26,400. So the credit is adequate or sufficient to discharge the liabilities. So nothing to pay now here. Okay. Whereas this 4,800 will also be okay. See here how they calculated. Yes, 3,26,400. Here 4,800 they calculated. That's what this 1,44,000 and also not required. I just did this. If you calculate this 76,800 now, it would be fine. That's what the answer is also there. Clear as sir this sum? Rule 42, rule 43. Okay. Okay. So continuing with input tax credit, sir. Okay. With respect to rule 42 and 43. Special provisions related to banking companies and NBFCs and financial institutions, sir. So simple thing, 17 subsection 4. For banks, NBFC, financial institutions and all, their major income is interest only. For banks, financial institutions, NBFCs, their major income is interest only. And interest is exempted. Their major income is interest and the interest is exempted. So banks, financial institutions, when they apply rule 42 and 43, majority of their credit will get reversed. Majority of their credit will get reversed. So that's why they have an alternative option also given under 17 subsection 4. Instead of following rule 42 and 43, they have 17 subsection 4, which is like for banking, financial institutions and NBFC only this is applicable. And this is also optional. It's not like mandatory that they should follow this. Take their total ITC. Subtract from that the blocked credit. You will get what? Net ITC. And net ITC, you should segregate that into two types. One is like the ITC which is received from the inwards which were provided from their distinct persons. Let's say SBI had, we are now checking for SBI Bangalore, sir. SBI Bangalore has an inward from SBI Hyderabad, and even it has inwards from others as well. I mean, SBI Bangalore took services from or goods from SBI Hyderabad as well as from others. What we are asking them to separate the inwards which are from distinct person and from others. With respect to the inwards which are received from distinct persons, they can avail 100% ITC. Whereas on the balance which was received from others, on that they can avail only 50%. Instead of doing 42 and 43, all that whole calculation, it would be easy for them. Okay, no, this 50% is for all capital goods or normal inputs and input services also same thing. With respect to banks, financial institutions and NBFCs, out of the total ITC available to us, they should subtract first blocked credit. Once blocked credit got subtracted, then they'll get net ITC. Out of net ITC, we need to segregate it into two types. One is the ITC on inwards, which was from distinct persons. I mean, their related persons, their branches, that one. The other one is like the input tax which came from the other supplies. So on distinct persons related, 100% ITC can be availed. Whereas on the balance, they can avail only 50%. Okay, avail 50% only. So see, so the same thing, sir. I made it simple here. Now come to section 18. This chart, section 18. Section 18. Sir, section 18, what is happening here? Na? You are in non-tax paying status. You are into non-tax payment status. Now you shifted to tax paying. Previously you are not paying taxes. Now you shifted to tax paying. What does it mean? Na? Previously you are unregistered. Paying tax or not paying tax? Not paying. Now you became registered. Unregistered to registered. Or else previously you are under section 10. Section 10 na composition scheme. Even though you are paying tax under concessional, it will not be considered as tax only. So section 10. Now you are changing to regular scheme. This also will be called as what? Tax payment status to non-tax payment. Then this is regular. Then you are making exempted previously. Now your supplies got taxable. So you are changing from non-tax paying status to what? Tax paying status. This is the question. Clear? From non-tax paying status to you're moving into what? Tax paying status. Non-tax paying status na, you may be unregistered, you may be a composition scheme person, you may be making exempted supplies. But now you are making taxable, or you are a regular scheme person, or you got registered now, or you are into a regular scheme person. The problem is when you are in non-tax paying status, ITC will not be given to you. No ITC availed by you. Because if you are a composition scheme person, ITC not available. If you are making only exempted supplies, ITC not available. If you are an unregistered person also, ITC is not available. So, but one day you are converting into tax paying status. Na? On the date of conversion, you are having raw material, you are having some work in progress, some finished goods, nothing but you are having closing stock. With respect to this closing stock also, you didn't avail any ITC. But now these are going to be sold in the tax paying status. But previously you didn't avail ITC. So now you have an option to take ITC with respect to this closing stock which was there before the date of this conversion. From non-tax paying to tax paying, you are converting now. On the day before conversion, whatever is the closing stock is there, either raw material, work in progress or finished goods, with respect to that closing stock, the tax component you can avail as ITC. Okay, for that only we are discussing rules. You are converting from what to what? Non-tax paying status to tax paying status. Non-tax paying na unregistered, or else you might be a composition scheme person, or else you are making exempted supplies. But now tax paying na unregistered converted to registered, a composition converted to regular, exempted supplies has become taxable. In such cases, previously you didn't have availed ITC, such ITC didn't avail the closing stock, you might be carrying with you. Once you are converted into tax paying status, on that closing stock also you can avail ITC. Okay, for that only these rules. Okay, first one. Person applied for registration within 30 days from liability. Previously is unregistered, sir. Now he applied for registration within 30 days from liability. Now he is entitled to take ITC on inputs contained in finished goods, raw material, work in progress on the day preceding the date he is liable to pay tax. So from today he is liable to pay tax now. On yesterday's closing stock he can avail ITC. For that the condition is like ITC to be availed only when there is invoice available with respect to such closing stock. The closing stock if you purchase now, with respect to that closing stock, you might have an invoice. First thing. Second one, that invoice shouldn't be older than 1 year. I mean that should, the date of invoice if you check now, it shouldn't be older than 1 year. Then only you can avail ITC. Let's say you're converting on 1st January 2025. If let's say the invoice is on 25th December 2024, sorry, not 24, 23, 25 December 2023. Sir, if you take from here older na 1 year, if you take na 1st January 2024 is the 1 year period. If invoice is after 1st January 2024, na ITC can be availed. But the invoice which I said is even older than 1 year, so you cannot avail ITC. So two conditions: you can avail ITC on closing stock, but for that you should have invoice. First one. Second one, even though you are having invoice, that invoice shouldn't be an older one or a older than 1 year. Clear? Okay. Sir, what about capital goods? During unregistered capacity also you might have purchased some capital good. Now you converted into tax paying status. Does on capital goods also I can avail ITC? Yeah? No, you cannot avail. Only on inputs you can avail ITC when you are converting from unregistered to registered. Okay. This is because you are registering because you have a liability to register. Second one, sir, you don't have liability to register. You are registering voluntarily. Nobody asked you to register, but you are registering under GST voluntarily. Even if you are registering voluntarily also, the day before you become registered, whatever is the closing stock is there, raw material, work in progress, finished goods related to such stock, the tax component can be availed as ITC. The same two conditions: invoice must be there, invoice shouldn't be older than 1 year. Second one. Third one, now he is a registered person who ceases to pay composition tax and switches to regular schemes. From composition you are shifting to what? Regular scheme. So then the same way, on the day you are converted into regular scheme, I mean the preceding day to the conversion, let's say from today regular scheme is applicable, na, then yesterday's closing stock you should find out raw material, work in progress, finished goods. On them whatever is the tax component is there, that you can avail as ITC. Again same two conditions: invoice must be there, invoice shouldn't be older than 1 year. Next, sir, in this case for capital goods also ITC available. Sir, why in first two cases capital goods related ITC not available? Na, that time you are converting from unregistered to registered, but now it's not unregistered to registered. You already registered, just you are converting from non-tax paying to tax paying. So in this case capital goods also ITC is given. So ITC on capital goods, how you can take? Simple thing, take the total ITC. From that subtract 5% for every quarter expired. Let's say already 3 years lapsed. The day you are converting into composition scheme, na, by that time itself the capital goods related life 3 years expired. So now what you need to do? First take the total capital good related ITC. From there 3 years, now how many quarters? 12 quarters. For 12 quarters 5%, 60% subtract from the ITC. The balance you can avail it as ITC now. So see, ITC available equals to total ITC minus 5% for quarter or part of the quarter. Okay, this you need to reduce. Okay, now the last one, when they are converting from exempted to taxable, the same way, the day the goods became tax, I mean the preceding to the day the goods became taxable. Let's say if the goods became taxable today, on yesterday's stock, closing stock, you can avail ITC, either raw material, finished good or work in progress. You should have an invoice, and invoice shouldn't be older than 1 year. With respect to capital goods also same, take the total ITC, from there subtract 5% for every quarter. Clear this point, sir? Okay, in all the above cases the registered person has to make an electronic declaration stating that details in inputs held in stock and input semi-finished goods are correct only. Then the declaration has to be filed within 30 days from such conversion. Within 30 days from such conversion, details has to be filed. If the amount you are claiming as ITC is more than 2 lakhs, I mean on this conversion, if you are claiming ITC from closing stock is more than 2 lakhs, then you should get a certificate from practicing chartered accountant or cost accountant. Practicing chartered accountant or cost accountant. This and all not required, sir. This okay, this is nothing but, sir, when there is succession, this para also nothing. Succession na, in all this Kanchana series succession will happen. One soul will come into some other body. That is nothing but succession only. Okay, succession na, the one who is doing the business will change, but the soul business will be continuing. That's called succession. From father, business transferred to son. A partnership firm converted into company. An individual converted into one person company. So the body which is running the business may change, but the soul of business will remain same, just like as Kanchana series. Okay, whenever Kanchana wants a body, na, Lawrence body will be available for rent. It's not even one Kanchana. Many Kanchanas will take. It's like a PG. Okay, so whenever there is sale, merger, amalgamation, transfer, change in ownership, in all these cases, the credit from the predecessor will get transferred to the successor. Predecessor na, the previous owner will be called as predecessor, the new one will be called as successor. It will get transferred. In case of demerger, so demerger na, the problem is like an existing unit will get splitted into multiple entities. Let's say Reliance Industries, sir, under the name of Reliance Industries, they are having telecom business and even oil and gas businesses also they are doing. Let's say after some years, one set of board of directors cannot look after all this. So what they can do, they can demerge into multiple companies, Reliance Telecom, Reliance Oil and Gas, like Reliance Trading, Reliance Retail, like that. They might have segregate or split the company into many other parts. If that happened, then that is nothing but called as demerger. But the parent company will be having the total ITC. But once the resulting companies are formed from it, from the parent company, the ITC has to be distributed to the resulting companies. The question is how it has to be distributed. It has to be distributed in the ratio of value of assets that were apportioned or that was given in the new units. Once the resulting companies are formed, in what ratio they are holding assets, in such ratio the ITC of parent company has to be distributed to the resulting companies. That is what in case of demerger, not important for exams also. Okay, now in 18 last one, sir, this is you are switching from tax paying status to non-tax paying. Sir, previously you are switching from non-tax payment to tax payment. So you availed ITC. Then you are switching from tax payment to non-tax payment. Now you need to pay ITC. I mean, you need to reverse the ITC by way of adding it to liability. Okay. Registered person wants to cancel his registration and he wants to become unregistered. A regular scheme person now converting into section 10. Regular registered person now converting into what? Section 10. Composition scheme person. And third one, it is a taxable supply, but now it has become exempted supply. Okay. So now on the date of conversion, there might be closing stock. Closing stock, no raw material, work in progress, finished good. On this, since previously they are in tax payment paying status, they already avail ITC. But now these goods are subsequently when these goods are getting sold, they will not be taxed because they are not in tax paying status. But already they avail ITC. So why they give ITC? Because they might have double taxation. But now there is no other taxation because he is becoming unregistered or it is a composition or it is an exempted. So ITC which he availed already on the closing stock has to be reversed. Reverse now it will get added to the liability. So how it will get? See, when a registered person availed ITC switches to composition levy or when his supplies get wholly exempted from tax, it requires reversal of ITC. Okay, how? The ITC on input should be reversed proportionately on the basis of corresponding invoice. With respect to closing stock, whatever the invoices are there, based on that, the ITC has to be reversed. If invoices are not available, then what to do? Sir, with respect to when we are taking credit, I mean, when switching from non-tax paying to tax paying, now what they said, only when invoice is there, you can avail ITC. But when we have to reverse now, sir, when we have to reverse now, what we'll say, even if invoice is there also, we'll say simply like, no invoice available. That's why they are saying like, if invoice is available, reverse it as per invoice. If you say invoice is not available now, then go and take market rate. Then go and take market rate of the goods. On that, calculate the applicable GST rate and that amount you need to reverse. If invoice is available, reverse as per the tax mentioned in invoice. If invoice is not available, find out the market rate of that closing stock. Based on that market rate, okay, based on that market rate, calculate tax and that amount you need to pay now again. Okay, see, if invoice not available, ITC has to be reversed on the basis of prevailing market price of such goods on the date of switchover or exemption. On the date of switchover or exemption. The details furnished on the basis of prevailing market value need to be duly certified by a practicing child accountant or cost accountant. If you find out market value, then again what you'll say? Actually, the value is 100. You'll say like market value is only 30 rupees to reverse lower amount. That's why it needs to be certified by whom? Practicing child accountant or cost accountant. Okay. So what about capital goods? Now we discussed about what? Inputs, capital goods. For capital goods also you need to do reversal. What they are asking, ITC involved in the remaining useful life of the capital goods should be reversed on pro rata basis, taking the useful life as 5 years. See, on 1st January 2022, capital good purchased for 10 lakhs on this tax rate at 1.18 percentage. Okay. Now on 15th December 2024, it's being switched to, now it's been switched to exempted. I mean, it has become an exempted supply. Now, initially he availed how much? 1.8 lakhs as ITC. Now he need to reverse. Okay. Now check not quarters, months. When we need to reverse here, we need to calculate the expired life in months. 2022, 12 months expired. Na? Now in December, how many months expired? 12 months. Part month also has to be treated till, I mean, sorry, in 22, 12 months. 23, 12 months. In 24 also, 12 months expired. Part month also has to be treated as full month. So how many months expired? 36 months. So now 1.8 lakhs minus 1.8 lakhs into 36 by 60. Why 60? 5 years na 60 months. So that's why 1.8 into 36 by 60. If you subtract this, okay, you subtract this. Now how much you need to reverse? 72 lakhs you need to found it. Correct answer you, you got this time. 72 lakhs. Okay. Sir, understand here, when the credit on capital goods needs to be reversed on shifting from tax paying to non-tax payment, we need to reverse it considering months. When we are availing ITC, then we should consider quarters. Here it is months. But when we are taking ITC, I mean, when switching from non-tax payment to tax payment, then the eligible credit, for eligible credit calculation, we should subtract quarter wise. For calculating the ineligible credit which we need to pay, we'll be subtracting it month wise. Understand this, sir. So here in 18, both the points are covered. Switching from non-tax payment to tax payment, and even switching from tax payment to non-tax payment. When switching from tax non-tax to tax, na, for capital goods subtract quarter wise. For switching from tax to non-tax, na, we need to pay subtract month wise. Next, 18 subsection 6. Come to 18 subsection 6. Availment of credit in special circumstances. So there is a sale of capital goods, sir. There is a sale of capital good. Page number 8.13. There is a sale of capital good. Simple thing. Don't ask for additional logics and all. When there is a capital good got sold, how much tax has to be paid is the question. When capital good is sold, mean disposed, what is the tax to be paid? First one, levy tax on sale value. On sale value, calculate the tax. You purchased for 30 lakhs, now you are selling for 10 lakhs. Calculate tax on the 10 lakhs only. First one. Second one, this only. Tax on transaction value, sale value. The second one is, on purchase, find out how much ITC you availed. On purchase, on inward supply, at the time of purchase of capital good, find out how much ITC has been availed. From there, subtract 5% for every quarter. Subtract 5% for every quarter. You will get some balance. This balance or tax on sale value. Whichever is higher, you need to pay. Whichever is higher. Once again repeating, sir. When a capital good is sold, use the capital good. Calculate tax on the transaction value, sale value. One thing. Second one, the ITC which you took initially is there na, on that capital good. Take that. From there, subtract 5% for every quarter. You will get some amount. The amount after subtracting 5% and tax on sale value, whichever is higher is the tax amount you need to pay on sale of capital good. Okay. Okay, we'll come solving problems afterwards. Okay, this is enough, sir. Now, okay, come back here. The other points which I need to sell now. This is only 49 subsection 12, sir. Need not to discuss much. This 49 subsection 12, I said now. 1%. It is applicable to a registered person shall not use the amount available in credit ledger to discharge the liability towards output tax in excess of 99%. So let's say you have 10 lakhs ITC, but whereas liability is only 8 lakhs, but still you cannot use the total 10 lakhs for discharge of liability. This 8 lakhs into 99% only you can use credit. The balance 8 lakhs into 1% you should pay through what? Cash ledger only. This is the rule. Okay, to whom it is applicable? This is applicable to a person whose value of taxable supply excluding exempted and zero rated in a month exceed 50 lakhs. If your monthly supplies exceeds 50 lakhs excluding exempted and zero rated, sir, here only they are excluding zero rated. Generally taxable, no, they'll include zero rated also, but here they are excluding zero rated and saying like if the amount is greater than 50 lakhs, then this rule is applicable. When this rule is applicable, out of the total tax, 99% only you can pay through credit. The balance 1% you should pay through cash. Okay, but there are some restrictions, some exceptions also. First one, where it is a company, then director. If it is a sole proprietorship, then proprietor. If it is a HUF, karta. If it is company managing director, if they paid individually their income tax more than 1 lakh in each of the last 2 financial years. So let's say in a firm monthly turnover is more than 50 lakhs. That means 49 subsection 12 is applicable now. But in those firm, I'm a partner, and if my individually income tax payment is more than 1 lakh for last 2 financial years, my income tax payment is more than 1 lakh for last 2 financial years, not the firm income tax, sir. My personal capacity income tax payment is more than 1 lakh for last 2 financial years, then firm get relieved from this section 49 subsection 12. If it is a sole proprietorship, if the proprietor individual capacity tax paid is more than 1 lakh, then the sole proprietorship will get relieved from this one. If it is a company, if the managing director individually pays more than 1 lakh rupees in each financial year for the past 2 financial years, then the company gets relieved from the 49 subsection 12. This is first point. Next, second point, where the GST refund they got is more than 1 lakh in the last year. Last year they got GST refund of 1 lakh from GST, and the refund is because of zero rated supplies. Zero rated supplies, they do exports. That's why they got refund. The second one is inverted duty structure. Inverted duty structure, on my inwards the tax rate is 28%, sir. Whereas on my outwards the tax rate is only 5%. So what happens now? On my inwards raw material and all tax rate is 28, whereas on my finished good it is only 5%. In such case what happens? ITC will get surplus ITC than that of use. So that surplus ITC we can ask for refund. Okay, if you are asking refund in this kind of situation, it is called as inverted duty structure. In these two cases, if you are asking refund and the refund you asked is more than 1 lakh, then 49 subsection 12 is not applicable to you. I mean, this 1% rule is not applicable when the income tax payment made by those persons individual capacity is more than 1 lakh in last financial years. Second one, where the GST refund they asked is more than 1 lakh in the preceding financial year, either because of zero rated supplies or because of inverted duty structure. Next, fourth one, where the registered person is government, PSU, local authority, statutory body. I mean government related organizations, this rule is not applicable. The fourth one, sir. Sir, listen carefully. I cannot repeat it multiple times. In November month, we are having ITC of 10 lakhs, whereas liability of 8 lakhs. We have surplus credit than that of liability. So what the rule is saying, like 49 subsection 12, I can pay only 99% of it as I mean, I can pay 99, I can use 99% of credit only maximum. 1% I need to discharge it through cash. Okay. But the relaxation here is, in this financial year, start from the first month. I mean, April to November. Take it consolidatedly. Here we took only for 1 month. ITC 10 lakhs, liability 8 lakhs. Now take consolidatedly for the past months also. From April to November, the total ITC I am going to use is only 70 lakhs. The total ITC which I used is only 70 lakhs. Whereas the total liability which I discharged is, the total liability including November, sir, April to November. When you look at consolidatedly, cumulatively, when you are looking, the liability you discharged is 80 lakhs. That means out of your liability, 70 lakhs only credit used. Balance 10 lakhs you paid you paid through what? Cash. So when you look cumulatively, what is the percentage of ITC you used to discharge liability? 100% used, you have ITC only 70 lakhs, whereas the liability you discharged is 80 lakhs. Okay, okay. Uh-huh. Out of liability, to discharge this liability, how much percentage credit is used? I mean, I want to say it as like, out of 80 lakhs, 70 lakhs only paid through ITC na, balance 10 lakhs is paid through cash na. So find out of 80, 70 lakhs means how much percentage? Out of 80, 70 means, so 87.5 percentage. They said like maximum you can use 99 percentage credit, but the cumulatively if you check, you used only how much? 87.5 percentage only. So this rule is not applicable to you. Individual month wise if you check, it may be more than 99 percentage, but if you check cumulatively, if it is less than 99 percentage only, then this rule is not applicable. Sir, why it is given like that? Because in this month I purchased capital good, that's why I got surplus credit. Okay, in this month I purchased the capital good, that's why I got surplus credit. So you cannot penalize me now for purchasing capital good. So all the past months and all I am paying cash only. This month only I got excess credit because I purchased the capital good. So you cannot insert that kind of rule on me. So they said like check cumulatively also, not just the month wise, check cumulatively also. If cumulatively also the credit used is more than 99%, then follow this rule. If cumulatively once it is checked, if the credit used is less than 99%, just like as here 87.5% only, then this rule is not applicable. This is about what? 49 subsection 12, which says like where a monthly taxable turnover is more than 50 lakhs, then only 99% of your liability can be discharged using ITC. The balance 1% at least you should pay in cash. However, this rule not applicable in 4 cases. First thing, income tax paid more than 1 lakh in last 2 financial years, either by sole proprietor or by partner or by director of a company. Second one, the income tax, the GST refund they asked is more than 1 lakh in the last financial year, but the refund asked is due to zero dated supplies or unutilized ITC. Third one, government institutions. Fourth one, when it checked cumulatively, it was beneath the, when it was checked cumulatively for the whole financial year, it was less than 99% only, then also this rule is not applicable. Okay, done. Now come to problems. We'll solve problems only now. We need to do so many problems actually. Come to question number 17 straight away. Question number 17. Sir, fast you need to do some, sir, now. We don't have whole day to solve the questions. Question number 17 in ITC. Okay. The goods manufactured by Royal Limited have been exempted from GST with effect from 15th November. Earlier, these goods were taxable. Sir, understand? Previously, they are taxable. Now they are exempted. Shifting from which to which? Taxable to exempted. The inputs were liable to GST at 12%. Following information is supplied. You are having inputs 1,44,000 in stock, 77,184 in process, finished goods in stock 4,82,400. The input cost is only 50% of the value. I mean, you should take 50% only of it. because out of the finished good, the input cost is only 50%. Next, Royal Limited also purchased the capital good for 2 lakhs by paying GST 28%, which was purchased on 10th July. So that means there is reversal for input and there is reversal for capital good as well. So here you are shifting from non-tax paying to tax paying, tax paying to non-tax paying. Tax to non-tax paying. Okay. Now you need to reverse with respect to goods as well as capital goods. Remember, while doing capital goods, you should subtract month wise here. Okay. The balance in ledger account shows credit balance. Sir, if any balance is there also, once you get converted into non-tax paying status, the ITC which you are having as balance will not be refunded, will be nullified. Okay, they'll take back that credit also. The department has asked to reverse the credit taken on input referred above. However, Royal Limited contends that once validly taken, it cannot be reversed. They are saying like, no, they didn't read the 18 section. Section 18 says like, once you convert, then the tax, input tax availed can also has to be reversed. See, inputs lying in stock. How much, sir? What is the value input lying in stock? 1,44,720. So 1,44,720 into 12%. This should be reversed. In work in progress, that also 77,184 into 12%, 9,262. Then inputs contained in finished goods. Finished goods, how much it is containing, sir? 4 lakh 80 to 400. Out of that 50 percentage, in that 50 percentage again 12 percentage. So it is only 28,994. Capital goods. Capital goods, how much, sir? How many days it has been used? 10th July it was purchased. When they are converting, sir? 15th November. 10th July to 15th November. Now how many days? 10th August, 10th September. Okay, or else July, August, September, October, November. 5 months. Okay, so let us take it as 5 months. So for 5 months we need to reduce. So 5 months if you reduce, now what is the balance? 55 months. So 2 lakhs into 28% into 58 by 60. So 51,333 you should reverse. So 5 months na, you understood na? July, August, September, October, November. Part month also treated as full month. So 5 months if you reduce out of 60, you have how many months? 55. For 55, whatever you get, that you need to reverse 51,333. So the total amount to be reversed is 1,06,905. Okay. So out of the ITC they are having this 1,06,995, it gets reversed. Still they are having balance of ITC of how much? 1,72,199. 199. That will also will get lapsed. Okay. Sir, after reversing this now it will add to liability. For liability you will adjust it through ITC. If ITC is not available, then what you will do? You will pay it through cash. But the point here is, even after discharging all these liabilities, you have some surplus credit, but you are into tax paying status or non-tax paying status? Non-tax paying status. So since you are in non-tax paying status, you cannot use the credit. So the credit will get lapsed. This is question number 17. Now do question number 18. Sir, question number 18 not solve properly like this. Take time and solve like this. Step 1 you should take computation of ITC available, opening balance, product A, product B. Step 1. Then step 2 you should compute the tax liability. Then step 3 you should find out the computation of tax payable through cash ledger. Like that you should solve. Don't just inspect the answers, solve the answers. Okay. You want to explain, huh? XYZ, a registered supplier, supplies the following goods and services for construction of buildings and complexes. Excavators for required period per hour rate, manpower, soil testing, seismic evaluation. Okay, sir, all this is story only. Okay, these are the services. It is nothing but his brochure. Okay, from here only the actual he received the following services for providing that. I mean, he'll be providing excavation services, manpower, soil testing, and all. Now, annual maintenance he has received, health insurance also he has an inward, and scientific and technical also he has. Okay, now higher charges for excavators. I mean, this is his outward 18 lakhs. Then he has service charges for supply of manpower. This is also outward 20,000. Then service charges for soil testing. This is also outward 2 lakh 50. So total he has three outwards. He provides three different kind of services. For that he has given three outputs. Then he has inputs as well. Annual maintenance 1 lakh ITC can be availed. Then health insurance, now blocked credit 17 subsection 5 health insurance, health related, all those will come under the 17 subsection 5 blocked credit. Then scientific and technical consultancy for soil testing and seismic valuation you can avail again ITC. So simple thing, sir. You need to find out three steps, sir. Step 1, step 2, step 3. Based on the inputs, how much ITC is available on annual maintenance? What is the tax rate, sir? Okay, GST paid. Okay, this is the ITC. 1 lakh is the ITC, 1 lakh is the ITC. So the total ITC they are having is 4 lakhs, 2 lakhs only. Okay. Then on outwards, we need to calculate liability. Higher charges, what is the tax rates are 12%. 18 lakhs into 12 percentage we should do. On service charges 18%, and on manpower also, manpower and soil testing on both of them it is 18 percentage only. So if you look at it, supply of manpower, soil testing and system 18. Why? Those fellows, why did this? Okay, here it should be 18 only. They cannot do. Okay, or else why to change answer and all. Okay, there is a mistake in the answer, that is for sure. So we'll make it as 12 percentage. So they calculate liability, sir, 12, 12, 18%, and they calculated even ITC 2 lakhs. So the liability we are having is 2 lakh 63,400 and ITC we are having is 2 lakh. After adjusting that, we are having 63,400 is the net tax payable through cash ledger. We completed 21 also. Now come to 22, sir. 22 already done, na? Morning we did 22. 23 also we did. Come to question number 24. Okay, to explain this, sir, we need to understand now job work. So come to the chapter job work, sir, in material. Okay. Job work means any treatment or process undertaken by a person on goods belonging to another person. Okay. So job worker na, he'll just do outsourcing work on the goods which was sent by the principal. Next, job worker. The one who does the job will be treated as job worker. Place of business na, the usual place from where you'll do the business. Okay. Now, does job worker required to register? Sir, all this, the summary simple thing. Job worker has to register when his aggregate turnover exceeds threshold. So then why that much is there? Because in section 24, if there, sir, previously like in intrastate na, Only when turnover exceeds, they should register. When a person is making interstate, then as per section 24 in registration, that person should register compulsorily. But there again, afterwards, section 23 came into picture and gave relaxation, stating like if he is a job worker, he need not to register even though making interstate supplies unless his turnover exceeds threshold. So now we need not to bother about interstate or interstate. One line we can say, job worker na register only when aggregate turnover exceeds threshold. Interstate or intrastate. Okay. What is the process of job work? See, principal, there is job worker. Principal sent inputs capital goods to job worker. This is not a, I mean, sending this kind of inputs and capital goods to job worker is not a supply. Even though these are used by job worker, on these inputs and capital goods, principal can avail ITC because ultimately they are going to be used for the purpose of principal only, no? So that's why principal can avail ITC. Here there comes a bill to ship to model also. There is a supplier, sir, okay, who sends goods directly to job worker, but he'll give bill to principal. Okay, now if you see here, bill to principal, but the goods were sent to job worker under the directions of whom? Principal. So who is the third party here? Principal. Sorry, if you remember 16 subsection 2 bill to ship to model, the goods were sent by the supplier to job worker under the directions of whom? Principal. So even though goods didn't received actually by principal, even on this goods sent also he can avail ITC. That means goods may be sent from principal premises to job worker premises directly. Okay, that is not a supply. ITC can be availed by principal. Whereas in such cases, the goods can be purchased and the goods can be sent directly to job worker without those goods coming to principal place also. On that also principal can avail ITC. This is nothing but an example of bill to ship to model. Okay. Okay, only when I draw triangle you might understand them. Job worker, principal, there is a supplier. Supplier sends goods directly to job worker, but he'll raise invoice to whom? Principal only. So now look at here. Does principal actually received goods? No. But 16 subsection 2 said like what? Even though goods and services are not received in bill to ship to model, then they can avail ITC. Even in bill to. Okay. This is the point. Okay. So this point clear now. What? When goods are sent by principal to job worker, on that you need not to avail. Sorry, it need not to be treated as supply, but recipient can avail IT. Sorry, not recipient, principal can avail ITC. Now, will these goods be retained by the job worker for lifelong? He need to return them na. So he need to return once he did the job work. Return after job work. So what is the time for returning these goods? It is 1 year and 3 years. It is 1 year and 3 years. See, sorry, not 3 years. Yes, 1 year and 3 years. And this 1 year and 3 years can be extended for another 1 year and here another 2 years. I mean 1 year and 3 years now. 1 year is for input goods, whereas 3 years is for what? Capital goods. Whatever the goods sent to job worker, those goods after processing, job worker has to return back them to the principal. If it is inputs now, within 1 year. If it is capital goods now, within 3 years. Within 3 years. However, if they need much more time, then they can ask for extension. For inputs, another 1 year extension would be there. For capital goods, there will be another 2 years extension. This is the normal job work procedure. Now the question is, what if job worker didn't returns within this extended period also? You understand my point? ITC provision is simple. Okay, now the ITC provisions will come. ITC is simply saying like even the ITC, I mean section 19 is related to this job worker provisions only. What section 19 says? Even the goods are used by job worker, principal can avail ITC either on capital good or on inputs. Even though those goods sent directly to job worker without those goods entering into principal premises, principal can avail ITC. Now the question is, the goods has to be returned within the specified period time. What happens if the goods were not returned within this time period? What happens now? This initially not treated as supply na, even the goods were sent, but if the goods were not returned within the specified time, then you need to treat it as supply. Supply na when, so let's say I'm taking an example here. Principal sent to goods to job worker raw material on 1st February 2022. Now these goods has to be returned by when? These goods has to be returned by when? 1 year na. Okay. If there is extension also asked, how many years? 2 years. That means at least by 1st February 2024, these goods should have been returned, but not returned. Then the goods which were sent to job worker has to be treated as what? Supply. Sir, there is no consideration. Fine, though, even though there is no consideration also, you can treat it as supply. Schedule 1. Goods sent by principal to agent, even though there is no consideration, it amounts to supply. So, principal sent goods to job worker. No consideration, but still we can call it as supply as per schedule 1. Fine, clear here. Now the question is, when, on which day we should treat the supply has been made? On 1st February 24, on 1st February 22, you should consider the supply has been made on 1st February 22 only. So, since the supply is made on 1st February 2022, you should have paid tax on March 20, 2022. Next month, you should have paid tax. You didn't pay. 2 years already made. For the 2 years now again, you should calculate interest. You understood now? If the goods were not returned by job worker within the specified period of time, then the goods sent to job worker by principal has to be treated as supply on the day when they were initially sent, not on the day when the time period expires. It needs to be treated as supply on the day when the goods were initially sent. Since they were sent initially on 1st February 2022, it is supply on 1st February 2022 only. Since the tax has to be paid by 20th March 2022 and it is not paid, from there you need to calculate interest at a rate of 18%. See here, question page number 16.3 you will find. If the timelines to return input and capital goods are not met, it is deemed that the inputs and capital goods were supplied by the principal to job worker. The date of supply shall be the date on which they were initially sent to the job worker. The said supply is required to be declared in GSTR 1 and the principal is liable to pay tax along with applicable interest. In case, sir, okay, fine. Here one more question. Sir, now you treat it as supply, sir. After 3 years, job worker returned those goods. Now you need to reverse anything and nothing. After 3 years, if job worker sent again goods to principal, treat this is also as supply. So the goods sent by principal to job worker also will be treated as supply. When they are returning from job worker to principal also, it will be treated as supply. When normal cases, no, not a supply. But when they doesn't return within the time limit specified, then they will become supply. Okay. That is what the importance of the rest and all. Okay, when goods are sent on job work, it is not a supply. Since it is not a supply, invoice will not be raised. In the place of invoice, job work will be raised. Okay. Here there is another option also, sir. Job worker may not return all the times. Job worker within this time, either he should return to principal or else sometimes principal may ask these goods to deliver directly to customer also. That is also fine. Or else he may ask the goods to be sent to another job worker. That also fine. Within the specified period of time, either the goods should be returned to principal or the goods should be sent to another job worker for some other activity, or they should be directly delivered to the, directly given to the or sent to the customer. Either one of these things should have happened. If nothing is happened within the time limit, then the initial goods on the initial day when the goods were sent, it has to be treated as supply. and from the date of tax payment, sorry, from the due date of tax payment, we need to calculate the interest as well. Okay, so now come back to question number 25. 25, which question? 24. Nakul, a manufacturer of pesticides registered under GST, provides you the following date. So see here, GST on machinery purchased and sent directly to a job worker. Machinery purchased and sent directly to a job worker. How much, sir? 1,20,000. So when the machine sent to job worker, can the sub principal avail ITC on it? Machine sent for job work operations to job worker by principal. On that machine, can principal avail ITC? Yes. Principal sent the goods to job worker. Okay. He can avail ITC. Next, GST on car purchased. Car, motor vehicle. Motor vehicle, blocked credit. When it is blocked? Seating capacity point first. Seating capacity less than 13. So generally ITC is blocked. Okay. Next. GST on raw material purchased. Goods are received in lots. Only 25% is received by now. Okay. Fully ineligible. Why? When goods are sent in lots, we can avail ITC only on receipt of last lot or last installment. Next. GST on medical insurance premium paid for employees working in the factory, provided this is optional. Sir, medical insurance, catering, all those are blocked rate only, unless there is a statutory obligation. Here they said clearly it is like optional. So this also you cannot claim as ITC. Compute the quantum of income tax credit available for the month. Nothing is eligible. Zero. Okay. 1,20,000 available, because this is with respect to sent to job worker. So that is exam question only, sir. Okay, exam questions na, in exam they will not look easy. After exams they will look easy. Question number 25, sir. Find out. Easy question only. At least recognize which provision it is. How the question has to be solved. How you need to solve. Question number 25. Ade. What? I know. That only. Came till, I know, tip of the tongue. 18 subsection 6, sir. When there is a capital good sold after usage, you need to calculate tax on sale value, and from the initially calculated ITC, you should subtract 5% for every quarter. Whichever is higher only, you need to pay as tax on sale of a capital good. Here camera is capital good or not? Capital good only. Camera life is more than 1 year only, na, generally. Camera is not asset. Photo Flash Limited is a registered person under GST in Mumbai. Being a dealer dealing with second-hand goods, Photo Flash supplies a used camera to a consumer in Chennai for selling price of 15,000. So take this 15,000 and apply tax rate. How much? 4,000. Okay, this is even margin scheme one also, sir. 4,200. One. The second one, sir. This is when ITC is available. Second one, sir, what we can do? Sorry, not second point only, in the first one only. How much ITC he might have got when purchased it, sir? He's purchased it for how much? Okay, he also purchased used camera only, yeah. Okay, let me check once again. Sorry. Photo Flash Limited is a registered person under GST in Mumbai, being a dealer dealing with second-hand goods. Okay, Photo Flash supplied. Sorry, sir. This is a different question only. Okay, this of will be solving, sir. Margin scheme. Purchase price minus selling price. Value of supply we did now. Whenever there is a used goods are sold, we need to find out the difference. If ITC is not available, what is the selling price? 15. What is the purchase price? 10,000. So how much it is? 5,000. 5,000. Sorry, not purchase price, not 10,000, sir. Yesterday also, I mean, we did this mistake. If you remember, 15,000 is the selling price minus purchase price is 10,000 plus GST. Okay, 10,000 plus 1,400 each, it will be 12,800. We'll get how much? 2,200. Okay, this is the value of supply. On this we need to apply 28 percentage. Okay, whereas if ITC is available na 15,000 into 28 percentage, how much? 15,000 into 28%, 4,200 minus 2,800, you need to subtract because that is the ITC. Okay, here it is 1,400, sir, here, whereas in the second option it is only 616. This we already did now. Why it is there here also now? 26. Okay. So, okay, sorry, actually we need to do 26th question. I only mistakenly asked it. Okay, question number 26. That is that was not there in my list also. Okay, 26. Sir, you understand this question? Huh? Simple question only. What to do? Sale value into tax rate. So, what is the sale value here? 4 lakhs. So, 4 lakhs into tax rate, how much? 18%. How much it is? 72,000. This is first one. Then the other thing we need to do is Find out the total ITC availed. What is the total ITC they availed? 5,50,000 they purchased. On that 18% GST, now how much they availed? 99,000. Okay. They purchased in 22nd November 2017. They sold on 1st November 2018. Find out how many quarters used. 5. 2017 last quarter only. In 2018 4 quarters. So overall it is 5 quarters. Okay, in 2017 November and December 1 quarter. In 2018 there are totally 4 quarters. So overall 5 quarters. So for 5 quarters you should reduce 5% for every quarter. Okay, that is nothing but 25%. If you reduce 99,000, then you will be getting how much? 74,000 to 50, the balance. Whereas on the sale value, if you apply, you got 72,000. Whichever is higher, na 74,000 to 50, that only you need to pay as tax. So this also done. Now last one, sir, 29. Okay, small sum only do. Okay, AS Limited is registered person under GST, purchased 10 cars and sold 8 cars for 55 lakhs each under 28% GST. So now tell me, find the GST liability in the following two independent cases. AS is a dealer of motor vehicles. Can he avail ITC or not? If AS is a dealer of motor vehicles, he can avail ITC because he is into further supply. Whereas AS is not a dealer, AS Limited is not a dealer of motor vehicles, then he cannot avail ITC. Okay. So see here, GST on supply of goods. If AS is a dealer, na, his sale, on sale value is getting 15.4 lakhs tax. On that he is subtracting ITC. Whereas if he is not a dealer, now on sale value he need to pay tax, but ITC is not allowed, so you need to pay 15.4 as tax liability. Second one, expert driving school limited supplied taxable services in the month of 15 lakhs. Driving school revenue they got 15 lakhs in providing training and training. Company purchased 2 vehicles for this purpose, namely passenger vehicle 20 lakhs plus GST 28%. Sir, can driving school avail GST credit on purchase of motor vehicles? Driving school, yes, it can avail. So it can avail. So the point is, their outward supply is how much, sir? 15 lakhs. 15 lakhs into 18%, it got 2 lakhs 70,000. On that, on the vehicles they purchased, they are getting ITC on passenger vehicle, and even they purchased a goods vehicle also. On goods vehicle also they can avail ITC. If both subtracted, they got surplus credit only. So with this we completed ITC as well. Okay, e-way bill done, ITC done, value of supply done, time of supply done, charge done, supply done, introduction done. Here we completed types of duty, valuation. Okay, baggage also. Okay. Baggage. So there are two chapters here, baggage and the other one is duty drawback. Among these two chapters, again we could expect a question. From baggage and duty drawback together we could expect a question. Both are small chapters only, problematic questions, not theory, problematic questions only they'll ask. So generally baggage means the luggage which is being carried by the passenger. The problem is, if you are a passenger and you are carrying some luggage along with you, there may be so many different kinds of goods along with you, a watch, clothes, mobile phone, laptop and all. So all those goods cannot be assessed at different kind of rates. It would be so tough for the passenger also to find out the custom duty rate for all those goods. That's why they have given a single rate for all the baggage, irrespective of the type of good you are carrying in your luggage. For all the goods which you are carrying, they levy at a single rate. Okay, so baggage means the luggage of the passenger or member of crew. Import duty can be levied on baggage as well. So now baggage includes, okay, coming to the point here, so directly to section 78. What is the rate of baggage, rate of duty on baggage? The rate of duty on baggage is 100% plus social welfare surcharge at a rate of 10%. Overall it comes to 110%. Only these two. There will not be again extra IGST, anti-dumping duty, safeguard duty, that will not be there. Only BCD and social welfare surcharge. And the rate of BCD is how much? 100%. Rate of duty on baggage is 100% plus social welfare surcharge at a rate of 10%. Sir, 100 means so high now. If you bring a mobile phone for 30,000 rupees, then on that they'll be levying baggage duty at a rate of 110%, which is more than that of the good value. So that's why they have given an exemption. Through exemption, the rate of duty is decreased to 35%. So it's not 100, it's 35 percentage only. 35 on that again there will be social welfare surcharge. So effectively it comes to how much? 38.5%. So this is important, sir. However, the exemption is not applicable on the following: firearms, firearms, firearms na guns and all. Cartridges in excess of 50. Cartridges na the bullets cartridge that will be loading into the gun. Next, cigarettes. Sir, look at here. Firearms, even if you bring one firearm along with you, let's say you're carrying one firearm, the cost of it is, or the import value of it is 50,000. On that, the tax rate is 100% only. 35% relaxation is not applicable for firearms. If you are carrying cartridges, na, on first 50 cartridges, tax rate is 35% only. In excess of 50 cartridges, if you are bringing, then on the excess, the tax rate is 110%. Next, cigarettes. Cigarettes up to 50, up to 100. Sir, cigarette 100, na, not 100 packets, 100 sticks. Okay. So cigarettes up to 100, the tax rate is 35% only. In excess of 100, if cigarettes are being imported, then on them the tax rate is 100% if they are bringing them as baggage. Next, cigars. Cigars, you know na, Rajnikant in so many movies. Okay. The cigars na, it is like in excess of 25, then it is 100%. Up to 25 na, it is only 35%. Tobacco. The normal tobacco leaves, if they are carrying up to 125 grams, it is 35% only. In excess of 125 grams, then the tax rate is 110%. Other than these, all the other goods are taxable at 35% only if they are brought as baggage. On baggage, generally the tax rate is how much? 35% only. Whereas if they are firearms, irrespective of the number, 100%. Cartridges up to 50, 35% only. In excess of 50, no, you need to levy social welfare surcharge also. Okay, let me write it down. Baggage. On firearms, na, the tax rate is how much? 100% plus SWS 10%. Firearms. Cartridges greater than 50 only 110%. Greater than 50, 110%. On first 50, it is only 38.5% only. How we got 38.5%? 35 plus social welfare surcharge. Next, cigarettes up to 50, I mean greater than 100, then it is 110%. Where it is less than or equal to 100, na, then the tax rate is how much? 38.5% only. Even cigars na 25. If it is greater than 25, then the tax rate is how much? 110%. If it is less than or equal to 110%, na, then the tax rate is, sorry, if they are less than or equal to 25, na, then the tax rate is only 38.5%. Next, tobacco. Tobacco also less than, greater than 125 grams, na, then it is 110%. Less than or equal to 125 grams, na, it is only 38.5%. Any others except these, any others, then the tax rate is only 38.5%. Only with respect to them we should be careful. Firearms, okay, you could blindly tell that it is 110%. Cartridges, first 50, 38.5. Beyond 50, it should be 110%. So let's say, let me give an example. Shankar as his baggage brought one firearm and 100 cartridges. Firearm 1 lakh rupee and cartridges each at 1000. Each at 1000 na, this is also how much? 1 lakh. So this is what he brought along with his baggage. If we need to find out customs duty, what we should do na? So I'll take 3 columns, sir. Particulars, tax rate 110% applicable and tax rate 38.5% applicable. I'll take 2 columns separately. Firearms. Firearms will go under which column? 110% or 38.5%? 110. So here I'll take 1 lakh. Then cartridges, first 50 will be under the 38.5%. The balance 50 will be under the 110%. So here 50,000. Here also 50,000. So here 1,50,000 on which we need to levy 110%. Here it is 50,000. Okay. Sir, this is the basic version, sir. We'll get other exemptions also. That and all I'm not at discussion, so I didn't include it here. Okay. Clear? We should be very clear, sir. Otherwise, when we discuss annexure 1, then you'll get much more confused if you don't understand this point of time. Means, okay, till here, if it is, till the point which we discussed, if it is clear, then only we can move further. Okay, tobacco up to 125 grams. What is the tax rate? 38.5. In excess of 125 grams, 110%. So let's say tobacco. Okay, Yogesh brought half kg of tobacco, 500 grams. Out of this 500 grams, okay, 500 grams for 50,000. So then 125 grams now how much, sir? 125 grams, man. 500 grams na 50,000, then 125 grams na 12,500. The balance how much? 375 grams. So it is how much? 37,500. On first 125 grams, how much tax rate? 38.5. Okay. And the balance 37,500. 110%. Clear na? So like this we need to calculate. Okay. So if it is clear na, then I'll go and talk about annexure 1. You just need to remember this, sir. What will be there in annexure 1? Most of them look like similar, but the context of tax rates is different and annexure 1 is different. Okay, even though first 3-4 points looks like similar in the tax rates and even in the annexure 1, but the purpose is different. The purpose of annexure 1 is completely different. So see here, in annexure 1 we are having what? Firearms again. Cartridges of firearms exceeding 50, the same one. Third one, cigarettes exceeding 100, cigars exceeding 25, tobacco exceeding 125. So the first 3 points are same as we discussed, even in annexure 1 also. But alcohol is there here, sir. Alcohol in excess of 2 liters. Okay. Alcohol in excess of 2 liters is covered by annexure 1. Within 2 liters na not covered. So you understanding na? Firearms covered by annexure 1. Cartridges in excess of 50 covered by annexure 1. Cigarettes in excess of 100 covered by annexure 1. Cigars in excess of 25. Tobacco in excess of 125 grams. Alcohol in excess of 2 liters covered by annexure 1. Then gold, silver or any other precious metal other than in ornament form. Sir, if it is an ornament form now, then no problem. If it is not in other, if it is in other than ornament form, other than in ornament form now, like bullion or like coins, okay, if such form, if you are bringing gold, silver now, then it is covered by annexure 1. The last one, sir, LCD and LED TVs. LCD and LED TVs. Okay, I am writing here what are covered by annexure 1. First one, what, sir? Firearms. Then cartridges when they are greater than 50 covered. Cigarettes greater than 100. Cigars. Tobacco greater than 125 grams. Okay. Other than this, what else are covered by annexure 1? Okay. Alcohol greater than 2 liters. Then gold, silver other than ornament form. Other than ornament form. the last one, LCD or LED TVs. Okay. The point is, sir, actually when we when we bring goods as baggage, we'll have some concession as which we call it as like general duty free allowance. We'll have some duty free allowance. The duty free allowance is like how much it is now? 50,000, sir. When you are coming from other than, okay, when 50,000 in some cases and 15,000 in some cases. If you are an Indian resident or a foreigner but residing in India, okay, you are an Indian resident, first thing, or else you are a foreigner but actually you are residing in India, then also you are covered here. Third one, you are a tourist of Indian origin. You are tourist of which origin? Indian origin. That means his father or his grandfather belongs to India only, but now he settled in outside India. Now he is coming to India as a tourist. So remember the three people: Indian resident, first one. That means he is Indian citizen plus Indian resident. Second one is like he is not an Indian citizen. That means he is foreigner but residing in India. Foreigner but residing in India. So let's say for example, Yogesh married Korean girl. So Korean, she is foreigner. But once she got married, she came to India and she settled in India only. Now she is a foreigner but residing in India only. So then she comes under the second category. Third one, tourist of Indian origin. Tourist of Indian origin, like let's say Satya Nadella, Google CEO, Sundar Pichai, all these people are settled outside India. Now when their son comes to India, when their son or daughter comes to India, they are nothing but person of Indian origin. So if these three people are coming to India and they are bringing any baggage and they are coming from countries other than Nepal, Bhutan and Myanmar, then they have a duty free allowance of 50,000. It means up to 50,000 there will not be any baggage duty. I mean 50,000 they can bring without any duty free. I mean without levying any baggage duty, they can bring up to 50,000 value goods. Okay. When they are coming from Nepal, Bhutan, Myanmar, if they are coming from Nepal, Bhutan, Myanmar, then the amount is only 15,000. Other than Nepal, Bhutan, Myanmar, na 50. If they are coming from Nepal, Bhutan, Myanmar, na 15 only 15,000. Okay. Then any other tourist of foreign origin, sorry, the same points are here. If they are coming from Nepal, Bhutan, Myanmar, 15,000. Any other foreigner coming to India as tourist purpose, then also the limit is 15,000. So simply you could remember, sir, Indian resident, person of Indian origin, or a foreigner residing in India coming from other than Nepal, Bhutan, Myanmar, then the exemption amount is 50. In all the other cases, it is only 15,000. Okay. Other than this amount, they can bring used personal effects. Already used personal effects, now already used clothes, shoes, watches, mobile phone, whatever are the already used personal effects or whatever the daily needs which were already used, those are called as the used personal effects. They can bring for any amount without any duty payment, used personal effects. So that's why whenever you ask your friend or cousin to bring iPhone from foreign, they'll not bring in the original box. They'll remove everything. They'll even turn on the mobile and they'll bring. Why? Because they'll show it as an used personal effect. Since it is used personal effect, they can escape it from baggage. Okay, na? If they pay 38.5% tax, na, then US price and India price will be same. Just to escape the 38.5% tax only, they'll bring. You'll ask them to bring from US or UK, from other countries. Okay, so when they bring, they'll not bring in the box. If they bring in the box, then the customs officer will say it as like a new good and he'll levy baggage duty. Okay, so used personal effects, either mobile or the clothes, or the specs, watches, shoes, all these will come under the personal effects category. You can bring them for any value if they were already used. You cannot bring 20 mobiles and you cannot say like all the 20 mobiles I'll use. Okay, you can bring 1 or 2 mobiles. Then travel souvenirs. Travel souvenirs, na, these magazines which they carry, no, news articles or those kind of travel souvenirs, na, magazines and weekly periodicals, those kind of things. Okay, irrespective of value, you can bring them. Okay, so see here, personal effects without any cap, you can bring them if they are used ones. On them there will not be any baggage duty. If they are travel souvenirs, on them there will not be any baggage duty, irrespective of which nation you are, irrespective of from which country you are coming, for travel souvenirs and personal used effects. Okay, I mean personal effects. Third one, sir, if you are coming from other than Nepal, Bhutan, Myanmar, then you have a monetary cap of 50,000, which you can claim as exemption. If they are coming from Nepal, Bhutan, Myanmar, then the limit is only 15,000. Now we are linking it with the annexure one. Annexure one, what items are there? In annexure one, firearms, cartridges in excess of 50, cigarettes in excess of 100, cigars in excess of 25, tobacco in excess of 125 grams, alcohol in excess of 2 liters, LCD, LED TV, gold, silver in other than ornament form. The items which are covered by annexure 1 are not eligible for claiming exemption in this 50,000. The items which are covered in annexure 1 are not eligible for claiming exemption in this 50,000 or 15,000. Okay, other than the items which were covered in annexure 1 can only be claimed as exemption under this 50,000. So let's say, sir, does in annexure 1 camera covered? Camera not covered. So you can bring camera. Let's say the camera value is 60,000. So out of 60,000 you can avail this 50,000 as exemption. Only on 10,000 duty is payable. Or else there is a watch. Is it covered under annexure 1? No. So on that also you can avail this 50,000. Okay, you cannot avail this exemption 50,000 on the items which are covered in annexure 1. This is one point. Next one, however, this 50,000 and 15,000 limit is not applicable to infants. Infants na the babies. Okay, up to 2 years. Infant na age less than or equal to 2 years, then they are called as infants. For infants, you cannot say, like for them also there are camera, watches and all. You cannot say and you cannot avail the benefit of 50,000, 15,000. That benefit is not available. Personal effects na what? Personal effects na things required for satisfying daily needs other than jewelry. Jewelry is not covered. So when we say jewelry na, some people will ask like, does Mangal Sutra at least covered or not? It is covered, sir. Personal effect only. That you can bring, on that you need not to pay any duty. Okay, next, laptop. Other than this, which we discussed, additionally, you can bring laptop also, one laptop. For a person whose age is greater than 18 years, they can bring one laptop without any duty payment. One laptop. Next, available for a passenger whose age is greater than 18, one laptop. Next, gold jewelry. If you are bringing any jewelry, sir, this exemption is available. This gold and jewelry related exemption is available for a person who has already resided in abroad for a period more than 1 year. You resided in abroad more than 1 year and now you are returning. Then you have an exemption regarding gold also specifically. How much? Sir, gold na, here gold should be brought in jewelry form, not in bullions or coins. It should be in ornament form only. For men, it will be 20 grams or 50,000, whichever is lower. 20 grams or up to 50,000. For women it is 20 grams or, sorry, for women it is 40 grams or 1 lakh. For men it is 20 grams or 50,000, whichever is lower. So not 20 grams, 50,000 is only lower now. So for men it is 50,000, up to 50,000 value they can bring jewelry without payment of duty. Whereas women they can bring up to 40 grams. 40 grams anyhow it is more than 1 lakh. So it is up to 1 lakh they can bring jewelry without payment of duty. Okay. This benefit is available only for a person who has resided abroad for a period more than 1 year. So now we'll take examples, sir. Then you'll have much more clarity. Sir, a person has brought firearm. Firearm is worth 50,000 duty. 50,000. And a person is bringing cartridges also. He is bringing 75 cartridges for value of 75,000. Then he is bringing alcohol in water can 20 liters, 20,000. Okay, then fourth one, is bringing an LED TV as well. It's bringing an LED TV as well for 40,000. Then he is bringing a camera 30,000. Then he is bringing even tobacco for 200 grams and the value is 20,000. And the last one, he has his personal effects also, and the personal effects is worth 1 lakh rupees. Personal effects value is 1 lakh rupees. Assume he is coming from Japan. He is coming from Japan and he is a Indian citizen only. Indian citizen who is coming from Japan. So now for him we need to calculate customs duty. So before going further, firearms now what is the tax rate, sir? And is it covered by Annexure A or not? Covered by Annexure A. In cartridges, I am writing here which is covered by Annexure A or on which 110% is applicable. Sir, first 50 not covered by Annexure A and on them 38.5 only tax rate. So on what 110% is applicable? On 25,000 110% applicable. So roughly I am writing here, and they are covered by Annexure A. Then alcohol 20 liters, sir. What is the tax rate? Alcohol, what is the tax rate? Alcohol, what is the tax rate? Once again check. Check again once again. Because the exemption is related to 50,000. Why we are mixing that with the tax rate? That's what I am saying. No, so tax rate now first only I said. Again go back to the chart which I wrote here. Here do we have anywhere mentioned alcohol? No. So on all the others the tax rate is how much? 38.5% only. So in others only alcohol is also covered. So because here firearms, cartridges, cigarettes, cigars, tobacco, only on them the tax rate is 110%. That also beyond the limit. For alcohol, limit is there. Limit is given in where? Annexure A. Annexure A is not linked with tax rates. Annexure A purpose is different. Tax rates purpose is different. Okay. So now come back here. You'll understand. Sorry, it's common. Everybody will get confused here. But wait for some other 2-3 examples we'll take. Then you'll get clarity. Okay. Alcohol 20 liters now. First 2 liters is not covered in Annexure A. But other 18 liters got covered in Annexure A. But the tax rate on alcohol is irrespective of whether it is 2 liters or 10 liters, the tax rate is always 38.5% only. But it is not covered by, it is covered by Annexure A. How much? 18 liters. LED TV. Tax rate how much? LED TV. 38.5% only, and it is covered by Annexure A as well. Next, camera. 38.5% only, but it is not covered by Annexure A. Not covered by Annexure A. Next, tobacco 200 grams. Up to 125 grams, 38.5. Excess, it is 110%. And the excess is even covered under Annexure A. Next, personal effects, no tax at all, because personal effects you can avail the benefit. So now how we'll solve now? We'll take particulars. First we'll write down the items in 2 ways. Eligible for GFA. Eligible for GFA. Not eligible for GFA. So the classification has to be done in 2 ways. Eligible for GFA, not eligible for GFA. Eligible for GFA, they are not covered under Annexure A. If they are not eligible for GFA, they are covered by Annexure A. General duty free allowance. That 50,000 is there, general duty free allowance. Okay. So first, firearms, sir. Firearms eligible for GFA, not eligible for GFA, Sir, on firearms, can we take that 50,000 exemption or not? We cannot take. So that means they are not eligible for general free allowance. I mean, from that we cannot reduce the exemption. Firearms. Then cartridges we are having. In cartridges, sir, listen here. In cartridges, on first 50,000 of cartridges, can we allow? For cartridges, first 50 are not covered by Annexure A. Only the additional 25 are covered by GFA. So that's why eligible for GFA na 50,000. Not eligible for GFA na 25,000. Okay, so simple thing to make you understand. Forget about the tax rates here. Just we are now first thinking about only what? Annexure. Annexure, how many points are there? Firearms, cartridges greater than 50, cigarettes greater than 100, cigars greater than 25, tobacco greater than 125 grams, alcohol greater than 2 liters, gold in ornament form, LCD, LED TVs. Only whether it is covered under Annexure A or not, we'll check. Covered by Annexure A, na, then you cannot avail 50,000 exemption. So then it will be not eligible for that 50,000 exemption. We call it as GFA. Okay, not eligible for GFA when it is covered by Annexure A. Covered by Annexure A, sorry. No, covered by Annexure A, na, not eligible for GFA. If it is not covered in Annexure A, then eligible for GFA. So firearms covered in Annexure A or not? Covered. Since it is covered in Annexure A, no benefit, no exemption. So we took here no benefit. Next, cartridges. When it is covered under Annexure A? Above 50 covered under Annexure A. So that means above 50 no benefit. That's why we took 25,000 here. First 50 we can avail the benefit now. That's why we wrote here. Okay, you understanding now? Third one, alcohol. Alcohol covered by Annexure A, not covered by Annexure A. Alcohol up to 2 liter, above 2 liters is covered by Annexure A. So covered by Annexure A, no GFA. How much? So total alcohol is for 20,000. First 2 liters only not covered. So 2,000 here, 18,000 will take here. Next, come to LED TV. LED TV covered under Annexure A, not covered under Annexure A. Covered by Annexure A. If it is covered by Annexure A, then there is no benefit. So LED TV, how much we should take? 40,000. Next, camera, not covered under Annexure A. Not covered na eligible for GFA. Camera, 30,000. Then we have tobacco. Tobacco covered under Annexure A, na? Yes, covered under Annexure A in excess of 125 grams. So for 75 grams, no GFA. For 125 grams, we can avail the GFA benefit. So for 200 grams, 20,000 na. 125 grams na 12,500. The other one is how much? 7,500. Personal effects na anyhow they are exempted only, so we are not considering them. So total here, eligible for GFA, not eligible for GFA. Eligible for how much? 94,500. Not eligible for GFA, how much? 75. 93,000. 75,000. 1,40,500. Okay. So now we decided eligible for GFA, not eligible for GFA. If it is eligible for GFA, na, then we will get this benefit of 50,000. Here no benefit because not eligible for GFA. Afterwards, if you take, it is 44,500. It is 1,40,500. Now again, once again, we'll go for second round checking the tax rate. Okay. Now cartridges first 50. What is the tax rate? First 50 only I'm talking about. Because here in under eligible GFA, there is only first 50. No. First 50, what is the tax rate? 38.5. That means this is also 38.5. This is 38.5. Alcohol, what is the tax rate? First 2 liters, 38.5. Camera, 38.5. Tobacco, first 125 grams, 38.5. So that means on this 44,500, it is only 38.5 percentage. Here you should be clear, sir. Here only will get confusion now. See. 5 grams straight away. What is the tax rate? 110 percentage. Cartridges in excess of 50 only here. What is the tax rate? 110 percentage. Alcohol in excess of 2 liters. 38.5 percentage only. So this is the key here on this 38.5 percentage only. LED TV, what is the tax rate? 38.5 percentage only. Then again, tobacco in excess of 125 grams. It is how much? 110 percentage. So if you could identify this, then the sum is over. Okay. So we'll do in a single sum. We should have clarity about Annexure A, and then again we should have clarity about the tax rates also. So first round will separate annexure and non-annexure items. Once we do that, then again we'll come up with the tax rate. Okay, so again once again we'll do the same thing. Firearms, sir, straight away which rate? 110 percentage. Cartridges first 50,000 done. We are talking about the excess one only. 110 percentage. Alcohol, alcohol irrespective of how much ever quantity, it is only 38.5%. LED TV 38.5%. Camera not covered here. Tobacco in excess of 125 grams, 110 percentage. So out of 1,40,500, not everything is taxable at 110 percentage. We need to segregate here. So out of 1,45,500, 50,000, 75,000, and this 7,500, 82,500 is taxable at 110 percentage. Whereas the balance 58,000 is taxable at a rate of 38.5 percentage. Clear, sir? Okay. Then we'll take another example. We'll see. Rakesh returning to India from UK after 18 months. After how many months, sir? 18 months. Okay. So his baggage consists of one laptop, 75,000. He's carrying one laptop valuing 75,000. He's carrying gold chain valuing 45,000. A gold chain is carrying 45,000. Then he is having personal belongings 1,30,000. Then he is carrying a camera with him 40,000. Then he is carrying a firearm and cartridges. Firearm and cartridges together it is 1 lakh. Firearm and cartridges he is carrying, but whereas he is carrying firearm and 100 cartridges, whereas each cartridge value is each cartridge at rupees 500. He is carrying how many, sir? Firearm and 100 cartridges. The total value is how much? 1 lakh. Out of them, each cartridge value is how much? 500. Next one, he is carrying alcohol of 5 liters at 5,000. He is carrying cigarettes 150 at 15,000. Okay, let's say this is the question given. Cigarettes 150 is carrying 15,000. Now we need to solve this question. Want to do na? So no, they are copying, so that's why I'm waiting. So even if you don't do also fine, no problem. Sir, first tell me if you're following with me. Laptop. One laptop is exempted because we assume his age is greater than 18 years. So laptop exempted because age is greater than 18 years. Na laptop exempted. Then gold chain exempted because his stay is more than 1 year. Since his stay, because I said here it is 18 months. Stay is more than 1 year. Na, so this is also exempted. Personal belongings, that is also exempted. Then he brought a camera. Sir, camera, sir, we don't go till the tax rate now. We'll do step by step. First, we'll identify whether it is covered by annexure A or not. Camera in annexure A or not. Camera not covered under annexure A. If it is not covered under annexure A, then you can avail benefit of GFA. So, GFA eligible. Then firearms, sir. Firearms, na, here not only firearms, I gave a consolidated value for firearms and cartridges. Okay, that we cannot solve here. We'll write down much more detailedly beneath. Now, alcohol. 2 liters covered under, in above 2 liters, I mean 3 liters covered under annexure A. The first 2 liters not covered by annexure. Cigarettes also same one. The excess 50 covered by annexure, first 100 not covered by annexure. So now we'll write the same way, GFA eligible, GFA not eligible. So from here, camera, first we'll start with what? Camera. So camera GFA eligible or not eligible? Eligible. Because camera not covered under annexure. Not covered under annexure na eligible for GFA. So camera 40,000. Then firearm. Sir, here firearm and cartridges together value given. We need to find out the value of firearms. Each cartridge at what value, sir? 500. How many cartridges are there? 100. So cartridges value is 50,000. Then what is the value of firearm? Sir, here I gave 500 into 100. If you do, how much it is? 50,000. The other 50,000 is nothing but the value of firearm. So next firearm. Firearm how much, sir? 50,000. 50,000. You cannot avail any benefit. So no GFA. 50,000. Okay. Then cartridges. Cartridges how many we are having, sir? 100. Cartridges we are having 100 into 500, total 50,000 we are having cartridges. But the point is, only 50 cartridges are covered under annexure A. The other 50 are not covered under annexure A. So cartridges here 25,000. Here also 25,000. Sir, able to understand here? Cartridges first 50 not covered under annexure A. In excess of 50 covered by annexure A. So that's why we separated and taken here 25 and 25. Cartridges done. Then alcohol. First 2 liters not covered by annexure A. The other 3 liters covered by annexure A. So GFA eligible only 2,000. The other 3,000 we cannot avail GFA. Next, cigarettes. First 100 eligible for GFA. The other 50 not eligible for GFA. So first 100 na 10,000. The other 50 na 5,000. So if you total it now, 65, 75, 77,000 here. Here it is 75, 78, 83,000 here. Okay. Now GFA. How much here it is? 50,000. 50,000 if you subtract now, still here it is how much? 27,000. Whereas here no GFA, it is how much? 83,000. Now we need to find out tax rate. Okay, come here. Camera, what is the tax rate? 38.5. Cartridges first 50, 38.5. Alcohol, first 2 liters, 38. First 2 or above 2 also 38.5. Cigarettes first 100, 38.5. So it is into 38.5%. Now coming here. Camera not there. Firearm 110 percentage. Alcohol 38.5 percentage only alcohol. Okay, sorry. Okay, cartridges in excess of 50. What is the tax rate, sir? 110 percentage. Alcohol, irrespective of number of liters, it is only 38.5 percentage. Cigarettes 110 in excess of 100 na, so it is again how much? 110 percent. So again in this 83,000 also there are 110% mixed as well as 38.5. So we'll separate the alcohol 3,000, which is how much? 38.5 percentage. The balance it is 80,000 into 110 percentage. Okay, so this way we will do. Sir, I already took complicated adjustments. The problems will not be more complicated beyond this. Gold, it will not be exempted. If Rakesh stayed there for only 8 months, then gold is also taxable. Then gold will be added here in the GFA one only. Because it is in ornament form only. Now I said gold chain. So it's in ornament form only. So we could take here under the GFA one. Yeah, you can claim 50,000 one. Sir, simple rules, sir. To sum up, tax rate. Baggage rate normally 38.5 percentage only. But whereas 110 percentage is applicable on firearms, cartridges greater than 50, cigarettes greater than 100, cigars greater than 25, tobacco greater than 125 grams. Clear? Now, before going further, we should have clarity about annexure 1. Annexure 1, what are covered? Firearms, cartridges greater than 50, cigarettes greater than 50, cigars greater than 25, cigarettes greater than 100, cigars greater than 25, tobacco greater than 125 grams, other things are also there. Alcohol greater than 2 liters, gold in other than ornament form. Next, LCD, LED TVs. Annexure is also clear. The problem is like many times will mess annexure and the tax rates one. Both are different purposes. Now, coming to the basic exemptions which were given. The duty free allowance. Sir, here for the word exemption, they use the word duty free allowance. Duty free na no duty, exemption only. So, what are the duty free allowances available? If they are coming from, if he is an Indian resident, foreign national residing in India or Indian origin, coming from other than Nepal, Bhutan, Myanmar, na, then the exemption available is 50,000. Whereas from other Nepal, Bhutan, Myanmar, or if he is a foreign tourist, then it is only 15,000 exemption. However, in this 50,000 and 15,000 exemption, we cannot avail annexure items. Okay, for annexure items, we cannot avail this 50,000 exemption or 15,000 exemption. Then next one, used personal effects you can bring how much ever the value. Used personal effects, na, used clothes, used shoes, all those. Then third one, you can bring travel souvenirs. If the age is greater than 18, then you can bring a laptop, one laptop for each person. Then if their period of stay outside India, I mean the period they resided outside India is more than 1 year, then they can bring gold in ornament form also, up to 50,000 if he is a male passenger, up to 50,000 if she is a female, sorry, up to 1 lakh if she is a female passenger. These are only the exemptions available. Okay, 90% the sum will be on these points only. Okay, so now come to workbook. Come to workbook. Baggage, question number 7. Question number 7. Page number 27.4. So see here, sir. Mrs. A person of Indian origin aged 40 years came to India. Sir, person of whom? Indian origin only. Okay, then fine. 50,000 category only. Came to India to tour along with her baby. Aged how much? 1.5 year. Baby aged 1.5 year. Na, she is infant. For infant, you cannot take separate 50,000 limit and all. Only personal belongings will be exempted. She carried with her following goods. Personal effects like clothes of Mrs. A valued 40,000. Exempt only. Even baby related clothes also exempt only. Then she brought a laptop, exempt because her age is 40 years, so one laptop exempted. Then she brought travel souvenirs, exempted. Then she brought 1 liter wine. 1 liter wine na alcohol within 2 liters only, not covered by annexure A. That means you can claim a GFA on it. Then mobile worth 20,000, exempted. Okay, mobile worth GFA, I mean mobile worth 20,000 you can adjust with GFA. Digital camera she brought, that also you can adjust with GFA. And she brought cigars also with 20 only. About 25 na covered by annexure A. So this also you can adjust with what? GFA. So now if you found out the more than 25 now. Up to 25 na no problem. More than 25 you cannot adjust with GFA. So if you found out this value, 1 liter value how much? 5,000. Mobile worth how much? 20,000. Camera worth how much? 60,000. 1,340. From there you can adjust how much? 50,000. So what is the net amount, sir? 25, 36, 340. Now we'll check even the tax rates also. 1 second. 1 liter wine, 38.5% only. Mobile, 38.5. Camera, 38. Cigars, 20 only na, 38.5. So on the total 36,340, the tax rate is only 38.5%. So on 36,340, if you review 38.5%, it is 13,991. Clear? Question number 7 done. Then go to question number 8 as well. Question number 8. So, okay. Akinodo, aged 56. Akinodo, aged 56. Tourist of Japan origin. Sorry, she covered 1-5 only. Why? Because she is not. She or he, we don't know. Okay, I'm thinking it as she. No, okay. Not Indian resident, not foreign national, but residing in, not Indian citizen, not foreigner residing in India, not even person of Indian origin. So then obviously it is how much? 15,000 only. When landed 12th March with a tourist visa with her, sorry, with him only. Okay, here he mentioned he with the following articles as per part of baggage. First one, used personal effects, travel souvenirs, laptop. He brought tobacco, sir. 300 grams of tobacco valued at rupees 5 grams each. 300 grams into 5 rupees. Now, how much, sir, it is? 1800. 1 0 got missed there. Add 1 0. 1800. Sir, here the problem is like a part is covered under. Sorry, not 1800. Now, it is how much? 1500. 1500 only, na? Okay. Correct it. 300 grams at 5, na? It is 1500 only. Okay. Then he brought 145 cigars valued at 50 each. 145 into 59 is how much? 7,250. Correct only. 5 rams he brought. 90 cartridges also he brought. Each 654,000. 2 liter alcohol he brought. 6,000. Mobile phone also he brought. 90,000. Okay. Now we'll solve this question. Tell me what are the details I asked. Sir, we have a format, sir. First, we'll take what particulars. GFA eligible? No GFA. This is what we are doing. Okay, GFA, no GFA. Okay, tell me, what is the first items are there? Used personal effect, exempted, leave. Then, laptop exempted, leave. Tobacco. Tobacco, how many grams she brought? Sorry, he brought 300 grams. Out of 300 grams, 125 grams can be under GFA. Beyond 125 grams, it cannot be under GFA. Each gram, how much? 5 rupees. So, 125 into 5. 625 you can claim GFA. Whereas the other 875 you cannot claim GFA. Okay, then next one. Cigars. How many cigars he brought? 140. Up to 25 only under GFA. The other amount, the others you cannot claim under GFA. Up to 25. Now each cigar how much? 50 into 25. 1250 you can claim GFA. What is the balance now? 6,000 you cannot avail GFA. Next, cigars done. 5 ram. How many 5 rams? 1 5 ram only 80,000. 80,000 on 5 ram you cannot avail GFA. So that's why no GFA, only 80,000. Then cartridges. Each cartridge at how much? 600. First 50 cartridges now you can avail GFA. Extra only you cannot avail GFA. So 50,000, sorry, 50 into 600. Cartridges 50 only. Cigars only 25. Cartridges 50. 30,000 GFA. No GFA, how much? 24,000. Cartridges also done. Then 2 liters you brought 1 liter. 2 liters wine champagne. Okay, 2 liters alcohol. Sir, alcohol beyond 2 liters we cannot claim GFA. It is within 2 liters only na GFA can be claimed. How much? 6,000. Then what else? Mobile phone also you can claim GFA 90,000. No GFA. Okay. Now we need to claim GFA. How much GFA? 50 na 15? Careful. You need to adjust how much? 15,000. Here how much? Nothing. Okay. So if you adjust after GFA, how much is there? 1 lakh, here 1,18,875. This is only na. Then when it comes to no GFA, how much is there? 1,10,875. Okay, sorry. 1,12,875. Okay. Sixth. Now we'll go for second round now. Tax rates. Okay. Sir, you could, if you don't want to waste time na, whatever the items on which you can avail GFA benefit, all of them will always be 38.5 percentage only. You need not to cross check also. All this will be at what rate? 38.5%. If you can claim GFA na, okay, sir, I don't want to do that. I'll get confused na. Then again check. Tobacco up to 125 grams, 38.5% only. Cigars first to 120. First 25. Same 38.5 only. Firearm not covered here. Cartridges first 50, 38.5. Alcohol 38.5. Mobile 38.5. So on this it is only 38.5 percentage. Now come here. Tobacco in excess of 125 grams. How much? 110 percentage. Cigars in excess of 25. 110 percentage. Firearms 110 percentage. Cartridges in excess of 50. 110 percentage. Only these four are there. So that means on this it is how much? 110 percentage. Okay na? Usually what they will not do in exams na, when you separate GFA and no GFA, GFA ones will always be 38.5%, no GFA will always be 110 percentage only. But in the examples which I took, I even including here alcohol, which makes like 38.5 percentage will also be will also come in the total. So which again we need to separate. That part will not come in the exam. So they'll simply make it as like, I mean, instead of more focusing on the tax rate also, what you could do means, first thing is like separate GFA eligible, no GFA eligible. If GFA things you find out now, on them you could straight away levy 38.5%, and on the no GFA items you could straight away levy 110 percentage. Okay, this also done. Question number 7 done, 8 done. Go to question number 10. From 10 you only should solve, sir. Don't wait for me to solve all. I already know customs. Use pen paper, solve and tell fast. Don't do inspection. Okay. Travel souvenir. Exempted or taxable? Other articles 1,50,000. Other articles exempt. Why exempt? Carried on in person. No. If they're personal effects, they'll say separately personal effects. Carried on in person, they are carrying along with him. There may be camera, it may be mobile or anything it would be. Okay. Other articles, he simply said carried on in person. So he's carrying along with him all those items. Okay. So you cannot, you can adjust with them you can adjust them with the GFA. Then they are carrying 120 sticks of cigarettes of 100 each. First 100 GFA, the other 20 no GFA. Next, firearm with 100 cartridges. Out of them, value includes the value of cartridges rupees 500. Nothing but firearm 50,000 here, cartridges another 50,000. So firearm no GFA. From cartridges 25,000 we can adjust for GFA. Other 25,000 we cannot adjust for GFA. Okay. For your sake, tell me what is the first item, sir? Okay. As if she is asking, I'm a pawn shop owner. She's asking one cigarette. GFA, no GFA. I mean, GFA cannot be claimed. For cigarettes, how many? Cigarettes, first 100, 2,000. Okay, then firearm 50,000, no GFA. Then cartridges, 25,000 GFA, 25,000, no GFA. And there are other articles as well. 1 lakh 50. Okay. Now tell me, what is the GFA amount here? 50 na 50 na? That's what I'm asking. 1.5 only. Why 1.5? Because Technot of foreign origin has come on Travanville. Technot of foreign origin. So foreign origin, so there will be only 15,000. So how much it will be net of GFA? 1 lakh 1,70,000. Whereas no GFA, how much it is? 77,000. So how much we need to apply here? Okay, tax rate on GFA 38.5 percentage only. This is clear. No GFA, will cross check once again. Cigarette in excess of 100, 110 only. Firearms 110. Then cartridges in excess of 50, 110 percentage. So on all this it is 110 percentage only. Okay. So when they ask a question from baggage, it would be like this only. If okay, they are showing it separately, the 100% tax rate and social welfare such as 10% separately. We are taking it together. 110 it is 100% BCD, 10 percentage social welfare surcharge. 38.5 also same, 35 percentage BCD, 3.5 percentage as the social welfare surcharge. How much tax they got? Okay, they didn't even calculate the tax. Okay, 65,450. Do we got the same thing? 68,450. Same answer na. Here they actually they need to levy here also social welfare surcharge. They didn't did that one. Okay, taxable value and tax thereon. Tax should be 110 percentage of it. How much it is? 84,700. In answer also they should mention here 84,700. They cannot simply mention 77,000. It's a mistake in the answer only. Bona fide baggage na, that one only, that personal belongings and all is there na, that bona fide baggage which you use for your personal purposes, that is exempted, that we call it as bona fide baggage. Okay, 10th question also done. Now we have to move to what? Question number 11. Okay. Sir, 11 now it is about. Sir, now you come back to the theory once again. Till now, what I explained is when they are coming to India for a visit, just they are coming for a visit, or else they went to foreign for a visit. Now, what we are discussing is about he is already residing in USA, or sorry, he is already residing outside India. Now he is shifting his residence itself is to India. Okay, let's say a person went and settled in US. Okay, then once Donald Trump became president, his job was gone. So again, he's coming back to India with transferring his residence. Now, sir, when he went for a visit, then the goods he'll be carrying na very less. If he is transferring his residence, the whole furniture, the home residence related items will also be there. No, so that's why they want to give some extra exemption amount as well, other than the GFA, this laptop and all. Other than the benefit which we said already, additionally he'll get additional, I mean extra amount also as exemption based on the number of years he stayed outside India. Okay, so this table we need to understand now. For that we'll be having annexure 2 and 3 also we should learn now. Okay, see here. He stayed in abroad 3 months. After 3-4 months only, I mean 3 months to 6 months period only. Sir, within 3 months only, if he is changing residence, na, they'll not even consider that. Only the general allowances which we discussed already, that only is there. After at least residing for 3 months, if he is returning back to India within 6 months, then he has an additional exemption of up to 60,000. Additional allowance of how much? Up to 60,000. In this 60,000 also, we cannot claim annexure 1 items. Not only annexure 1 items here, annexure 2 items also we cannot claim in this 60,000. Sir, now when you are changing residence within 3 months, I mean sorry, after 3 months but within 6 months, then you have an additional exemption of how much? 60,000. In this 60,000, annexure 1 items anyhow you cannot avail. Extra they are saying even the items which were mentioned in annexure 2 also, you cannot claim the benefit in this 60,000. What are covered under annexure 2? Annexure 2, na, there is nothing like these items and all we are not using currently. Only our grandfathers only used these things. Not grandfather, at least the before generation. Color TV. Who will bring color TV now? Home theater, video home theater, not the speakers and all. Video home theater. Dishwasher, maybe this might now. Then refrigerator, that also greater than 300 liters. Then deep freezer. So that time freezer used to be different and the normal refrigerator used to be different. That's why deep freezer. Video camera along with television receiver, sound recording, video recording. Then cinematographic films, the film which they used to record or shoot films, na, that one. Gold, silver in any form other than ornaments. So these are covered under annexure 2. If they are covered under annexure 2, those also cannot be availed as benefit or can be adjusted in that 60,000. Okay, then what you can adjust? The one which were covered under annexure 3 can be adjusted. What are covered under annexure 3? VCR, CD player, okay, music system, air conditioner, micro oven, word processing machine, nothing but the fax machine, kind of portable photocopying, Xerox machine, washing machine, LPG cooking range, personal computer, laptop computer, domestic refrigerator up to less than 300 liters. So the ones which are covered under annexure 3 can be adjusted in 60,000. But the ones which are covered in annexure 2 you cannot adjust in 60,000. I mean refrigerator na within 300 liters na fine you can adjust. Beyond 300 liters na you cannot adjust. Then VCD, VCR, those things you can adjust, but color TV you cannot adjust. Okay, but they'll not ask much more deeper into annexure 2 and annexure 3. You need not to buy heart also annexure 2 and annexure 3. Just for understanding only I said. Okay, it's fine if you just remember this table also. Annexure 1 only important. Annexure 2 and 3, even though a question comes on this particular point also, they'll not mix generally annexure 2 and annexure 3. They remember, I mean, they know, like we are not robots. Addition to the 50,000 GFA. No, no. Hmm. In annexure 1 we can claim, I mean that 50,000 we can claim. Yes, we can claim in 50,000. Yes. But don't think much more. Okay, that many complications they'll not ask in exam. They'll simply ask a question. I mean, you could answer a question just if you remember the limits as well. Okay, you need not to much more discuss. I mean, you need not to remember more about annexure 2 and annexure 3. You could leave that also. Just to differentiate annexure 2 and annexure 3. That's it. Okay. If you reside outside India for at least 3 months and you are returning along with shifting the residence and within 6 months, then the additional exemption benefit you will have is 60,000. If it is in between 6 to 12 months, then you have 1 lakh rupees benefit. 1 to 2 years now, then it is 2 lakhs. Above 2 years now, it is 5 lakhs. Okay. To sum up, sir, 3 to 6 months now, how much? 60,000. 6 to 12 months now, 1 lakh. 1 to 2 years now, 2 lakh. Greater than 2 years now, 5 lakhs. Okay, this alone, if you remember also, it would be fine to solve a problem. 3 to 6 months, 60,000. 6 to 12 months, na additionally 1 lakh. 1 to 2 years, na 2 lakhs additionally. Greater than 2 years, na 5 lakhs additionally. Sir, then what is this, sir? You have written so much, na. Sir, here there will be condonation of delays also. Condonation of delays, na. Let's say a person is coming after stay of 23 months. Sorry, not 23 months. A person is coming after a stay of 11 months only. If or 11 month 25 days he has stayed in outside India, now he is coming back. If another 5-6 days if he was there in outside India, then he might have got 2 lakh rupees as exemption instead of 1 lakh rupees. So he can apply for that one. Then they may give relaxation. Okay, for this there is no such kind of relaxation. So the simple thing is like, okay, here that relaxation will be there. Let's say they stayed for 23 months 25 days. Now they can ask like, how much are, if another 6-7 days they might have there outside India, they'll get from 2 lakhs to 5 lakhs exemption. So there is a condonation. I mean, there is a shortfall of 6 days, 7 days that can be condoned. I mean, that could be relieved and he might have provided the 5 lakh rupees benefit. See here where it is. A minimum stay of 2 years abroad immediately preceding the date of his arrival or transfer. Shortfall up to 2 months can be condensed. I mean, even if he stay for only 22 months also, he can avail this benefit of 5 lakh rupees if he apply to deputy commissioner or assistant commissioner. Next, the total, sir, in this 5 years period, he might have come to India and again went back to outside India. The time he spent in India should not be more than 6 months in this 2 years time. Okay. Sir, outside India, he is residing for about 2 years. But in this meanwhile also, he might be coming to India and again going back to outside India. The time he spent in India should not be more than 6 months here. The total stay in India on short visit during the 2 preceding years should not exceed 6 months. However, because of some reason, he stayed in India for 7 months. Okay, then also that can be condoned by principal commissioner or commissioner, even though short visits in India is more than 6 months, by recording the reasons in writing. Okay, you should stay outside India for a minimum of 2 years. However, if there is a shortfall up to 2 months, you can ask for condonation. They can do condonation. I mean, even 22 months can be considered as 24 months. Now, other condition. In the last 2 years, the time spent by you in India shouldn't be more than 6 months. But because of some unexpected reason, you spent here 7 months. You can apply again to commissioner and principal commissioner. They will even relax that one as well. Even though you have been in India for more than 6 months, you'll be relieved for that one as well. Next, this benefit of 5 lakh rupees cannot be availed in the last 3 years. Already if you have availed once this kind of benefit in the last 3 years, then once again you cannot avail this benefit. Okay, so all these are theoretically only, sir. For exam question, this para is enough. What is enough? 3 to 6 months, 60,000. 6 to 12 months, 1 lakh. Above 1 year and below 2 years, 2 lakhs. Beyond 2 years, it is 5 lakhs. So you could see in the sum as well. Come to question number 11, sir. Jagirdar, an IT professional and a person of Indian origin, is residing in Denmark. Where he is residing? Denmark. For the last 14 months. He wishes to bring a used microwave oven which cost is 1,24,200 and weighing 15 kgs. Sir, micro oven he is bringing, sir. Nowhere covered under annexure 2. Okay. If you have doubt, again go and cross check and come. Annexure 2. Is there micro oven covered in annexure 2? No. Annexure 2. Okay. He purchased the oven in Denmark 6 months back and he has been using that oven for personal use. He is not aware of Indian customs rules. Could you please provide him with the narratives of the concerned legal provisions? IT professional residing in Denmark for last 14 months wishes to bring and weighing 15 months with him during the visit to India. A person who is engaged in a profession abroad or is transferring his residence to India, he can bring household items where his stay is up to 3 to 6 months outside India, then he can bring up to 60. 6 to 12 na 1 lakh, 1 to 2 years na 2 lakh, about 2 years na 5 lakhs. How much he stayed, sir? How many months? 14 months. 14 months na 1 to 2 years. That means up to 2 lakhs. In the given case, Jagardar brings used household articles worth 1,24,200, which is free of duty. He is not liable to pay any duty. He can bring up to 2 lakhs without payment of duty. Sir, question number 12, the last one, it's not related to the shifting of residence, the normal one only. Here, both wife and husband will go on, will be staying outside India. Now they will be coming. The point is, let's say, if husband GFA, he availed only 30,000. He has some unused GFA of 20,000. Can he transfer that to wife? No. Okay, an item cannot be, sir, let's say they are bringing one camera for 40,000, another camera for 70,000. So what they thought na, one camera in husband account, the other camera in wife account, but husband is having that unused 10,000, no, so that they want to adjust with the wife. They cannot do that. Sir, husband, wife. Husband brought 40,000 camera, wife also bought a 70,000 camera. Now GFA, if they claim na, here 50,000 they can claim, but they have unused 10,000 na. So can they transfer this unused 10,000 to wife, and wife will have extra 50,000? So then if you adjust both, then they'll be having only 10,000. No, they're asking me, is it possible? No, individually only you need to check. One item has to be counted into one person account only. So here they lost 10,000, no taxable, nothing is taxable. Whereas here 50,000 only you can adjust, the other 20,000 is taxable, or on this duty can be levied. If you do consolidatedly, then 1,30,000 out of that 1 lakh, sorry, 1,10,000 out of that 1 lakh you adjust now, only 10,000 is taxable if you do together, but you cannot do like that. You have to do separately for each person. So do question number 12 also, then you'll have some better clarity. 12 or 13? 12. You don't know that one. This is personal computer. Computer you cannot avail benefit. Computer is taxable only. Only laptop is only duty free, because they mentioned it as laptop only. Sir, generally who will carry computer along with them, sir? Laptop, no, they'll carry along with them. So that's why the exemption is given only for laptop. Annexure 3 is you can avail exemption only, no? GFA. Hmm? Hmm. This is like in June 2023 now. This was asked in old syllabus, not in new syllabus. So that time there used to be 3 marks and 4 marks as well. Okay, 7 marks na, they might not ask this kind of question. They'll ask this kind of questions only for MCQs now. 2 marks MCQs. But these kind of questions, I mean question number 12 or the other questions can be asked for 7 marks. Plasma also same as LCD and LED only. So see here, first one, Mr. and Mrs. Kapoor visited Germany and following goods after 6 days stay abroad. Only 6 days. So personal belongings exempted. Personal computer, Mr. Mrs. both are there, sir. Personal computer, it should be added to one person. Okay, we'll take for Mr. only 1,36,000. Laptop anyhow exempted, sir. Then 2 liters of alcohol, GFA only, within GFA. Okay, 2 liters of alcohol also will take it to Mr. only. Mrs. No, it will not be good. Yes, you can do it. I just applied moral ethics, that's what. Okay, even if wife only drinks also, it has to be carried by husband only, na? You cannot be so genuine, Shankar. You cannot say like in airport, like no, 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 I won't drink. My wife only will drink. For Mrs. Camera, we'll put sir 87,400. Then what are the other items, sir? Plasma TV. Plasma TV again we'll put it to this fellow only 1,25,000. So these are the items. Both will get how much? 50,000, 50,000. The balance is taxable at a rate of 38.5 percentage. Sir, plasma TV is covered under annexure, na? Plasma TV is covered under annexure. So we cannot put here. So first we'll do 50,000, 50,000 subtraction we'll do. After subtraction we'll get here how much? 37,400. Here we'll get 87,600. Now we'll add this plasma TV as well. How much? 1,25,000. Now on this simply it is 38.5%, 38.5%. Sir, very easy chapter only, sir. We will only make this chapter complicated by having confusing regarding the tax rates and annexure. Otherwise the chapter is simple only. Hello. Okay. So now we are starting with the chapter duty drawback, sir. Duty drawback is nothing but refund. Duty drawback. Drawback na taking back. So the duty which we paid will be taking back na, it's nothing but kind of refund only. There are two types of duty drawback here, sir. One is under section 74, whereas the other one is under section 75. The first one is duty drawback on re-export of imported goods. Duty drawback on re-export of imported goods. So 74 na, you imported some goods and those goods are being exported as such. Maybe with usage or without usage also. Let's say you purchase some goods from USA. Those goods got delivered to you. You paid customs duty, everything you took to your place as well. But after 2 months of usage, you didn't like the quality. Okay, that's why you want to return those goods. You'll be re-exporting back to the country from where you imported. The point is like the seller agreed to take back the asset and he'll be paying you the money. Maybe he'll deduct certain amount. He'll be taking, I mean, he is ready to give you back the money. The point is, will the customs duty will also get refunded or not? Because let's say if the import value is like the CAF value is 50 lakhs, on that customs duty itself might be some 25 lakhs. Overall, it came to 75 lakhs. Now the seller agreed to give back this 50 lakhs once you return the asset or return the machine or good. But the point is, will the customs will also be refunded? Yes. Under section 74, there is such option. There will be duty drawback on re-export of imported goods. Will they give full 25 lakhs? No. That depends on whether it is used or not, how much period it has been used. That will be depending on the type of usage or the period of usage. Section 74. When it comes to 75, sir, it is something different. You imported some raw material. By using that raw material, you produced a good, which might be a finished good. So now the good which you imported and the good which you exported are not same, because it got changed its substance or it got changed its form. So now we cannot find out a nexus between the, I mean, nexus and all we could find out, but we could cannot prove it directly like this is the good which we imported and this is the good which we are exporting. Maybe the good which we are exporting has that raw material inside it, but on face we cannot find out that this and the imported one and the exported one are the same. In such case also we'll get refund for the import duties which we paid initially on raw materials. Okay, let me tell you here. Sir, first example na under 74 na, let's say A, B, two persons are there. A is in USA, B is in India. So now from A, B got imported a car. A car was imported. Now on this car, there will be BCD. All the customs duties might have paid. Customs duties paid. Now after the good got delivered, okay, after the goods got delivered, he'll be returning back it. Maybe he didn't like the quality or because of any reason he's returning the car. I mean, once he imported, again he's returning now, it is doing what? Exporting. So on export, the customs duties which he paid initially will be given back to him. That giving back itself is called as duty drawback. Now the next question is like whether it is available on every kind of good. No, there are certain ineligible goods also that we'll discuss again. Next one, will we get the full amount as duty drawback? No, it depends based on whether they are used or not. If they are used, then again for how long they have been used, either for business use or personal user, those conditions will be applicable. Based on that, we'll be getting a certain percentage of duty drawback. Okay, this is the first point. Second one, from A, this time we imported raw materials. These raw materials were again further processed, and after processed we got a finished good. Now this finished good is being exported. Okay, now on these raw materials, when initially this raw material is imported, on this certain customs duties got suffered, BCD and all. Okay, since subsequently the output is getting exported na, the initially suffered import duties will also be refunded. The initially suffered import duties will also be refunded, but they'll not call it as refund, they'll call it as duty drawback. So the duties which we paid initially on a imported good will get refunded to us on subsequent export. The export could be in the same form or in a altered or a processed form also. If it is in the same form, then section 74 covers. If it is in a different form, then section 75 covers. Drawback for section 74. Refund of duty or tax or cess. So, sir, under 74, here they are explaining what taxes will be given as refund. Okay, drawback now they are giving definition. I mean, what taxes they are going to give as refund. Refund of duty or tax or cess, I mean BCD will be giving integrated tax, compensation cess along with BCD, safeguard duty, anti-dumping duty, countervailing duty. So all the taxes under the customs, whatever you paid, you can claim it as duty drawback if it is under 74. So what is 74 means? You are exporting the good in the same way which you imported. Conditions to be satisfied. What are the conditions to be satisfied? Originally, the goods should be imported into India and on that duty has been paid. Originally, they are imported and on that duty has been paid. Second one, those imported goods are being capable of easily identifiable as that they are originally imported. Second one, the goods should have been entered for export either on a shipping bill and subsequently the goods should be entered on a shipping bill. Then the goods should have been identified to the satisfaction of AC and DC, Assistant Commissioner and Deputy Commissioner satisfied like, okay, these are the same goods which were initially imported. If they are convinced like both the goods are same, then they'll initiate proceedings under 74. Okay. The concerned authority can be satisfied. How they'll get satisfied? Generally on preliminarily by physical examination. They'll go and check the goods. Let's say if it is car, car will have this chassis numbers and all. Identification number, engine will have some kind of number, so they'll check that number on the initial import, what number has been mentioned on the documents, and now when again they are exporting it, what number is there on the goods and all. If they both match now, then they'll convince like the both goods are same. As an alternative, instead of physically examining the goods, they can even just rely on the description, quantity, identifying marks and packing also. Instead of actually opening and verifying the goods, sometimes they could even rely on the documents as well. But primarily they'll rely only on physical examination. Okay. Then, sir, I imported 5 years back, sir. Now I wanted to export back. Then also will they give duty drawback? No, there are certain time limits also for them. The goods should have been entered for export within 2 years from date of payment of customs duty. On import will pay customs duty na. From that day within 2 years they should be again submitted for export. However, if it was taken to ACDC, then it, sir, don't put CBIC, put it as ACDC only. Strike off CBIC here and put ACDC. ACDC. This period can be extended up to another 2 years by ACDC by the Commissioner of Customs. Okay. So, generally without any extensions and all also within 2 years, if you are re-exporting them, you will get duty drawback. Whereas if there is permission of AC, Assistant Commissioner or Deputy Commissioner, then even after 2 years also, if you are exporting them, you will be getting the duty drawback. Okay. Next, sir, duty drawback is not allowed in the following cases. First one, wearing apparel after being used. Okay. Our Yogesh ordered some clothes from USA. Now he used them here like 5 times, 6 times. He went for marriage and all by wearing those dress and all. Then afterwards again, he's returning them, saying like, we'll see this now, sir. Zomato generally many people will do. Okay, they'll order biryani. Once biryani came, they'll eat it and they'll put a photo like chicken didn't came in biryani. Then again they'll get refund as well. And even in, I have seen these people also like in Amazon and all, big wedding, not wedding, functions related, they'll wear heavy dresses and all. They'll order them on Amazon and one day they'll wear and neatly they'll fold again. Tags and all also neatly they'll remove. They'll wear for the function and again they'll pack that, they'll tie the tag and all, they'll be sending back again, they'll be getting the refund as well. Okay, the same way Yogesh also tried here. What? But here it is not like one time he used it for so many times. Then also he is returning. Okay, he'll not be getting anything, sir, as duty drawback if it is a wearing apparel. Wearing apparel before use, fine. After use, if you are sending, you will not get any duty drawback because once they were used, it will not have that value. The value will get down drastically. And even tea bags, the tea bags once they are used, now who will buy them again? Okay, if you are sending back them also, you will not get duty drawback. Second one. Third one, exposed cinematographic film passed by Board of Films of Censors in India. Sir, nowadays like it is satellite, but previously when Hollywood movies has to be released in India, so those Jurassic Park, Titanic, that time, what they'll do, they'll send the film in boxes and all, they'll put the film and the film will be sent to how many ever copies they want, that many copies they'll be sending to India. So that in exposed cinematographic film, sir, film is an intangible asset, but the moment it was kept into a film and all, it will become tangible as a tangible item, it will become good. So on that customs duty levy, once the exhibition got over, okay, once the movie run got over, those films and those copies will be again sent back to the original producer and all. So once they are returning back, will they be getting duty drawback? No. The total purpose has been served, sir. So when it comes to car and other goods, the total usage was not over. Okay, even afterwards also they can be used. But when comes to this kind of cinemas and all, they were sent to India only for exhibition, and that purpose is achieved. So they will not be getting any customs duty refund. Okay, because the purpose has been achieved. Exposed cinematographic films. And the next one here, sir, unexposed photographic films. Unexposed photographic films, sir, previously there used to be this kind of cameras where there will be negative and all. Okay, in childhood you might have seen those kind of cameras, like the photo reel will be there. Okay, in a camera there will be only 24 photos we could take. Okay, then again you need to change the reel and all. So those unexposed photographic films, unexposed photo not yet taken. Okay, Once you click a photo, it will become exposed. Sir, previously, if you remember here I said exposed. Exposed now because film is loaded in that. So that's why it is exported. Here it is unexposed because photo is not yet taken. Once we take a photo, then it will become exposed. So these unexposed photographic films or X-ray films were imported. They were imported and here they were used. I mean used now, they were exposed. Afterwards, if you export also, you will not be getting any duty drawback because these photographic films and all, once they are got exposed, they lose their value. So they will not be getting any duty drawback. So only on these items will not get duty drawback once they were exported after usage. Before usage, if these items also sent, before usage, if these goods are sent, then you'll be getting duty drawback. Okay, what are those? Wearing apparel, teachers, exposed cinematographic films, unexposed photographic films, paper, plates, and X-ray films. Okay, now we'll be looking after the percentages here. Sir, here towards the right side, here goods are imported for personal purpose. Na? Here add motor car. Motor car even imported for business is also same conditions applicable. This side it is business purpose, goods which were imported for business purpose. This side it is regarding goods which are imported for personal purpose. Okay, but here you add even motor car which is used for business purpose. Okay, so understand, sir, we have imported goods, we are re-exporting them. Once we imported, we might have used those goods for business purpose or even for personal purpose. But if it is a motor car, na, even though it is for business purpose, this kind of, I mean, for the normal personal related goods, treatment will only be applicable. Okay, now coming for the goods which were used for business purpose, they might be re-exported after use or without use. If they were re-exported without use, now then the maximum duty drawback they'll provide is only 98% of the duties which were initially paid. Let's say you paid 1 lakh, you'll not get 1 lakh again as refund. 98,000 only you'll get. Okay, now Yogesh might ask like, sir, why those 2,000 they are not giving? That is my money, na. Once I am returning the good without usage, they need to give back me the total 1 lakh rupees, na. Then customs simply say like, we are not sitting here freely for you to process bill of entry and bill of export and all. The 2% which they are retaining, that is for the commission or charges for processing all those things. So that's why they'll refund maximum of how much? 98% only. But that also has to be sent only within 2 years from the date of payment of duty. I mean, it has to be re-exported within 2 years from the initial date of payment of customs duty. Next, if it is sent after use now, if they were sent within 3 months, then you will be getting a percentage of how much? 95. 3 months to 6 months now, you'll get 85%. 6 months to 9 months now, 75. 9 to 12 now, 70%. 12 months to 15 months now, 65. 15 to 18 months now, 60%. Above 18 months now, nil. So there is no proper pattern here to remember this. So we need to remember it as something like a phone number only. 95, 90. Okay, 95, 90. Then 85. From 85, sir, it will jump to 75. Then, oh, sorry, 95. Should I directly jump to 85, then 75, then it will be 70, 65, 60. Okay, now we need to compose a tune for it, then you'll remember. 95, 85, 75, 70, 65, 60. Okay, compose a tune. 95, 85. So if you put something in a melodic way, then only you'll remember, otherwise you'll not remember this. Okay, start. Sing. Ah, 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 ah. Okay, 95, 85, 75, 70. That's only, na? Okay. Yogesh, we cannot fulfill all your personal requirements here. Okay, 95, 85, 75, 70, 65, 60. 95, 85, 75. Okay, first three, sir. 95, 85, 75. Then 70, 65, 60. So then what happens beyond 18 months now? You'll not get any duty drawback if it is for business use. Okay, only till 18 months we'll get duty drawback. Afterwards, we'll not get duty drawback. 95, first 3 months. 85, 6 months. 75, up to 9 months. Then 70, 12 months. Then 65, 15 months. Up to 18 months, na 60. That's all. Okay. Personal use, na it would be easy only, sir. Either it is personal use or if it is a motor car, na for every quarter in first year, you have to reduce 4% for every quarter. First quarter na 96%. In a year, first quarter itself we are sending back na 96%. Second quarter na 92. Third quarter na 88. 96, 92, 88. Then fourth quarter na 84. Okay. So first year will reduce 4%. Second year reduce it by 3%. Okay na. Next year 2.5. Next year 2. Okay. 4, 3, 2.5, 2. So for every year, for the first year in a quarter, you should reduce it by 4%. In the second year, you should reduce it by 3%. In the third year, you should reduce it by 2.5. Fourth year, you should reduce it by 2%. Okay. But whenever, sir, year 3 and year 4, you cannot send directly as export because it is beyond 2 years. So you should take permission of assistant commissioner or deputy commissioner. Okay. Somewhere it will mention as CBIC also, sir, but it is actually AC and DC only. Okay. So you should take permission of whom? AC and DC. So if the machine or if any good is brought for business use, you will get duty drawback. If it is sent before use, na 98%. It should be sent within 2 years. After use means you will get 95, 85, 75, 70, 65, 60. 95 when it is sent within 3 months. 85 when it is sent within 6 months. Next 75 when it is sent within 9 months. Then 70, 12 months. 65, 15 months. 60, 18 months. That is the duty drawback you are going to get. Okay, when it is a personal use related or motor car, irrespective of business use or personal use, in first year if you are re-exporting it now, for every quarter reduce it by 4%. In second year reduce it by 3% for every quarter. Third year 2.5 for every quarter. Fourth year 2% for every quarter. Okay. So this negative list we'll be discussing at last towards the chapter. Before we'll going into sums now, this we'll do. This negative list also very important while solving problems, but that will come at last. If you are sending for duty, if you are sending goods as duty drawback now by post, procedure for claiming drawback on goods which were exported by post. You got those goods also as by post. Now you are sending those goods also by post. So the outer packing of this box should contain like this drawback export. On this it should be clearly mentioned it as like it is a duty drawback export. Then the exporter shall deliver to the competent postal authority a claim in the prescribed form. So if you want to get duty drawback na to the postal authority na or courier partner, you should fill a form separately regarding the duty drawback claim and you should provide it. Then the date on which aforesaid claim form is received by the proper officer. Sir, now you give to postman only. This postman has to take it and it should submit it to the proper officer in customs. Only when the proper officer receives that one, then it will be considered as the date of filing of duty drawback. Okay, then what if there are any different deficiencies in that particular claim you made? Deficiencies na errors or omissions or mistakes. Then in case the aforesaid claim is not complete in all aspects, the exporter shall be informed with the deficiencies within 50 days by a deficiency memo. They'll raise a deficiency memo to the exporter within 50 days if there are any defects in the claim he made. Okay. If deficiency memo issued na, then the originally made duty drawback claim will not be considered as made. Only after rectifying the mistakes only it will be considered as made. Okay. So when the exporter complies requirements specified in deficiency memo within 30 days, he shall be issued an acknowledgement. The day when such acknowledgement is issued, that day itself will be considered as the date of filing of claim, not the initial date. Initial date you filed, but that time there are mistakes, no? So only after rectification, if you file newly, that day when you get the acknowledgement, that itself will be considered as the date of filing the duty drawback claim. Okay. What if it is other than by post? So this is the process if it is sent other than by post. In case exports are other than by post, then exporter shall at the time of export of goods state on the shipping bill or bill of export. Shipping bill na airways or waterways shipping bill. Land route na will be providing bill of export. In that bill of export, he should mention the description, quantity and other particulars that are necessary. Okay, and even make a declaration that the duties of customs were paid at the time of import and they were not taken into use, or if were used, how long they were used. Of regarding that, he should make a declaration. Let's say if they were 6 months used, then he should file a declaration like stating like they were used only for 6 months, not used na, such declaration only he should put. Then the time limit for filing duty drawback claim. The duty drawback claim has to be made in a prescribed form within 3 months from the order permitting clearance and loading goods for exportation. Nothing but let export order they will give na when you are exporting. From let export order date within 3 months duty drawback claim has to be made. Sir, you imported goods. Again you are exporting. Once you are exporting, before the goods loaded into the conveyance, you will get a let export order. From the date of let export order, within 3 months you need to submit the duty drawback claim. However, there is extension possible. If you go to ACDC, from the original 3 months, there will be another 3 months extension or condonation of delay. 6 months time you will get. Okay. If you go to Principal Commissioner and Commissioner of Customs, originally 3 months, sir. Then ACDC extension 3 months. And again, Principal Commissioner will give another 6 months as extension. But for whenever you are going for extension, you need to pay application fee. When you went to ACDC, you need to pay application fee as 1% of FOB value or 10,000, whichever is less. When you go to Principal Commissioner or Commissioner of Customs, you need to file 2% of FOB or 2,000, whichever is less. Once again, I am repeating, sir. When the goods are being sent, exported other than by post, what is the process? You need to file shipping bill or bill of export. In the shipping bill and bill of export, you need to provide all the details, documents, packing numbers and all. Then you should give, then the exporter should give a declaration stating like, initially when those goods are imported, customs duty was paid. First declaration. Second, if they were not used na, stating like not used, you should give a declaration. If they were used na, how long they were used, for that also they should give a declaration. Then the duty drawback claim has to be made in a prescribed form within 3 months from the let export order. However, if you cannot file within 3 months, there is extension possible for you. If you go to AC and DC, they'll extend it for another 3 months. For that, you need to put an application. The application fee is 1% of FOB or 1,000, whichever is less. Next one. If that time also left, initial 3 months, extended 3 months also lapsed, then you can go to Principal Commissioner or Commissioner of Customs. They'll give you another 6 months. Original 3, ACDC 3, additionally another 6 months. Okay. Now you need to pay fees of 2% of FOB or 2,000, whichever is less. Okay, when you file a duty drawback claim, what are the documents to be provided? See, triplicate copy of the shipping bill. You'll have shipping bills are 4 copies will be there. Out of that, the third copy you should provide here. Then copy of bill of entry or shipping bill. Then import invoice. The originally at the time of import, whatever is the invoice is there, that invoice you should submit. Why, sir? Because to compare the exported goods and imported goods are same, they need the original invoice at the time which you imported. Next, evidence of payment of duty paid at the time of importation. Sir, you are asking for duty drawback because initially on them duty paid. So there should be proof of payment of duty initially. For that they are asking you the proof of payment and even the initial import invoice. Next, permission from RBI to re-export them if it is required. Next, export invoice and copy of bill of lading. Bill of lading now it will be given by the shipping company. So these documents you should provide. Okay. So with this we completed section 74, sir. 74 now very simple. When we will get duty drawback under section 74, the good we imported and the good which we are exporting are same. The good which we imported initially and the good which we are exporting again are same. Okay. Maybe the export is after usage or without usage. That depends on situations. In such cases, if you want to get back your duty, you'll apply for duty drawback under section 74. Okay. There are certain conditions, sir. What are those certain conditions? The imported goods and exported goods should be same form, and they could be identified by the AC or DC, and they should be exported back within 2 years from the date of payment of duty. However, extension can be given for another 2 years by AC or DC. There are certain goods on which duty drawback is not allowed under section 74 when they are sent after usage. Wearing apples, teachers, exposed cinematographic films, unexposed photographic films and x-rays. Okay, on them you cannot claim duty drawback. Then come to the duty drawback. When the goods are re-exporting, the duty drawback percentages are decided considering whether it is for business use or for personal use. If it is for business use, if it is sent, if the goods were re-exported without use, then you will get duty drawback of maximum of 98%, and the export has to be made within 2 years from the initial date of payment of duty. If it is after use, 95, 85, 75, 70, 65, 60 within 3 months. Within 3 months, how much? Within 6 months. Within 12 months. Within 12. I'm not asking in order. Okay, so okay, now fine. How alert you are? After 18 months. After 18 months, nil. Okay. Within 6 months. Within 6 months, 85. Sir, because in question they'll not ask you to write the whole table and all. They'll simply say like the goods were sent after 6 months. The goods were exported back after 7 months. So then you need to find out suddenly. Okay. So wow, within 3 months, the goods were sent after 10 months. 70. It's okay. Simple. Okay, sir. Again, we'll be writing somewhere roughly. If you don't remember, 95, 85, 75 and all. First 3 months, 95. Then 85. Then 75. 3, 6, 9 also done. Okay, then 70 next one. So between that it when we'll be getting how much? 10 months means 70%. Like that only everybody will write. Okay. Okay, then coming to personal use or motor car for business use also. Okay, then in the first year itself it was sent back. For every quarter we should reduce 4%. Second year 3%. Third year okay. Fourth year 2%. Clear Now tell me, what is the percentage of duty drawback you can claim when a TV imported for personal purpose is now being re-exported after usage of 18 months. 18 months. Personal use this is. And that only 18 months, why ACDC will come? After 2 years only ACDC will come. So 18 months which year it will go? Second year. First year 12 months, 18 months second year. Second year 6 months again. So that means it will be under the second quarter. So first year 4 quarters went off, second year 2 quarters went off. So you need to calculate. First year 96, 92, 88, 84, then 81, 78 is the percentage you will get when you are exporting back it as after 18 months. You understood now? Little bit now? Okay. Now in the same grounds, tell me, when it was sent after 27 months, ACDC permission is got. 28 months, not 27, 28 months. ACDC permission is there. 28 months. Calculate and tell. 28 months. It was sent after 28 months. Sixty. 67 it will come. Okay, let us see here, sir. 67 only. Year 3, second quarter. It which is how much? 67. Sir, simply 28 months. Now what we'll do? 24 months are 2 years lapsed. Another 4 months means third year 2 quarters. So first year For every quarter 4% if you reduce na 96, 92, 88, 84. First year end you got 84. Second year again for every quarter 3 months. So 3 into 4 12% if you reduce na, you'll come to 72. Then in third year for every quarter we should reduce 2.5. Already 2 quarters, that means you should reduce 5. From 72 if you reduce 5 you'll get 67. Or else if you remember like this only na, it is also fine. I'm not a robot, generally I cannot remember like this. If you are okay, we can remember only 4, 3, 2.5, 2. So when it is actually asked in exam na, we should write roughly and we should calculate. This we don't have choice. 95, 85, 75, 70, 65, 60. Hmm. If they were not used, we can get 98% duty drawback. Okay. So in the heading, if you see duty drawback of import duty is not allowed if those goods are okay. Okay, sir, you will get duty drawback if they were sent without used. Okay, na? Only after usage na you will not get duty drawback. Okay, now come back to the question, sir. Now come to the topic. Now we are into section 75, sir. When section 75 will come? The goods imported and the goods exported are not same. We cannot identify them as the same. Okay. That means what happened? We imported raw materials, sir. Let's say I imported plastic ore. The plastic ore which was formed. Okay, the plastic ore. Now I have processed it and I have converted into molds, maybe in chairs, tables, or in different formats I made. So now we cannot identify the good which I imported and which I exported are same, because in the initial raw material which I imported, it got processed. Maybe some other materials also got added into it. So because of that, we cannot identify that they are the same. If we cannot identify like they are the same, then then also we'll get duty drawback under the section 75. Sir, why duty drawback? Duty drawback actually, duty drawback itself is also a export promotional scheme to encourage, especially 75. 74 na, at least it's not export promotion. The original duties suffered will be giving back because the good is not in India. But 75 na, it is directly an export promotion scheme. So if you are an exporter, sir, now I am mixing with FTP also, listen here. In FTP, we have an option like duty-free import authorization, EPCG and all. That means if you want to produce a good which will be exported, initially itself you can go to DGFT. DGFT na, Director General of Foreign Trade. Then you will ask him for a permission like, give me an authorization to import goods without payment of duty, or to import capital goods without payment of duty. Such permission you can take from DGFT. Okay. Let's say you didn't got that authorization. So you imported goods with payment of duty only. But even with payment of duty imported also, subsequently if your goods are being exported, whatever the duties you suffered will be given back to us duty drawback. Sir, in FTP, whatever is the advance authorization scheme, DFA scheme which we'll discuss, there initially itself you will not pay customs duty. You will import raw materials without any duty payment. Whereas this option says like first pay duty and import. Then afterwards, once we export, na, the duty is paid will be refunded to us as duty drawback. So which is better na? Advance authorization is much more better because that will save our working capital as well. Otherwise, we need to pay custom duty only after export only. We'll be getting it as back. So till this point of time, our money will get stuck with the government. So there will be some pressure on working capital. Whereas advance authorization, it will be much more flexible for you because first itself will not pay duty. You'll have that capital saved. Okay. So this is also an export promotional measure only. The goods exported are entirely different from the state. The input could be either imported goods on which customs duty paid, or even indigenous goods also. This is much more important. See, even if you manufacture using indigenous domestically produced goods also, on that if any taxes are suffered and which were not availed as ITC, that also you can take as refund duty drawback. The existence of imported good or indigenous good on which excise duty paid should be in the final product should be capable of verification. At least we could verify and found out like the raw material which we said is used for production of such good. Next, The goods, namely the inputs, might have undergone changes in physical shape, property, etc. They were not in the same shape. The quantity of inputs per piece of final product may not be uniform. Okay, so here see, in 74 I said like duty drawback na refund means you will get all the customs whatever you paid, GST, BCD, social welfare such as safeguard duty, anti-dumping duty, everything you will get as refund. Here the refund of duty means here also you will get everything as refund except GST and cess. Why not GST and cess? Na GST and cess already you avail it as ITC there. Sir, here he is a manufacturer. Since he is a manufacturer, if he import any good, on that if GST is suffered, na, such GST he might have already availed as IT. Sir, understand. Okay, leave duty drawback for the time being. You have purchased goods from a person. That also from outside India. Import. On import, na, he'll be giving bill of entry. Bill of entry also there will be IGST. That IGST, since it is the inward supply, what you will do, you will claim as ITC and it is already used. If already ITC you claimed and if it is used, again if they give duty drawback, na, then it will be double benefit. So that's why IGST will not be given as duty drawback because already that benefit you got. Sir, what if that IGST I didn't use? I just kept that IGST and I didn't use. Then also for that IGST, you will make a refund claim through GST refund applications, not through customs refund process. Okay. So here the refund will be given only with respect to customs duties except GST and cess. Okay. So now the question is how the refund will be given. Are there any rates fixed or the actual rate itself will be given? Sir, yesterday I said something about Sion. You remember Sion? Do you remember Sion? Standard input and output norms. Why these are framed? Because I said like where DGFT gives an advance authorization. Advance authorization of what? Sir, there is an exporter. This exporter to produce his goods, he need raw material. He need raw material. So what DGFT gave him a benefit of? DGFT gave him a benefit of import raw material without payment of duty free. The DGFT gave him an approval or permission to import raw material duty free. Without payment of duty, he can import raw material. That's the benefit he has. Now the point is, this exporter might simply say like, even though actually 50 tons of raw material is enough, but he might import 100 tons of raw material since it is duty free, and out of these 100 tons, 50 tons he may sell in the domestic market for a margin and all. So that kind of exploitation of this chances might be there. So to control that, what DGFT will do na, he'll be having a Sion na, for a standard output, how much input is required, such kind of calculations will be there. If you want to make simple, if you want to tell, if you want to make 10 dosas, how much butter is required? There will be some calculation, na? Or else like let's say in a house there are 4 members are there. For 4 members, how much rice is needed to cook and all? Okay, so that is nothing but the standard input output calculation. For an output, how much input is needed. If such kind of records are there with DGFT, na, even if this exporter says like, no, I want 100 tons of raw material to produce that goods, DGFT will not agree. No, we have records of it, 50 tons would be enough. This is the standard input only, so we will give permission only up to 50 tons, like that they'll say, and they'll restrict the exploitation by the exporters. Okay, the same way this Sion will be used in the case of duty drawback as well. This Sion will be used even in the duty drawback. Sir, it's not only for that purpose, because the raw material we imported, sir. This raw material we sent into the production process. We sent into the production process. Once we sent into the production process, out of this raw material which we sent, there is 5% normal loss out of the material sent. There is another 5% abnormal loss, 10% gone. Now, out of this produced also, the finished goods which they got also, there are two products, A and B. A is the main good, whereas B is the byproduct. Now, B byproduct we are selling in India only. Only A we are exporting. So that means whether the whole raw material we are exporting or only a part of it is getting exported. Part of it is only getting exported. Normal loss, within India only. Abnormal loss got in India only. Even out of the other 90% only the main good is getting exported. And there is even a scrap also. After A and B also there is scrap. The scrap also sold within India. So we cannot say the total duty paid on the raw material will be given as refund, because only a part regarding that raw material has been exported. Only with respect to such part only they will be giving duty drawback, not for the total raw material which they imported, because everything is not in the export good. Some part is there in the import good only. Not everything in the import good, only some part is there in the no, it's fine. Only some part is there in the export good. So to that extent only they should give the duty drawback. So now the question is how they will calculate all these things. So they'll take data from almost every industry, every company, and based on those industry data, they'll come to an average. Like let's say, out of this raw material, maybe 60 percentage will only be form part of finished good in pharma industry. Example, in some other industry, maybe 40% will be there in the finished good. Like that, first they'll come to one calculation, and considering this, they'll give a percentage. For us. So that percentage they'll be fixing for us. Okay, by considering the back end calculations and all, how much normal loss will go, how much byproducts will be there. Okay, how much will be really exported. Considering all those things, whether only BCD suffered, social welfare such also suffered, anti-dumping duty also suffered. Considering all those things, they'll fix a percentage. What we need to do this percentage now? Let's say simple thing, sir. For us here, duty drawback calculation is simple. Concept understanding only little tough. Okay, they'll ask us to simply take the FOB value of export. Let's say the export I am doing is for 50 lakhs. Now they'll give a percentage. The percentage which they give is like, let's say, on this particular industry, 22% as the duty drawback rate. Now on the export value, not on the import value, we are applying on what? On the export value, we'll apply this 22%. How much? 11 lakhs. So this 11 lakhs will be getting as duty drawback. Sir, the question is, but actual customs duties we paid on imported materials is 30 lakhs, and we are sure like the whole 30 lakhs is within the export goods only. Nothing got wasted. Everything was there in the export good only. The duties which we paid initially is how much? 30 lakhs. But whereas we are getting as refund is how much? 11 lakh. So we are questioning this percentage given by the government. Okay. So this percentage which you give is not adequately or properly calculating the refund amount. Then you could ask or you could challenge this one. Then they'll give you a special rate as well. Instead of 22 general rate, they'll give you a special rate as well. Okay, now we'll give names also. So initially I said this 22 percentage on this 22 percentage and all they'll put for every type of industry different rate. For pharma industry there will be one rate. For other automobile industry there might be one rate. For any chemical manufacturers, paint manufacturers, based on the type of manufacturers, the percentage will go changing. Okay, how they will arrive this percentage now? Considering CON, considering normal loss, considering the duties suffered, considering the export values, everything they'll consider and they'll fix a percentage. This percentage is fixed or called as all industry duty drawback rates. All industry duty drawback rates. They will be notified by the government itself. So our job is simple. Take the FOB value of export. For your industry, whatever is the all industry duty drawback rate applicable, multiply it with that amount you will get as duty drawback. In general, this will happen. But there will be certain cases where the actual duty we suffered is 30 lakhs. But what we are getting by applying this percentage is only 11 lakhs. There is a significant difference between the duty we suffered and the duty which we are getting back as refund. In such cases, what we need to do now? We can apply for, sir, this 22 percentage is what? All industry duty drawback rate. Now we can ask for a special rate, special brand rate. We'll ask for what? Special brand rate. When we can ask for special brand rate? Now, by applying the percentage given by the norms committee. Sir, these rates are given by norms committee. by using the percentages given by norms committee, if at least 80% of the duty suffered is not given as refund, sorry, not 80, yes, if at least 80% of the duty suffered is not given as refund, then you can ignore the original rate given and you can ask for a new rate. You can ask for a new rate to be proposed considering your situations and circumstances. Sir, let's say how much you got, sir? 11 lakhs. How much you paid? 30 lakhs. I mean 11 lakhs out of 30. Now how much percentage you got? 11 by 30 into 100. How much percentage? 37. So that means out of the duties paid, you are getting how much as refund? Only 37% you are getting refund. What they said, if minimum of 80% you are not getting as a refund na, by using the rates proposed, all industry duty drawback rates, then you go and ask for a special brand rate. So in this situation, what you can do, you are not mandated to accept this 22%. You can go and ask for a special brand rate. When you ask for special brand rate, na, again they'll ask for you all the production process, production details, how your production flow will go, what are your input specifications, how much output will get, what are the byproducts you will get, joint products you will get, what is the scrap will be there, all those details they'll ask, and again they'll arrive you a brand rate. Okay, then they'll calculate a brand rate. Brand rate also, let's say this time they calculated 40% or 50%. Then 50 lakhs into 50%, now you'll get how much? 25 lakhs as duty drawback. Like that they'll be giving. Okay, first considering the industries itself, overall industries, they'll be giving a all industry duty drawback rate. If you are not satisfied with the all industry duty drawback rate, by using the all industry duty drawback rate, you are not getting at least a minimum of 80% of taxes suffered. You are accepting the rate, but by applying that rate, actually you paid 30 lakhs, but how much you are getting? 11 lakhs, which is not even 80% of the taxes suffered. So in that case, if you apply, then they will be getting a special brand rate. So what if I belongs to an industry, and for that industry, government not even proposed an all industry duty drawback rate. I belongs to a insignificant industry or a niche industry which has no much market share and all. So government didn't even find out an all industry duty drawback rate for my industry. Then also you apply for them. Then they'll give you a brand rate. So here there are three rates: all industry duty drawback rate, brand rate, special brand rate. All industry duty drawback rate na, considering the major industries and all, government itself already came with a rate considering the average of input, output, everything. Then if my industry is not covered in the rates which they notified, then I can ask for a brand rate. There is an all industry duty drawback rate for my industry, but the problem is, like, by applying that rate, I am not getting at least a minimum of 80% of taxes paid as refund. Then I can go for what? Special brand rate. Okay, so see here, sir, average amount fixed by the government taking industry data as prescribed percentage of FOB for duty drawback. If air na all India rank, sir, this is actually air na all industry rate. All industry rate not fixed for a product applied to principal commissioner or commissioner within 3 months of let export order for fixation of duty drawback. From export within 3 months you should apply. Sir, my industry is not covered anywhere. You should fix a separate rate for me. Then all industry rate is there. But the problem is such rate doesn't even get you minimum of 80% of the taxes suffered as duty drawback. Then you can go for go to principal commissioner and commissioner within 3 months for fixation of special brand rate. Okay, sir, what if the 3 months period got lapsed? Then there is an extension of another 3 months with a fees of 1% and 1000, whichever is less. If you go to principal commissioner and commissioner, then there is a further extension of 6 months with a fee of 2% or 2000, whichever is less. For fixing brand rate and special brand rate, you should apply within 3 months. 3 months from when? Let export order. If 3 months got over, then you have extension facility also. If you go to AC and DC, another 3 months with 1% of FOB or 1000, whichever is lower as fees. If you go to PC, principal commissioner or chief commissioner, they'll give another 6 months with 2% of FOB as fees or 2000, 2% of FOB or 2000, whichever is lower as fees. Next one. Sir, next pages and all will not read fully, sir. Only two parts I will be explaining because others and all not important. Coming to provisional drawback. Sir, many times asked, sir, provisional drawback in exams. Provisional duty drawback. What does it mean by provisional? For the time being, temporary. Sir, for me, no brand rate, no rate at all notified. 75. They didn't even notify a rate. So now they need to calculate and find out the rate. Till that time, if they don't give me refund, now my working capital is already blocked. Okay, it would be too much burden on me. So that's why they can process me the duty drawback on a provisional basis before if the duty drawback rate is pending for determination. Either the special rate or the brand rate is pending for determination. So in the meanwhile, they could process me the provisional duty drawback. Exporter may apply for a provisional amount of drawback pending determination of the amount or rate of drawback. Principal commissioner of customs may, after considering the application, allow provisionally not exceeding the amount claimed. Sir, if I asked for 10 lakhs, they cannot give me provisionally 15 lakhs. The provisional amount sanction should be something less than the amount which I asked only. Okay. Exporter may require to enter into a general bond for such amount and subject to such conditions. Since he is getting provisionally, he need to execute a bond. Next, where the drawback is finally determined, the amount provisionally paid to such exporter shall be adjusted. After final payment, let's say initially provisionally they gave 10 lakhs. Final determination it was 12 lakhs. It doesn't mean again they'll give 12 lakhs. Out of the 12, 10 will adjust and they'll give only 2 lakhs. Last one. If exporter has to pay the deficiency or entitled to get refund of excess paid. If he has deficiency, let's say nothing but provisionally he got 10 lakhs. But the final order is like only for 9 lakhs. So he got excess 1 lakh. So that by excess 1 lakh he need to pay back to the government with interest. If he needs to give it back, he needs to pay it along with interest. From the date he got till the date he repays, he need to pay interest. Here interest at a rate of 15% per annum. In GST it is 18% per annum. Here it is 15% per annum. Sir, come to supplementary claim, sir. So if you discuss supplementary claim, then we could almost finish the chapter. Supplementary claim 28.7. This also tested so many times. 28.7 supplementary claim. Supplementary claim. Supplementary claim, the duty drawback we got is less than what we should get. Let's say we should get 10 lakhs, but the duty drawback we got is 8 lakhs. So why we got 8 lakhs, maybe the all industry duty drawback rate or the brand rate they fixed is not correctly fixed. I mean, let's say if at all they did the proper calculations and all, the brand rate to be fixed for me is like 40%. But somehow mistakenly they fixed it as only 35%. So that means they fixed the rate less than that of what actually it needs to be kept, brand rate or special brand rate. Because of that, my claim got reduced. First thing. Second thing, the percentage and all is fine, but because of some calculation mistake when they are processing refund, they process the refund less than what I actually should get. Okay, in such cases, for the balance amount which I didn't got, I could make a supplementary claim. So where an exporter finds that the amount of duty drawback paid to him is less than what he is entitled to on the basis of amount or on the basis of rate, he may prefer a supplementary claim, and this should be made within 3 months from when 3 months. Let's say your problem is regarding all industry duty drawback. You think, sir, newly for that industry, all industry duty drawback rate got introduced. Okay, you are not sleeping, no? Not here. Okay, if the industry, the norms committee released it, no, I purposefully said like you are not sleeping here. Okay, norms committee, if they release all industry duty drawback rate, the usual players in the business, they'll be observing that what rate has been introduced and all. So when the government or the norms committee releases that rate, they need to check whether it is actually reflecting the refunds which they get or not. If let's say they release their rate, but the industry players and all, they felt like this rate is not the exact rate. I mean, when we use this rate, we are not getting less refunds than that what actually they should get. I mean, they fixed it as 40%, sir. But if they apply 40 percentage now, they are not getting the full amount they paid as refund. So that's why they feel it as like this rate needs to be revised. So they can make a supplementary claim when within 3 months from notifying that rate. So within 3 months from notifying the rate, if there are any problems with the rate, then they should make it to the norms committee stating like this has to be revised. The same thing with the brand rate or special brand rate. If this brand rate or special brand rate is released, but you observe like by applying that rate also you are not getting the total amount which you want as refund, at least the average amount which you need to get as refund, then again you'll go for supplementary claim. The last third one, sir, it's not about rate and all is fine, it's just a calculation mistake. You applied properly but they didn't process it properly, there is a calculation mistakes or error, omission, something there, then you can make a supplementary claim within the date, that day, I mean the duty drawback claim has been processed. Sir, if your claim is regarding rate, the rate which they given you are not satisfied, you want a higher duty drawback rate, then from the date of publication of such rate within 3 months you need to make a supplementary claim. Your issue is not with rate is fine, you applied for duty drawback and it's got processed, but you applied for 10 lakhs, it got processed only 6 lakhs. So then you verify like there is some mistake which was happened in their calculations. So from the day they processed it to you, from there within 3 months you need to ask for supplementary claim. However, there is a time delay, then the delay can be extended, sir. The time limit can be extended by ACDC here 9 months, sir. Sir, this kind of tables, this is the third time in this chapter. In the previous 2 times we said like extension is only for 3 months, but here it is 9 months. The fees is 1% on 1000, whichever is less. Whereas if they go to principal commissioner and commissioner of customs, no, again here it is 6 only. So there is no change here. The change is only here only. Previously it used to be only extension of 3 months. Here it is 9 months. Principal commissioner or commissioner of customs, further extension of 6 months. So 3 months initial time, 9 months by ACDC, principal commissioner or chief commissioner another 6 months. The fees is 2% of FOB or 2000, whichever is less. Sir, where any excess payment of duty drawback is given to us, then paid erroneously, fails to repay the amount, it would be recovered as if it was an arrears of tax. Okay, if any excess has been given to you and if you didn't pay back, then that would be recovered from you as if it is the arrears of tax. Next, what happens? You exported goods, you got duty drawback. Sir, first of all, come to this reason and tell me this point. Why exports has to be promoted? Foreign currency. The problem is this guy exported. Government gave duty drawback, but he didn't realize the payment actually. He made export, but he didn't realize the payment. Because of this fellow, foreign currency not saved or not earned. Even we lost our Indian goods also. Realizing foreign currency or earning foreign currency is secondary. We lost our Indian goods also. So this guy cannot be encouraged. So whatever the duty drawback given to him initially will be again recovered back from him as interest. So see, if the sale proceeds have not been realized within the period allowed by FEMA, then or the time limit referred to in SEZ Act, then the exporter fails to provide evidence also, then issue a notice to the exporter to provide evidence of realizing the export proceeds within 30 days. If we cannot do now, then it would be recovered. The deputy commissioner pass an order to recover the amount of duty drawback paid within 30 days of receipt of the said order. If the export proceeds are not realized within the time limit given under FEMA, then initially they'll issue a notice asking like, if payment is received by you, show us the proof of payment or realization of export proceeds. If we cannot do so, then they'll pass an order to recover the duty drawback initially processed. Here interest, sir, 7475, where the duty drawback is not paid to us within 1 month from date of application, from expiry of 1 month to the date of payment. Sir, we applied today. The duty drawback has to be processed within 1 month. If not, from the next day onwards, we are eligible to get interest at a rate of 6% per annum. Sir, in GST na it is 60 days. After 61st day only we'll get refund. Here not 60 days. After 1 month only we'll get interest at a rate of 6%. What if duty drawback came to us erroneously? Actually, we should get duty drawback of 5 lakhs only, but we got 10 lakhs. What we have to do? The 5 lakhs which we got has to be paid back to them on the day itself. Okay, let's say today I got two, actually one payment only has to be processed, but because of some error, double payments has been processed. So I got 10 lakhs as duty drawback, but I should actually get 5 lakhs only. What I should do? The 5 lakhs which I got additionally has to be paid back today itself, but I didn't it. Then from today, leave today, from tomorrow onwards, the interest computation will start till the date I will repay. The interest will be at a rate of 15% per annum. Okay, this is about duty drawback, sir. There is negative list and problems we need to do. Come back to negative list which I left. So these are very important for problems, sir. While doing problems, we should remember, where the amount of duty drawback you are asking is less than 50, then they will not give duty drawback. The amount of duty drawback you are asking is less than 50, they will not give. Even if you don't have feeling to ask less than 50, they have. For that small amount and all, they will not process. Next, in case of negative sales, sir, here duty drawback is given for which, for what reason? To promote exports. Not only na, he is doing negative sales. He purchased for 10 lakhs, he imported for 10 lakhs, selling it for 8 lakhs. Okay, the export price is less than that of the import price. He is not earning foreign currency. This fellow spending only foreign currency. So for him, no duty drawback will be given. Understand? Hi, good morning. Okay, in case of negative sales na, the export price is lesser than that of the import price. Next, if SENVAT credit is availed, SENVAT credit availed na, nothing but, sir, in these days it is ITC. Previous days na SENVAT credit, now it is ITC. The tax whichever you avail as ITC cannot be claimed as duty drawback, because already you got one benefit availing it as ITC. Third one, sir, from here little clear, where the duty drawback amount is more than 1/3 of market value of export. Let me give you an example here. So the import value is 10 lakhs, sir. The import value, CAF value is how much? 10 lakhs. Okay. On this, the duties paid at the time of import are altogether BCD, social welfare surcharge, whatever it is, altogether the taxes paid are 4.5 lakhs. Okay, clear idea? Now, they are exporting. When they are exporting, the FOB value of export is 15 lakhs only. The export value is, FOB value is 15 lakhs only. Okay. Whereas the market value, FOB 15 lakhs, you are sending it for 50 lakhs. But whereas the market value is just 11 lakhs. The market value is just 11 lakhs. Okay. So now you are asking duty drawback. What is the amount you are asking for duty drawback? 4.5 lakhs now. So take the duty drawback you are asking is how much? 4.5 lakhs. First point. Now calculate 1/3 of the market value of export goods. What is the market value of export goods? 11 lakhs. One third of market value of export goods. Now 11 into one third, how much it is? 3.67 lakhs. So whichever is lower will only be given as duty drawback. The amount you asked or one third of market value, whichever is lower will only be processed as duty drawback. So come to this point and read now. Where the duty drawback amount 4.5 lakhs is more than one third of market value of exports, then the excess will not be given as duty drawback. The duty drawback you are asking is more than one third of market value of the export. Okay, then the excess will not be given as duty drawback. Next, where the export is to Nepal and Bhutan. So Nepal and Bhutan for us not export itself, because their currency itself is weaker than our currency. Okay, if we will not get any foreign currency from them, their currency itself is weak, so we don't want anything from them. For them, we will not be encouraging also. Next, duty drawback as a percentage on FOB is less than 1%. So the FOB or the duty drawback you are asking is less than 1%. Let's say the duty drawback percentage you are asking is only 0.75%. Then they will not process unless the amount is more than or equal to 500. That means even though less than 1%, if the amount is more than 500, then fine, you will get duty drawback. If the amount is also less than 500, percentage is also less than 1%, then you will not get duty drawback. Okay, let me give examples. 10,000, 1 lakh, 10 lakhs. The percentage of duty drawback is, and even 1,000. Okay, from downwards. So the percentage of duty drawback is common 0.75%, 0.75%, 0.75%, 0.75%. So this is what FOB value. This is what duty drawback in percentage. This is what duty drawback in amount. Okay, now tell me here what it is. 10 lakhs into 0.75%. No, no. 0.75 percentage I'm asking. 7,500. Yes, 7,500. Here how much we'll get? 750. Here how much? Here how much? Okay. Now we'll tell. Here we'll get duty drawback or not. In the last case, fourth case, tell me. Because here it is, even though less than 1%, more than 500. Duty drawback allowed. Next, second case. Sir, in first case I am changing, sir. I am making it as 1.2, 1.5%. How much it is? 15 rupees. Okay, leave it. Second case. The FOB value is 1 lakh. 0.75% na less than 1%. But the amount is more than allowed or not? Third case. Less than 1% and less than 500 also. So duty drawback not allowed. Fourth case. Greater than 1%. But less than 50. So that's where duty first point. If duty drawback is less than 50, then it will not be processed. So in first case also, even though it is more than 1%, since it is less than 50, duty drawback is not allowed. Sir, negative list, sir. Less than 50, no duty drawback. Important. ITC availed, no duty drawback. Next, negative sales. Negative sales, now when we call it as negative sales? Export price. Okay, negative sales. Next, if the duty drawback claimed is more than one third of the market value of export price, then the excess will not be given as duty drawback. Negative sales, na nothing will be given as duty drawback. Whereas one third market value related point, na excess will only be not given as duty drawback. Then this point, where the percentage is less than 1% and even the amount also less than 500, then duty drawback is not allowed. Okay, if percentage more than 1% also allowed, or else even the percentage less than 1%, amount more than 500 also duty drawback is allowed. Next, duty drawback is not allowed if our exporter has some reward, sir, nothing but credit he is getting. Next, if the sale proceeds are not received within the time period allowed by RBI. RBI has given some certain time, like the proceeds has to release within 3 months, 6 months, like that. But you got after 10 years, then duty drawback will not get processed. So come to the problems. We have 6 problems to do, sir. 7, 8, 9, 10, 11, 12. 7, 8, 9, 10, 11, 12 in duty drawback. Seven, 8, 9. So come to question number 7. Sir, question number, there will be a mistakes in the question, I think. You need to correct the question, sir. First correct the question and then question number 7, you need to correct it like this. Page number 28.3. 28.3. Question number 7, you should correct it. Sir, see here, in A exported a consignment under duty drawback claim consisting of the following items. What? 200 pieces of pressure stores mainly made of beans at rupees 80 per paise. FOB value 16,000, whereas the duty drawback rate is how much? 4%. So if 16,000 into 4%, now what will be the duty drawback amount? 16,000 into 4%. 640. So in first case, the duty drawback allowed is 640. Come to second case. 200 kgs of brass utensils, at each kg 200 has been imported, whereas the FOB value of it is like 40,000. The duty drawback rate is 24 per kg. So how many kgs, sir? Actually it is 200 kgs. But okay, 200 kgs into 24 na, how much, sir, it is amount? 200 into 24 na, 4,800 allowed. Third one, 200 kgs of artware of brass at rupees 300 per kg. So how many kgs of brassware, sir? It was imported 200 kgs. Okay, whereas the FOB value is 60,000. What is the duty drawback amount? They said 17.5 percentage of FOB or maximum of 38 per kg. So there is a note point also here. On examination of in docs, the weight is to be found only 190 kgs. It's not 200 kgs. So first we need to make this value to 190 kgs, not 200. If 60,000 200 kgs is equals to 60,000, na 190 equals to how much? If 200 equals to 60,000, 190 is how much? 57,000. 57,000. So 57,000 into 17.5% we should do. 57,000 into 17.5% we should do. How much it is? 2,975. And the next thing is like 38 per kg into 200. 38 per kg into 190. Sorry, not 200, 190 we should do. How much? 7220. Okay, so out of this maximum, how much they said, sir? Max of 38 per kg. So that means you will not get 9,975. If you look at here, sir, 17.5% of FOB, whereas the maximum of how much? 38 per kg. That means the upper limit is how much? 7,220 only. So you'll get duty drawback of how much? 7,220 only. Sir, it was asked in previous times also in exams. Okay, simple thing. First thing, nothing, sir. On FOB 4% apply. Second also nothing. 24 into 200 kgs multiply. Third one, there There also percentage rate also given, kgs one also given. So they are asking for us to find out percentage cap is nothing but the one which we calculate with the kgs. But the note point said like the price is not for, sorry, out of 200 kgs on examination we found like there are only 190 kgs. So we need to adjust the answer first for 190 kgs. So FOB we need to adjust for 190 kgs. Then number of kgs also you should multiply it with 190 kgs only. So 38 into 190, 60, sorry, 57,000 into 17.5%. Whichever is lower will only be the duty drawback. Come to question number 8. Question number 8. Simple question only, sir. First one. Jaggi Mehta imported a car for his personal purpose and paid 4,50,000 as import duty. However, the car is re-exported immediately without bringing into use. How much, sir? 98%. Okay, 4,41,000 will be getting as duty drawback. Next, Meenakshi imported a music player from Dubai and paid 12,000. She used it for 4 months. Music player she imported, sir. 12%. After she is exporting it after how many months? 4 months. Sir, in answer, he'll take it as office use. But in general sense, nobody imports music player for business use, for personal purpose only. Maybe in 1970s and all that might have happened. That time, house and all, they may not install music players and all. Maybe in office or in the retail stores and all, maybe they might have kept like that. Okay, that answer they'll use it as like official purpose, but it is quite common to assume it as personal purpose also. Okay, if it is for personal purpose, then what we'll do? 2 quarters. So 96, 92 percentage. First quarter na 96 will be, second quarter na it would be 92. So 12,000 into how much? 92 percentage. 11,040. What if it is assumed as personal purpose? 85%. So 12,000 into 85%. So anything is fine. They'll take it as 85. Next, third one. XYZ Limited expo 1000 kgs of metal for 1 lakh. Rate of duty drawback on such export is 60 per kg, whereas market price is only 40,000. Now tell, what is the actual duty drawback they are asking, sir? 1000 into 60 na 60,000 they are asking. That only na. The good they imported is 1000 kgs, and per kg the duty drawback they are asking is 60,000 they are asking, whereas the market price into 1/3 now how much? Okay, why they are asking us like negative sales and all? Okay, FOB value. Okay, sir, they're assuming here, since here actually in this question they didn't given the import price also. Okay, they are exporting it for more than market value only now. This point why? Sir, this is wrong, sir. Here what we will get is like, strike off this line. How much we'll be getting is like 60,000 or 40,000 into 1 by 3, because 1/3 of market value is the maximum we'll get. 40,000 into 1/3 is 33,000, sorry, 13,333. Okay, out of these two, whichever is lower na 13,333 they'll be getting as duty drawback. Next, ninth question. This one is regarding the interest, sir. Calculate fastly. Interest 15 percentage, 6 percentage, that one. Sir, A filed a claim for payment of duty drawback amounting to 50,000 on when 30th July. However, the amount was received when 28th October. You are so when he applied, sir, how much? I mean, within 1 month it has to get processed. I mean, by 30th August it has to process. So August 1 day, September 30 days, October 28 days. Total 59 days. There is a delay. So for 59 days there should be interest calculation at what rate? 6% you need to calculate interest. Next. X was erroneously refunded a sum of 20,000 in excess of duty drawback on 20th June. If he received excess now, he should pay it back on 1. He received excess on 20th June. On when he need to pay back? On the same day he need to pay back on 20th June itself. If not now, from 21st June there will be interest. From 21st to when? Till the day he pay. He paid when? No, 20th October he paid. From 21st June in June 10 days. July 31 days. Okay, 11, July 31, August 31, September 30, October 20. So overall how many days, sir? 50, 81, 82. Here it is 10 only. Yeah, 10. 50, 81, 82, 92, 102, 112, 122 days. Okay, that's only. So 120 days, 122 days we need to calculate interest here. 122 days na 20,000 into 122 divided by 365 into 100. How much, sir? Sorry, into 100 illa. Into 15%. That one only. Ah, in first option, how? 59 days. Sir, you applied on 30th July. 30th July you applied. The refund has to be processed within 1 month. Okay. If not processed in 1 month, after 1 month you need to calculate. So 1 month na by 30th August it has to be processed. So 31st August, from 31st August it has to be counted. August 1 day. September how many days? 30 days. October 28 days. 59 days. That you would have done yours. Fine. Now, sir, read question number 10. Theory question also. Okay. Theory only, sir. Question number 10. With reference to provisions of 76, write a short note on prohibition. Negative list, nothing but. Duty drawback is allowed in respect of any goods, is not allowed in respect of any goods for which the price is less than the amount of duty drawback thereon. Further, duty drawback is not allowed where the amount of drawback in respect of any goods is less than 50. If the central government is of opinion that duty is claimed or likely to be smuggled back into India. So this is something which I didn't say. If the government felt like you are exporting the goods by way of getting duty drawback, but what they are planning is they are not actually exporting, they are just faking it as export, and afterwards again they'll smuggle back those goods into India. In such cases they'll not provide you duty drawback. Next, question number 11. Question number 11. Question number 11. Salman imported a motor car for his personal purpose, paid 5 lakhs as import duty. It was re-exported after 6 months 20 days. Sir, motor car, sir. Personal use related counting or business use? Okay. 6 months 20 days na third quarter. Third quarter na 4, 4, 4, 12% you should reduce. 88%. So first one it is 88%. Next. Next one. Yogesh. What is the second one? Tell. Nisha imported wearing apparel and paid 50,000 as import duty. As she did not like the apparel, they are re-exported after 20 days. Sir, actually wearing apparel, if she don't like, without using only, she'll send back generally. So she'll get duty drawback of 98%. But this fellow in answer will say like nil only. Okay. But generally, if someone buys clothes and if they don't like, generally they'll send back without using. Normal assumption. Exceptional cases and all will leave. Normal assumption, generally will send back without use only. Without use, if they send, duty drawback is not allowed. But here they sent like, he thought like after being used. Okay, but we could even assume it as like without use, and we could say like 98% is the duty drawback allowed. Next, Sopotech Limited imported 10 systems paying customs duty of 50 lakhs. Due to some problems, they were returned after 2 months without using at all. Without use, sir. 98%. Next one, question number 12. The last one, sir, question number 12. This was so many times in mock test papers, sir. Even in old syllabus also, this was asked so many times. Sir, okay, now first one, if you see, FOB value of the exported goods is how much? 2,50,000. Whereas market value of the goods is how much? 1,80,000. Duty drawback we asked is how much? 30%. So 30% of 2,50,000. Now how much? Product A. 30% of 2,50,000 is 75,000 actually, but it got restricted to 1/3 of market price. 1/3 of market price will get how much? 60. So here into 30% 75. But we should compare it this with the 1/3 year, which is 60 only. So whichever is lower now, how much will get? 60,000 only. Next one, 1 lakh. 1 lakh into 0.75% now, how much it is? 750. Even though less than 1%, more than 500, so duty drawback is allowed. Sir, here FOB value of export goods is only 8 lakhs, but whereas the market price is more than that of the FOB value. That means you are exporting it for a price which is less than the price in India. Okay, sir, if considering this is correct, somewhere like I said like alternatively. Let me tell you, like maybe here only I explained it wrongly. Which question, sir? I've taken something wrongly. 8 only, 8 only. Sir, 8 also, how we should take here means negative sales, it's not just the import price and the export price. If we are exporting it for a price which was less than in India, in Indian market value itself, okay, here it is correct only, sir, I think. Here there is no problem. This were here correct only. But in this question only, what we are doing here, the market value is 8,50,000, whereas you are exporting it for 8 lakhs. So, okay, imported value also given. Okay, then fine. Considering in that way also it is negative sales only. So, negative sales, duty drawback is not allowed. Next, FOB value is 2,000, market price is 2,100, whereas FOB value 1.5% of FOB. 1.5% if you apply now, how much it is? 30, which is less than 50. You will not be eligible for duty drawback.